Abu Dhabi-based international holding company will acquire a 41.2% stake in Indian financial services firm Samman Capital in a deal valued at 8,850 crore rupees. An open offer has also been triggered, but the stock, though, is still in the F&O ban. It's the final trading day of the week, and we are back with you on Power Breakfast on CNBC-TV18 in the Mumbai News Centre. I'm Hormuz Fatakia. Let's first take a look at how the Asian markets have started off this morning, and the ones that are open are doing fairly well for themselves. The Hang Seng, though, is a marginal underperformer, 0.6% lower on the Hang Seng. The Taiwanese index also trading with gains of around 0.3%. But the real action, though, is coming from Japan. The Nikkei is up 700 points currently and continues to trade at record high levels, now closing in on the mark of 46,000 is the Nikkei. The South Korean markets are shut on account of a holiday, as are the markets in China. So as of now, the action coming in from Japan being the outperformer in the Asian markets, while Hang Seng being the only aberration. Pull up the GIFT Nifty as well. That will give you an idea of how our own markets are likely to start off. Well, after the very sharp moves that we saw on Wednesday, a bit of a pause is what the implied open is currently suggesting. A 16-point downtick is what the implied open is suggesting. But to set you up for today's trade, our research team is here to tell you more about the trade setup and the stocks that are likely to be in the news today. First up, Gaurav is joining in with all the market cues we need to watch out for. Gaurav, good morning. What are some of the important aspects you're watching out for today?
Well, yes. When we look at the Asian market, as you mentioned earlier, that the Hang Seng that actually increased almost by 1.6% in the last trading session, but currently it is struggling. But at the same time, Japanese market, it is soaring up in trade. At the same time, when we look at the US market now, this was second consecutive day where they ended in green. And at the same time, this is actually the second day when government shutdown is still going on. As per Bloomberg, now Trump says that he has an unprecedented opportunity and will look at which democratic agencies to cut. So definitely that is something that we will be watching out for, because on the one hand there is government shutdown which is going on, and on the other hand we are seeing US markets which are soaring up in trade on everyday basis. When we look at some of the commodities now, gold that actually ended its 6-day winning streak. It got pulled back from that 3,900 per dollar level. Silver that also went down almost by 2% in the last trading session. It was last seen at around 46.5 levels. When we look at Nifty, we saw Nifty actually broke its 8-day losing streak, and in the last trading session it was up more than 0.8%. At the same time, open interest that also suggests that there is put option interest building up around 24,800 level, and the call option interest building up around 25,000. So that is the level that we will be watching out for. On the downside 24,800 and on the upside 25,000. On the same time, when we look at Bank Nifty, that increased almost by 1.3% because RBI maintained its repo rate, and that is the reason why we will be also watching out on how the bank stocks are going to perform, given that their pre-quarterly updates, they will also start coming now. When we look at some of the positive developments, we saw that the direct air services connecting points from India to China, that will begin, and Indigo, now they have announced that they will be beginning this service as early as 26th of October. So on the stock specific, we will be also watching out on this stock and also on the aviation space, but definitely watching out on these levels that I mentioned earlier.
Interesting, Gaurav. Thank you for that update. Over to Upasna now, who would list out the stocks that you need to keep an eye out for today. Upasna, good morning.
Good morning. Well, a lot of auto stocks will be in focus today on the back of September auto sales. First up, let me start with Maruti Suzuki. The total sales is up 2.7%, which is largely in line with the poll. TVS Motors is the next one on the counter. The total sales has seen an uptick of 12%, again largely in line with the poll. And Hero MotoCorp, the total sales is up nearly about 8% on a YoY basis, slightly above our poll. Now, Coal India also came with its business update for the month of September. The production is down about 3.9% on a YoY basis. So overall, it's a weak update. VMart Retail reported its Q2 update. The total revenue has seen an uptick of 22% on a YoY basis. CSB Bank, again in focus on the back of its Q2 update. The total deposits has seen a healthy growth of 25% on year-on-year basis. Next up is Tata Power. The ARM signs power purchase agreement with Tata Power Mumbai distribution to set up a 80 megawatt firm and renewable energy project, and the total capex for this is around 1200 crores. Sammaan Capital also in focus today as IHC, which is a global investment company, has entered into an agreement to invest $1 billion in the company. Rights also in focus on the back of order win. The company has received work order from Damodar Valley Corporation. Nearly about 36.2 crore is the work order worth. Lastly, Crompton will also be in focus as company has received LOA worth 4.7 crore from Madhya Pradesh Urja Vikas Nigam to supply solar water pumping system. So all in all, we'll be looking out for all these stocks which will be on our radar today.
Important stocks there. Upasna, thank you for that update. Lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. Some rebound finally, but is the F&O data indicating more?
Well, it's an interesting setup that we have because, you know, on October 1st or the day 1 of October series, we saw a big move on the frontline indices. The Nifty was up 1%, led higher by the Nifty Bank, which was up 1.5%. And it was led by not only the benign RBI policy or important comments coming in from there, but also reduced FII selling in cash. So FII sold about 1,600 crores in cash, whereas the DIs went ahead and bought 2,900 crores. So on a net basis, there was a 1,400 crore worth purchase. On a headline basis, you would say that after this big an up move, we still didn't see a big amount of FII purchase in index futures. Well, yes, because on a index futures basis, they sold about 128 crores, but that was mostly directed towards the Nifty. They turned incrementally positive on the Nifty Bank, where they bought about 668 crores. So that's a positive. And they added 1,900 long contracts and 2,700 short contracts. So the long exposure, which was at 6%, has only inched mildly higher to about 7%. So that's something we will be watching out for very, very closely. 24,800 put, that's seen a fair amount of writing, as is the 24,700 put, which tells you that after this up move that we've seen, maybe, you know, the support for the market is around the 24,750 to 24,800 mark. But on the way up, there are some resistances because we have seen some writing at the 24,950 call and the 25,000 call. And the put call ratio too has moved closer to 1.2, which is the higher end of the range. On the way up for the Nifty, where we are right now versus where we can go, there are some important resistances on a technical basis. The 50-day moving average, the 100-day moving average, and the 200-day moving average come all in the next 150 points. So that's an important congestion zone to cross. For the Nifty Bank, it crossed the 50-day moving average. The next level to watch out for is the 100-day moving average, which is closer to 55,700. Two stocks I'm watching out for. Sammaan Cap, obviously on account of the fundraise announcement that has come in, but the stock continues to stay in F&O ban. And RBL Bank, on day 1 of the series, a new series, it's gone back into F&O ban. So that's another stock I'll be watching out for.
Mangalam, thank you for that update. Sammaan Capital will indeed be the stock to watch out for today. And this is after IHC announced that it will be acquiring a controlling stake in the company. Gaurav is back with us with more details on this Sammaan Capital transaction. So, Gaurav.
Well, yes, definitely a big positive for Sammaan Capital because Abu Dhabi's IHC is going to acquire majority stake. They have entered into a definitive agreement to acquire 41.2% stake in the bank. At the same time, they will be investing 8,850 crores for this stake. Remember now, when we look at the transaction now, this actually marks their official entry in the Indian financial space, and at the same time this is also the largest ever primary capital infusion that investors have seen in terms of NBFCs for Indian market. When we look at the overall acquisition, company said that they will be acquiring and they will also have the majority control, so they will be tagged as promoter. At the same time, they will also have rights to appoint majority of the board of directors. What they have proposed is that now board has approved to issue preference issue of around 33 crore shares, which will be worth 4,587 crores, and 31 crores warrants which will be issued, which will be worth 4,262 crores. When we look at the transaction, this will also trigger the open offer, and for this, now company says that post open offer, based on the subscription, the stake will vary anywhere between 41.2% to 63.4%. When we look at now what next we should be looking at is that the EGM, which is scheduled on 29th of October, where the shareholders approval will be taken for preference issue and also for the amendment in AOA. When we look at the FY27 goals, we have already seen company has given very optimistic goals. They say that 1 lakh crore of loan book is what they want to achieve, which says around 27% CAGR growth from here on. They also say that the credit cost is likely to be around 1% on a steady state, which was last time when we saw it was at 3%. So definitely there are some optimistic goals that the bank has also given. When we look at the valuation, that is another catching point to see here is that when we look at the valuation, that is at 0.6 times, and Sanman Capital has always been below 1 time price to book. So definitely that is also something that we should be focusing on. But at this moment, a very big positive that IHC is going to acquire 41.2% stake in Sanman Capital.
Indeed, the big news coming in last evening. Gaurav, thank you for that update. Take a short break, but just before we do that, some market opinion from Nilesh Shah of Kotak Mahindra AMC on the IPOs and the performance, the FPI outflows and a lot more. Listen into some excerpts from that.
With the barrage of IPOs, undoubtedly there is no worry on the quality side. SEBI has done a fantastic job on ensuring that only quality IPOs come. Institutional investors also have done a reasonably good job in ensuring that they invest in reasonably valued IPOs. Many of the IPOs which have opened at a discount had virtually no institutional participation. So my recommendation to investors, please don't make mistake on your own. Learn from our experience and go for those IPOs where you believe there is a reasonable institutional participation. 3-6 months remain challenging. The FPIs are on the selling spree. They are saying for last 5 quarters, your earnings growth is single digit. Your valuations are at premium to historical averages. And most importantly, you are getting hit by US tariff and geopolitics. They are absolutely right in saying this. Generally, in festival season, we have seen some amount of redemption to either buy a house or buy a motor car or buy jewelry. And ultimately, wealth is there for spending. So there will be probably similar intensity of gross flows, but the net flows will be lower because of the redemptions for consumption or spending. I believe there is a higher allocation towards precious metal. And many people don't want to invest in precious metal directly, and which is why they are coming into multi-asset allocation fund. We expect flows to remain strong, but please remember, we are not here to give exit to FPIs or to promoters. We will do what is right for our unit holders.
Welcome back onto some global market action. Then it was a positive session for Wall Street on Thursday. The Dow Jones ending in the green. The S&P 500 also recovered from the day's low. The Nasdaq was the outperformer though, ending 0.4% higher, closing in on that mark of 23,000. CNBC's Angelica Peebles gets us a wrap of all the action on Wall Street.
U.S. markets were up across the major indexes in Thursday trading, despite a government shutdown for the last 2 days. The Dow climbing 79, the S&P 500 up 4, and the tech-heavy Nasdaq rising 89. OpenAI finalized a secondary share sale, bringing its value to $500 billion, which would put it ahead of SpaceX as the world's most valuable private company. That's according to a person familiar with the transaction. CNBC's source says the company authorized up to $10.3 billion in shares for sale, but that only about 2/3 of the amount ultimately changed hands, and that's being seen internally as a vote of confidence in the company's long-term strategy. And Warren Buffett's Berkshire Hathaway announced Thursday that it will buy Occidental Petroleum's petrochemical unit, OxyChem, for $9.7 billion. The all-cash deal is expected to close in the fourth quarter, and it's Berkshire's largest since 2022, when it paid $11.6 billion for the insurer Allegheny. Occidental said that it will use some of the funds to pay down debt and help restart the company's stock buyback program. That's what's happening here in the U.S. Back to you in Mumbai.
Angelica Peebles, thank you for that update. Now, as the shutdown in the U.S. government nears the end of its second day, even as U.S. President Donald Trump is set to follow through and permanently fire a significant number of federal workers, CNBC's Iman Shavers has this report.
On day 2 of the government shutdown, the administration is really dispensing with carrots and going mostly with sticks in its negotiations with minority Democrats up on Capitol Hill. President Trump posting on social media that he's going to be meeting with his OMB director, Russ Vought, today to find Democratic priorities to close down during the shutdown. Here's what he said. I have a meeting today with Russ Vought, he of Project 2025 fame, to determine which of the many Democrat agencies, most of which are a political scam, he recommends to be cut, and whether or not those cuts will be temporary or permanent. Now, that reference, Carl, to Project 2025 is about the conservative blueprint for downsizing and reorienting the federal government that was seen as so controversial during the presidential campaign last year that President Trump said at the time he didn't know anything about it and had nothing to do with it. Clearly now, though, he is using it as a threat to Democrats to show what they could lose if they don't come around on the spending bill that he wants. And on CNBC this morning, Treasury Secretary Scott Bessent sought to put the blame on Democrats for any damage to overall GDP that could result from this shutdown, and he raised the specter of increasing inflation.
They want to put this inflationary impulse into President Trump's already strong economy. You know, the economy is growing at 3.8%. We don't need 1.5 trillion pumped in. You know, the Democrats seem to love inflation.
Now, bottom line today so far is about ratcheting up the rhetoric and the pressure on Democrats in an effort to get a deal by this administration, but it's not at all clear that's going to be enough to break the logjam. The government is going to remain closed today because the Senate is not in session, so the next opportunity for votes will be tomorrow, guys.
Iman Shavers, thank you for that update. Let us now also listen in to Scott Bessent, the Treasury Secretary, who said that the U.S. GDP could take a hit as a result of this government shutdown.
The spending cuts that occurred in the One Big Beautiful Bill were the largest in history, and you know, we're not going to go back on them. That I came out from behind my desk and wanted to join the government to right the ship and get our fiscal house in order. We were left with a mess. It was the largest deficit when we weren't in a recession, weren't at war, and we are fixing the deficit. And you know, there could be a discussion, but this isn't the way to have a discussion. Shutting down the government and lowering the GDP. We have a 3.8% GDP, and when the Democrats shut down the government, that we could see a hit to the GDP, a hit to growth, and a hit to working Americans.
On to our special segment, Trump Watch. Dia is joining in with more details on that.
Good morning. Big moves out of Washington, where the federal government shutdown entered its second day on Thursday, with neither side showing signs of compromise over funding the government. U.S. President Donald Trump is weighing plans to cut thousands of federal jobs. The White House says the move is aimed at increasing pressure on Democrats to end the government shutdown. And White House Press Secretary Carolyn Leavitt told reporters the cuts are likely going to be in thousands. Trump said he will be meeting with his budget director, Russell Vought, to discuss possible reductions. Now, at the same time, the administration has frozen $26 billion earmarked for Democratic-leaning states. Now, that includes $18 billion for transit projects in New York and $8 billion for green energy projects across 16 Democratic-run states, including California and Illinois. California's Governor Gavin Newsom is also making headlines. He has now warned that any university in the state that signs on to a Trump administration proposal could lose billions of dollars in state funding. Now, the proposal offers preferential federal funding in exchange for caps on international students and other conditions. Newsom also says California will not bankroll schools that agree to this deal. Meanwhile, U.S. trade officials are considering easing tariffs on Scotch whisky. This follows discussions between President Trump and UK Prime Minister Keir Starmer during last month's state visit. The UK argues that reducing tariffs could also benefit the American bourbon industry since it supplies casks to Scotch producers. And in New York, a federal court has temporarily blocked the Trump administration from redirecting nearly $34 million in anti-terrorism funds. And the money was awarded under a post-9/11 program to help protect against chemical, biological, radiological and explosive threats. That's all for today. Now back to you, Hormuz.
Thank you so much for that update, Dia. Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil prices, though, continue to trend lower today.
Well, absolutely. Just about holding $60 a barrel right now. We've seen 2% of a decline come in yet again. And with that, crude is now trading at a 4-month lows. Well, what you're looking at is increase in supplies coming in from everywhere. OPEC could increase supplies by 500,000 barrels per day. That decision would come in on 5th of October. We also are looking at Saudi Arabia by its own also restoring what it had previously suspended in terms of supplies. And then you have U.S. crude and gasoline stockpiles rising. Iraq's Kurdish oils are also expected to resume exports here. And then there's a bit of a risk-off sentiment with what's happening with the U.S. government shutdown. So there's no reason to buy into crude is how the markets look at it. But it's not just crude. If you look at the other precious metals, we're looking at some profit-taking here as well. So whether it's gold or silver off its highs that we saw in the previous couple of sessions here, there is strong investor interest because of economic uncertainty, but we have seen some profit taking on the higher levels. The only thing that I see trading firm on the screen right now is copper. That one is trading at a 2-month highs.
Copper at 2-month highs as well. Manisha, thank you for that update. Now, India and China have agreed to resume direct flights as ties normalize following 5 years of tensions after the Galwan clashes. Indigo Airlines has announced that it will resume the direct flights from the 26th of October. Indigo's announcements came shortly after the Ministry of External Affairs announced that the two countries have reached an agreement for the same. Shifting focus now, Russian President Vladimir Putin will visit India in December for an annual summit with Prime Minister Narendra Modi, with the Kremlin saying that full preparations are underway. President Putin warned that the United States against pressuring India to stop buying Russian oil, saying that New Delhi will not allow itself to be humiliated in front of anyone. Now, Putin also lauded Modi, calling him a balanced, wise and nationally oriented leader. The Russian president last visited New Delhi in 2021, with both nations having a mechanism under which India's Prime Minister and the Russian President hold a summit meeting annually to review the entire gamut of ties. And with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call on the other side to set you up for the day's trade.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. Market holiday in India yesterday, but the rest of the world is has been on. Of course, the US government is not on. That's gone into a bit of a shutdown, but lots to talk about here. I'm Prashant. With me, my colleagues Nigel and Surbi. Guys, good morning.
Good morning, Prashant. Good morning. Good morning, Nigel. Yeah, absolutely. I mean, US markets are on and how? I mean, they don't really care about the shutdown. Because I think the thesis seems to be, we've seen this in the past, it lasts a couple of days and then life gets back to normal. I think right now, at least, people are not too worried about it.
Well, that's right. And it was a good trading session getting into that, midweek holiday. So let's get straight to the action, Prashant. Let's see whether or not the bulls can rally behind what we saw on Wednesday.
Yeah, I mean, global markets are breaking out. I mean, look at S&P, look at European markets, underowned, unloved, but fair bit happening. And let's just take it from the top then, right, in terms of what's going on. So you've got markets which have largely ignored the US government shutdown. So the shutdown has entered day 2, and Wall Street has basically said, who cares for now. S&P at a new all-time high. It was up small over the last 2 days because we got reacted 2 days worth of change, Wednesday and Thursday. Nasdaq is up 0.8% more pronounced in the last 2 trading sessions. Now, CNN essentially is saying that the partial shutdown of government is likely to extend into another week, into next week as well, unless there is a Hail Mary last minute and something gets worked out. We don't know. Looks unlikely. If you just look at what this has meant for markets, right? going back to 1990, 5 out of the last 6 government shutdowns have seen positive returns from the day of the shutdown to the day of reopening. And actually, even within the first 5 days, from the beginning of the shutdown, 5 days in. So both periods, duration and 5 days in, both are positive for 5 out of the last 6 that we've seen going back to 1990. I mean, the last one was 2018, lasted 35 days. But of course, I mean, one way this impacts markets is some of the important data which the market relies to is delayed. So no initial jobless claims was released on Wednesday. This is, again, important. ADP report came through, again, on Wednesday. It was softer than expected. There was a bit of a market reaction on the back of it. Last 2 days, the 10-year yield is down 6 basis points. Tonight, you have the U.S. jobs report, which looks like that they're not going to, the BLS, the Bureau of Labor Statistics, essentially saying that it's very unlikely that this is going to come out. They got one person working at the BLS as compared to whatever, some 2,000 plus kind of people who are usually employed there. But, this also kind of means this is a hit to activity, right? And there are some estimates which have been put out every week is going to result to so many $1 billion worth of GDP lost in the US. This is a hit to activity, the spending, etc. So in that sense, there's only, in a way, even if the Fed is blind without data for a while and we don't know how long this is going to last, if anything, this strengthens the case for Fed easing. I mean, the market is clearly pricing in further accommodation in October, and I think what we're seeing here now perhaps only strengthens that. Now, oil prices, right, pretty significant moves. So just look at the last 2 days change, 2.5% day before, 1.7 last night, 4% in the last 2 days. But the more important thing, oil is down 10% since last Friday's intraday high. That is substantial and meaningful. There is an OPEC Plus meeting where there is, indication that we will see another supply hike after the last that we saw. I think that was back in September. So it's good news. I mean, oil marketing companies, etc., were coming into their own a little bit after the push from the oil minister. We'll talk more about this. And you got oil, which is now starting to slide some more. So we'll just tie in the levels now. So the Nifty finally saw some momentum, right? And the momentum did not fade. We ended about 1% higher, 200 plus points on the Nifty. And we, by the way, ended above the 40 hourly exponential moving average as well. RBI steps were, of course, the trigger. And the market was in wait and watch. The rate cut no rate cut was kept aside, but there's so much which the RBI has done in terms of easing and unshackling banks, and the aim seems to be to try and ease credit flow. So Nifty, from where we left off on Friday, faces immediate resistance at this 50 and 61.8% retracement of the previous falls. So the 50% is 25,018. The 61.8 is 25,120. So these are the two immediate resistance levels. Support in the very near term is 24,587. That's the low from the last cycle that we saw, the last move that we saw. Bank Nifty also broke above the 40 hourly exponential average. It also ended above the 61.8% retracement of the previous fall. It's been stronger over the last 2-3 days now. And the immediate resistance here for the Nifty Bank stands at 55,835 and then 56,500 or so. So that is near-term levels for both the Nifty and the Nifty Bank. GIFT Nifty will give you a quick sense of how we're likely to start. We'll pick up from there. 40-odd points lower is the start this Friday morning. How are the F&O stats looking? Nigel is standing by with exactly that. Nigel, over to you.
Well, if you have a party, it's always good. But things look even better if you have an after party. And the bulls will be hoping that after the party that we saw in Wednesday's trading session, there is an after party in store. What played out in Wednesday's trading session? A couple of data points. The institutions, they were net buyers with close to around 1,000 crores of net buying. So clearly, the DI buying offset the FI selling. And you would be wondering whether or not there were some shots that were covered from the FIs. That actually didn't happen because the FIs, they added more short positions in comparison to long positions. They remain very, very aggressively short at around 93%, which came down from around 94%. So the FI shorts are still stacked in the system. What the bulls would want out here is, in fact, to go ahead and cross those crucial resistance marks. That's what makes these shorts very, very nervous. And backing the up move actually was more amount of puts than calls. So you had close to around 2 puts that were written by the FIs for every 1 call written. That's an important data point telling you that maybe the near term, that lower level will get defended on the Nifty itself. Moving to the options data, well, you have the call writers. They are still hanging in there. They still believe that, this 25,000 mark, 25,050 mark will get protected, because massive addition is what we saw on the 25,000 call, 24,950 call, between them close to around 60 lakh shares. However, on the downside as well, the puts were getting written. And they had close to around 64 lakh shares getting written on the put side, which gives the bulls some kind of hope in terms of levels. So let's get the levels up for you. Since the 24,800 puts saw a good amount of open interest addition, 24,700, that's the near-term support that you're looking at. Otherwise, you don't want the 24,500 mark to break, but this is an important mark for the day itself. The 25,000 important. Here you have the crucial resistance zone at around 24,950 to around 25,000. That's going to be a zone where the bears are going to come in and fight. The Nifty Bank, beautiful trading session in Wednesday. Now you'll have to see some follow through from that, because it crossed the 20 DMA decisively. Now you have the 100 DMA, which is a couple of 100 points from where it closed on Wednesday. So the Nifty Bank will have to lead the fight from a bullish perspective. Moving to stocks that I'm looking at, Saman Capital, we'll talk more about that. Big move is what we've seen in the last 1 month or so, 22% higher. You have IHC that's going to come in there and put in some big money. But maybe, just maybe in the near term, some part of the good news has played out. Longer term, things may turn around, but may not be such a bad idea to take some money off the table after the kind of run that we're seeing. So that's going to be an important stock we're looking at. And the other one I'm looking at is AB Capital. Tata Capital's IPO opens up. And this one, it's relatively lower in terms of valuations. The stock is at a 52-week high. And in terms of return ratios, it's more or less at par with Tata Capital, or maybe a little bit better as well. So that one is a stock I'll keep on my radar. Keep an eye out on both these two.
Yeah, absolutely. So we'll keep an eye out on those stocks. And maybe in the financials, remember Tata Investment Corp, it's had a stupendous run this week. So let's see if it's going to continue ahead of that Tata Capital IPO or not. By the way, in Asia, markets are trading a little mixed. Remember, we don't have the mainland China market trading, but Hong Kong is open. Hong Kong is trading, and it's down about 0.5% right now. The Japanese markets are doing very, very well. Hitachi, by the way, yesterday signed up a deal with OpenAI to build data centers and, more AI infrastructure. Those shares are up 8-9%. So anyone who has anything to do with AI or partners with the NVIDIAs or, the OpenAIs of the world, the market just completely runs away. And that's what's happening with those shares in Japan this morning. But for the time being, let's keep it with, of course, what is the road ahead for the Indian market. We have Satyam Pandey, Chief US and Canada Economist at S&P Global Ratings, joining in. Thanks very much, Satyam. Thank you for joining us this morning. So first things first, this whole shutdown business, as of now, last two trading sessions, the market has completely shrugged it off. It continues to march higher. So is this going to be pretty much business as usual? There have been times where the government has shut down for more than 10-15 days as well. Do you expect this to be a prolonged round, or is it a matter of a couple of sessions?
Well, it's a little bit hard to say this time. In the past, they've always come around after a couple of weeks with some kind of a negotiated budget deal. But it looks like this time around, they still need to see some polling. It really comes down to which party feels the heat from their respective, electorate, right? So right now, I think it's a little bit too early to say, but once those polling starts to come, some complaints start to come and the paychecks don't reach homes, that's when you feel the heat, and then both parties are going to try to come out with some form of continuing resolution, which is you're just going to kick the can down the road, maybe have a 6-week reprieve, and then again have the same debate come December.
Last time it was airport stuff, right? And airport delays and those kind of things. So it's got to hurt the consumer, and then there's a backlash. So something will give in at this point. At some point, markets completely ignoring all this, right? So this is, it's high drama but low impact in that sense.
Yeah, in the past, they've always come around with some kind of resolution, and it doesn't really impact your GDP growth as much. If you think about it, 1 week of this kind of partial government shutdown is going to shed about $6 billion. And then that's only at the time when it's shut down. And folks do get repaid. There's a back pay for folks that are not being paid right now. So at the end of the day, it's a little chump change in the big U.S. economy when things open up again. So that's why markets are, plus, the markets are also thinking the Fed's going to provide some more rate cuts. Some of these data that's not coming out. But given the private sector data that is showing weakness, I think the market is going with, we are going to get our monetary policy easing anyway. So they are right now not quite worried. One thing to note, this time around, we don't have any debt ceiling sort of a discussion going on, right? We are kind of safe on that front. So maybe perhaps markets are kind of taking it easy for that reason as well.
All right. Hi, Satyam. Always good to see you. Ben, a couple of points out there then. Fed rate action, that's going to be important. What's going to the response be? And that case gets stronger for rate cuts. How many are you factoring in for the remainder of this year in 2026? And the other part is, we have briefly spoken from the start of this year about the probability of a recession in the United States. I think it was mid-teens. It had moved up to around 30%. What are you at now in terms of a probable recession in the United States?
Yeah, so let me start with the probability of recession. We had moved it up to 35% during the heat of the tariff, fiasco there back in April, right, the Liberation Day. But I think that some of that has faded given some of the negotiated rates that we have seen. Businesses have started to get used to this kind of new environment. And some of the numbers coming in, just honestly, the CapEx numbers on high tech, that has been really strong, surprising on the upside. So it does mean that the risk of a recession to begin in the next 12 months has gone down. So maybe perhaps even lower than 30% now. But that doesn't mean that there aren't any weaknesses in the economy. Clearly, there are some yellow flags. You can think of the labor market, consumer spending, the confidence and sentiments. All of those are still below what would normally be considered healthy. Having said that, I think the Fed is looking at the labor market very closely. Even though there is still excess inflationary pressures in the system, they are clearly weighing it on the employment mandate side. They don't want unemployment rate to further move up. And I think they are going to give that 25 basis point rate cut in their October meeting and perhaps again in December. It's a very gradual rate cut. We're not talking about sharp, fast rate cut like the recessionary rate cut. It's more of a tweaking around the edges, trying to get back to that neutral 3.1, 3.3%.
Satyam, could inflation at all play spoil sport in that rate cut trajectory? So far, it's been along projected lines, right? We're almost at 2.9% in the last print, PCE. So what's your prognosis next couple of months?
I think we are going to stay a little bit north of 3% in the core inflation numbers. And this is going to be there till middle of next year. And that is what is going to keep the Fed from cutting faster. If you really think about it, they could be cutting much more faster given some of the labor market numbers, but they are not going to do that because inflation numbers have been quite sticky. That's something to look out for, obviously. And that also affects the purchasing power of consumers and softer GDP growth in turn. So all of this dynamic is quite interesting right now, at least for the next 6 months.
Okay. All right. Thank you very much for being with us today and giving us your view on how the U.S. economy is shaping up. So barring the labor market, not too much else to worry about, at least at this point in time, and not even this government shutdown. Got that. Thanks, and you have a good weekend. Well, let's quickly tell you what are the interactions lined up on the show today. At 8:35, we'll have the management of Maruti joining in to talk about festive season sales and their outlook for the rest of the year after the GST cuts. At 9 a.m., Gagan Banga, MD and CEO of Saman Capital, joins in. Big transaction there. There's a change of company ownership. Abu Dhabi's IHC is acquiring a controlling stake. So what does that mean for the company and shareholders? We'll find out at 9:20. Chetan Seth of Nomura is our market master of the day. So we'll get their house call on the market. At 9:35, we'll be in conversation with the management of Bajaj Auto. Talk about the month gone by. Sales numbers have been picking up, and we'll discuss the outlook with Mr. Rakesh Sharma. After that, the management of WeWork joins in. That IPO opens out today. So we'll find out more about the business, the profitability metrics, and more with Karan Birwani. And towards the end of the show, Lata will be in conversation with CS Vigneshwar of the Federation of Auto Dealers and Lalit Bhise of market research firm Bizom to estimate the impact of GST on Navratri sales.
Time to slip in a quick break. A lot of stock-specific action track for you on the other side in our special Top 10 segment. I'm just noting down the stocks for now. Saman Capital, Maruti Suzuki, Hyundai, TVS Motor, Hero MotoCorp. All of them will be reacting to positive news flow. Well, we're not done with the positive news. CSK Bank, Utkarsh SFB, and V-Mart Retail. On the flip side, Coal India and South Indian Bank could potentially be reacting to negative news flow. Take that break, come back, we get into further detail on all of these names.
Welcome back. Like we've been telling you, mixed cues across Asia. Let's get the implied open up on our screen. The question is, the RBI supercharged or turbocharged the bulls on Wednesday. Now, is that momentum going to continue or will it fizzle out? Well, the suggestion is that the start is going to be cautious. But let's see if the dips get bought, because that was what was happening in the market, at least on Wednesday. Now, time to boil this down to individual stocks as always. And we have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Gaurav, you open up first because big news coming in for Sammaan Capital. There's a change in ownership. Tell us more.
Well, yes, Abu Dhabi's IHC is going to acquire controlling stake in Sammaan Capital. Now, they have entered into a definitive agreement to acquire 41.2% stake. They will be acquiring it at a cost of around 8,850 crores, which is around $1 billion. Now, with this, they actually mark their entry into India's financial segment. And at the same time, this is also the largest ever primary capital infusion seen by in any of the NBFCs in India from an investor. When we look at the transaction, it also triggers a mandatory open offer. So let's understand how the transaction is going to be. Board has already approved to issue around 33 crore preference issue shares, equity shares. They have also approved 31 crore warrants. And with the open offer, they will be going with 34 crore shares in terms of open offer, all of which will be at a cost of 139 rupees per share. When we look at the events to watch out from here on, 29th October will be a key date because there will be extraordinary general meeting there where they will be considering preference issue and amendment of AOA for the approval of shareholders. So definitely a very big positive news given that now IHC is going to acquire majority stake in Sammaan Capital.
Okay, all right. Thanks a lot for that, Gaurav. In fact, we'll have the management of Sammaan Capital who will be joining in live from our studios at 9 a.m. to discuss the deal and how Mr. Banga sees things work out from here on. That said, let's move to the auto space then. And, as should we introduced our top 10 segment, the one with the brightest smile was Sonal. She is very happy it's Friday, but she's tracking Maruti as well as Hyundai. Sonal, tell us.
Good morning, Nigel. I think I always have that smile Friday or Monday, but let's talk about the auto space because Maruti reported numbers in terms of their September sales. It was largely in line with what the street was working with at 1.89 lakh units. Total sales are up 2.7%, absolutely in line with estimates. However, the domestic sales are down this time around by 6%. The growth this time was led by the export business where their sales grew by 52% to come in at 42,204 units. So in line with estimates. For Hyundai, they had reported their sales on Wednesday, which was higher than street estimates. But now they've informed the exchanges that they've started production at Talegaon plant with 1.7 lakh unit capacity. So it will be in focus on the back of that as well.
Okay, all right. Thanks a lot for that, Sonal. Well, let's go across to Coal India then. That stock is going to be in focus because they came out with the operational update. Remember, in August, there was the pleasant surprise where we did see a bit of a growth out there. However, for September, there's a degrowth yet again. So production is down a couple of percent points or thereabouts. And also, we have the offtake that's down close to more than 1% or thereabouts. So they're getting back to their degrowth ways. And at the half-year mark, well, they're struggling because there is a bit of a degrowth. 3% degrowth is what we have seen on the production front. And even on the offtake front, it's a couple of percentage points. So the halfway mark as well as September not looking that great. Axis Capital, actually, they were quite bullish with the stock, but they have downgraded the rating on the stock because of the weak operational performance and because of the weak volume numbers that they're reporting. Though they continue to have a target price at around 420 because they highlight that valuation-wise, there is support. However, operational performance not really keeping up. So going with the tinge of red on this particular name. But back to Sonal. Sonal, now you're on a two-wheeler. Tell us about Hero MotoCorp as well as TVS Motors.
For both Hero MotoCorp and TVS Motors, the numbers were better than what the street was working with. So total sales for Hero Moto at 6.87 lakh units, which is a growth of 8% on a YOY basis in the month of September. The total domestic sales were up 5%. Exports did really well. For Hero Moto, it was a growth of 95%. Of course, that's the smaller part of the business, but the growth was substantial here. For TVS Motors, the total sales are absolutely in line with Nomura estimates at 5.41 lakh units. Total sales were up 12% as management had guided for earlier. Two-wheeler sales were up 11% and total export sales were up 10% as well. So good going for TVS Motors and Hero MotoCorp.
Okay, all right, Sonal, got it. Thanks very much. So it's been a good month for most of the auto pack, including some of those two-wheeler names. Let's get back to Gaurav. Then he's watching out for the updates, quarterly updates that have started pouring in from a couple of banks and financials. Gaurav, tell us more.
Let's talk about CSB Bank. Good set of numbers. Advances increased almost by 29%, and this was again led by the gold portfolio that increased almost by 37%. Remember, the deposits that have grown by 25%, but this was the update in the last quarter as well, where we saw the quarterly update was strong, but at the same time, bank actually struggled with net interest margins. So definitely, along with the numbers, I will be watching out on net interest margins when the numbers, as in the results came. But as of now, good set of numbers. When we look at South Indian Bank, we saw weak set of numbers here. Advances that increased just by 9%, while deposits increased by 9.7%. Remember, management has spoken about the growth guidance of around 12% on a year-on-year basis. So definitely a bit below its own guidance. Lastly, let's also talk about Utkarsh Small Finance Bank. Board has approved raising funds around 950 crores via rights issue. Now, the next meeting will happen on 8th of August, where they will be considering and deciding the terms of rights issue. That means the issue price and the entitlement ratio. Remember, they have also given a healthy guidance of around 25% portfolio growth with 15% ROEs. Last time, the bank has struggled. It actually reported losses in first quarter. So, on the back of this new rights issue, we will be also watching out on what happens in the bank from here on.
Okay, all right, Gaurav, thanks very much for that. V-Mart is the next one we're going to focus on. Mangalam is here to tell us why. Mangalam, morning.
Good morning. So it's a good update that has come in from V-Mart Retail, because remember the last quarter was impacted by there being Eid in the previous quarter. So as a result of which like-for-like sales weren't as good. This time around 22% growth is what we've seen in their overall revenue, 807 crores. And it's led by 11% same-store sales growth. Remember the first quarter, the same-store sales growth was just 1%. So this is a positive. They've also added 25 new stores, closed about 2 stores. So total store additions this year stand at 38. All of this pretty much in line, if not better, than what the company had said. They said that they will touch nearly 20% growth in this festive season. They've done that just before that. And they will see an incremental 5 to 7% growth due to lower GST. So that's something we'll monitor as we move along the next couple of quarters. And they expect 60 to 65 net store additions this year. They've done nearly 40 in the first half itself. So see some green on V-Mart Retail.
Okay, all right. Great sales numbers coming in over there. Mangalam, we'll keep it on the radar. Let's actually quickly recap the stocks that we are watching out for today. Starting, of course, with Saman Capital, Maruti Suzuki, Hyundai Motors, TVS Motors, Hero Motocorp, CSB Bank, Utkarsh Small Finance Bank, and V-Mart Retail. All of those on the back of positive news. The ones that have negative news flow around them would be Coal India and South Indian Bank. Okay, so that's our list of stocks to watch. Let's find out what's the latest in the world of commodities. Manisha is here with a quick roundup. Hi, Manisha. Good morning.
Morning, and thank you for that, Surbi. I'll start with the crude oil prices, where we have seen 2% of a decline in the overnight markets. And with that, we are trading at a 4-month lows. Crude is suffering with higher supplies concerns. OPEC Plus, when they meet on 5th of October, could be looking to hike output for the month of November by 500,000 barrels per day. Also, Saudi Arabia is bringing its own supplies into the market. The U.S. crude and gasoline stockpiles are anyways rising. You're also looking at Iraq's Kurdish exports to start resuming as well. So everywhere that you look, there are supplies coming back to the market that's weighing on to the crude prices. Take a look at the gold and silver prices, and after making those multi-year highs and all-time highs, there is a bit of a profit-taking that you've seen in the overnight market. Remember also, China is out on holidays, so there's no buying coming in the Asian markets as much. So the market's really trading quite flat in Asia right now. What is continuing to gain, though, is the copper prices, trading at a 2-month highs right now. We've seen strong overnight gains. September, the month, was also on the positive side. The supply concerns in copper keeping it in good favor. So all that money, perhaps, that's coming out of gold and silver seems to be going in copper right now.
Absolutely. We'll leave it there. Manisha, thank you very much. Interesting sort of flow activity is in commodities as well. We'll take a quick commercial break here. We're going to come back with Mayuresh Joshi of William O'Neill for some fundamental stock conversation. We'll also have the management of Maruti Suzuki talking to us about the festive season sales that we've seen, in the month of September.
Welcome back. You're tuned in to Bazaar Morning Call here on CNBC TV18. Well, we have Mayuresh Joshi from William O'Neill who joins us on the show. Hi, Mayuresh. Good morning. Good to see you in as always. Let's talk about the big deal that came. Sammaan Capital stock up 22% in the last 1 month. The street was sniffing something. We have IHS is going to come in there and put closer to $1 billion into the company. What's your view on the stock?
Morning, Nigel. I think a large part of that news was getting gestated into the price. And now that the news has come in, I think let's see how the reaction on the stock will be. But generally, I think a large part of the news gestated in. And numbers have probably been in line with estimates as well.
But Mayuresh, hi, good morning. Now, in the financial universe, which is where all the action seems to be shifting after the policy, the question is, will you look at, and from a shareholder's point of view, you can look at any NBFC, right? But within that universe, will you look at Sammaan as it goes through this, transition, this ownership change, or will you look elsewhere? There's also Tata Capital that's coming to the market. So lots happening here. What do you think of Tata Capital? And, would you pass Sammaan and go for another NBFC, or is it a buy for you?
Morning, Surabhi. No, again, I think post the RBI comments, specifically in the policy, I think NBFCs should start largely remaining in focus. And at Market Spin India, I think our belief is that NBFCs are a tad bit better placed than a large banks at this juncture, primarily based on the fact that the cost of borrowing will obviously come down with the interest rate cuts that we've seen so far. At the same time, the expectation in terms of solid, durable advances growth, whether it comes to consumer durable advances or discretionary, I think that should start showing a solid amount of pickup as we head into Q3, Q4. Obviously, I think you need to be a little bit cautious because if there is some element of unsecured lending, that probably comes through the system. What happens to asset quality pressures going down the line in the coming few quarters is something to be seen. And therefore, I think within the space itself, Sammaan obviously has this tailwind of news coming through for it. But large leadership stocks is something that we continue preferring in the NBFC space. Shriram Finance as an example, or Bajaj Finance. Our own sense is that the kind of book that Shriram Finance has as an example, I think that should start showing signs of significant pickup as we head into the third quarter. And asset quality pressures, capital adequacy, provisioning, all seem to be very, very stable. Let's not forget the credit ratings that I was just speaking, which gives them their added advantage of the borrowing cost actually going even lower. Similarly is the case with Bajaj Finance. I think the expectation in terms of durable loans picking up, the cross-selling, the cost optimization that they've probably done, I think they seem to be a tad bit better placed within the NBFC. But again, as a bottom line, I think NBFCs, in our opinion, a tad bit better placed than large banks.
Okay. All right, Mayuresh, stay on. We'll have more questions for you in just a bit. But for the time being, let's put the spotlight on Maruti. The company managed to clock in sales to the tune of 1.89 lakh units for the month of September. Exports for the company have also moved higher by about 52%. Our colleague Parikshit caught up with Partho Banerjee, Senior Executive Officer, Marketing and Sales at Maruti Suzuki India. And Parikshit, of course, started off by asking him about the festive fervor and whether it can last. Take a look.
First of all, I would like to share that the first 8 days of the Navratra period, we have delivered 165,000 vehicles. So this itself is a record. In the last 10 years, we have never crossed the 1 lakh mark for the whole of the Navratra period. We are expecting that we are going to touch the magical 2 lakh figure, the number of deliveries which we are going to do in the period of Navratri. Coming to retail for the month of September, we are seeing a growth of almost 27.5% in the retails, which is a very good growth. However, we need to see this number with a little bit of caution that the customers who were supposed to buy the vehicle in the month of August, they had held back their decisions of buying the car, and they have purchased the car only after the GST 2.0 reform. But the number of pending bookings which we are having right now is close to 2.5 lakhs pending bookings at the beginning of this month. And I think that traction across all the segments is very good.
Right. So when you're saying that you've delivered 1.65 lakh vehicles in 8 days of Navratri and you could cross the 2 lakh figure, these are retail sales that you're talking about?
Yes, we have not yet crossed the 2 lakh figure, Parikshit. It is expected that by the end of the Navratri period, we are expecting to touch the 2 lakh mark.
Right. If I look at the production numbers, 201,915 26% increase in production in the month of September. Going forward, what kind of production can we look at if you have to achieve record numbers during October?
I think I would like to share that based on the response which you are getting from our customers, our supply chain team and production team has already taken the initiative of working on the Sundays and holidays in this month, the month of October, so that we are able to serve the customers who are booking the car right now. However, if the customers are delaying the booking of the car, then they will get the vehicle only after the festive period.
Right. So what would be like the average wait time for a customer who would possibly go to book a car right now? How soon can he get his car delivered?
See, it varies from model to model actually. Our dealers have got stocks. If it is available in their stock, then I think it can be delivered within 2 to 3 days time, depending on the finance of the car. However, if the vehicle is not there in the dealer stock and it is in our factory, then the transit time is going to be an additional time period which needs to be considered. And that varies from 4 to 5 days to 7 days, depending on the location where the customer is booking the car.
Right. I would like to ask you about export growth. You've also registered record export numbers. Which markets have contributed to this highest growth? What about the electric vehicle breakup when you look at export numbers?
I think right now for Maruti, all cylinders are firing, be the domestic, be the export. In exports, as you rightly mentioned, there is a growth of almost 50%. And typically, I think EV exports, last month we did is close to 3,000 numbers, which is a very good number. And right now we are exporting it not only to Japan or to the Middle East, but also to some of the EU countries like Norway, Denmark, Belgium, Switzerland. So across the European countries also we are doing the export.
Right. So you've already crossed 2.1 lakh units of exports in the first half of this year. Mr. Banerjee, would you say that Maruti will be on target? I think the plan was to look at maybe 4 lakh units in exports, or you think you'll be able to exceed that target?
Now I think the domestic market is also booming. So we are going to rework our strategy, how we are going to serve the customer, both in the domestic and the export market.
Right. Also, when you speak about reworking the strategy, a lot of the higher variants, maybe compact cars, are now closer and within reach of customers. So are you seeing customers upgrade, possibly who are looking at the mini segment, at the Alto or the Espresso segment, wanting to buy compact cars, and those looking to buy compact cars to maybe go for entry-level SUVs?
Yes, I think endeavor for any customer is to upgrade in the life, be it the two-wheeler customer upgrading to the entry-level car. And this is a very good opportunity for the customers who are having the entry-level car like the Alto and the WagonR to upgrade to a Fronx or a Baleno or to Brezza. So we are already offering very good schemes, upgrade schemes, by which the customers can upgrade to the higher level of the car.
The rural versus urban ratio in your total sales?
What we have seen in the month of September, the rural contribution is almost now 51%. Urban is 49%.
Okay, all right. Let's go back to Mayuresh. Mayuresh, what do you make of Maruti Suzuki? Big move is what you've seen on the stock. Sales are picking up as well. You heard the management, the way they're trying to reorganize their business. How much of the good news is in the price, and what do you like from the auto pack?
Nigel, I think a large part of that is in the price. But again, I think it's very, very optimistic based on the fact that volumes which were expected to grow in negative territory are now expected to grow in higher single digit in the positive territory. Again, I think from a company perspective, I think the company has historically dominated the entry level and the PV segment. Even in FY25, they almost had a 65% market share. And this has been disproportionately challenged by a lot of newcomers and competition and new launches that have probably happened. But again, I think with rationalization happening, both in terms of the income tax as well as GST, I think it would stimulate Maruti's core portfolio, whether it's Alto, Swift, WagonR, small segment, or the compact SUVs, Brezza, Fronx. the new launches that they've done, the Vitara and the Victoris, I think that strengthens their hold in the UE segment as well. And therefore, I think as the management was speaking, I think they're firing on all cylinders, whether it's ICE, whether it's small cars, whether it's hatchbacks or the larger hybrid cars as well. And therefore, I think a higher digit volume growth will largely translate into double-digit revenue growth, 12 or 13%, and a bottom line growth of 14 or 15 odd %, which makes it a very, very attractive proposition. Again, I think any decline onto the stock is something that we probably suggest investors to probably look at. We remain extremely optimistic. Apart from Maruti, Nigel, as I've always mentioned, Hyundai, India, and TVS Motors within two-wheelers is something that we keep on holding in our portfolios.
Okay, all right. What a journey, right, from Hyundai. It listed at, IPO price around 1,800, corrected to around 1,550. And from there, from April this year, it's moved to around 2,600, fresh 52-week high. Who would have thought? That's a 1-month chart, more or less flattish. You pull up a 6-month chart, you'll see, from around 1,500 rupees, it swiftly moved to around 2,500 rupees. Well, thanks, Mayuresh, for joining in. Wishing you a good Friday ahead, and we chat up rather soon. Let's slip into a short break. On the other side, we have Siddharth Rai, who's waiting for us, as well as Mehul Kotari. They'll give us how do they see the technicals of the market shaping up. Stay tuned.
Okay, welcome back. Well, let's just look at the big movers that we had day before yesterday, right? I mean, markets really buzzed around, indices ending higher. Nifty was up 200 points. What are the the shooting stars, and what was the price action, delivery data, etc.? Hormuz is here with exactly that. Hormuz, over to you.
Morning, Prashant. And of course, to talk about the stock that is going to be in the spotlight today, Sammaan Capital, and it's been on a 6-day winning run. But the trading volumes over the last 3 sessions have seen a significant uptick. Now, if you take a look at the 2 months prior, the 60 prior trading sessions, and the daily average volume there, that close to around 16 lakh shares. But if you take a look at the last 3 sessions, that has gone up to 12 crore shares for Sammaan Capital, and 10 crore plus shares traded on Monday and Tuesday, and almost 8 crore shares that were traded on Wednesday's trading session. The 20-day average being just around 3 crore shares, and almost 3 crore shares were marked for delivery on Wednesday compared to a 20-day average of 90 lakh shares. Now, if you take a combined volume of the last 3 trading sessions, almost 10 crore shares have been marked for delivery on Sammaan Capital. Of course, mind you, the stock remains in the F&O ban, so no new positions here. Now, the other one, of course, is Netweb Technologies. We spoke about this on closing bell on Wednesday as well. The stock was up 65% in the month of September, volumes being the highest since July of 23. And take a look at the volume increase that you have seen now until the 29th of August. From the start of the year, the average daily trading volume was around 90,000 shares. But since the start of September until yesterday, that volume has increased to over 42 lakh shares for Netweb Technologies. And even on Wednesday's session, we had more than 1.5 crore shares that were traded, 20-day average of around 40 lakhs, and 8 lakh shares were marked for delivery. It's slightly lower in comparison to the number of shares that were traded, but still higher than the 20-day average of over 2 lakh shares. Now, the other one that moved towards the closing was Borosil Scientific, and it was the biggest single day gain in over 3 months for the stock. The volumes were the highest since June last year. Wednesday's volumes were the sum of the last 38 sessions put together for Borosil Scientific, and that was around 28 lakh shares that were changed hands on Wednesday for Borosil Scientific. The 20-day average is only 61,000 shares. Now, in the delivery terms as well, out of the 28 lakh shares that were traded, 3 lakh shares were marked for delivery, and here too, the 20-day average is less than 30,000 shares. So, moves on significant volumes, particularly on Netweb and on Borosil Scientific.
Okay. All right. Thanks a lot for that, Hormuz. Well, let's hop across to Ria. She's here to tell us about the brokerage of the day. Ria?
Well, yes, Nigel, Goldman Sachs has initiated coverage on the defense and aerospace sector. Now, they've initiated coverage on 8 stocks, and they've highlighted 3 key themes. The first one is the increase in domestic defense TAM by more than 6-fold versus FY25. This is expected to go to 10 lakh crores over the next 20 years. The second one is the scope for indigenization at the bottom of the tech pyramid, which includes components and process materials where local players have been underrepresented up until now. And the third theme is higher defense exports. The government has targeted 50,000 crores in defense exports versus just around 23,600 crores. This 50,000 crore target is for FY29. Now, apart from this, they've also highlighted 3 key trends which make them more positive on private players versus PSUs, where the focus has been up until now. The first one is the shifting spending landscape. Now, looking at the recently released TPCR, as well as the focus on new technologies, which includes AI-enabled systems, electronic warfare, as well as UAVs, they believe that private sector players are better exposed to these themes. The second one is superior EPS growth over the next 3 financial years. Now, for private sector players, a 32% CAGR is expected here versus just about 13% for PSUs as per their estimates. And the third trend is higher benefit, as that private sector players are expected to benefit greatly from the rise in global defense spending when you compare them to PSUs. In terms of the stock picks, they have a buy call on solar industries as well as PTC industries with a 36% and a 58% upside respectively for each of them. They also have a buy call on Astra Micro, Data Patterns, Azad Engineering, as well as Bharat Electronics. On the flip side, they have a sell call on Bharat Dynamics on the back of contracting margins and unattractive valuations. And on HAL, they have a neutral call. So clearly, the focus is going to be more on private sector players versus PSUs.
Okay, all right. Got that, Ria. Thanks very much. So we'll keep a lot of those stocks on our radar. Let's also just revisit the auto sales that have come in over the one-day holiday, and most of those numbers have been looking good. Sonal?
Oh yes, most of the numbers have been good. The ones reported on Wednesday as well and post-market hours. So let's start with Maruti now. Total sales at 1.89 lakh units, in line with Nomura estimates. If we take about the total growth, it's 2.7%, largely led by the export business, because domestic business this time around saw a decline of 6.3%, but exports saw a growth of 52% on a YY basis. Let's talk about Hero MotoCorp as well. Good growth here, 12% on a YY basis. This is better than what Nomura was estimating, has come in at 6.87 lakh units. Their domestic sales are up 5%. But again, exports have done really well, 95% on a YY basis. It is a smaller part of the business, but the growth has been substantial even for Hero MotoCorp. Let's talk about TVS Motors now. Total sales are in line with Nomura estimates at 5.41 lakh units. Total sales are up 12%. This is something that the management had indicated as well. They'll see double-digit growth in the festive season. Two-wheeler sales up 11%, and total exports are up 10% for this company. So good going across the board.
Absolutely. Sonal, thank you very much for that. So that is autos which are in focus right now. Well, let's get some technical trading ideas in as well. Siddharth Rai of Stockbox is with us. Mehul Kothari of Anand Rathi is with us as well. Gentlemen, good to have both of you here. Thanks for your time. Siddharth, let's start with you. How are things looking? I mean, we got a bit of a lift higher, which sustained through the course of the day before yesterday. Is there more here?
Hi, Prashant. Good morning, and thanks for having me on the show, first of all. See, Prashant, if we talk about Nifty, the turnaround attempt that we saw on Wednesday's session, I think it is here to stay, and we might also see it extending. Firstly, because, Prashant, the Wednesday's move was largely driven by either big private banks or some of the heavyweight auto counters. But quite a few other spaces are still looking oversold. There were signs of recovery from IT and FMCG, pharmas on Wednesday's session, but a full-blown recovery is still due. So I think from here onwards, going ahead, Nifty will stay bullish. Positionally, our view should be bullish because towards this weekly expiry, we can see Nifty trying to go towards 25,000, 25,100. So going ahead, the view should definitely be bullish because the market seems to have a good support here at 24,800.
Okay, all right. Siddharth got that. We have Mehul as well with us. Mehul, hi, morning to you. So on the indices, whether the Nifty or the Bank Nifty, would you be looking at any long trades or are you looking to perhaps sell the rallies?
Good morning, Surbhi. First of all, thanks for having me on the show. And see, the view here is, well, after a superb pullback on Wednesday, we feel that 25,000 still remains a big deal for the bulls. There is a massive build-up around 25,000 call options, and it's a technical resistance too. Till the time that is not taken out, there is a possibility of small dip in the market because we already saw a rally of around 250 points on Wednesday. Maybe somewhere around 24,800, the risk reward would be favorable to go long from here on. Our view is about 25,000. We expect massive short covering in the market, but as of now, 24,600 remains a support for short term. So overall, even if someone wants to go long, I feel 24,800 or 850 is a nice area for going long. Now, coming to Bank Nifty, even we feel that Bank Nifty also has some headwinds because 55,500 to 55,700 is a very, very strong hurdle since it's a placement of falling trend line on technical chart. So even this index had a decent rally in short term and hence some kind of consolidation could be seen on the card. So overall, the view is, yes, we are bullish, but right now the risk reward is not favorable. So one should wait for a dip or a nice pullback for going long.
Okay, so use the pullbacks to go long. Got that. Let's get to individual stock names as well. Mehul, let me start with you. What's on your list?
Stock, Surbhi, first of all, it's Mazgaon Dock. We are liking it because we feel that shipping stocks can do well once we are about 25,000. So one can buy around 2,800 with a stop loss of 2,700 and it can go further to retest 3,000 odd levels. So those are our short-term targets for Mazgaon Dock. Another stock which we are liking from the defense space is BDL, that is Bharat Dynamics. One can go long on dip near 1520 odd levels. 1460 should be the stop loss. Target for the same could be 1,600 and 1,620.
Okay, Siddharth, let me come to you. Stocks for the day.
So we see, as I just said, we saw big moves in private banks after a long time on Wednesday, but especially there was one highlight and that was Kotak Mahindra Bank. See, so for the past 3 months, this stock has been playing zigzag above and below the level of 2,000. But on Wednesday, there was a very strong move. There was almost an open low. The stock started running almost from the point where it opened. and there was a very big breakout. So Kotak Mahindra can lead the move from here, and the spot is trading around 2063, 2064. It can be bought. The stop loss will be around 2045, and our targets will be, the first target being 2120, second target being 2135. The second stop is APL Apollo Tubes. See, for the past 2-3 months, the stock has been showing, it has been on a path of a good recovery, but on Wednesday, there was a fresh breakout. It was a very good move, and this breakout has taken the stock into a fresh momentum. So good move can be seen here as well. So APL Apollo, the spot price is around 1731, 1732. It can also be bought. Stop loss will be 1705, and our targets being, the first target 1780, second target 1795.
Okay, all right. We'll take a quick commercial break here. We're going to come back with a pre-opening raid. We'll also have the management of Sammaan Capital for that big acquisition and that big deal, which was announced yesterday evening. Gagan Banga of Sammaan Capital with us in just a bit. Okay, I think we are coming up to the pre-open session, and rates will start to come up a little while. To begin with, we'll settle down as we go along. Now, as promised, we have Gagan Banga joining us, Managing Director and CEO at Sammaan Capital. He's right here in our studios. Gagan, great to have you with us here. Thanks very much.
Thank you.
It's been a while. First up, congratulations.
Thank you.
You've got IHC as an investor, as a promoter,
yes.
Pretty much, right?
As a promoter, yes.
So it's a big one, $1 billion deal, very large. Before we get into the specifics, how this will play out, etc., to your mind, you think some of the past issues with Indiabulls Housing, Samman, I mean, all that now kind of we start a clean slate in that sense with the new investor coming in, a new promoter really, I mean, changing hands in that sense.
Yeah, so my big picture theory on that is that when large financial services companies, banks, NBFCs, whatever, have to hit a deep reset button, it takes 6 to 8 years to kind of reconfigure yourself. It's a large balance sheet. So it took us our time. It's been 7 years since, so to say, the IL&FS crisis started, which with a lag effect did affect us. But we kept putting one foot in front of the other. And I think this investment for me is beyond just an investment. It's some sort of a victory. And it's also, as I see it, a validation of the management team. They're clearly backing the management team, and I'm happy that they're putting so much of faith on practically professional individuals.
And the last point that you mentioned, they're backing it's a bet on the management team as well. So the management team, Himanshu has come on board as deputy CEO. That team remains the same.
Yeah, so their whole idea, and that is why this is such an important transaction, is that unlike a typical fund transaction, they are looking at this investment as perpetuity. So they don't have a fund life or something like that. This is their India financial services foray. And the second thing is, very clearly they want to govern the company with a framework which is more board driven. And the management has its accountability to the board and other stakeholders versus someone coming in and joining the management team. At least that's not what is visualized right now.
This was, in terms of the transaction itself, this was outbound, this was inbound in terms of, I mean, did you go looking for an investor? And how long did this take? And why IHC?
These transactions take time, and very clearly one was thinking of the strategic route for reinventing the organization. The organization, after the last year's equity raise stabilized, was slowly walking towards business as usual. But if we have to really get back to growth and take advantage of whatever is happening in the country, I strongly believe that the next 20 years, as we move towards our Prime Minister's vision of developed India, Viksit Bharat, I think the next 20 years are super exciting. And these are perhaps the last 20 years of my professional life, or at least 10, 15 years of them. So I needed a partner.
Yeah.
And without getting into the specifics of who went looking for whom, I think
both of you found each other.
Yeah, we found each other.
So let's talk about life from here on. Once the approvals come in place, which you've told us in the break that it could take 6 to 12 months, right, for the approvals.
12 months, yes.
So now IHC brings in 8,850 crores, and we'll see how the open offer goes. Give us a sense of the capital adequacy. I mean, what segments you'll be looking at, the new Samman capital as it will be once this transaction goes through and the money comes in, what happens to the business?
Yeah, so firstly, what does this money do for us, right? So often people think about equity capital as a source of only capital adequacy. It is beyond that. It is the foundation on which you build a building, which is built on debt. We are ultimately a conduit, we borrow and we lend, right? The solidity of that building is an outcome of how solid the foundation of equity is, right? Now we have a solid promoter, right? As solid as can be. So I hope to be able to build a very, very credible liability franchise. The struggles of the last 7 years have been maneuvered only because the liability franchise as existed in 2018 was also rock solid. It was diversified, it had duration, whatever else, so we were able to manage. Now, not thinking of it from a management perspective, but from a growth perspective, if we are able to get efficient capital, efficient meaning low cost, most diversified internationally, domestically, and cutting across as many streams of pools of capital, over the last 7 years, very quietly, we built a bondholder base, retail bondholder base of almost 100,000 people. So that now with this sort of a parentage can easily become 1 million people in no time, right? And that's as granular as it gets. So the first objective is to get efficiency and optimize on the cost of capital, the whatever else we do.
So just to understand that, I mean, from building the equity base perspective, that foundation, are you good now? For how many years? Will you at some point in time look at some other avenue of further equity raise, or is the equity part now fully taken care of?
The equity part is fully taken care of.
Okay.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. 150, 70 to the layman may mean nothing. For me, it's
huge.
It is the whole spread.
So going forward, your cost of capital basically should come down by 150 bips.
My estimation is that 12 months from now or 18 months from now, 6 months after the approval, we should be 170 basis points down.
Lower.
All right. Hi, Gagan. Congratulations on this big deal. And let's get a couple of more details out of the way. Your book value of the company, I think it was around 260 prior to this particular deal. I think post, rough estimates suggest that it comes down to around 210 rupees. Would that be a fair estimate?
Yes.
All right. So that's out of the way. So you're going to be focusing on growth. Cost of capital goes down as well. What is your targeted ROE for the business on a sustainable basis?
Yeah, so we would ideally, on an average, run at 15 to 17%. Go up to 20, which I believe would be a 20-30 type of event, 29-30. And then typically then you dilute and buffer up capital to get the next level of growth. So up until 2030, we should be somewhere between 20 to 25% capital adequacy.
Okay.
And trying to hit a 20-ish% ROE mark.
ROE. And ROA?
ROA by that time should be in the ballpark of 3.5%.
Got it. Okay. All right. So that's out of the way. The legacy book, that's going to be important, right? You have indicated, I think it's mid 30% as a percentage of your portfolio and looking to bring it down. Give us a few details. Your legacy book, what is the collateral you have against it? If you could help us out with that number. And any of this capital will be used for provisioning for that legacy book?
So practically the entire book is a secured book.
Okay.
Right. So we will have property security behind property or property akin security backing practically every loan, right? At this point in time, very clearly one is wearing the growth glasses and is not looking at or overemphasizing on what needs to be unwound. So this is a pivotal shift in my thought process. Right? Till day before yesterday, 80% of my time would go in just trying to ensure that the book is generating enough cash for me to be able to pay down my obligations. That as a process is now well set. Whoever has to pay will pay. Whoever will not pay will go to court. We will go to court against them and we will recover our money. There is equity, there is security, we will recover it. We may recover it tomorrow. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Right. Then just a couple of questions, a couple of quarters down the line, just to take forward Nigel's point. Will there be need to kind of sort of, get all some of the legacy stuff out, write off kind of thing? You have the capital for it to do it now. I mean,
that clearly is strategic stuff. So I think in 2 quarters from now, what one would stop doing is breaking the book into legacy and growth.
Yeah.
The book would be book, right? What are the tools available? There are several, right? So we will explore each of those opportunities to see what makes most sense.
But it is, whatever it is very manageable now with
100. It was always manageable, right? Through the course. So we started the crisis just from a perspective of, capital and manageability.
We're going to hit market open and we're going to finish.
Yeah,
so can I just ask one more question? Yeah. Ratings, right? Credit ratings. So we put out this note. JP Morgan is essentially saying that they're expecting a benefit of 2 to 3 notches uplift once the transaction materializes. Is that your sense as well? Have you been engaging with rating agencies, S&P, etc.?
Yeah, so with rating agencies, we are constantly engaged. Post this transaction, one has not. But yeah, that 3-notch, we should be at par with sovereign, much like some of the other larger players are. That's what I would expect to be the outcome in 18 months.
And for the RBI approval, is it a matter of when? Or is there because again, or is it going to be scrutinized a little bit more because of the IHC and, the royal family connection, etc.? Or how do you think about that?
IHC is a large listed company. They are publicly owned. I don't see why the evaluation should be any different. Will it be a thorough evaluation? It is obviously a large balance sheet which is going to be owned by someone. And therefore, RBI would certainly look at it from a 360-degree perspective.
Gagan, finally, your book right now is about 63,000 odd crores, 64,000. I think there's a stated objective that you want to grow it to 1 lakh crores by FY27. Just give us the composition of that book, because you're saying 2 quarters down the line, anyway, there'll be no legacy, non-legacy. It'll be just one book. So how much housing? Will you look at some new segments? I mean, how will it look like?
At this stage, over the next 12 to 18 months, we continue to do what we are doing.
Okay.
We have clearly identified the mid to lower income group of India as our target segment. Whatever are the loaning requirements of that segment, we will evaluate each of them and certainly pursue whatever is commercially viable at Samman Capital. Whatever is non-loaning, which is services such as insurance, etc., we will do in partnership. So that's broadly the thought.
So non-lending services will be built out.
A franchise for non-lending services will certainly get built out.
Okay.
All the lending services on our balance sheet. Do we continue with an asset-light strategy, which I'm particularly passionate about? Yes, they're also very passionate about that.
Yeah.
So we would continue to work in partnership with banks and other entities.
And the 1 lakh crore target by 2027?
Yes.
All right. And credit cost, what is the target out there?
On a run rate basis, 100 basis points.
All right. Gagan, thanks a lot for coming down to the studio. Congratulations on this big deal. And tell us the secret of maintaining yourself for the last 15 years, looking exactly the same. Thanks a lot for joining us.
Thank you so much.
Thanks very much.
Thank you.
Okay, I think that is Samman Capital. I think the pre-open has also come to a close. Actually, we are, a couple of minutes away from market open, minute away from market open. Just a quick look at a few other things, right? Maruti, Hero, TVS. I don't know if you've got time to pull those stocks up with regards to the September auto sales reactions. Nothing very much. I mean, 0.5%, 0.6%. Coal India, CSB Bank, South Indian Bank, V-Mart Retail are some of the other names which will come up. And they're all up, coming up right now. Utkarsh Small Finance Bank, Hyundai are the other names that we want to quickly highlight as well. Utkarsh is up about 2%. So actually, out of the names that I mentioned, it is Utkarsh Small Finance Bank, which has got a bit of a lift at this point in time. I think
V-Mart, I don't know if you spotted V-Mart.
I think it came up.
Yeah, 7%. 7% on 22% growth.
Absolutely. Market open, first rates coming up for indices, headline indices, and we'll go down to individual name stocks and pick it up from there. Day before, which is Wednesday, was a good session, and we'll be watching if there's follow through today. So 24,820 is where the Nifty is at. The Nifty Bank is at about 55,370. The small cap index and the mid cap indices are a little better, but barely so. The mid cap index is up about 1/3%. The small cap index is about 0.2% higher as well. So very, very flat kind of start to this Friday morning. 1,170 stocks are higher, 500 stocks are lower, but this is straight up out of the gates at 20-25 seconds in a market open. Nifty heat map, if you can quickly put up, it'll give you a quick sense of how we like it to start, and we'll dive into individual names after that. What do we have? It's a mixed kind of picture. Tata Steel, Axis Bank on one side, Aisha Eternal on the other side. But more down than up, but not, really leaning one way or the other in terms of giving you an indication of how things are likely to pan out. So it's a even keel to begin the day. Surabhi.
Okay, so the financials are cooling off after Wednesday's big move post the RBI policy. So HDFC Bank, look at even the non-banks. Bajaj Finance down about 0.5%. I saw Shriram Finance also lower by about 0.2, 0.3%. So that's a slightly weak patch of the market. Eicher Motors is down 1%. Eternal, Wipro, these are stocks all on the lower side. Nestle, Lever. So not much of a consumer or consumption thrust, at least right now. Trent is down about 0.5% as well. The big one that's quite marked is HDFC Bank, which is down over 1% at this point in time. Okay, let's look at what's happening on the other side. It's all glitter on steel today, really. Look at Tata Steel, 3%. JSW Steel, about 0.7%. So some of the metal stocks are continuing their good form. You remember you heard that conversation on Wednesday with the metals analysts that we had. And Nigel was pointing this out as well. Will steel start playing catch up? We've seen that in copper. Of course, precious metals have been going through the roof. So it's these stocks looking good today. Axis Bank is bucking the weak trend in banking. It's doing really well, 1.5% up. There's some buying on Tata Motors, Hero Moto after the good numbers came through, and SBI and Kotak Mahindra Bank. Now, these are banks on the upside. So the bank Nifty is absolutely flat, split down the middle for now. Nigel.
Well, a couple of companies actually are reacting to very, very good quarterly updates. Sai Silk Saris, well, that one, in fact, is up and about. I think it's up more than 5%. Their quarterly update came in, on Wednesday post-market hour, so that's up 11%. V-Mart Retail is another stock that's bucking the trend. Big up move is what we're seeing on that particular name, so that's spiked up in trade. You have PTC Industries, it's a 16,000 rupee stock, but that as well has opened up with solid gains in today's trading session. Let's get that one up for you. PTC Industries, the 16,000 rupee stock, I think so. That should, come up on the screen. Sun TV is seeing some profit taking. Remember, it had a big run in Friday's trade, in Wednesday's trade, beg your pardon. And today, in fact, it's come in for some mild profit taking as we speak, down 4.5%. That buzz with regard to a probable deal on the IPL franchise, RCB, that's what created the excitement. So that one, in fact, now is coming for some profit taking. Atlanta, a stock that had was up, I think, 20% in Wednesday's trading session post the large deal. Well, it continues its winning ways, up another 20% post the large order win that they won. So that one's up and about in today's trade itself. And we got that PTC Industries, the one up more than 6%.
And we'll have that note, right? This is the Goldman note, by the way, which is the reason why PTC is up. So actually, we should put up Solar as well, since we're talking about the Goldman notes. There were two names, and I think Ria should be able to join us in a bit from now to talk about the Goldman call on PTC. And we've had the management on occasion with us, PTC Industries, and of course, Solar Industries is the other one, which is up 4% on your screens at this point in time. 1,500 stocks are higher, 860 stocks are lower right now. So that is basically what's going on. Oh boy, look at NetWeb. Started slow, it's zoomed up, rocketed up, 4.5%. My God, it's just, it's, I think this week we're up 15% again. And 4 weeks back, price was 3,000.
In 1 month. 88% in 1 month. What do you even say?
Yeah, I mean, it was 3,000 bucks. It was actually 2,200 rupees close of August. And it's at 4,200, right? So it's some move. Okay, Vari Energy is up about 3%. It's the third largest volume-led gainer. Tata Motors is up about 2.25%, 735. I mentioned Solar, PTC we mentioned. Indocent is up about 1.7%. There is Sai Silk. Did we? Okay, 12%. Nigel mentioned that. 173 on Sai Silk. V-Mart, of course, 7%. AU Bank, TD Power Systems is up about 4.5%, and so on and so forth. 2:1, clean, and actually more than 2:1 is the advances to decline ratio as we begin this particular session. Sun TV is giving up some of those. I think Sun TV moved very, very aggressively. From 520 on Tuesday, on Wednesday, it closed at 602, 603. So it's basically giving back some of that massive move. It was 4-year high volumes on Wednesday, the last trading session before we went into that holiday yesterday. Chetan Sheth is with us. He's Asia Pacific equity strategist at Nomura. He's with us. Chetan, great to have you with us here. Thank you very much for joining us. Always a pleasure. Just your thoughts in terms of what you're picking up, Chetan. We'll get your earnings estimates and what you like as a house, but just wanted feedback first. This non-stop FII selling, are we getting to some sort of a climactic action, or there is, I mean, it's going to continue. Maybe large amounts, maybe drip, drip, whatever. There's no turn in sight. Where do we lie on this question on terms of foreign flows?
Well, from my perspective, I feel that probably this drip outflows will continue for India. And the reason is very simple, that there's a lot of positive momentum for some other larger markets in Asia and emerging markets. And that's primarily Korea, Taiwan, because of the AI thematic. And then clearly things are turning in China. So these are large markets, main, I guess, competitors of India. And those are really getting all the investor attention. And if I look at India, from my perspective, I'm less concerned about macro or micro earnings, but I'm most concerned about the tensions India has with US. So if those tensions do not cease or reduce from here, I guess that will continue to be an overhang on the market.
Chetan, hi, good morning. Who would have thought, right, that in April, when all of this tariff business was announced, we thought that this would be the least of our concerns and we'll be quick to get the deal. But here we are, October, and still counting. So that's one overhang. But, is it a factor where the moment there's a change, do you expect like a huge gush of liquidity, foreign liquidity to come in the market? Because, foreign funds have been under-owning India for such a long time. So will it be a very quick shift and therefore a gush of liquidity? Or will it be only a gradual recovery, even if we start getting some sense of a thaw?
Well, I think the thaw should be unequivocally positive for India. I don't think so you will see a gush of liquidity, because it's also a function of what other markets in our part of the world do. But let's say we are in first quarter of next year, there's possibly a thaw in India-US tensions, and by that time, maybe the tech, this AI thematic has rolled over, or there are more concerns about monetization, capex, and China markets are also going the other way, because maybe the US-China tensions also escalate. I think then you can expect a gush of liquidity, because investors will just go to the markets which have underperformed, which is India. So, but, if it's just, if the other markets continue to do well and they have positive catalysts still in place, I only expect a little bit of incremental liquidity coming in. But for now, for me, the major concern is really US-India.
Okay, all right. Hi, Chetan. Good to see you. Well, you have highlighted in your note that valuations are a little bit stretched, but they're not yet bubbly. Do you think, though, we're bracing for a somber end to 2025? Barring India, most equity markets actually have done well. So do you think we see some bit of, tepid action towards the end of this year?
I think it's possible, but to be honest, really tough to call. But the simple thing I will just say is that valuations in the 4 large markets of Asia, including India, are still on the high side, right? But, valuation can stay rich for a prolonged period of time, so long as your positive developments continue. That's what I always tell clients. It works the other way also. You can have cheap stocks. They will remain cheap for a prolonged period of time unless you see positive catalysts. So it's tough to really say, but I think for now the momentum is there in some of the other markets. Valuations are on the higher side. We're still seeing continuing earnings downgrades, by the way, for Asia. And actually, on that aspect, India is not dissimilar. So I see a lot of commentary about people saying that earnings downgrades are happening in India, but it's not very dissimilar to what we see even in markets like Taiwan, Korea, and even China. Actually, China has bad earnings downgrades as India. So tough to say on a 3-month view. Our targets are, by the way, below where the spot levels are. But again, it's really tough to say. My sense is, I think probably in the near term, positivity can continue. Maybe in December, because this has been a fantastic year for investors, maybe you'll see some risk off or profit taking. People will look to close books in maybe late November before the year-end holidays.
Right. Chetan, just to take that point forward, y'all had that tactical call on China, which has worked beautifully, but you'll have a structural positive on India. Do you think bulk of that tactical call on China has mostly played out, since, as you're mentioning, that earnings are still not picking up to the extent that is expected? So your view on both?
So very relevant question. I'm glad you've asked. So see, China now trades at 14 times. On 13th of May, when US and China met at Geneva, that's the day when we upgraded. And back then our simple thesis was that if you see relative stability in US-China, it would lead to reassessment of risk premium that's been attached to China stocks, essentially PE rating. So the story was not macro, it was not GDP, it was not property, it was not earnings. I think that's played out. Probably there's more to go because at 14 times, it's still not like 20 times or 18 times. So I think there's, and AI theme is also now supporting many parts of the China markets. There are hardware players, there are cloud computing companies. All these companies will benefit, and they have proper business model. They are free cash flow positive companies. The second largest or the largest company in China, Alibaba is FCF positive. So I think it can continue. For India, the problem is that you would make a punchy call that maybe on a 6-month view, India might outperform because it has underperformed the other markets quite significantly. The problem is that on an absolute level, India has still not gone down a lot. I mean, it's like, if I look at Nifty and Sensex from the high point of September 24, you're just down 5%. Yes, Indian investors may feel that, look, India has not done anything whereas others, NASDAQ and all these markets are doing well, but it has not come down. So I think there's, valuations is a concern. The optics narrative around US-India is quite negative, right? And as far as the structural view is concerned, I'll just say that, look, it is there, but again, I think that that view can be challenged if you assume that these US-India tensions continue, and the US potentially also aims at India's very important services export sector, because it has, in my view, significant implications.
Absolutely.
So, that view will depend on.
Absolutely, Chetan. And, I was just thinking about that. We know that it was 2% of GDP, right? That's the value of our goods export to the US. But yet here we are, and we're having this conversation with you. And the dominant concern in your mind on India is just India-US, just what's happening at a diplomatic and political level. So, just for a moment to drive away from that and to talk about earnings here. Now, if we had fantastic 15% earnings growth, maybe that could have made a compelling case, irrespective of the tensions, to be in the market. But we don't have that right now. But do you see that earnings trajectory pick up in a meaningful way? I mean, look at what the RBI is saying. They're saying there's ample space to support growth in the coming policies. Though I think Sonal was expecting a rate cut this time around. Didn't happen. I mean, your India economist. But I think she's still working with at least 50 basis points rate cuts in the coming few months. Then there is a GST cut. So do you see any meaningful pickup in corporate earnings?
Well, as a house, our India equity team, they continue to pencil in like 4 to 6% earnings growth downside, looking at 26 and 27, right? So probably we are 1 to 2% already down. So probably another 3-4%. I haven't done the proper maths, but as net, we are expecting earnings downgrades cycle to continue. That's the house view. And some of the targets that we have, whether it's for Asia, ex-Japan, China, or even India, they already assume some earnings downgrade. Even at broad, by the way, AEJ level, which is what I look at, generally we expect earnings to see cuts going forward. One thing which I will say is that there's a little bit of an upside risk now because of what's happening in Korea, specifically with some of these memory stocks. So maybe there's less downside risk, but generally speaking, I feel India earnings will probably continue to be earnings risk.
Continues to be earnings risk, and remember we put out it was I think in early August, right? Lack of AI options. In India, right?
Yeah.
And perhaps that is also because it is every day you wake up. You were talking about Surabhi in the morning that, by the way, Sam Altman was in Korea signing up deals for his Stargate project, right?
Yeah.
Samsung is going to...
Mitsubishi did it, which is why those shares were surging in Japan this morning.
Yeah.
And then all these $100 billion checks that are being cut across the AI universe.
ARC, which is Cathy Wood, she's apparently bought... Chetan was talking about... the Chinese names, Alibaba. I think she's bought, not that is a point of endorsement. Actually, it is.
On that, let's ask Chetan. Chetan, so we know that, one major sort of shortfall here is that we don't have deep tech or AI themes in India to play, and the rest of Asia does have that. But do you see a sustained move? Or will investors question, as there are some questions around US tech, will there be some questions around Asia tech? And therefore, that could be, to some extent, helpful for us. So I don't know if you see anything over the next 6 to 8 months which starts punching holes in the Asia tech narrative?
Yeah. There's almost 100% guarantee that in the next few months or quarters, there will be a big question mark on these names as well. But of course, the problem is the timing. I have spoken to investors 6 months ago, 12 months ago. There were investors who were skeptical about valuations and AI. Many of them have been proven wrong. And as of now, there are still people who are skeptical. If you remember, I think we were just talking about it. Last week we had a 3-4 day pullback in US stocks and Nasdaq because after this Nvidia circular deal with OpenAI and all, and that also led to this bubble fears. So I think the problem with bubbles is first of all, I don't think so we are in a bubble. I think it's very different. But let's say we get to a bubble. The problem is that it's very difficult to pinpoint exactly when will that bubble burst. So short answer to a question is, I think there will be questions. But I don't think so it's in the near term. Maybe it's a 26 story or a 27 story, because at some point in time, the market, the investors will question the US hyperscalers, people who are spending so much money on hardware spending, which is obviously benefiting some of the hardware stocks in Asia, particularly Korea, Taiwan, and some in China. There will be questions. And that's when, if some of these companies announce a cutback in CapEx, right, or the actual CapEx doesn't meet market expectations, that is potentially one catalyst where you will see a kind of a pullback on some of these stocks. But timing is very difficult.
By the way, I'll throw in one more angle, which is obviously slightly off tangent. But so there was news recently that HSBC has put out a release saying that they've operationalized a quantum computer and they showed results of it. Okay. Maybe it was a slow news day. That's why it got a lot of press that day. It was last week. I think it was 6-7 days back, right? And it said that there's some 35, and this was on the bond side, 35% more efficiency in filling bond quotes. I mean, on the bond side, right? And they said, well, it's a big breakthrough. So now one quantum computer, according to them, is equal to one data center. Yeah. So think about it, right? I mean, quantum, just the technology is seen to be 5-6 years out. Who knows, something somewhere sort of comes up. So you've basically been investing in the wrong kind of compute. I don't know. It's just a question which I don't think anyone is even asking. I'm not saying that this is all ready, is a bubble to be pricked. I don't think it's a bubble. It's real. But, technology is...
See what Chetan is saying. Chetan is saying a couple of months down the line, people will start asking harder questions. And all your fancy GPU trades and the memory chip trades and quantum computing trades. When, the pendulum swings, it'll be back to value retailing. It'll be back to all the shoes that are selling in India. It'll be back to the 1 rupee sachets and the volumes they're generating. Apna time aayega, Prashant.
AI, when you have an AI body double, why do you need shampoo?
Oh gosh, you're making me depressed again on Friday morning.
But I think, by the way, on that note, yesterday, OpenAI finally said that they've concluded that secondary share sale, valuing the company at $500 billion. ChatGPT came out in November 2022. Yeah. The fastest $500 billion I think we've seen. Obviously, it is by far, no questions about it. Chetan, great to have you with us here. Thank you very much for joining us. Really appreciate your time and good conversation. Well, 60 points lower, 24,778 is where we are at. And it's looking pretty, it's looking dull, right? I mean, the morning so far, and we're within the first 30 minutes of trade, not very much. But one space which is attracting a lot of attention, we mentioned the stocks which are moving, is stuff like PTC Industries, Solar Industries. Goldman Sachs has initiated, I think, on 7 or 8 names in the defense/aerospace arena, and they see upsides, max upsides for these 2 names. Ria is here with exactly that. Ria, over to you.
Well, yes, Prashant, they've initiated coverage on 8 stocks and they've highlighted 3 key themes on the back of which their optimism spurs. Now, the first theme is the increase in domestic defense TAM by more than 6-fold versus FY25. This is expected to go to 10 lakh crores over the next 20 years. The second key theme is the scope for indigenization at the bottom of the tech pyramid, which includes components and processed materials where local players have been underrepresented up until now. And the third one is higher defense exports, since the Indian government has targeted to reach around 50,000 crores in defense exports by FY29 versus just about 23,600 crores in FY25. Now, apart from this, they've also highlighted 3 key trends on the back of which they are more positive on private defense players versus PSUs, where the concentration has been up until now. The first one is the shifting spending landscape. Now, looking at the recently released TPCR, as well as the focus on new technologies, which includes AI-enabled systems, electronic warfare, as well as UAVs, they believe that private sector players are better exposed to these themes. The second one is superior EPS growth expected over the next 3 financial years. For private players, they are expecting a 32% CAGR versus just about 13% for PSUs. And the third trend that they've highlighted is that private sector players are expected to benefit greatly from the rise in global defense spending versus PSUs. Now, in terms of the stock picks, they have a buy call on solar industries as well as PTC industries, 36% and 58% upside respectively for each of these. And both of these stocks are up and away in trade today on the back of this. They also have a buy call on Astra Micro, Data Patterns, Azad Engineering as well as Bharat Electronics. Fair bit of buying seen on some of these stocks as well. On the flip side, they have a sell call on Bharat Dynamics on the back of contracting margins and unattractive valuations. And on HAL, they have a neutral call.
Okay, thanks a lot for that, Ria. Massive, solid impact note coming in there from Goldman Sachs. We'll move into Mangalam. Mangalam, V-Mart Retail, you told us this morning the operational update was good. The street loves it.
The street indeed loves it. In fact, more than that, the street, I think, loves the products that they're selling right now because they're only cheaper from what they were, say, last month because of the GST cuts, on which the company believes that the sales could actually be 5 to 7% higher. The festive season, they're working with near 20% growth this year. But before that itself, they've actually reported 22% growth in their overall revenue in the second quarter. More importantly, it's been backed by same-store sales growth, which is coming at double digits. And typically, when same-store sales growth comes in at double digits with a 22% revenue growth, it implies that there has been an element of operating leverage and margin expansion as well. So that's what the street is now baking in when the actual numbers come by. They've opened 25 new stores, closed about 2 stores during the quarter. So the total store additions this year so far have been at around 38 or closer to 40, which again is ahead of their run rate that they were expecting, about 60 to 65 stores being added this year. Typically in the second half, more store additions happen. So can they do around 75 to 80 is something that the street is betting on as well. So all these factors point upwards, especially because in the retail space, the second half of the year, this month in particular with Dussehra and Diwali, both of them doing well for the company or expected to do well for the company, along with Bihar elections towards the end of this year, all things are pointing well for V-Mart Retail, and that stock up 5% in an otherwise wobbly market.
Okay, yes, definitely showing a fair amount of green in an otherwise lackluster session. Mangalam, thanks for that. Well, what's also been showing plenty of green is the auto sector. And that's thanks to the massive GST cuts that were announced. So we've seen good numbers from most of the OEMs, whether it's four-wheelers or two-wheelers. And for the time being, we're putting the spotlight on a two-wheeler major, two-wheeler and three-wheeler major, actually, Bajaj Auto. Well, the company's come out with a strong set of numbers for September in terms of sales. We have Mr. Rakesh Sharma, Executive Director of the company, joining in. Mr. Sharma, thank you so much for being with us, sir. And festive greetings to you, season's greetings to you. It's definitely been a good Dussehra and a good Navratri, I guess, right? For the sector and for you, because I don't remember actually how many months, maybe you can jog our memory, that sales have gone back above that threshold level of 5 lakh units a month. Now, the question, sir, is whether this was the pop because the cuts were announced or whether this will sustain beyond the festive period as well. Your thoughts?
Good morning and best wishes to all of you too. Yeah, it's been a rocking 11 days of festive. And I can tell you that at least I was trying to sort of go back in history. And if I just look at these 11 days and compare them in the past, I think we've never hit this level. So we're hoping that this run continues right to the end of festive. And I think there is a very, very positive sentiment out there. There is the very tangible benefit of disposable income impact because of the cut across the categories in GST. And I would say more than that, there is a very strong intangible component to the support we are seeing, which is I'm sensing that the customers are seeing a more benign environment in the future. So when you combine the tangible and the intangible, it's generating a good amount of tailwind.
Sir, so, I mean, you managed to capture just about, I think, 8 days of the tax cut in September. Now, the bulk of it flows in October. So fair to expect a similar run rate, 5 lakh units plus in October as well?
Well, the 5 lakh units, Subi, which you're referring to is has a very big component of exports for us.
Oh, yes.
And, that, of course, is doing very well. As I've been saying, we expect to continue that tempo of growth in exports. And I would say that certainly in October, we'll up the game, and in Q3, we'll up the game in exports as well. So, yes. And see, September is a bit difficult to read when you look at it calendar-wise, because the first 21 days, what happened was, as the news percolated in the industry, people held back their purchases. Then when the festive started, all that suppressed demand also poured in. Now, some of that suppression of demand poured in those 9 days, and some of it could spill over into October. So it's very difficult to read the numbers and come to a precise growth rate calculation. But having said that, like I said...
So let's break it down, sir. Let's break it down. The two different markets. Local is different. Exports is different. Yes. So let me, ask you that question again, more from a local market perspective, and then we'll talk exports. How confident are you of, say, this time domestic sales were at 3.25 lakh units. Should we expect 3.5 lakhs, maybe more, maybe even inching towards 4 lakhs? I'm just talking local sales now, since the sentiment is so buoyant, as you say.
See, at a retail level, certainly it will be higher and than the number you're saying. But also by end of October, we will get into a destocking mode, because November and December will be much smaller months before the whole thing starts to pick up in Jan. So billing, as we call it, or sales to dealers perspective, the domestic sales will be lower. But from a retail perspective, I think we should break that retail number which you just quoted.
Okay, all right. Hi, Mr. Sharma. Good to have you on the show as always. You're expecting exports momentum to continue. So should we be working with a 2 lakh number for the coming month? Do you get there? Point number one. Point number two, on the domestic front, as you're saying, it's been rocking. Y'all are rocking as much as the industry, rocking more than the industry, or a little less?
Well, on exports, certainly the idea is to breach the 2 lakh, and that, there are a lot of things which are very, very positive. I would say that among the top 30 countries, which account for 80% of our sales, they're doing very well. We are outpacing the industry by at least 50%. LATAM has had its highest ever sales till now. So that's doing very well. So yes, we'll hope that we can reach the 2 lakh mark in Q3. In the domestic industry, I can tell you that between August and September, for which we have done some analysis, we have gained market share sequentially. But exactly what's happening during the festive, I must say, it's very difficult to read, and we'll wait for the dust to settle down to see how we are doing. But I think everyone is in a very positive sort of a zone right now.
Okay, all right, got that. Growing better than the industry, gaining market share. The street would like to hear that. Well, what about Chetak's supply constraint issues, the rare earth issue, magnets issue? That was what was hampering, right? Some operational performance. Has that got resolved? Are we close to a resolution?
Yeah, that's more or less behind us in terms of restarting our production and getting it up to the levels which we are used to. And you know that we lost a lot of market share because of that. But I'm very happy to say that, September rebounded. Just to give you some numbers, and by August, we had sunk to a low of 11%, but we exited market share. But we exited September at about 19%, and the nose is pointing upwards. So we would be looking to now, based on the supply chain coming back, we will be looking to sort of expand our market share. But these 9-10 days have done extremely well, because, this was also a factor which all of you were also asking, that how will the GST cut impact the electric vehicle business? And we have not seen any adverse impact as of now. That segment is growing strongly as well.
Final question before we let you go, Mr. Sharma. Give us a sense about discounting on ground, and what are the inventory levels?
Well, the inventory levels are geared up to service this big spike. So, but I guess by end of October, the inventory levels should normalize. And, the biggest discount which is there in the market is the one which was handed by the Prime Minister. So I don't think we need any more discounts than that. There may be some financing offers here and there because, there's also a good opportunity for retail finance companies to improve their penetration. But really, we are not seeing too much of discounting.
All right, Mr. Sharma, good to have you on the show. You seem to be revving up the engine. Wishing you better times ahead. We look forward to having a chat with you as the festive season does progress. For the time being, we slip into a short break. Up next, we have the management of Favour who will be joining us in the studio. Their 3,000 crore rupee IPO opens up today. Karan Virwani will be joining in. Welcome back. This is Corporate Radar. Well, WeWork's 3,000 crore rupee IPO opens up for subscription today. Sonal joins us to help us out with the brief details, and then we'll get to the management. Sonal, take it away.
Thank you so much for that. As you pointed out, it is the 3,000 crore rupee IPO, big one in the co-working space. Now, this is a pure offer for sale where two promoters will be offloading stake. The first one is Embassy Buildcon LLP, which will be selling 3.54 crore shares. And that is basically WeWork International as well, the other one, which will be selling 1.089 crore shares. The total OFS of 4.6 crore shares. Pre-OFS, Embassy holds around 73.5% stake and WeWork International holds around 22.64% stake. About the company, it is launched in 2017. It's a flexible co-working space and has 68 operational centers with 1,14,077 in terms of desk capacity across 8 cities in the country. And Bangalore accounts for a majority of chunk, around 46%, and Mumbai is around 23.4%. In terms of revenues, it has continuously grown. FY25 growth was around 17%. We had FY24 growth at 26%, and the adjusted EBITDA margins have seen a growth year after year as well, currently standing at 21.6%. In FY25, the company turned profitable, but remember in Q1, again, there was a loss. FY24, FY23 did see loss as well for the company. Their average revenue per member, per bill desk, has come in at 19,842, which is, again, a continuous improvement year after year. Now, remember, recently we have seen a slew of IPOs in the co-working space, right? Be it SmartWorks, be it IndiCube. So this is the other one that has come by. And if we look at valuations as well, IndiCube trades at 4.5 times FY25 sales, where Office is the cheapest at 2.1 times, and WeWork at these numbers trades at 3 times FY25 sales. So this is what the picture looks like when it comes to WeWork India.
Okay, all right, Sonal, thanks very much. That's a nice, helpful setup as we get into our conversation with Karan Virwani, MD and CEO of the company. Karan, welcome to our studios. Thank you so much for coming in. And co-working, we really thought it's only a COVID concept, right? But look, where we are 5 years down the line, it's a brand new way of how people want to utilize facilities and remain asset light. So here's the thing. Right now, this is a pure OFS. The company is not raising any money. But you've got big expansion plans. You are at what? You're at 1,14,000 desks roughly right now, right? And I believe you're looking to add 20,000 desks every year, if not more. So how will all of this growth be funded? That's my first question, because right now the company is not coming to the market to raise money.
No, it isn't. Firstly, thank you all for having me. And like I was saying, I've been watching you all for the last 9 months since I started on this IPO journey, and feels surreal to be here. Look, I think that the business now is in a place where the business is generating healthy operating cash flow. We are in a path where we can sustain our growth plans and have all the requirement for our CapEx needs. And the issue has been subscribed with some of the best investors, both domestic. I mean, if you look at the anchor book, it's literally the entire set of top 10 mutual funds, barring a few, and also some FIIs that have come in. And that just shows you the confidence both in the structure of the business, I think the future growth plans that we have, and the fact that the business is in a financially healthy situation to continue to grow in a way where we can deliver value and continue to be a backbone for India's growth.
Okay, all right. Kai Karan, congratulations on coming to the market, and we look forward to the listing and chatting up more often. Give us a few details. Once a new center gets commissioned, how soon does it break even? If you could give us a broad sense on that. And also your occupancies, they have been coming down, but that's a function of maybe you're adding capacity as well. How do you see both those two metrics moving ahead?
So if you look at actually our break-even occupancies at COVID, we were roughly at about 73% break-even occupancy. Today, that's down under 55. In some of our newer centers, we're actually breaking even within like 47 to 50%.
Okay.
We usually get to that within the 4 to 6 month mark, while we obviously are signing 10-year leases, on these spaces. And we're seeing the recovery of the CapEx happen within like 3 to 3.5 years now. So almost a 30-35% return on CapEx on any investment that we made, which shows you that the remaining 6-7 years that we have, at least on the first term of the lease, we're able to, kind of recover all of that capital back. And it's coming through healthy revenues from some of the largest companies in the world to some of the best Indian startups, Indian corporates, who are all adopting flexibility in some part of their portfolio. And if you're a large organization, you need at least 20-30% of flexibility. If you're a small company, it's completely unpredictable how your growth is going to be over the next few years. And what we're able to offer, gets you there.
Rental revision takes how long? What's the time period, if you could give us a broad sense, and if you could break it up into buckets depending on the category?
So we sign straight leases pretty much for 95% of our portfolio. And just like market leases, our escalations hit every 3 years. It's 12 to 15% depending on the lease. And at the same time, we have annual escalations with our members and contracted members, which gives us the ability to, always constantly keep that spread between the two.
Okay.
Karan, great to have you with us here. Iconic, I mean, the name is iconic. Naam hi kafi, as they say. Right?
Right.
But in that sense, who is the customer? I'm trying to understand at a basic level. Is this so large, as you said, large organizations, when they need flexibility, they'll... So, it's a Mumbai-based company, and they say, for example, want to have a few people in Bangalore or vice versa.
Right.
I mean, is that the kind of...
So, when we started in 2017, the concept and the business was meant to be for startups, freelancers, and mid-tier companies. That's how, while our company, Embassy Group, was building these large-scale office parks, we wanted to do something that would cater to high-quality spaces for small and mid-sized businesses. But since we opened our first location, we saw this huge demand from enterprise companies also coming in. And this is really for a variety of reasons, because in India, at least, there's a very low amount of grade A supply in comparison to the population and hiring. Having ready-to-move-in spaces that matched how companies are hiring was required. So our member base is mixed from freelancers to mid-sized businesses to some of the Fortune 500 companies.
So how would that split?
Today,
roughly
80% of our business is enterprise companies. 25%.
When you say enterprise, you mean?
So we classify enterprise as anyone with over 1,000 full-time employees in India and globally.
Not with you, but...
Not with us, as an organization. 25% of our mix is Fortune 500 companies. 36% of our mix is GCCs, so global capability centers that are, looking at space. And we have a 60-40 mix between international and domestic businesses. So some of the largest global banks are with us. All the Indian private banks actually use our space. Some of the biggest startups in India have incubated and grown. Someone like Zepto or Meesho, they all started within a WeWork and have grown now to become unicorns. And we want to just be this enablement platform for India's.
So 80% is enterprises, as you said. And that's how, you kind of sort of broke up that 80%. And the rest 20% is individuals, freelancers.
Mid-sized businesses.
That kind of stuff.
And what's the, as of Q1, what was your average occupancy? Blended across, there'll be new
So
spaces,
as of
spaces.
Q1, we were roughly between 75 to 76%. That's already moved up in this quarter. And I think to Nigel's point, it's really just a factor of when capacity comes on.
Yeah.
And like I said, 4-6 months to ramp up. By 12 months, we get to about 80-85% on most of our centers. So there'll always be moments where we bring on capacity that has some impact on occupancy. But as the mature base of buildings continue to become larger, the suppression will become less and less as we...
It'll be more steady. Got that point. Now, I just want to understand cash flows and P&L and how that's shaped up so far.
Yeah.
So on an FY25 basis, the company became profitable. I think we'll just put up the numbers over here.
Yeah.
Revenue was about 1,950 crores, and you did turn in a profit of about 128 crores, and adjusted EBITDA margins of about 21.6.
Yeah.
But cut to the first quarter of the year, and at least on a quarterly basis, there was a loss again. The adjusted EBITDA margins flashing on the screen is about 18%. So on an annual basis, when you delivered that profit of 128 crores, is profitability here to stay, or will it continue to be patchy, as what we saw in the Q1?
So I think we've hit an inflection point where we'll definitely continue to show profits. There's an issue, not an issue, but there's an accounting standard that impacts our business, probably more than others, which is the Ind AS accounting. So in the reported numbers, the way that leases are treated almost like a liability with an EMI type schedule where it's all front loaded in terms of interest and depreciation. So you'll see that if we're constantly expanding or bringing on new leases, there will be some impact on the book profits. These aren't necessarily the way the cash flows work. This is not actually exact. It doesn't match the cash rents that the business pays. And if you look at the business on an IGAAP basis, the last 3 years we've been PAT positive consistently and will continue to show that. So that is a nuance that the business has today. But even with that, I think with the scale of our EBITDA and operations, we will be able to show profit even in this year operationally. Finally, the real number to look at is the adjusted EBITDA number, because that really takes all expenses, including the leases, into account. And if you look at last year, FY24, we were at an average occupancy of roughly about 80% for the year. We delivered a 20.4 EBITDA margin. Last year, FY25, we were at a lower average occupancy because of the capacity expansion, and we still delivered a 22% margin. So you'll see that the margin expansion has happened in the business, just in one year.
That's sustainable.
That is very sustainable. We think there's some more left. Even if you look at, the net profits from a book level quarter from last year to this year, you'll see there's a 54% reduction in the losses, or the book losses, basically. 14 crores was approximately the loss in Q1 of this year.
Who's the biggest competitor for you? AI?
I think across India, because we actually operate across multiple segments, so you can take a desk for a day with us to full plug-and-play offices to these large-scale managed offices. So we compete with different operators, sometimes in different parts of that business, but not entirely. I think our largest competitor might just be traditional real estate. People choosing whether they should go for a flexible model versus a long-term traditional lease.
Okay. My question was,
I know what you asked. No, but before I get back to Prashant's point, just to complete the P&L picture, you mentioned cash flow is the real thing to look at. Can you just update us on what is the current cash flow position and what it's looking like?
Yeah, I think from a liquidity perspective, especially post IPO, we'll actually be with a very healthy liquidity position, maybe upwards of 200 odd crores of liquidity. Okay. The net debt itself is, under 200 crores or roughly in the 200 crore mark. The business is last year generated around 420 crores of EBITDA. Yeah. And in January of last year, we actually infused 500 crores as embassy at a value even higher than the IPO is actually going at. Used that to repay a huge chunk of debt. So now the cash flows are really freed up to actually just invest into CapEx. Okay. We have roughly about a 250, 300 crore CapEx outlay, year over year that we've been doing.
What is the debt?
The debt, like I said, the net debt will be roughly about 200 crores. So the interest cost is roughly 30-40 crores for this.
And cash in the books is about 200 crores, you said.
Yeah.
Okay. To go back to Prashant's point, I think let me understand let me see if I understood him right. The reason he's saying AI being your biggest competitor is it's a great question actually. Yeah. What percentage of your occupants come in from the IT IES space? Because if those guys start reducing the workforce because of AI, yeah. I mean, that's a question, right?
Honestly, almost 0% of our mix is IT, ITES. I think AI is definitely going to impact lower entry-level IT services roles. It's happening already. But what we see, and we see firstly, there's a premiumization within office space itself that is being driven by the fact that the employee in India today is no longer just back office. We are actually building for the world, building for full global tech products to Indian products. And while IT service has been impacted, you'll see GCCs has grown 20%. Hiring within GCCs.
As long as there's no hire.
All right.
In my head, I'm thinking as long as there's no Hire Act in the US. Fingers crossed on that.
All right.
I think 2 GCs, I mean, that's what the EY chaps told me. 2 every week now opening. The larger guys are all here in GCCs. Exactly. Now, of course, it's smaller GCCs, specialized ones, but I think they're all coming.
And I actually think the H1B thing will be a huge tailwind for Indian entrepreneurship going forward.
All right, Karan, we appreciate you coming down, giving us a bit of a trailer on your business. On listing, picture baki hai. We look forward to having a chat with you. Thanks.
Good luck. Good luck. Thank you.
Well, let's get back to the markets, which have pulled back from the lows of the day. We have Vinay, who joins us back on the show. Hi, Vinay. Good to have you on the show. Well, that dip has got bought into. What's the view? We're good for more. We had a party on Wednesday. After party is due as well.
Yeah, good morning. It looks like that party is still on because on Wednesday, Nifty actually engulfed the previous 3 sessions' entire move, and the broader market performed very well. Not only large caps, but mid cap, small cap also participated well. And today also we can see that Nifty is trading in red, but broader markets are still performing well. Defense, metals, some NBFC and private banks are also performing. So broad-based sentiment seems to be improved, and it looks like that dip should be bought into, and overall market should do well. Though we have not got the confirmation of reversal yet because only 1 session of the pullback, and today still Nifty is not above the 20 days moving average. So 20 days exponential moving average is placed around 24,900. And if I were to see the retracement level, 38.2% retracement of the entire fall, which is registered recently, is also coinciding around 24,915. So there is a strong resistance at 24,920, we can say. And once that is taken out, we will get a confirmation of a bullish reversal. But till then, stock specific and sector specific, we should play with the strict stop losses. So yes, there are a lot of opportunities in trading side. Yes. But as far as Nifty is concerned, we are waiting for 24,920 to be taken out.
All right. What about those individual stocks that you're looking at?
Yeah, so individually stocks, we are bullish on the defense space. So Bharat Electronics is looking good to us. 411 is the rate around which one can go long. Stop loss should be 404. On the upside, we are expecting a target of 423 in short term. The second pick I would take from the auto space, the tire space. So C8 Limited is looking good to us. Around 3,500 one can go long. 3,450 should be the trading stop loss. On the upside, we can expect a target of 3,590.
Okay, all right. Vinay, thanks very much for that. Appreciate you joining us. Markets, of course, down about 20 points. So it's quiet, remains quiet. Has been that kind of a Friday so far. Time for a quick commercial break. Manisha joins us with commodities on the other side.
Welcome back. Quick glance at the equity market. It's absolutely flat, 17 points lower, so not much happening, which means it's a good time to look at commodities. And let's see what the excitement there is all about. Manisha is joining in. Manisha, what's on your radar?
Well, I'm looking at the crude oil prices because while gold and silver take a bit of a pause there, the crude oil prices have continued to be volatile, and this is on the downside, really. With 2% of a fall, it's a 4-month lows that you're looking at in sense of crude oil prices. 3 or 4 reasons why crude is under pressure. One clearly has been the OPEC Plus meeting, which is on 5th of October. Well, what they're looking to do is increase production for the month of November to the tune of 500,000 barrels per day. For October, the increase was 137,000 barrels per day. So this is going to be 3 to 4 times higher than what November could be looking at. So with that kind of a surge in production coming in from OPEC Plus, the market's already factoring in a weaker market prices there. In addition to OPEC Plus, remember, Saudi Arabia also voluntarily had cut its own output. Now it seems to be restoring first batch of previously suspended supplies, and that could be weighing onto the markets as well. If you look at the US markets, then you are looking at higher production. Crude and gasoline stockpiles also have been rising for the last couple of weeks there. That's putting pressure there. And then we also are looking at that very long halted supplies that we saw in Iraq's Kurdish oil. That export is expected to resume after 2.5 years. So there is supply and more supply coming in from all sides. The street is also looking at risk of sentiment deepening as the US government shutdown just about drags on. The only thing that seems to be supporting prices right now in Asian markets is the China's ongoing purchases for the last few quarters for its strategic reserve. Well, that seems to be offering some support. I want to take you through on what we've done in sense of crude oil prices in this year. We opened at 75. We did see a high of $82 a barrel, and the low was 4 months ago at $60 a barrel. 67, of course, is where we've seen markets move around. But the kind of constant pressure that you're seeing in case of crude oil prices, expectations are that we could be going back to 60 in this quarter itself. Sub-60 kind of reports is something that we also seem to be getting in from some banks and brokerages. And with that, for the year, we are down by 15%, a third straight year of declines coming in, and sharper declines is what we've seen in last couple of years then. So a lot of pressure continuing in case of the crude oil prices as we get into the fourth quarter of this calendar year.
Okay, well, a big correction from last Friday's high, double-digit fall, and we'll track what happens from here on. We'll take a quick commercial break here. We're going to come back in just a bit from now. Our special segment is The Economy. Lata in conversation with C.S. Vigneshwar of the Federation of Auto Dealers. Lalit Bise of market research firm Bizom also joins in, and they talk about the impact of Navratri sales across segments. Stay tuned.
Dasera is behind us, and today on It's the Economy, we are looking at sales in the last 10 days, Navratri days, on everything from cars to consumer durables. At one end, we had Maruti's sales head telling us earlier this morning that his company sold 1.65 lakh cars in the first 8 days of Navratri. He added that Maruti has never gone past 1 lakh sales in previous Navratris. At the other end, we had HUL giving its Q2, that is, of course, July, August, September sales. They said it will be 0 to low single digits growth, flat to low single digits. So how good exactly were the Navratri sales, and what should we expect from the rest of 2025 with Diwali and the marriage season lined up? I have with me CS Vigneshwar, the president of FADA, or the Federation of Auto Dealers, and Lalit Bhise, co-founder and CEO of the market research firm Bizom. Lalit and Vigneshwar, thank you very much indeed for joining us. Vigneshwar, well, easier to count cars than a range of consumer durables. So my question is to you. Maruti says they are at least 65% more than previous times, but actually the gentleman was hinting to double the sales. That's a solid number that Maruti is telling us. Are you getting that feeling from your network?
Thank you, Lata, for having us. It's been a fantastic last 10 days of last month. It was really good in terms of walk-ins. Of course, the deliveries were phenomenal. They were record numbers. We also had a lot of excitement, both among the customers as well as the dealership community regarding the kind of sales which is happening. Of course, some of it was postponed into these 10 days from the last 40 days since the GST announcements. But we believe that apart from the postponements, there was also there were growth, genuinely there was excitement, and people's willingness to buy cars at a lower rate certainly helped in bringing this excitement in.
No, Maruti is telling us double. That number was a bit, got us, upright. The point is, as you point out, 5 weeks of sales was lost. From August 15, nobody would buy a car when you know that it is going to get cheaper at some point in time, and eventually by September 1st week, realize it's September 22. So that's August 15 to September 22, 5 weeks lost. There is a slack, but still double, Vigneshwar. Would you say that when your ultimate numbers are announced in 5th or 6th, it could be such a sturdy number?
It's going to be a phenomenal number because it's been quite breakneck. It's the largest growth we've ever seen during a Navratri season in probably a decade or more. And we're quite excited about it because what this brings is a lot of opportunities and a lot of happiness, opportunities for the dealerships, and the happiness and the joy of owning a car or a bike for an owner, for a customer, or for a guest. So this is going to really, I don't see this as a reform which has happened for a Navratri or for a quarter or for a year. I think this would last for a few years, if not a decade. It's quite landmark and path-breaking.
Yeah, I mean, there is the mix of income tax cuts as well, and lower interest rates. All that will definitely be aiding something as large a purchase as a car. Lalit, thank you for your patience. Here I'm getting two contrary opinions. We've got Q2 updates, initial updates only from two companies. HUL told us flat to single digit, low single digit, and V-Mart told us 22% sales, and they are looking at the full Q2. So it must be very good in the last 10 days. What's your experience?
Right. I mean, so thanks, Lata, for having me. Right. So like you were saying, currently India is made up of two worlds, right? So one is this whole traditional FMCG world. And then these are these insurgent brands who are taking up market share from these traditional players via new channels like quick commerce or new growth areas like rural. Local brands are taking up and so on and so forth. What we saw in Navratri, the post GST 2.0, was that value growth kind of remained flat for FMCG, but volume growth kind of compensated for it. So about 10 to 15% volume or consumption overall grew in that particular era year on year versus, but the value obviously remained flat. And in FMCG especially, there was not so much of a pent-up demand. It is just showing consistent trends, so to say, because even before 22nd of September, so unlike maybe like cars or consumer durables, there was no dip in demand. Whereas in categories like durables and others, there was a dip, and hence there was a larger bump during Navratri.
Yeah, fair point. Actually, many of the FMCG sales can't be postponed. I mean, you can't postpone buying a toothpaste or a cream or whatever, or soaps. And I don't think the GST on those items even changed. They were always, many of them were at the 5% mark. The real difference came for consumer durables, especially cars, as well for other consumer durables. But, have you got any idea about what number you can put to the consumer durable sales? Clearly, there is a pent-up. But still, how is, you have the Q2 numbers to some extent. How were the entire Q2 sales? Were they much worse because of the dip, the 5-week dip?
So in consumer durables, yes, for Q2, you should see a dip, a small dip, any which way. If I look at the bounce back, at least in 9 days, we got a 5% value growth, about 18% volume growth in general in the whole consumer durables, even categories like materials, building materials like your paint, cements. These are typically festive categories. Home care is another festive category. So you typically would see a 5% bump just in that period, that 1 week period last year to this year. And that would be corresponding to the drop that happened before in terms of people delaying their purchases. So net, I wouldn't imagine the consumption has grown too large. It is in the similar FMCG range as 10 to 15%, and the remaining 15 to 20% would be to attribute for the dip we had pre-Navratri, so to say, or pre-GST 2000.
Do you remember 10 to 15% sales growth in previous festivals? Or would 10 to 15 be a kind of a new high or a recent high?
It is a recent high. Last year wasn't as high. And that was also because of the whole post-COVID thing. Right? So there was a post-COVID bump. So the base is obviously...
Yeah, the revenge buying was over. Okay.
Yes, correct.
Okay, so last year wasn't as good. Vigneshwar, are you noticing any transition to premium? Or are you noticing any better response to the small car? Because the difference between the motorcycle and the small car had grown so huge. Now with the GST cut, are more people transiting? Basically, what if you can give us some qualitative difference between small car demand and SUV demand?
The two basic questions which you asked here is whether the premiumization is happening and also the entry-level segment are easing out the pressures there. The premiumization has been happening quite strongly for quite some time, and I think the reduction in the GST and the overall price reduction would certainly lead to premiumization. We've also seen this in the last month. We have seen this especially in the last 10 days, that a lot of people are going for a little bit more premium version of the same car, or some customers have actually shifted to the next segment in terms of a two-wheeler or also a four-wheeler. So that's happening. This is bound to happen because more people want better features. Better features means a better safety, better comfort, etc. More importantly, you also asked a question about the entry-level segments, both the two-wheelers and the four-wheelers. We've been facing a lot of headwinds in the last couple of years in terms of people not going for those vehicles. The entry-level segment is super important for any industry, especially for us in the auto industry, because they are the base. They kind of tend to give a very strong foundation for an industry. So this base would further go on to upgrade into a better car or a two-wheeler in the years to come. So this has been quite stagnant in the last couple of years, but we have seen a lot of growth happen in the entry-level segments, especially in the two-wheelers and the four-wheelers. More importantly, we've also seen a lot of activity in the urban areas of our country. The last few years have been, the rural has been the segment which has really held the industry safe. But because of the price pressures versus the growth in salaries, which were not... Yes, because of that, the urban areas did have pressures. But this GST reform has certainly helped in terms of these customers coming back to our showroom to buy vehicles.
Fair enough. Lalit, can you give any more color in terms of premiumization, in terms of regions, rural, urban, any more color to the demand you saw in the last 1 month and you expect?
Right. So like Vigneshwar mentioned, Lata, I think the premiumization is a trend in India consumers, which is here to stay. Right. So we have seen that happen even in FMCG. And partly that is the reason why you see somebody like HUL not growing as fast, because the product innovation or the whole consumer trends towards natural, organic, the large incumbent FMCGs haven't caught up with that level of product innovations. So some of that market share obviously has gone to the newer players, more insurgent brands, or even to some of the local brands. And that is something we clearly see even as a trend in FMCG, and that is going on for almost more than a year now. From urban-rural point of view, while urban did show weakness in OND and to some extent in JFM, April onwards we have seen urban also pick up.
Okay.
Right? Currently, urban and rural are quite neck to neck, to be honest with you, in FMCG.
That's good to hear. A very quick couple questions to you, Vigneshwar. One, it looks like the compensation cess will have to be borne by dealers and manufacturers. The sounds we are getting is that it can't be passed on to consumers. Will that be a wet blanket? And secondly, IT is in big trouble. They're either sacking or certainly not recruiting. And what is you are in Coimbatore, Bangalore, Chennai, that's the base. Is that adequately countered by the GST?
It's very important that every other industry does well for us to do well. Only when the other industries do well will they come and buy our way through. So every time I get up in the morning, I really wish every industry does well, so that we could bear the fruits of their success. It's very important that the IT industry does well. Yes, there is a disruption, but I would think disruption comes into every industry, and every industry is strong enough, especially in India. We are quite resilient to come out of it. So we really look forward to the government and also to the various large companies to come together and sort these things out.
Okay.
And I'm sure they could find other markets. I'm sure they could find other dimensions where they could be of use. Yes, the cess is a bit of a sandbag, if I can call it. The new GST reforms are something which is so path-breaking and which can make a lot of opportunities come alive for the industry throughout India. And I somehow think if the government can sort this out as fast as possible, all of us could partake in this. Otherwise, we would be sandbagging and we would be getting off the block on a limb. So this is, there are, I mean, in various ways of calculating, there are anywhere between 2,500 to 6,000 crores of money stuck, which we have paid for. And we're not able to take credit for it. We've been approaching the various government agencies. They have been sympathetic, understanding, but yet we are yet to hear.
You know, manufacturers, I thought, should take a bait because, after all, they are the guys whose stuff you're selling. Any agreement with manufacturers? No?
We've been talking to them. They are the big brothers out there. So the big brother needs to probably give us a helping hand at this situation and help us out.
Okay.
So we've been talking to them, and it'll be great if they could step forward and help their channel, their network.
Okay. Well, let's wait and see. We will invite you for that conversation when perhaps something material happens. Thank you very much, Lalit and Vigneshwar, for your optimism, in some cases cautious optimism, about how the festival seasons perhaps are going to be among the best we have seen. Wrap up on Bazaar on that note. Chartbusters coming.
Bajaj Auto trades with cuts despite a strong sales in September. The management tells CNBC-TV18 that it's been a rocking festive season so far. They also expect the export momentum to continue.
Goldman Sachs issues a bullish note on defense players, solar industries as well as PTC industries, expecting higher defense indigenization and exports. Both the stocks are higher in trade by 3.5% to around 4%.
Abu Dhabi-based IHC is set to pick up a majority stake in Sammaan Capital for $1 billion. Sammaan Capital's Gagan Banga tells CNBC-TV18 that the cost of capital will trend lower, relying on return of equity of about 20% by 2030. The stock sees some profit taking after a massive surge ahead of the board meeting to issue funds.
V-Mart retail surges close to around 10% after a strong second quarter business update, which reflect 11% sequential same-store sales growth and a 22% growth in revenue.
That's not all. India's largest biofuel producer, TrueAlt Bio, sees a steady debut, listing with a near 11% premium to its issue price. The issue was subscribed over 72 times. Management joins us to discuss their post-listing strategy shortly. Stay tuned for that.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And the markets actually have come off the low point of the day, and the breadth of the market actually is in favor of the bulls. So we had a good session on Wednesday. We're hoping for a good wind down to the week on Friday. Let's see how it goes. But at least that initial dip has got bought into, Mangalam.
Initial dip has got bought into, Nigel. And you know, the good part is that barring HUL's second quarter update, all the updates that have come in are fairly heartening, and the street is building on that. Case in point, something like an Eternal. Just look at Eternal. HUL too from the lows had seen a big recovery, and now also currently, has seen a recovery from the lows. But Eternal has seen a spike up, nearly 4% recovery from the lows, currently at the high point of trade. So we'll watch out for how all these consumption names are doing, because we've seen big moves on, V-Mart retail, pull up V2 retail, all the others are doing extremely well. But we've been talking about the broader market action, primary market action as well. Vijay Nirani, who's the managing director at TrueAlt Bioenergy, joins in now. The company saw a steady listing, nearly 11% premium to its issue price, and now the stock holding up with a gain of almost 8.5% as well. Remember, they have about 3.5% market share in ethanol production for the country. What we'll ask them is the growth outlook for FY26, FY27, what they're targeting when it comes to market share, asset turnover on their new capex, and the third most important talking point, issues with feedstock availability as well, even as they have a fair amount of capacity. Thanks a lot for joining in, and congratulations. It's been a good show for all you guys on the bourses. The question is what happens from here on, because your issue was subscribed 72 times. There was obviously a lot of interest that was there on it, and what you're going to do with that interest and this responsibility that the street has placed on you is something that will determine where you go from here on as well. So it's a milestone, but the journey is still fairly long. And that's exactly the first question. You've been growing well over the last couple of years. Do you think you can expect this rate to continue if you have put a range to it, Vijay? And the second part is in terms of market share. You have about 3.6% market share. With the new capacity coming on board, what's the kind of market share that you're eyeing over the next few years?
At the outset, thank you so much, sir. Thank you for having us here. This absolutely feels surreal. This is a journey of almost over 2 years now, and for TrueAlt, 3 years. The kind of response that the capital markets and the country by large has given to us, it's only given a lot more of a motivation for us to work harder and keep building this company for the greater good. That said, just on the company, we just have about 3 years of history, and we've been growing at almost about 50-55% year on year. And the capacities to its peak, we've got 5 business verticals. First one is ethanol, where we've already infused capex to its rated full. That is at 20 lakh liters per day, or 2,000 kiloliters per day. That gives us a potential of almost about 6 to 7% of the total country's demand. So, of course, the last year's market share was 3.6%. But the potential market share we have of the fragmented industry that is in the ethanol sector, we have about 6% of potential that we could deliver in the days to come using the capex, or rather the capacity that we've already built.
All right, so that implies near doubling of your revenue from here on.
So I wouldn't call it almost doubling. I would say we would hope to continue on the same trajectory that we have done in the last 3 years. This, I would say, based on the potential of the capacity that we've already infused. And also the other two verticals that we have that are set to come in by FY26 and few by FY27. That would be compressed biogas and sustainable aviation fuel.
Got it. All right. Hi, Vijay, and congratulations on the listing. Looking forward to chatting up more often. But we could see the smiles, they were quite wide as you all rang that bell. So good on you all. Let's get a few more details. Your current capacity utilization, I think, is around 45%. By when do you expect to hit, say that 70% odd mark, which is considered high utilization levels? Point number one. Point number two is 100 days in terms of trade payables currently. You had planned to reduce it, I think, to around 52. By when would that happen?
Thank you so much for that. Yes, it is a little, it's unimaginable. We're still pinching ourselves to see the reaction. So that said, on the first part of the question on the capacity utilization, if you read the note on the RHP, we do mention that we've been building the capacity over the last 3 years. That is, in FY23, we had a capacity of around 590 kiloliters per day. In FY24, that capacity increased to 1400 kiloliters per day in the last quarter of that financial year. And in FY25, the capacity again jumped to 2000 kiloliters per day, where 1800 was put to use. So when they calculate the capacity use, they are doing the calculation based on the entire gross, the installed capacity. And when we do it based on the gross capacity on a 300-day basis, we see a lower capacity utilization. Whereas now that we've got the whole capacity at play, we should see at least 6. In fact, we are estimating a 60 to 70% of a conservative capacity use for the year to come, and from there on to jump to 90% from there. That's from FY27 onwards. So that's the expectation we carry.
And the payable days?
And the payable days, however, it is, if you compare it with the industry, we have a better payable days as compared to the peers. Of course, here there's not an apple-to-apple comparison with peers. However, so far we used to have a lot of transactions with the promoter group company where we got this leverage. Now, the reason for us to go public was also to create a working capital corpus so that we could build on our inventory at the cheapest raw material. The price of raw material is very dynamic in our case. And the business largely is at what price we buy the raw material, so that we keep focus on the bottom line and keep increasing the bottom line. So when it comes to the payable days, we will be building on inventory. We will be having a lesser payable days thanks to the proceeds of the IPO, wherein we are building close to about 425 to 450 crores of corpus. That will go straight as working capital requirements.
All right, we take that point. Thank you so much, for explaining that to us. And also, you said that you've been pinching yourselves. Good, you've been pinching yourselves. If you pinch each other, then that'll become violence. And secondly, what you don't need to do for sure is pinch the shareholders. And the shareholders, what they really want to know is what are the kind of margin levers that you have from here? You said that raw material prices are fairly dynamic, fairly volatile. But I'm looking at, some of the raw materials that you source. And the availability is always an issue. So what is it that you're doing to, make the availability consistent at a predictable price, and basis your increased capacity utilization and everything else that you're doing, what would the margin impact of that be? Could we see them move towards 17, 18, 19%?
So two parts to this. So the opportunity that the biofuel story, or rather let's begin with the ethanol story, carries is we've got 5-6 different prices. Ethanol from syrup has 65 rupees a litre. Ethanol from maize has 71 rupees a litre. From rice has 64 rupees a litre. So there are about 5 different prices that is there, and the OMCs pick the quantities at that range. Now, we have got out of the 3, raw material price, cost of conversion, and the selling price. Our selling price is already fixed, so we don't have to worry at what price I'm going to sell. Then comes on the floor level, the efficiency or the cost of conversion. We're at almost peak levels of stabilization, or rather best efficiency, because we are actually utilizing the gas that comes out, the CO2 that comes out, we are bottling and selling. The spentose that comes out will be diverted to the compressed biogas plants as additional revenue. So it is as dated as possible. So that leaves us to build a bottom line or margins on the price of the raw material in itself. So just to give an indication, or rather what we see, the commodity price trends, that is rice or maize or sugarcane, molasses for that matter, not the sugarcane in itself, but the molasses for that matter, the delta in the price from the lower ceiling, I mean the lower brackets to the higher bracket is as high as sometimes between 20 to 25%. And we end up achieving this 15-16% of EBITDA on the fairly median, on the higher brackets of the EBITDA. So this is what, and that's the structure of how the government usually prices the price of ethanol or the raw material.
So by and large,
the idea largely will be to buy the raw material when it is cheapest.
Got it. So by and large, this 15-16% is sustainable. On extreme cases, it can go to 20-25%. But you know what analysts should usually pencil in?
No,
is it 15-16%?
I wouldn't. No, I wouldn't consider it as 20-25%. It could, I mean, that's the delta of the raw material prices. So I would only say the EBITDA would hover between 15 to 17% if we play our cards right.
All right, that's fairly indicative. Thank you so much for joining in. Once again, congratulations on the listing. We will keep having conversations with you quarterly post you give out your numbers. With that, we'll take a short break, come back. On the other side, we have another management waiting by, that of CMS Info. We're joined by Rajiv Kaul in our studio. Stay with us for that.
Welcome back. Markets slipped a little bit from the highs of the day, but that's par for the course, one would say, after the kind of rally that we saw in Wednesday's trading session. But as promised, we have the management of CMS Info Systems. Rajiv Kaul joins us in the studio. Thanks, Rajiv, for coming down. Well, we've got a few points to discuss, so let's first highlight that. FY26 outlook remains a little bit tepid. What's the outlook from there on? The margin guidance, and what about that cash in the books? Is there some inorganic growth opportunities? Well, Rajiv, kudos to you all actually, because you all have seen some softness in the first half of the year. So in that sense, shareholders are not going to get that, surprise all of a sudden, the negative surprise. Explains why I think the stock as well is closer to a 52-week low. That said, you've called out that things should look up from here on. And one of the points is you're seeing the total number of outsourced ATMs at around 120,000. You're expecting it to go to around 135,000 by the end of this year itself. So a couple of points. When does this tender open? And out of the incremental ATMs, outsourced ATMs, how many can you garner?
Sure. There's so many questions. One question out there. So H1 has been softer. I think for us as a management team, we want to be upfront about and share as we see the markets and call it. I do think our opportunity in the next short term, mid term, long term is still very solid. The rollout of these remaining 15,000 ATMs is already happening as we speak. So they're not linked to any tender or whatever. And I think this will go up to 145,000 in FY27. Okay. So I think the ATM rollout outlook is fairly good. They have shrunk temporarily, which has affected growth for us. But I do want to say that this affects 60% of our revenue, which is our oldest business. 40% of business is different, around consumption, around technology and digitization.
Yeah. So, but how much of this incremental ATMs, the outsourced ATMs, what is normally your hit ratio?
So our current market share is 57%. 3-4 years ago, this was about 45. So I think I would hope that we take to 57 and maybe higher.
Closer to 60%, but let's talk about the other 40% of your business, which is, been growing at a fair clip, and you've been wanting for that to increase in the contribution itself. Right. That's the IoT part.
Right.
Let's talk about that. And in that Vision AI, I remember the last time you joined us, you said that, it's about 7% of your sales. You're aiming to take it to double digits. So where are you on that journey?
Okay.
And your touch points, there were what, 25,000, and you were going to go to 50,000. Where are you on that currently?
So, great questions. I think our technology business, which was roughly 5% revenue about 2 years ago, is already at 10%.
Got it.
At 10%
Vision AI.
It's Vision AI mostly. It's also the software work we do for banks.
Got it.
So we have also resegmented our business, Mangalam, from a perspective of simplicity, also thinking about the broad macro themes. The themes we want to play on is outsourcing, which is what we've been very strong in, consumption and formalization linked to GST reforms, and third is technology and digitization. So in technology, we do Vision AI. We also are looking to see what we can do in broader payments. I think that business should contribute now 15% revenue by FY27. So that business from 0 to 5 to 10 to 15, we're talking about FY21 to 27. That ramp up is what we are seeing.
Got that.
Vision AI, we started from almost 0. We are now at 30,000 sites already. We should be 45,000 sites by the end of March, this year itself. So that's a quasi-SaaS business, and that's why we've been able to scale it so well. Within the BFSI segment, we've taken market share from 4% to 25%. And hopefully by the end of the year, it'll be about 30-32%. So rapidly growing business, large TAM, but I do always like to say that, these are businesses which are fiercely competitive. And therefore, being out there, investing with technology and being ahead of others is really important.
Well, I think the industry has slowed down a little bit, which is reflecting in your first half of the year performance. But as you're saying, your market share is rock solid, and you're looking to build onto that as well. So let's talk a little bit about pricing. When do you see improvement, and what are the levels that you have in store? I ask you this because your realization per ATM, I think it was around 7,000 odd 4-5 years ago. That's moved to around 11,500 odd. Even if I look at your BLA transaction, out there, I think it was, 11 per transaction or thereabouts. That's moved, I think, to around 18. When do you see pricing improvement? Because you're going to be gaining market share, you're focusing on volumes, but pricing at some point of time as well, you'll have to go ahead and, take the plunge.
So if I think of the last 4 years, let me talk data. And, Mangalam, your earlier question, the fact that our other businesses are growing rapidly, despite our ATM solutions business, which has doubled in the last 4 years. So it still continues to grow very rock solid, like almost 15-17% growth. Will slow down a little bit, but still will be double-digit growth. I think a market like India, which is fiercely price competitive, we are a market leader. Frankly, we want to be very aggressive on pricing, right? Because there is, I think prices have grown well, and that's why the growth has come up. But in our interest, I would say that if prices remain competitive and we innovate with our delivery models, operating models, keep our high margin profile intact, I think that's great for a market share gain.
Okay, 2 numbers then. Your business definitely is evolving, and you've moved away from your core business. You're trying to innovate as well. What is the margin guidance we should look at? And ROC, that has been rock solid, 20-25% for a company that I think is trading at around 10 times core business.
Right.
What is the outlook on both these two, margins and ROCE?
Margins, you guys know me very well, right? We never forecast margins. I think we've delivered very strong margin profiles, 14 to 16%.
But ROCE is something that you
ROCE we care about a lot, right? Because I tell people that we are a high growth company. We have grown 16% over the last 16 years. We've grown 17% over the last 4 years.
Got it.
And our ROCs in the last 5 years have been about 23-24%. So for us, if we can keep ROCs about 20% levels, which is our clear North Star, and keep growing revenue at 12 to 14%, I think that makes a very compelling mix.
All right, we take that point. Final question before we let you go. You've come down to our studios. You've given us an FY30 revenue guidance of close to 38 to 3,900 crores. Outlook. Let's call it an outlook for, you call it an outlook, we call it guidance. 3,750 to 3,950 on an organic basis. If you add the inorganic business, it's close to 4,500 to 4,750 crores. So you are obviously looking for a company that gives you 300 to 350 crores revenue right now for it to scale up to 700 crores by the end of FY30. You have 1,000 crores of cash on your books. How much are you willing to deploy? When do we hear? And what company are you buying?
So, one of the compliments we get, and I'm happy to share it, is that as a team, we've done reasonably well on capital allocation, which means we've been lucky with allocating capital at the right time. We have mostly depended on CapEx for growth for the last 4 to 5 years and given dividends for the last 7 years. In fact, we up dividends when we think we don't have need for capital. Our FCF has been close to 47% of our EBITDA. Out of the 1,000 crores cash on books, we'll obviously accrue more cash for it. I would say that, we'll have to have a healthy mix between CapEx for growth, roughly 200 crores a year, dividends, keep the dividend track record very steady and strong, and deploy the rest for growth. Because if I was a shareholder, which I am...
How much are you, on an average, giving out in terms of dividend every year?
So I think we've sort of 20 to 40% is off the pat, is how we timed it up. But as a shareholder also, I would love to continue investing if we can keep growing at double digits and about a 20% ROC. I think that's the best use of our capital. I think M&A will be a very core part of our growth strategy, looking at how the opportunities are emerging out here. And, it could be a 300 crore company or it could be a 700 crore company right now. Who knows, right? So we're working very diligently on acquisition targets. My priority on acquisition is to think about diversification, right? Because in the tech segment, I think we have enough opportunities to grow that business line fast. Next would be consumption-oriented, right? How do you get into Suru? Because Suru has a very strong demand out there. And finally, if the consolidation comes in our core businesses, we'll be very happy to look at it.
So we hear something about this in this fiscal year itself?
We're working really hard, relentlessly hard. I hope we have something to talk about sooner than later.
And we'll re-invite you on the channel at that point of time. Thanks a lot, Rajiv. It's been tough times in the first half of the year. You're optimistic about business going ahead. And rough estimates, if you're doing a 15% PAT margin, then hopefully you'll be in that 550 to 600 crores odd. Valuations are cheap, but we'll have to see growth coming back. Thanks a lot for joining.
Thank you so much.
Time to slip into a short break. Come back, continue to focus on markets. Don't go anywhere.
Welcome back. Mildly in the red for the Nifty. Nothing really to worry. Just around the 24,800 mark. A lot of individual stocks doing a lot better, which is reflected in the Midcap index, which is right above my head. So what we'll do is we'll track all those movers and shakers after this short break. The team of Trading Hour takes all the market action forward. Thank you so much for watching Chartbusters.
Good morning. Welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me are Hormus Patakia and Reema Tendulkar. It's a full house, a Friday morning, which feels like a Monday, by the way. It does. It feels like a Monday to me. I have no idea. Maybe the markets are also factoring in a Monday. 40 points lower on the Nifty. Of course, it has come up from the highs as well. We closed above that 24,800 mark on Wednesday, and we snapped that 8-day losing streak. But for now, if we look at the Nifty, it's just recovered from the lows, but yes, it has fallen from the highs as well. So that's what the markets look like currently at that 24,800 mark. That continues to be an important level to watch out for. Nifty Metal looks good. Private banking index doing well. Small cap index also is higher by 0.4%. So are the mid cap. So some pockets of the market really doing well. And I think from next week, we'll also be busy with earnings, starting with everything IT.
Well, I think that's going to be for the following week, except maybe one next week, but majority of it will come in the third week of October. One level to track will be the 50-day moving average, and that stands at 24,842. So we're about 40 points away, but this pullback that we're seeing, let's see whether it can extend itself. It's the PSU banks which are doing very well. The Nifty PSU banking index will come up for you on the screen. That's outperforming a bit. And week to date, while the Nifty is up close to about 0.5%, the mid-cap index is has rallied 1.5%. It's the PSU banking index which has gained 3.5%, though the best performing sector continues to be metals. The Nifty metal index is up 4% so far this week. But let's put the spotlight on stocks, and now Hormus has moved over to the big wall with the top movers in the market at 11.
Broader markets are in a league of their own, especially particular names, some of them that are reacting to their business updates this morning. And Sai Silks Kalamandir is one such name, came out with its business update on Wednesday evening. Now, the 14% up move that the stock has seen, it's the best since its listing. It listed in September of last year. The volumes are also the highest since June. We've had close to 1 crore shares already traded on Sai Silks Kalamandir today. The 20-day average anywhere between 1.5 lakh to 2 lakh shares. So it shows the kind of volumes with which the stock has moved higher today. Now the stock has also moved above another key moving average, which is the 50 DMA, which is at 171. But despite this strong up move, the stock still is below its IPO price of 222. Now the other one that's reacting to its business update is V-Mart Retail, and the stock has now moved higher after it saw a brief cool off earlier. There's the biggest single day gain for the stock in 6 months. It's the third straight day of gains as well. It's gained in 5 out of the last 6 trading sessions. But look at the volumes here. 14 lakh shares have already changed hands in the first couple of hours compared to a 20-day average of just 36,000 shares. And it shows the kind of volumes here as well. Now, the next important level was supposed to be the 100-day moving average at 799. It has comfortably moved above that level. The third one is JK Paper, and it's had a good week. It's gained every single session in this truncated week that we have had. But before this week, the stock had gained only twice in the 3 weeks prior to this one. And the 25th of August had seen the stock move up 17 to 20%. But since that day, the stock has given up all of those gains before seeing a little bit of an up move this week. We've already had 12 lakh shares change hands compared to a 20-day average of just 1 lakh shares. And it trades above all of its key moving averages at 432 with JK Paper. And lastly, Atlanta, and the stock another 20% upper circuit today. The order that it won from Ircon, this is the 4th instance of a 20% upper circuit that the stock has seen since the 1st of September. The order value of Ircon, around 2,500 crores, is almost 6x of its market cap, is around 450 crores currently. And 40 lakh shares were traded before this circuit was hit. The 20-day average, 3.5 lakh shares. And as a result of this 2-day up move, the stock has turned positive for 2025 and had already doubled in 2024 as well.
Wow, already doubled in 2025. Thank you so much for joining us with all those names, Hormus. Let's take some conversation forward, get in Pawan Goyal, who's the Chief Business Officer at Naukri, joining us now to discuss the hiring trends that we've seen in the month of September. It's been strong. Overall hiring trend has seen a growth of 10% in September. Now remember, that compares with 3% in August, 7% in July, and 11% in June. Mr. Goyal, thanks a lot for joining in. Can you explain where is this growth coming in from? Which sectors are leading to this growth? And is this a trend that you expect to continue in the coming months as well?
Okay. Yeah, thanks for having me. So if you look at the growth in JobSpeak, it's primarily driven from sectors which are more indexed to the Indian economy. So IT, which is flat overall, I mean, it's been flat with minor changes month to month. But sectors such as insurance, BPO, hospitality, they have shown very robust growth. They are actually, insurance is at 25% for the quarter, BPO at 18%, hospitality at 22%. So very robust growths. Healthcare, 7%, pharma, 5% for the quarter. So it's been also doing well. Oil and natural gas, 8% for the quarter. So these are some of the sectors which have been performing well, while IT has remained muted. Auto, stable, it's not been growing. The other pockets of growth, which often we hear about, is GCC. GCC has been modest in our numbers. It's 4% for the whole quarter. And while a lot of new GCCs are coming in, some of the existing ones are not growing as much, and that's leading to that 4%. So hopefully that gives you a color for where the growth, different sectors from where the growth is coming.
Pawan, hi, morning. This is Rima here. This GCC growth number, 4% for the quarter, is this the lowest that we've seen in the recent past?
No, actually, JFM was January, February, March was 2%. And Q2 and Q3, calendar year Q2 and Q3, both have been at 4%. Now, while a lot of new, and I just want to give that color, a lot of new GCCs are still coming in. Some of the existing GCCs which have already scaled up, and specifically some of the banking GCCs, the growth has stable, or some of them are degrowing. Okay, so it's a mixed story, and that leads to aggregate 4%.
Got that. So it was 2% in Q1 calendar year, and then it became 4 and 4, right?
Yes.
Q2, Q3 is 4%. And what would the number be last year? Because up until now, the narrative or the impression always is that GCCs are still hiring IT professionals. So we got the quarterly number, but could you put an annual context to this? What were the numbers the year prior, the year before that?
So I don't remember the year-on-year growth numbers, but if I remember at the macro level, it was similar story last year as well. So the existing GCCs, the growth story had petered out there, but new GCCs were still coming in and driving additional headcount growth.
You know, Pawan, there has been a lot of talk about AI taking over a lot of these jobs. You've seen AI roles have surged 42% from last year. But is there a structural shift that you're witnessing in this Indian job market where you would see that these traditional tech roles would get replaced by upskilled AI-led roles and so on?
So, of course, we're seeing demand for AI go up, which you've already noted. Now, one of the most talked about sectors that will get impacted is BPO jobs, correct? And as I've remarked earlier, BPO jobs this quarter have grown 18%, okay? And previous quarter, also they grew 9%. So while AI job impact may come, in at least this sector is yet to see, and this was considered to be one of the first sectors where we'll see an impact. Will impact happen of AI? We'll have to wait and watch. At this time, I don't see a material evidence.
Okay. What are the sectors which are hiring freshers currently in big ways? What are the trends that we are seeing there? Hiring plus the pay that we're seeing at the entry level.
So actually this quarter and this month in particular has been good news for fresher. So as you know, fresher hiring has been subdued for a long time. But this month, fresher hiring picked up, and it's substantially picked up in our non-IT industries. Specifically, hospitality fresher hiring is up by 46%, media entertainment again 45%, real estate 42%, FMCG 39%. Okay, so some of these non-IT industries which are picking up the demand which normally would have been in IT, and that's leading to fresher hiring growth. The salary numbers, I don't have them with me handy, but my understanding is that is not changed materially there. We haven't seen an uptick there.
Pawan, very quickly, can you give us a contribution, a weight contribution of how your JobSpeak index is constituted? For instance, what is the weightage of IT and ITES? What is the weightage of GCC, hospitality, realty? Just to get a sense of this overall 10%. If banks is also not doing well, IT is not hiring, GCC growth is muted. So just give us the weightage.
So I think the composition of JobSpeak itself will take a fair amount of time to explain. But what has happened is, as the nature of white-collar hiring in India has changed, the contribution of IT in overall job has also declined. So at some point, IT used to be north of 50%. Now if I recollect it right, it's come down to 35%. Okay, so the JobSpeak index, which is this will take another few minutes to a longer conversation to explain that, and I'm happy to do that with you offline at some point.
We look forward to that longer conversation. But Pawan, thank you so much for sparing time and joining us today. And that was Pawan Goyal on the JobSpeak report that was released currently. Take a short break. The spotlight in the crypto markets with Bart Smith from Avalanche Treasury Company. On the other side, Manisha Gupta will be in conversation with him. Stay tuned.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, as promised, let's focus to the crypto space now. And Bart Smith, who is CEO at Avalanche Treasury Company, now joins us on the show. Bart, hi, thank you so much for joining. And I do understand on why Avalanche created Avalanche Treasury Company. But what is the goal right now, and what are you looking to raise from here on in sense of collaborations and monies, and how is it functioning right now?
So we just announced our initial financing also with the plans to do a business combination with a SPAC. Mountain Lakes Acquisition Corp. If everything goes with our regulatory filings, that will combine in the first quarter. Something in today's valuation, something close to $675 million, with our goal to continue to to grow that number over time through a myriad of different types of capital market activities.
Oh, well, absolutely. Lots happening there. But how are you looking at overall market? Because we've seen a big surge in 2025, which seems to be like a defining year right now. How are you looking at the kind of interest, investments, plans, and how are you looking at the technology growing from here?
So there's a couple of different facets that go into this. Obviously, the most encouraging has been the regulatory climate in the U.S. The regulatory climate in the U.S. for the previous call it 5 or so years made it very difficult for entrepreneurs and people within the digital asset space to grow companies, get capital from the public markets in a way that would help them grow. This more recent regulatory climate with the passing of Genius Act and just broader reform as it pertains to cryptocurrencies in the US to make them faster and more efficient. Having worked in the digital asset world for over a decade, I've been following Avalanche very closely. I feel like this blockchain in particular is poised to benefit more than any other blockchain in this business adoption, not just in the United States, but globally.
But when we talk about the global markets, well, yes, there is a surge, but would you call it uneven? Because some countries have done a surge, pause, and then growth, even for that matter. How are you looking at it going forward from here? Because when you talk about the capital markets, financial markets, the real world asset tokenization really seems to be building up right now.
I mean, I think it's really, really early still. I think people have been talking about cryptocurrencies for a long time. I think most of the historical enthusiasm around cryptocurrencies was about kind of their potential. And while it's still about potential, you're seeing implementation in real time now, where you're seeing real business use cases. So you don't have to talk in theoreticals. Avalanche, as an example, is working with FIFA to help them in their 2026 World Cup ticketing and fan engagement. Avalanche is building today and working with KKR and Apollo in private credit, working with big banks and asset managers like JP Morgan and WisdomTree. So I think what we're seeing now is the early stages of implementation, where you're going to see real world value creation from implementing these blockchain technologies into businesses and having that value drive down to the token, not just on optimism of future enthusiasm, but real world business occurring and the revenue of that driving down to the token.
Oh, well, absolutely. But from FIFA to capital markets and, of course, tokenization as well. You talked about regulations, and US has come out with the Genius Act, which clearly seems to be picking up. Other countries are also looking at. Do you see better adoption, better institutional reach going forward? And how would you look at the growth coming in from these segments?
It's a great question. One of the difficulties in digital assets achieving their goals over the last 5 years was not just a lack of regulatory clarity in the U.S. It was really in all of the major money centers, right? You whether it was in India or in Singapore or in Hong Kong, you see regulations that at one point were very welcoming to digital assets, and then something happened and they switched 180 degrees in the other direction, and made it more restrictive. So it's very hard for businesses to plan about their growth and where they want to position themselves. What money centers and what city hubs do they want to be able to build their businesses in without that clarity. What you're seeing now is that these different countries are now talking with one another to collaborate on their, not only on their regulations for their citizens and for their country, but how that interlocks with other regulatory regimes around the world. So when you have different parts of the world, the Chinese government has kind of been maybe more isolated, but you're seeing in Europe and the United States in particular, they are collaborating on their different regulatory approaches towards digital currencies. That's giving businesses the comfort to invest in certain cities for growth. And I think that the countries that are clearest about their regulations and them being constructive to businesses are poised to win and to garner human capital that in a competitive landscape with all these other cities.
But finally, where do you see the next adoption coming from? And we've not just seen the crypto enthusiasts, but also retail get in, institutions are partnering, even mutual funds and bigger names coming into forte now. Where would you see the next adoption, the next growth for crypto and blockchain coming from?
I mean, a tremendous amount of the growth that's already occurred this year, and I believe will be a major driver over the course of the coming years is stablecoins. Right, cross-border remittance, moving fiat around the world is a very clunky. It's a very expensive business, and it's not terribly efficient. You have a lot of costs in transfer of currencies, and money kind of gets caught up in transfer in ways that is not an efficient use of that capital. Stablecoins allow counterparties to exchange monetary value at very low costs and almost instantaneously. And so I think that you're seeing the growth of stablecoins, and you're now seeing certain companies like Stripe and Visa and banks all around the world that are understanding that the business model for moving monetary value, fiat or otherwise, around the world is changing very fast, and the people who adopt more quickly to this opportunity, I think, are going to be the winners.
All right, so it's going to be about cross-border remittances and, as you said, stable coins and even institutional adoption, two things to watch out for in the years to come. But thank you so much for joining in. And with that, that's all the time that we have on this segment. But let's chip into a short break. When we come back, we'll talk more about markets and stock specifics on the other side.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Looking to end the week on a high is the Nifty. L&T has just won some orders in the range of 5,000 to 10,000 crores. The stock doing fairly okay for itself. But Jay Thakkar from ICICI Securities joins in for a quick chart check. Jay, fair to say that 24,600 to 24,500 has now become a very firm base for the index, and your specific stock recommendations for the morning?
Yes, 24,600 now seems to be a good short-term support. Almost after almost 8 days of continuous or consecutive fall is what we are seeing a bounce back. And generally, we have seen in past 1.5 years is that whenever market has fallen by, consecutive 6 to 8 trading sessions, we generally see, 3 to 4 days kind of a bounce back, which is around 2 to 3%. And from 24,600, considering that, I think that on the upside we can see the levels of 25,000 to 25,100. And that would be also a meaningful retracement of the overall fall which we have seen. So short-term range for Nifty definitely because of which would be 24,600 to 25,100. But it is almost reverse from the lower end of the range. So I think at these levels one can go long on Nifty, targeting 25,100 with a stop loss of 24,600. Stock specifically, I think that couple of sectors like auto, metals, OMCs. And PSU banks. I mean, these are the few sectors which are relatively strong as compared to most of the other sectors in the market right now. Hence, I have buy recommendations from these 4 sectors. So the first buy recommendation is on SBI. I mean, it's trading around the levels of 867 after a long consolidation breakout. I think this stock can be bought for the target of 900 to 925, and one can place a stop loss below 848. So there's a good risk reward out here. And the second buy recommendation, Hummus, will be on JSW Steel from the metal pack. I think, it has given a very good breakout from 1100 to 900 range. On the upside, we have seen a good or significant long build-up out here as well. Good momentum crossover as well. So one can target around 1250 to 1300 positionally. One can go long on this, placing a stop loss below 1100.
Okay, all right. Thank you so much for joining us with those levels to watch out for, and individual names as well. For the markets, there's some recovery from the lows on the Nifty. It's down 20 points. When we started the show, it was down around 50. The SAR itself, we've seen some gains come by for Hero MotoCorp. So the auto pack is contributing to the recovery that we're seeing from the lows as well. So there's Hero MotoCorp, Bajaj Auto, Eicher Motors. That's also recovered from lows. The other names which are trending well from the broader markets. JK Paper, that is one stock which is up around 9%, 10.5% actually there. Nalco is the other one doing really well. Tanla Platforms is up 4.5%. We have Praj Industries, which is seeing some gains as well, 4.5% there. So a lot of stocks which are on our radar. We'll keep tracking all that for you. But for now, we'll do one thing. We'll slip into a short break. When we come... Okay, all right. We'll not do that. We'll actually go across to Mangalam. He's joining us with all the trends from the F&O space this morning. Mangalam.
Well, it's not looking particularly bad. After a big rally that we saw on Wednesday and a break that we had yesterday, it was expected to see some sort of profit booking in today's trading session. But that's actually now, coming up. So we're seeing the frontline indices move higher from the lows. The mid-caps have been doing well. The banks, which actually led the rally on Wednesday, are already outperforming. And if you look at some of the intraday charts today, that tells you that the mood on the consumption side of things is definitely fairly better. So we have Hero MotoCorp, which opened slightly lower, but good sales numbers coming in. The stock has moved higher. We have Eternal, which is doing well. Typically ahead of the festive season, these e-commerce, quick commerce stocks do well. We have Britannia, which too has moved to the high point of trade, and V-Mart Retail on the back of a strong update, up nearly 11%. The other pack which is doing well, the metals packs. We have Tata Steel, Hindalco, Nalco, Hinzinc, all of them are buzz in today's trading session. So do not look at just the frontline index, which is consolidating after a big run. Let's look at some of these individual names, which are telling you that maybe the market is poised for better levels from here on. Though, in terms of a very near-term range, the active Nifty options at around the 24,800 mark is where both the call and the put writers have created a bit of a fulcrum. The combined premium on the 24,800 call and the 24,800 put is close to 150 rupees. So in the very near term, maybe the street believes that the range could be 24,650 to around 24,950 on the way up. And understandably so, because the Nifty is very close to its 50-day moving average. For it to cross it and stay above is something that we'll watch out for. And on the way up, we have the 100-day moving average as well. The Nifty Bank, which conquered its 50-day moving average on Wednesday, now has to go ahead and conquer the 100-day moving average. So from a technical standpoint, those are important levels to watch out for too. the broader markets, that's where a lot of the action is. Two stocks have already entered the F&O band, even as we're on day 2 of October series. And now as we look at it, HFCL, Vodafone Idea and Bandhan Bank, all of them very close to the threshold beyond which they will enter the F&O band. So these are a couple of stocks I'll be watching out for. In particular, Vodafone Idea, because October 6th is where we have the hearing with regards to AGR relief. It's an F&O stock, so a lot of action building up ahead of that.
Mark that on your calendar, 6th of October. Thank you very much for that, Mangalam. Get into a break. On the other side, we'll put the spotlight on Sammaan Capital in our special segment, The Big Story. Welcome back. It's time now for the big story on Trading Hour, and it's about the big stake buy of Sammaan Capital by IHC. We've been talking about it since morning, but Gaurav is here to quickly highlight the details and give us more. Tell us, Gaurav.
Well, yes, definitely. Sammaan Capital is in focus, and the reason being that IHC is now going to acquire 41.2% stake in the company. Remember, they are going to acquire this stake at a valuation of 8,850 crores, which is around $1 billion. With this, IHC will enter into the financial segment in India, and at the same time, this is also the largest ever primary capital infusion made by investor in an NBFC in India. When we look at the acquisition, board has already approved issue of preference share of around 33 crores, which will be valued at 4,587 crore rupees, 31 crore warrants, which will be valued at 4,262 crore rupees, and at the same time, this transaction will also trigger an open offer where the 34 crore shares will be offered for valuation of 4,750 rupees. Now, remember 50 crores. Now, remember the entire transaction is going to happen at 139 rupees per share. And with this, the next thing to watch out is the extraordinary general meeting, which is going to happen on 29th of October, where board will seek for shareholders approval on preference issue and amendments of AOA. When we talk about Sammaan Capital and their management, they are already optimistic. They believe that this will provide long-term capital, improve credit rating, and also strengthen the governance support. And at the same time, JP Morgan now, they are also being a bit optimistic. What they are saying is that from here on, RBI's approval is going to be a crucial thing to watch out for. They believe that this is going to take 6 to 9 months. And at the same time, when we look at some of the valuation perspective also, Sammaan Capital currently trades at 0.6 times. Definitely this deal is going to be book value per share dilutive. But from here on, it also leaves some space for valuation upgrade. So all in all, good set of deal coming up for Sammaan Capital. Although the stock has given up some of the gains, but in the last 5 days, we have seen stock rallying more than 15%. So definitely watching out on this counter in coming days.
Some profit booking, of course, considering the fact that the stock had run up so much in the last 6 sessions. But Gaurav, thank you for putting that into perspective. And mind you, the stock is still in the FNO ban. So you need to keep that in mind as well. Earlier, we did speak to Gagan Banga, the MD and CEO at Sammaan Capital, listening to some excerpts of that conversation.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
All right, that's the word coming in from Sammaan Capital. Time for a short break now. Pulkit Patni from Goldman Sachs will join us next to put the spotlight on the cement sector. Stay tuned for that conversation.
Welcome back. Let's now put the spotlight on the cement sector as we enter into the Q3 quarter. Let's find out how Q2 has been. Pulkit Patni, who is the India Industrials Analyst at Goldman Sachs, is now joining in. Pulkit, morning. This is Rima here. First, just tell us how Q2 has panned out, because we were just reading your report and you highlight that volumes were weak, but pricing has been resilient. So take us through the key numbers for the industry in Q2.
Sure. Thank you for having me. In the report, what we've highlighted is that the second quarter was a muted quarter in terms of demand at about 4% for the industry. And if we look at both Q1 and Q2 added together, we're still at about 4%. But from a pricing perspective, where we were positively surprised is that the price increases that were taken in the month of April have almost continued through. Yes, the typical correction that we see in monsoon has come through, but net-net, we are still in a pretty good position when it comes to the pricing overall. Now, this is what is actually driving us from a relatively more cautious view on cement over the last few months. We've become incrementally more tactically positive on the sector because as we get into the second half, we think demand is going to pick up, even though we may be in a relatively softer pricing environment after what we've seen in the first half.
Okay. So can you explain what is making the prices resilient despite a tepid demand of just 4% in Q1 and Q2? I mean, what explains that? What does it mean in terms of the EBITDA per ton that we should expect in Q2? Because Q1 was also pretty strong, led by the price increase. So what would the number look like in Q2? And though you've turned incrementally a little more bullish now on the sector, you have only one buy idea, and that's Ultratech Cement.
Sure, absolutely. So let's look at what's happening in the cement sector. This is a sector that's going through significant consolidation. That consolidation has had its impact on pricing. If you look at the last year, we did not see any major price increases. As we got into this year where demand was relatively weak, the industry could take price increases. And that is typically what happens during a period of consolidation, that price control becomes a lot better for the larger players. Now, let's look at the second half of this year. Demand should get better. Reservoir levels are at its peak. Typically, there is a pent-up demand period that happens after monsoon. And then this year, November, December are going to be clean months from a festive perspective. So that is why we are feeling confident that in the second half, demand actually should come through. And that itself is a reason that we think tactically things should be better. Now, from a industry perspective, valuations in this sector are still fairly rich. And that's why we have to look at stocks specifically. But from an industry perspective, we do think that second half looks a lot better.
Pulkit, you said you were positively surprised by the pricing resilience despite the weak demand that you have seen. Is that price resilience in anticipation of the uptick or the potential uptick in demand that you are anticipating in the second half of the year? And if that does happen, does that price resilience percolate into further price increases going forward?
So when we talk about prices in particular, as I said, that the first quarter price increases were stronger. In the third quarter, where we are sitting today, we don't expect any meaningful price increases. And that is driven by the fact that there is also a lot of capacity that this industry continues to add. Where we expect price increases further to happen in the cement sector is next year. So you can look at calendar 26, which is fiscal 27, where we think price increases will come back in the sector. Also, keep in context one important point that we have been through a 6 to 7% price increase in the first quarter. And even if for the rest of the year we don't see much price action, I think that's good enough for the sector from a profitability perspective. What we are looking at the sector from a profitability standpoint is about 200 rupees per ton of improvement into the next 2 years from the base of FY25. And if you were to talk about the quarter in specific, which is basically a quarter impacted by monsoon, we are looking at a sequential decline of 200 rupees per ton, which is not something that should come as a surprise to anybody.
Okay. Pulkit, we spoke about pricing, we spoke about volumes, valuations as well. Any other aspect or fundamental that an investor should look at before looking at this particular sector, widely tracked, but other than these metrics, what can one look at to understand what the future holds in terms of the space?
Sure. I think if you look at consolidation as a theme, right, while obviously every sector is different, look at paints, look at aviation, the industry leader in most of these sectors have more than 50% market share. Now, we are not saying that will happen for cement, but for the larger players, we think there's more room for them to consolidate market share. And that's a theme that is going to work through the next couple of years in the sector. I think what we have to also keep in mind, which is very, very specific to the larger players, that we are seeing that the focus on cost for the larger players is only increasing. And so what you're going to see over the next couple of years is that on the cost front, the larger players will completely price out the smaller players, which will further drive industry consolidation. So answering one of the questions previously on valuation, that while the sector is seeing a rich valuation in certain pockets, what is important is that there's a clear dispersion that the market is seeing, where large consolidators are seeing higher valuation, and we see no reason why that changes. And companies with relatively slow growth are trading at much, much lower valuation. And that's a dispersion we expect will continue.
Okay, all right. Thank you so much for joining us today with your thoughts and outlook on the cement space. That's the word coming in from Goldman Sachs. Time for a short break now. We'll get you more on the markets on the other side.
Going absolutely nowhere are the indices, but the broader markets are doing fairly okay for themselves, and the Nifty Bank too continuing to remain in the green. With that, we take your leave on this edition of Trading Hour. From Zonal Rima and me, thank you for watching. Halftime report on the other side.
Stocks oscillate in a small band, with Midcap showing relative strength, metals and industrials notch gains, while energy and auto drag.
Global investment firm Abu Dhabi's IHC is investing $1 billion in Samman Capital for over 41% stake. will also make an open offer for an additional 26% at 139 rupees per share. This move marks a milestone transition for the home financier.
Bajaj Auto calls it a rocking festival season. Maruti 2 sees sales top 1 lakh vehicles for the first time ever in Navratri. What's more, the two-wheeler and passenger car makers also point to strong export growth.
The prices of crude oil sink to a 4-month low as traders expect OPEC Plus to hike output by 5 lakh barrels per day. Rising US crude and gasoline stocks also weigh on sentiment.
Hello and welcome. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Ekta Batra as well as Vinny Motiwala. We're seeing some consolidation. It's a Friday afternoon, no real worries for the market, largely because we've seen a big move on Wednesday. Yesterday was a holiday and 2 days from here on are holidays as well. So as we move to the next week and the meatier part of the October series, where you'll have a lot more second quarter updates and numbers coming in, the street is, flitting between red and green for the frontline index, but not for the broader markets as much. We're seeing a bigger move out there. We have nearly 1,700 stocks which are advancing for about 1,000 which are declining. And today, the music that the market's playing is heavy metal for sure. We have Tata Steel, which is higher, Hindalco is higher, JSW Steel. In fact, the metals index comes up for you. That one too is at the high point of trade. So a lot happening beneath the surface, even as the surface seems calm and consolidatory.
Absolutely. Good afternoon, Ekta, Mangalam, both of you all. And you've rounded up the market pretty well. We have a lot of individual movers in trade that are buzzing around. So a lot of moves coming in from the broader end of the market, Aegis Logistics, GE Shipping, MMTC, some of these broader end, which are buzzing in trade. But apart from that, we're going to be shifting focus to...
Yes, absolutely. But before that, just want to point out what, or just want to extend the point that Mangalam did bring up with regards to the broader markets. So just want to point out that on a week-to-date basis as well, the outperformance for the mid-cap as well as the small caps is quite distinct as compared to the Nifty. As of now, let's see what happens, but you can pretty much take this as a larger piece that the Nifty is just about higher by around 0.7% on a week-to-date basis. We have the mid-cap index, which has gained around 1.56%. The Nifty Next 50 is up around 1.4% this week, and the BSE small-cap index is up around 0.6%. So there's been a clear outperformance for the broader market stocks as compared to the Nifty. But nonetheless, let's get talking about one specific company. Let's kick off the show with that. Indegene is the one that we're talking about. It's set to acquire BioPharm for around $106 million. Joining in now, we have Manish Gupta, who's the co-founder and the CEO of the company. Our discussion is going to be focused on these three main points. First is the BioPharm acquisition, what synergies they see, the business impact amid tariff news, with regards to what's taking place in the US, and obviously the deal wins and the outlook for the company in FY26. Manish, hi, thank you very much for joining in. Well, I'm going to start with this BioPharm acquisition. Just give us a sense in terms of, let's start with the revenues, because it was $38 million in the previous, it was $40 million in 2022. And just in the previous year, it was around $38 million. So it's been a little jagged in terms of the revenue for this particular company. So tell us why is that? Why were the revenues a little jagged? And what does this particular acquisition bring to the table? Is it EPS accretive?
Sure. First of all, thank you so much for inviting me to this show, Ekta. Before I get into some of this, the jagged part of it, let me explain where this acquisition fits in the broader industry trends which are playing out. Life science industry is a pretty large industry. You're aware of that. It's around $2 trillion in size, around $10 trillion market cap, and of course, a very super important market and industry. This industry also spends around 18% of the $2 trillion revenues on sales and marketing, approximately, which is, as you can imagine, the largest spend. This 18% spend, or call it $360 billion, is going through some fundamental restructuring over the last 15 years. A market or a model which was primarily feet on the ground, sales rep driven, right? That used to be the largest expense, has been shifting towards non-personal promotions, which means companies are spending more and more on digital outreach to physicians, right? And that's been a big trend, more and more dollars shifting towards digital outreach. Within digital outreach, much more being spent on centralization, data, right, and much more hyper-targeted physician focus on the sales and marketing side. Now, bio, that's a space which Indegene has been operating in. 70% of our revenues comes from that space. Biopharm has been a market leader in that whole space of hyper-localized, hyper-targeted physician outreach in the United States, right? With some of the assets we have as Indegene, we have a product called Invisage, which is a data asset, around 2 million physicians profiled for their digital propensities. Biopharm extends that data capability of ours. Now we'll have more than 3 million physicians profiled for their digital propensity. We also go out to and have data on very specialized areas like oncology, rare diseases, ophthalmology. Those data sets expand very significantly. Even from a channel outreach perspective, the channels which we were as Indegene strong on were things like email, web.
All right, but Manish, we get this, we get the rationale, but tell us a little bit about the numbers. We want to know, when will this particular acquisition be EPS accretive? Why have the revenues been, why is it off the peak revenues of around $40 million in 2022? And what's the trajectory of growth?
So the trajectory of growth has been strong. There is a bit of a nuance in this business, that what you see are the gross revenues, right? Gross revenues of 40 and 38. And then there are net revenues. And the difference between gross revenues and net revenue is essentially pass-through revenues, right? Biopharma also has a very strong media business, which means it does media buying on behalf of small and mid-sized pharma companies, right? And that passes through its books. So that kind of results in some bit of variability in revenues, which has resulted in this this difference which you see. Otherwise, the business has been a very stable business, very solid business.
So we
and I would say
have
a profitable business.
We have only these numbers to go by. So give us a sense in terms of what the trajectory of revenues could probably look like, whether it is EPS accretive.
It is going to be EPS accretive. It is going to be EPS accretive right from day one.
Okay.
This business also we believe is going to grow in 25 and 26, given that once it's with the synergies we bring as Indegene, the market presence we bring, that's also going to be expanding.
And what would the blended margins look like, considering that your current consolidated margins are 20%? You haven't reported margins for this particular company. So just give us a sense in terms of what the blended...
So we believe that, call it in the next 4 to 6 quarters, right, we will be making some investments. So the margins in the short term might be slightly lower than our average company margins. But in the 4 to 6 quarter, the margins should be equal to Indegene's margins, or even have a potential to be slightly higher.
Right. Okay. So you're expecting higher margins, maybe slightly higher after those investment cycle is over for you.
Yeah.
But what about overall? Now, how much will be the cash on books for you that will be left after this acquisition? Because you already have made a lot of acquisitions till date, right? Almost 13, 14 acquisitions that are done. So then any more acquisitions in the pipeline, or right now you'll be focusing on growing these ones?
So we have, first of all, let me answer the cash on question. We had approximately $200 million on our books before this acquisition. What we are paying out right now upfront is only $65 million.
Got it.
Right. And another 6 months later, we have another payout coming. But Indegene also is a profitable company generating cash, right? So we'll still have a lot of cash on our books. As far as the acquisition pipeline is concerned, we have a full-fledged corporate development team. And I would say still a very strong pipeline of future candidates for acquisitions. Of course, we are a very disciplined buyer, and we'll only buy once we see the synergy, the strategic fit, and the right price.
All right.
We're going to be open to acquisitions.
All right, you will be open to acquisition. This time around, X of acquisitions, if you could give us a sense on how the quarter has been for you, very close to your results, so not asking for specifics. And for the end of this year, what are your targets, if you could reiterate them? And are there any macro headwinds that you see to those targets because of the current happenings around the world when it comes to pharma, tariff, and all that uncertainty that is playing out?
Sure. So we are in a quiet period, so I'm not going to talk about the quarter, but I can talk to you about the fact is that we feel good about where we are as a company and the industry, by the way. Industry, in spite of the pharma industry, life science industry, in spite of all the tariff headwinds and all you see, is going through a period where they are taking the next steps to evolve, right? Adopting digital AI in a significant way. biotech again as a sector has been, I would say, coming back right after a lull period for some time. So the tailwinds, we have enough tailwinds, which we believe are going to drive growth and market share for us over the next few quarters.
Just quickly before we let you go, because of this uncertainty with regards to the pharma tariffs, the Pfizer deal being struck with the Trump administration, there's a lot of uncertainty. Is that delaying decisions by your clients?
Not really, not really. In fact, because there are two things happening in this industry. One is that there is obviously a very significant number of products that are going to go off patent over the next 4 or 5 years, right? Probably adding up to $180 billion. But this industry has also never been, the pipeline has never been so strong. So the number of products that are slated to be launched over the next 3-4 years is very high, right? So, and that's the key thing the industry is focusing on.
Sure. Mr. Gupta, just quickly, because 64% of your revenue is from these top pharma companies, right? So that is all fine. There is no problem on that front. And that's still stable. There's no concerns because of the tariff on that front.
Stable and growing.
Okay, all right, Manish, we're going to let you go on that note, and we're probably going to discuss more numbers once your Q2 numbers do come out. Thanks very much for joining in and speaking with us. So that is Indegene. The stock is up around 0.6%. They've announced a $100 million acquisition, which they're saying will be EPS accretive immediately. We'll take a short break, but a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back. Just look at the PSU Bank Index. A big spike is what we've seen on the PSU Bank Index right now. And, it's been led by, obviously, the biggies. We have SBI, which should come up for you. A big move from the lows is what we've seen, and a lot of these others as well doing well. But on the bottom of your screen, there is some exclusive news coming in on PB Fintech. So we'll watch out for that. In fact, Yash joins in to tell us that life insurance companies have actually cut commission on first premium and renewals. What does this mean for PB Fintech? Yash will join in with the details. Yash.
Well, just about a couple of days ago, we had reported that general and health insurance companies have cut the commissions by an entire 18%, which they pay to the distributors, like web aggregators, being PB Fintech, banks, agents, so on and so forth. Now, what we've been given to understand from our sources is that life insurance companies have also taken the decision and passed on that entire cost. That is a cut in commission as well as rewards which they pay to various distributors, as I said, which include web aggregators like PB Fintech, banks, individual agents, as well as brokers. What we've been given to understand from our sources is that this cut in commission, which is of about 18%, has come both on first year premium as well as renewal of policies. This cut in commission, which is paid to distributors, is effective 1st of October, which means it's already in place. And as far as products are concerned, it's come across the board. On term policies, on savings policies, on ULIP policies, as well as on annuities, this cut in commission has been passed on by the life insurance companies to various distributors. Now, letters which intimate this particular cut in commission has been passed on to various sections of distributors. Also, as far as the impact on life insurance companies is concerned, there was some serious concern that this could increase the cost for life insurance companies, impacting their value of new business, impacting their margins as well as the embedded value. We've spoken to analysts, and analysts suggest that this move on passing on that cut in commission to distributors would negate that entire negative impact, which means that entire negative impact which life insurance were expected to see on their EV, on their VNB as well as margins would get negated, would get removed, and it would become neutral. But on the other hand, again, we've spoken to a few analysts, and the impact that seems to be arising because of these cuts on PB Fintech seems to be quite large. According to analysts, 15 to 18% of a negative impact could come on the revenue for PB Fintech. 25 to 30% of impact could come as far as EBITDA for PB Fintech is concerned, and 30 to 35% of the impact could come as far as EPS for PB Fintech is concerned.
Okay, Yash, thank you so much for that important update that is coming in here. PB Fintech also is what we're keeping an eye on. But now on to our movers and shakers segment, where we track a whole host of stocks that are on the move. Now, first up, let's talk about Sammaan Capital and what is the reason for the move in today's trading session. Gaurav is joining with us with more details.
Well, yes, when we look at Sammaan Capital, now IHC is going to acquire majority stake of around 41.2% in Sammaan Capital. They have entered into a definitive agreement with the company. With this, they will be investing 8,850 crores in the company. Remember, this will be an entry point for IHC in Indian financial segment, and at the same time, this is also the largest ever primary capital infusion by investor in an NBFC in India. When we look at the deal, let's see how they're going to go about it. Board has now approved preference issue of 33 crore equity shares, which will be valued at around 4,587 crores, 31 crore warrants, which will be valued at 4,262 crores. And apart from that, this will also trigger an open offer, and for that, 34 crore more shares will be floated for a valuation of around 4,750 crores. Remember, the entire deal is going to happen at 139 rupees per share, and extraordinary general meeting now that will also happen on 29th of October, where they will seek shareholders approval for preference issue and also for amendment of AOA. When we look at the overall news flow, it is actually positive for Sammaan Capital. In fact, management also said that it will provide long-term capital, it will improve credit rating, and at the same time, it will also strengthen the governance support for the company. Remember, for the last few years, we have seen Sammaan Capital trading below one-time price to book after the IL&FS crisis. So definitely, it is going to be a positive news flow for them. At the same time, now JP Morgan, they are also a little bullish on the company. What they're saying is that RBI approval is a key thing to watch out for, and they're also expecting 6 to 9 months for the entire transaction to get completed. We earlier spoke to the management. They sounded optimistic. They said that by FY30, ROE is going to reach over 3%, so definitely a positive news flow for the company. As of now, we are seeing some kind of profit booking because over the last 5 days, we have seen the stock has moved up almost by 20%, but definitely we will be watching out on this stock from here on.
Gaurav, thanks very much for that. So that's a big deal in focus. In fact, we did speak to Gagan Banga, who's the MD and CEO at Samad Capital. Listen in to excerpts from that conversation.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Okay, so that's the big stock in focus. But other stocks in focus include V-Mart. Mangalam, you're looking at that. Tell
Yes,
us.
a good update is what has come in. You know, the street was expecting good performance in the second half of this year. They've gone ahead and done that in the second quarter already with more triggers for the second half, which has the street excited, which is why the stock is up nearly 7.5% in an otherwise wobbly consolidatory market as well. What is good? 22% sales growth, 807 crores. And it's been led by same-store sales growth, which have come in at 11%. Remember, same time last quarter, they did just about 1%. So on the back of a 1% growth in the first quarter, 11% growth is a big jump, and the street likes that, which implies that there could be margin expansion this time around as well. They've opened 25 new stores, so total store addition this year so far has been 38 as well, which is pretty much in track, if not ahead of their annual guidance of 60-65 stores being added. So all these work well for them, with the near trigger where the company had told us very recently that they should touch 20% growth in the festive season. They've already done that in the second quarter, and there would be an incremental 5 to 7% growth due to lower GST. Add to all of this, there is that incremental trigger of the Bihar election towards the end of this year as well, which typically increases their revenues post the election outcome. So as a result of which, that stock fairly well bet. But a bunch of stocks, they are moving around in trade today, and Vivek has actually curated that list and is telling us he's by the wall with that big list of stocks which are moving. Vivek.
Well, thank you so much for that, Mangalam. A whole host of stocks on the radar, a few that we already touched upon. But have a look at the metal pack. You know, this particular pack opened flattish, but post which, you know, it's seen consistent buying. Have a look at Tata Steel, Nalco. Most of these names doing very well in the session. Vedanta too, up over 2% in the session. Another stock from the broad end of the markets is Aegis Logistics, up almost 11%, strong volumes, the top NSE 500 gainer today. And Solar Industries, you know, Goldman Sachs has come out with a detailed note on most of the defense names. Solar Industries amongst their top buys, stock higher by over 3%. JK Paper, again, after a while, this particular stock on very good volumes today is up close to 10%. And Netweb Technologies, you know, the stellar rally on this particular name continues. Again, a fresh 52-week high for this particular name. On the other hand, we did discuss Samad Capital, profit booking seen on this particular name. Max Healthcare, you know, again, this particular stock seeing significant selling pressure. One of the top laggards as far as the F&O space is concerned. Sun TV, remember, 2-day rally, we saw value unlocking theme as far as IPL franchise sale was concerned. But today has cooled off significantly post the rally. And Cholafin, again, one of the few NBFC stocks today under a bit of pressure amongst the top laggards in the broader markets today.
Okay, Vivek, thank you so much for that. Keep an eye out on all those names over there. We have Tata Investments that's seen a sharper fall in the last 20-odd minutes as well. Keep an eye out on that one. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Welcome back. Well, stable for the markets, good advance decline ratio on our hands. So 1650 stocks advancing to around 1100 stocks declining. So that stands at around almost 2:1 in terms of the advance decline ratio. But let's now talk about the F&O space. We have Mangalam, who's by the F&O desk, the CNBC-TV18 F&O desk, and he's here to tell us what he's tracking today.
But a couple of things that stand out in the F&O desk. The good part is that even as there is consolidation for the frontline index, the broader markets are doing well, and it's been led by the Nifty Bank, which had already led the rally on Wednesday's trading session as well. So those two indices doing well. The Nifty consolidating, no real worries. The other thing that we're watching out for, a couple of these consumption-related stocks, which will typically do well in this quarter. So Hero MotoCorp has recovered a sharp bit from the lows. Eternal 2 has recovered from the lows, though marginally in the red right now. We've seen some traction build up in names like V-Mart Retail and the others as well. So Britannia 2, for instance, has been fairly well bid in today's trading session, up above that 6,000 rupee mark. The other thing that is doing well, all the metal stocks, they are fairly well bid. So those two parts of the market are doing extremely well, along with the banks and the mid-cap end of things. So with consolidation, the street is betting for some sort of, move coming by when you look at the range on the Nifty. 24,800, because we have come back from a holiday and going into a two-day weekend as well, seems like a bit of a range that, the street is betting on. 24,800 call, premium of 100 rupees. 24,800 put comes up for you, premium of 60 rupees. So 150 rupees on either side of 24,800 is the broad range that these writers are working with, which basically means that you're looking at 24,650 at the lower level for a support, and on the way up 24,950. And remember, 24,950 is an important technical level also for the Nifty, where the 100-day moving average comes in. We're very close to the 50-day moving average. The Nifty Bank to 100 points from here on is the 100-day moving average. It conquered the 50-day moving average on Wednesday's trading session. So that's the broad range that the street could be looking at for the Nifty Bank too. Were it to cross the 100-day moving average on the way up, that would leave the door ajar for further short covering. But a lot of individual stocks which will be on our radar, because it's the third day of the October series, or rather the second day of the October series, and we already have two stocks in F&O ban. HFCL, Vodafone Idea and Bandhan Bank, all of them are very close to the threshold beyond which they go to F&O ban. So if they continue to be, bid in open interest so high, then the stocks may enter F&O ban, making Monday a day where 5 stocks would be in the F&O ban.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break. Don't go anywhere. After the break, we'll come back with Rajesh Palvia from Axis Securities, and he will join us to talk about his trading strategies. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now, 24,800 is what it's managing to hold on to, down almost 0.1%. But let's bring on board Rajesh Balvia of Axis Securities to talk to us about his trading strategies. Rajesh, afternoon. In terms of levels, we should keep an eye out for the Nifty as well as the Nifty Bank. And what are your trading bets that you're keeping an eye out on as well?
Good afternoon. So, looking at the behavior of Nifty, the major call writing activity has been witnessed at 24,800, 24,900 strike. So, these levels are likely to act as a immediate supply zone for the Nifty. Though put writers are also, adding the position at 24,800. So, I think 24,800 is the, pivot level or, tug of war is between bulls and bear at this juncture. Any breakout about 24,850 could trigger some short covering action and maybe some upward momentum towards 24,900, 950 we could see in the near term perspective. So at this juncture, till Nifty is holding about 24,750, I think one should remain on the long side of trade, as some of the sectors are showing a sign of strength, and I think we may see continuity of uptrend in the near term. Though Bank Nifty is looking more promising compared to the Nifty, as Bank Nifty is comfortably trading about to 20-day, 50-day moving average. And here we have already seen some short covering action has been already triggered in the previous trading session. So Bank Nifty is looking more promising at this juncture. And I think any breakout above 55,650 could initiate more, short covering, and then possible rally can extend towards 55,850, 56,000 in the continuation of this up move. And I think in banking basket, most of the PSU banks are showing sign of strength. So we could see, traction to continue on the buying side for banking stocks. So here also we are holding bullish view with stop loss of 55,300 for Bank Nifty also.
Okay. Specific stocks?
So metal and banking basket is looking attractive. So from metal space, National Aluminium managed to view breakout of last 3-week consolidation range. And looking at this breakout, we believe that, National Aluminium can extend its gain. 230 to 234 would be the next target. On the downside, 218 needs to keep as a stop loss. From banking basket, Bank of India is looking promising. Stock is, forming a rounding bottom sort of formation on daily chart, and looking at the strength on the near term chart, we believe that, this stock has potential to extend its gain. 132 to 134 could be the near term target. On the downside, one needs to keep a stop loss towards 123.
Okay. Rajesh, have you checked the charts of Aegis Logistics by chance? If you can tell us, what are we watching out for? Because today that's buzzing in trade and it's seeing good volumes as well.
Yeah, definitely. So on the weekly chart now, stock is negotiating with its multiple supply zone, which is placed at around 915. So any breakout above 915 can take this stock further higher, and maybe possible target towards 960 we could see in the near term perspective. So overall structure for stock is on the bullish side. So those who are already in the long side of trade can hold the position with a stop loss of 865. Maybe we could see a breakout above 915 in next couple of days, and then really can extend to 960.
Okay. All right. We're going to let you go on that note. Thanks very much, Rajesh, for joining in and taking us through all of those strategies and technical calls. Well, for the markets, the Nifty is just about consolidating with a little bit of a negative bias. Just want to point out that it is a lot about the metal stocks today. So we have Tata Steel, which is your top gainer on the Nifty. It's up around 3.8%. Following that is Hindalco, which is up around 2.5%. Banks are not doing too badly either. So the index itself, the Bank Nifty index, is up around 0.3%. But we have stocks such as Kotak, Axis, SBI, Indocin, all of these stocks up anywhere between 0.5% to more than 1% at this point. But let's go across to Manisha now to take us through what she's tracking in the commodities space. Manisha, over to you.
Thank you for that, Ekta. Well, I have with me Ajay Kedia, he's director at Kedia Commodities, joining in me to talk about all things metals, and that really seems to be a space which seems to be buzzing today. Ajay, hi, thank you so much for your time. First of all, on metals itself, and we've seen copper on MCX do an all-time highs. I was reading your report earlier, which is mentioning that from energy to precious metals, and now the focus seems to be on metals. How are you reading this phase right now, and what would you want to pick up in metals?
Very good afternoon, Manisha. Definitely, I think this next upcoming rally will be from the metal side, as we have mentioned, that after any COVID-like situation, we generally see the movement of commodity cycle start from the reactive basket that is crude and natural gas. We have seen already the rally has been seen. Precious metals still going on, but I think now as interest rates are coming down, the stimulus are continuously giving. Whatever the oversupply was there in the market is now curtailing down. All these factors makes very much attractive metal like copper, zinc, aluminum. We do have a good sufficient stock as of now, but I think a long run rally is expected in metal, and already we have seen on MCX copper has reached the previous high and made a new high of 972. Zinc is also closer to 300. So I think this is just the initiation of new rally in metal.
From here on, Ajay, as the rally begins, what is your sense the next couple of years? What kind of gains in sense of percentages, approximately even, that we could be looking at in metals?
See, whenever this type of rally starts, generally to making a bigger projection is slightly dicey, because right now nothing is been supportive for, we can say, for industrial activity. We have seen manufacturing numbers are still from China is below 50, contractions have been there. Concerns in US economy has been there. But I think as funds and capex are started moving towards metal, a base minimum rally of almost 20-22% is expected in all this metal, particularly as we see copper as a indicator of all industry. So I am very much bullish on copper right now. It's around 10,500 somewhat on LME. Maybe another, maybe we can see the level like 11,500 to 12,000 on domestic side. With the rupee is going to be slightly weaker, let's say. So we can see a level like, let's say 1100, 1150 in the next 1 year period. But definitely I would be, if I want to choose the metal from here, so first preference would be copper, then zinc, aluminum, and last would be lead. As we know, the stock level in lead is quite high.
Ajay, coming on silver as well, because as the gold prices have been rising, silver has seen even more volatile higher side. I mean, we are up by 64-65% for silver in this year. From these current levels, we're just a couple of dollars away from that all-time high as well. We've seen $48 already. Are you looking at 50 crossing in this year? Are you still bullish in silver?
I'm very much bullish on silver. But frankly, 1980, 2011 resist me at $50. Maybe we can see a level nearby 50, but correction is expected in bullion, particularly silver. I'm expecting 8 to 10% correction. Then that will be more attractive to buy, targeting $72 in next couple of years. But currently, as an investment, silver from current level, stay cautious. For investment, if you're looking for silver, definitely it's a good bet. But as already we have seen a rally more than 55-58% in last YOY. I think some pause is required for silver from here. Maybe a corrective dip of 8 to 10% would be attractive bet for silver.
Oh, absolutely. That's music to a lot of ears. People who haven't been able to buy gold and silver are absolutely waiting for those kind of dips. But you talked about 10 to 15%, and after a 50% rise, 10 to 15% isn't great. So when you look at the Indian markets right now, Ajay, where would you see a very strong support coming at? Would you say for gold prices, 3,500 is something that we may perhaps not see in our lifetime yet again? Or do you think that level is 3,000? Do you see gold at all going below $3,000 an ounce? Where do you see a very hard stop, strong support coming?
You can see every level in commodity. And generally in commodity, we have seen either percentage drop is very unusual, but time correction is always there. We have seen many commodity that has came under the time correction. So frankly, at gold at 3,900, 3,850 is not a right time to invest. Maybe like in April month, we have seen a 10% correction to the level of 3,150. It is just a benchmark of 8 to 10%. But yes, we can see level like 3,000 or below also. I'm expecting further below from here. But for silver, I'm more bullish because see, it's a structural bull run. Our demand from industrial are continue using. A best barometer is gold silver ratio, which is currently around 82. And long-term average is, let's say, around 70 also. That gives me more boost to buy and hold silver more rather than gold.
Ajay, one word on silver as well. So when you say that you would rather hold silver than gold, what kind, and you've talked about 10 to 15% of a correction onto this one. If I look at the Indian prices, we're trading at around 1,45,000 rupees here. What is the kind of correction? What are going to be the best levels to buy, let's say, in the next couple of years?
When we talk about 8 to 10% correction, definitely it could be nothing much around maybe around, let's say, 15,000, 20,000 maximum. But I think a time correction required for silver. If I am getting a silver around 1,10,000, 1,05,000 would be a great level to buy. But it will take time. But overall target could be $72 in next couple of years. It will take another 2 years to reach that level.
All right, so near-term correction, but longer-term, if you're looking to buy those precious metals for investment purpose, $72 an ounce is what you're saying, Ajay, next couple of years there. So, just if you had to divide your portfolio, how would you put it as in sense of 100% in case of commodities? Is it going to carry more of base metals, less of precious metals, and maybe even lesser when it comes to energy?
Yeah, energy, I don't think we will be.
You want to include that at all?
Yeah, I will be not including right now, as of now, because factors we know we are oversupplied in case of crude oil right now. And coming on the allocation, I would be preferred to be first in base metal like copper and zinc. Then will be silver, definitely for longer than copper. We will be for silver, then other metal. But I think silver, copper, and zinc should be the three metals that should comprise your portfolio from here.
Okay, that's an interesting chat there. Manisha as well as Ajay, thank you so much for joining us. And Manisha, one more guest who's talking is more bullish on silver than gold, right?
Yeah.
So
it really seems to be the trend right now.
And $72 in the next couple of years after
But
the
as
correction.
Ajay said, it's going to give you a nice time to pick it on the lower sides as well. So I think
because of the volatility that you generally see and have been seeing traditionally in silver prices. But interesting there that maybe silver is the new proxy for gold at this point. But thanks, Manisha, for that. We'll take a short break, but let's focus on Nuvama Wealth before we do that. You're looking at Nuvama Wealth.
Yes.
Tell us more, Vinny.
So Nuvama Wealth, mainly why is this stock in focus today? Now they've gotten a nod that's come in from SEBI. This nod is for mutual funds, setting up mutual funds. So that becomes important for them. And they'd spoken about this in Jan as well, that given an indication that this is something that they were looking out for, that they applied to the SEBI. That time also everyone was positive on this one. Now this application has finally been approved and SEBI is also allowing Nuvama to launch SIFs. SIFs are obviously those alternate sort of funds. So it's between a PMS and mutual fund. So that gives a good traction for these funds as well. So big approval coming in for Nuvama Wealth. Obviously some specifics and requirements that are there that need to be fulfilled by Nuvama Wealth from a SEBI side, which they need to do. But as of now, this approval coming in, that is why the stock is managing to hold on to gains of almost 3% in today's trading session.
Hey, all right. So that's the WeWork IPO update, as you can see, just initial at this point. Remember, it's open from 3rd to the 7th. So just about some details flashing on your screen. But you're also looking at Silk. That one is really okay. But before we do that, we're going to take a short break, but we'll be back with more. Stay tuned.
Welcome back. You're watching us here on Halftime Report. Still consolidating for the frontline end of things, but holding around that 24,830 mark for the Nifty. The broader market is doing a lot better. The Midcap index now virtually at the higher end of today's trading range, as is the Nifty Bank, up 175 points, led by some of the PSU bank names as well. But in the last few minutes, a couple of stocks which have spiked. We have HFCL. That's the one that should come up for you. Very close to entering the F&O band. So near that, comes up on your screen. We've also seen some traction on Hindalco. Hindalco is up around 1.5%, nearly 2.5% higher from the lows. And Berger Paints is the other one, which has spiked to the high point of trade. Remember, oil prices are at near 4-month lows, and this is seasonally a strong quarter for all these paint companies. With that, we're completely out of time on this edition of Halftime Report. Stay with us here on CNBC-TV18. Business Lunch takes all the market action forward. Thank you for watching.
Stocks oscillate in a small band with Midcap showing relative strength. Metals and industrials notch gains while energy and auto stocks are some big drags. Global investment firm Abu Dhabi's IHC is investing $1 billion in Sammaan Capital for an over 41% stake. It will also make an open offer for an additional 26% at 139 rupees a share. The move marks a milestone transition for the home financier. Bajaj Auto calls it a rocking festive season. Maruti 2 sees sales top 1 lakh vehicles for the first time ever in Navratri. What's more, the two-wheeler and passenger car makers also point to strong export growth. Oil prices have now declined to a 4-month low as traders expect OPEC and allies to hike output by around 500,000 barrels a day. Rising US crude and gasoline stocks also weigh on sentiments. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. Well, the markets celebrated going into the long weekend on Wednesday itself, and they are currently in snooze mode, as is the Nifty. Now, the Nifty has traded in a very narrow band today of just 100 points, and it's continued to move in that range. We are set for weekly gains this time around. 24,654 is that level which we need to close above for a weekly advance, and we are comfortably above those levels. The Nifty Bank has been the index of the week though, after the move that it saw on Wednesday, the best single day move in 3 months, and it has built on to those gains more or less. It's still hovering around that 55,500 mark, but trading with gains of around 100 points, still sticking to or ensuring that the Nifty remains in that narrow range that it is. But the broader markets are doing fairly okay for themselves. The Midcap index was up 200 points on last check, now up 260 points, so 0.5% higher on the Midcap index. Of course, plenty of movers in the broader markets today, and Sai Silks Kalamandir reacting to its business update, 17% higher now on the stock, is the biggest single day move that the stock has seen since its listing. But the stock that has been in focus all day has been Sammaan Capital, and that is the big story. That is, Abu Dhabi-based international holding company is set to acquire a controlling stake in the company. Now, the deal is valued at over 8,850 crore rupees. Earlier today, we spoke to Gagan Banga, the MD and CEO of Sammaan Capital, for more on this acquisition. Listen into what he had to say.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Sammaan Capital seeing some profit booking after a 25% surge in the last 6 sessions. Now, sources are suggesting that one of India's largest agrochem companies may be in talks with a global beverage and snack major for a long-term supply tie-up. Vivek is here with those exclusive details. Vivek.
Well, that's right. So what we are picking up from our sources is that India's agrochem major UPL is in advanced talks with one of the world's largest both beverage as well as snack maker, PepsiCo. This is for a long-term supply agreement. We understand that PepsiCo is likely to mandate use of UPL agrochem solutions for global contract farming operations, and along with that, the deal may extend to use of company's gel-based technology for water conservation. Now, we understand that PepsiCo as well as UPL are in talks, and this particular partnership is going to be a multi-year partnership. Now, what we understand is that this particular deal is likely to be announced by UPL within its subsidiary, which is called as Superform. This is the company's specialty chemistry subsidiary, and we understand that UPL may be going ahead and supplying one of the key ingredients for Pepsi's key stimulant as far as its own operations are concerned. We've reached out to both UPL as well as PepsiCo. We are awaiting a response from both of them. But currently, what we understand from our sources is that it's going to be a multi-year opportunity across a whole host of solutions that UPL is expected to provide to PepsiCo for its global operations.
Interesting. Exclusive there from Vivek. 2.5% higher is where UPL currently stands at the highest point of the day. But Bajaj Auto, after strong September sales, we spoke to Rakesh Sharma, the executive director of the company, and he said that it has been a rocking 11 days of the festive season. Listen into what he had to say.
It's been a rocking 11 days of festive. And I can tell you that at least I was trying to sort of go back in history. And if I just look at these 11 days and compare them in the past, I think we've never hit this level. So we're hoping that this run continues right to the end of festive. And I think there is a very, very positive sentiment out there. There is the very tangible benefit of disposable income impact because of the cut across the categories in GST. Well, on exports, certainly the idea is to breach the 2 lakh, and that there are a lot of things which are very, very positive. I would say that among the top 30 countries, which account for 80% of our sales, they're doing very well. We are outpacing the industry by at least 50%. We'll hope that we can reach the 2 lakh mark in Q3. Inventory levels are geared up to service this big spike. So, but I guess by end of October, the inventory levels should normalize.
Now, big ticket buys are back in focus this festive season. From TVs to refrigerators, consumer durables are seeing a revival after last year's slowdown, now powered by GST 2.0 and a wave of online and offline offers. Now, according to some reports, urban spending is projected to increase 18% to over 2 lakh crore rupees in the upcoming festive season. Shivani Bajaj brings us this report.
India's festive season isn't just about lights and celebrations. It's also when families make their biggest purchases. From televisions to refrigerators, consumer durables are key barometer of how confident households are feeling about the economy. This year, GST 2.0 and rising online discounts are shaping the market. And the question is, are Indians ready to spend big again? Let's find out. From TVs to washing machines to electronic items, consumer durables account for a sizable chunk of the festive shopping in India. In 2024, growth in durables was approximately 9.5%, well below the double-digit boom retailers have been used to. Inflation and subdued consumer sentiment impacted demand. But 2025 is different. According to sellers, GST 2.0 has lowered rates on several categories, giving consumers a reason to upgrade. Market checks in Delhi NCR suggest that demand is picking up, and with online platforms offering mega sales, offline brick-and-mortar stores are forced to innovate with attractive offers to sweeten the deal.
लास्ट ईयर का जो फेस्टिव सीजन था इतना अच्छा फेस्टिव सीजन रहा नहीं था एज़ कम्पेयर टू मार्केट सिनेरियो. कस्टमर वॉकिंग भी थोड़ी कम थी और उस तरह का जो टर्नओवर हुआ नहीं था. बट इस ईयर की बात करें कंपेयर टू लास्ट ईयर से जो जीएसटी का काफ़ी अच्छा इम्पैक्ट रहा है, जिसकी वजह से क्या नाम है जो प्रीमियम और हाई एंड जो प्रोडक्ट है उसका सेल आउट बढ़ा है. जो मेजर इम्पैक्ट कर रहा है वो है एसी और एलईडी, क्योंकि एलईडी और इसमें जो 10% का जीएसटी जो डाउन हुआ है उसकी वजह से कि अभी मार्केट में कस्टमर भी काफ़ी अच्छा है और सेल आउट भी काफ़ी अच्छा हो रहा है. तो अभी जो करंट डेट की अगर बात करते हैं तो अप्रॉक्स लास्ट ईयर से टिल डेट में एप्पल टू एप्पल कंपेयर करते हैं तो 20% से ज़्यादा का भी जो है टिल टाइम ग्रोथ है.
According to consumer durable chains like Electronics Mart in Noida, the tax cuts have allowed them to reduce prices on several models. That has given retailers breathing space, but is also forcing them to compete harder with online platforms. High levels of inquiries and strong footfall are early signs of strong growth this festive season.
After 2 years, I think there'll be a double-digit growth in televisions, which is a really encouraging signs for TV market. Tier 2 and Tier 3 is growing at a more pace than Tier 1 currently because firstly the pent-up demand and the trend of upgrading the television. Both are more in Tier 2 and Tier 3 cities, and even in rural markets where exchange of CRT TVs to LED TVs is happening, and all the sales are not going towards 32 inches. That is a very good news for the TV industry again.
GST cuts have also changed customer behavior. Retailers say stores in smaller towns are registering stronger growth, which in some cases is as high as 35%. Real test, though, will be to see if the demand continues through Diwali and the wedding season. For India, festive shopping is more than just a celebration. It's an economic signal too. And this year so far, the signal seems positive. If consumer durables keep flying off the shelves, it means households are feeling confident again. And that sentiment could help power the broader economy into 2026. In New Delhi, this is Shivani Bazaz.
Festive season demand on an upswing after GST 2.0. Take a short break. More news and updates on the other side. Stay tuned. Welcome back. Now, India and China have agreed to resume direct flights as ties normalize following 5 years of tensions after the Galwan clashes. Indigo has announced that it will resume the direct flights from the 26th of October. Indigo's announcements come shortly after the Ministry of External Affairs announced that the two countries have reached an agreement for the same. Shifting focus then, Russian President Vladimir Putin will visit India in December for an annual summit with Prime Minister Narendra Modi, with the Kremlin saying that full preparations are underway. President Putin warned the United States against pressuring India to stop buying Russian oil, saying that New Delhi will not allow itself to be humiliated in front of anyone. Putin also lauded Prime Minister Modi, calling him a balanced, wise and a nationally oriented leader. The Russian president last visited New Delhi in 2021, with both nations having a mechanism under which India's Prime Minister and the Russian President hold a summit meeting annually to review the entire gamut of ties. Let's take a short break. More news and updates follow on the other side. Welcome back. Now, come next week, we will have 3 IPOs worth 30,000 crores simultaneously vying for investor attentions, and 2 of them are valued at over 10,000 crore rupees. So it is a good time to put the spotlight back on those IPOs that were valued at over 10,000 crores and how they have fared so far. You start off with the largest IPO of the country so far, Hyundai Motor India, IPO'd last year, the 27,870 crore rupee IPO. The issue price was 1,960 rupees. Now it listed in October of 2024. The retail subscription barely, not even fully subscribed, only 50%. The stock currently trades 30% higher than in comparison to its issue price and is down 12% now from the post-listing high that it had made only recently, considering the rally in auto stocks. LIC was at one point the largest IPO of the country, listed in May of 2022. The 21,000 crore rupee IPO, the issue price of 949 rupees. Here too, the retail subscription was only 2 times the total number of shares on offer, and as of yesterday's close, the stock was 4% below its issue price and 25% below its post-listing high of well over 1,200 rupees. Now, just before LIC, Paytm was the largest IPO back in late 2021. The 18,300 crore rupee IPO, the issue price of 2,150 rupees. The retail portion here was subscribed just 1.5 times the shares on offer, and despite the rally that we have seen from the record lows that Paytm had witnessed, the stock is still 46% below its issue price. It has not seen its issue price since its listing, but from its 52-week high, the stock is down around 11%. Now, the other one, the last major IPO before this rush that we saw was Coal India way back in 2010. That 15,200 crore rupee IPO, a 245 rupees issue price. The retail portion here was subscribed over 2 times, and since then the stock has done fairly okay, 60% higher in comparison to its issue price, but from its post-listing high, the stock is down close to 30%. The other major one we had recently was HDB Financial Services, the currently biggest IPO of 2025 before Tata Capital takes over next week. A 12,500 crore rupee issue, 740 rupee issue price. The retail portion here was subscribed 1.5 times, and it is only after the rally that we saw in the stock on Wednesday is the stock above its issue price and still remains 15% below its post-listing high. Now, Swiggy was the other major IPO, well over 10,000 crore rupees, 11,000 crore rupee issue size, 390 rupee issue price here. The retail portion also saw a subdued response, barely managed to see full subscription, somehow still managing to hold on above its issue price, but from its post-listing high, which is well over 600 rupees, the stock is down almost 33%. General Insurance Corporation was the other major PSU IPO, well over 11,000 crore rupees here as well. Adjusted for its bonus issue, the stock had an issue price of 456. The retail portion here too failed to see full subscription, only 60%. The stock still down 20% from its issue price and 30% from its post-listing high. SBI Cards was a very interesting listing, listed just at the onset of the COVID-19 pandemic. 10,300 crore IPO, a 755 rupee issue price. The retail portion here saw okay subscription of 2.5 times, still 16% higher than its issue price, but 15% below its post-listing high. And the last major IPO of over 10,000 crore was NTPC Green Energy, a 10,000 crore rupee IPO, 108 rupee issue price. Here too, the retail interest was slightly higher, considering we were in a rush of IPOs, 3.6 times as well. But the stock remains below its issue price and significantly below its post-listing high, which is well over 150 rupees. So these were some of the major 10,000 crore rupee plus IPOs that we have seen. We have 2 more lined up next week, be it Tata Capital and LG Electronics. It remains to be seen which way the market sways towards. But with that, we call time on this edition of Business Lunch. From me and the team that put this show together, thank you so much for watching. Midcap Radar on the other side.
Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A Friday afternoon, flat Nifty, but above the 24,800 mark. We have the midcaps which are outperforming right now. A lot of strength coming in from metals and PSU banking names as well. But we'll have to see which way things go. A lot is happening as far as stock-specific news is concerned and globally as well.
That's right. Good afternoon, Sonal. Like you mentioned, benchmark indices is very flat, but a lot of excitement, especially as far as the broader end of the markets are concerned. We have a lot lined up on the show, some important stock-specific action that we will discuss as well. So let's start off with the top headlines. Stocks oscillate in a small band with midcaps showing relative strength. Metals and PSU banks notch gains while realty and healthcare drag.
Sensex sees its biggest intraday gain since IPO after reporting Q2 business update, sees a revenue growth of 28% on a YY basis, and the company is also planning to expand its store presence with 10 new openings in FY26.
V-Mart retail surges nearly 10% after a strong second quarter business update, which reflects 11% sequential same-store sales growth and a 22% growth in revenues.
India's largest biofuel producer, TrueAlt Bioenergy, sees a steady debut, listing with gains of about 10% after the issue was oversubscribed nearly 72 times. Management tells CNBC-TV18 that they have potential to serve 6 to 7% of country's biofuel demand.
M&M Financial in focus after reporting its Q2 business update. Company sees seasonal uptick in its Stage 3 assets, also reports soft growth in disbursements versus last year.
Okay, those are the top stocks and headlines that we are tracking for you. As you pointed out earlier, markets absolutely flat. It's a 10-point cut. Actually, even that is seeing some recovery from the lows. Markets briefly, the Nifty briefly saw that green tick, and that was sold on into as well. Metal names doing well. PSU banking index is up 1%. There's a lot of strength in the CPSE index as well, 0.6% higher there. The mid caps and small caps are also bucking the trend. But again, there has been some profit booking in some of these major names from the highs of the day. But of course, mid-caps continue to take the spotlight, and that is something that we'll be speaking about as well. Our segment mid-cap movers, we have Ria to take us through the mid-caps that are moving around in trade. Ria.
Well, yes, Sonal, starting off with the gainers first, the PSU Bank Index has been in focus, up over 1% today, being the second biggest sectoral gainer as well. The biggest gainers include Indian Bank, Canara Bank, as well as Maharashtra Bank. Apart from this, a lot of stocks have been in focus on the back of their Q2 updates. V-Mart going up by over 8% after seeing strong revenue growth of 22%. Sai Silk going up by 14% in its biggest move since its listing. The Q2 revenue growth has been at 28% for this. Other big movers include Aegis Logistics up around 12%, EIH as well as GE Shipping going up by around 7%. On the flip side, looking at the losers, media stocks are down today, index going down by over 1.3%. Biggest sectoral, it is also the biggest sectoral loser. The biggest losers include Tips Music, Z Entertainment as well as Sun TV, which is down around 5%, cooling off after the big move that it saw over the past 1 month. Coal India as well down around 2%. September production has gone down by around 3.9% on a year-on-year basis for this one. Tata investment has also gone down by around 3.5%, cooling off over after running up by around 50% over the last 1 month.
Well, thank you so much, Ria, for taking us through all of the action as far as the broader end of the markets are concerned. Largely, advanced declination remains at parity, but it's a good time to welcome Hemen Kapadia from DR Chokshi FinServ for a quick technical check on the market. Good afternoon. Thank you so much for joining us, Hemen. Well, what do you make of the markets at current levels? Nifty flat as flat can be.
Yes, very good afternoon to you, Vivek. Thank you for having me on the show. It's always a pleasure. Like you said, it's flat as it can be. Absolutely nothing happening, frankly speaking, Vivek. One gets the feeling that the market is either waiting for a trigger or maybe the quarter numbers to come in. But yes, we can't expect anything big till we take out 25,212. I know that is far away. Before that, we have a resistance at 25,002 also. As of now, 24,600 has held decently. Till that doesn't break, the positives remain. If we close below that, I think the problem, the VIX is 10.23, doesn't seem to suggest anything spectacular happening. Frankly speaking, yesterday holiday, we should have had a holiday, Vivek. So we had a long weekend, but that's about it.
What about individual names, Hemen?
Okay. Firstly, excuse me. Zonal, firstly, a buy call on Hero MotoCorp. we have been in a short, medium, and what is possibly even a longer term uptrend is in place. Higher tops, higher bottoms, stock issuing a lot of strength. The auto sector itself had given a breakout around 14th of September. So two-wheelers, four-wheelers. I think something like a Bajaj Auto is lagging a bit, but everything else, including Maruti, has done well. So buy on Hero Moto at around 5560, stop loss of 5460, target of 5760. Secondly, there's a slightly risky one in the sense indicators have turned positive, but I'm anticipating a turnaround. A buy call on Angel 1, deeply oversold. There's oscillators have given a crossover buy on the daily chart after positive divergence. So I believe a bounce is just around the corner. So one can buy Angel 1 at 2180, stop loss of 2130, and a target of 2280.
Thank you so much, Heyman, for joining us, giving us a view on the markets, and two stock-specific calls as well, Angel One as well as Hero MotoCorp on your radar. Well, we'll now slip into a short break. We'll get you on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Continues to be the same level for the Nifty. We are at the 24,825 mark. But a lot of movers in the broader markets. Aegis Logistics is one of them. The stock is up 17% as we speak. We have been talking about a lot of these quarterly updates that are coming by. And we start earnings season from the next week itself. 9th of October, we have Tata Consultancy Services. So that will set the tone for Q3 earnings season as well. But before that, we are getting these quarterly updates that I have been talking about. V-Mart is one of them. Manglam is joining in to tell us how did it look this time around. Manglam.
Well, it's a good performance that is coming from V-Mart. Now, there are a couple of reasons why a lot of these retailers are doing a lot better this time around than what the street expected. It's because, remember, same time last year, we had Durga Puja in the third quarter. This time around, the pre-buying of Durga Puja started in the second quarter itself, and that's playing out. And that reflects in the 22% sales growth that the company has reported. Compare it quarter on quarter. Actually, what has happened is in Q1, you did not have Eid, and the Q1 last year you had Eid. So as a result of which, in Q1 the growth was just about 1% on a same-store sales growth basis. But this time around, because of Durga Puja coming in this quarter as against it not being in the previous quarter, same-store sales growth is up 11% as well. So all these factors working really well. And typically for retail companies, when the growth is led by same-store sales, it is margin accretive as well. They've opened 25 new stores during this quarter, added about 40 stores in the first half of this year, which is much ahead of their own target of 60-65 stores as well. With that, the outlook on the third quarter is fairly strong as well, where the company did, target 20% growth in this festive season. Add to that the incremental benefit coming in from the GST lower rates on that. So they saw about 5 to 7% incremental growth as per what they had told us here on CNBC-TV18. And they target about 60-65 stores being added in this year. The first half, they've done 40, so they're obviously pretty much on track, if not ahead of that target as well. Street likes all of this, and the stock fairly well bid in trade today, up 17%.
Absolutely right, Mangalam. 17% higher as far as V-Mart retail is concerned. A very strong update coming as far as the quarter gone by. But remember, a whole host of banks as well as NBFCs have released their Q2 updates. Gaurav joins in with the details.
Well, let's talk about some of the PSU banks. First is Indian Bank. If you look at the quarterly updates, we saw a healthy number. 12% growth is what we saw in deposits and 12.9% is what we saw in terms of advances. Now, if you look at the guidance that was given by the management, they had guided up for 8 to 10% growth in terms of deposits and 10 to 12% in terms of advances. So definitely, they are beating the guidance of their own. At the same time, if you look at advances, that was specifically led by the retail, agri and MSME segment that increased almost by 16% on a year-on-year basis. On the flip side, if you look at Union Bank, now the bank actually came up with weak set of numbers in terms of the quarterly updates. If you look at the loan book growth, that came in at just 5.3%. Remember, this is the 5th consecutive quarter where the bank is reporting single-digit loan book growth. In terms of deposit, that grew only by 1.9% on a year-on-year basis. Now, this was the 7th consecutive quarter where the bank reported single-digit deposit growth. And if we compare all these numbers, CD ratio now that comes to around 76%, which was earlier was at 73% just a year ago. So now that is also another concern that if the deposit growth does not pick up, that will also be a constraint in terms of advances growth. When we look at the advances growth as well, it was specifically led by retail that increased by 24%, but the RAM segment, which is retail, agri and MSME, that grew just by 9.3%. Another area of concern, and the reason being that bank earlier said that the growth can be sustained in double digits in RAM segment, but it failed to do so, at least in second quarter. So definitely, we will be watching out on how the commentary is going to be. But all in all, in terms of numbers, weak set of number from Union Bank for this quarter so far.
Okay, all right. Q2 banking updates, they're coming in quick and fast. We'll keep analyzing those for you as well. But Sensex is the other stock which is on our radar. It is also buzzing on the back of business update. Winnie is joining us to tell us more. Winnie.
Hi, afternoon. Yes, so Sensex also gave its Q2 update, FY26, strong update that's coming from the company. Now, in terms of revenue, 28% growth on a year-on-year basis. Revenues have come in at 444 crores in the update for the company. They've also opened up 5 stores. Apart from that, even Q1, when you look at it, 34%, I beg your pardon, H1 is also a 34% growth overall. 823 crores is the revenue for H1 FY26. And the company has given an outlook that they plan to add 10 more new stores in this year as well. So they've already added 10 more new store expansion plans is what the company has. And they've been managing to see this strong growth in the last couple of quarters. So will be interesting to see, given that the stock has seen such a sharp spike up today. It's the biggest single intraday gain that the stock has seen since its listing. It was up almost 14% intraday today.
Single biggest gain seen since listing. That's I sell for you at the upper circuit. Thank you so much, Winnie, for joining us and giving us those details. Well, we'll now slip into a short break. We'll get him on the markets and stock-specific action on the other side. Stay tuned. Welcome back to Midcap Radar. Well, it's now time for a CNBC-TV18 exclusive. Sources tell CNBC-TV18 that life insurance companies have cut commission on first premium as well as on renewals. Yash joins in with all the details.
Well, just a couple of days ago, we had reported that general and health insurance companies had cut, the commissions that they pay on sale of insurance policies to distributors. That cut was as much as 18%. It was a large cut. And according to our sources, a similar cut has come through as far as from the end of life insurance companies is concerned. What we've been given to understand is that the life insurance companies, all of them, have sent an intimation letter to various distributors like web aggregators, banks, individual agents when it comes to cut in commissions. The quantum is as large as what the general and health insurance companies did, which means of about 18% cut when it comes to commissions to distributors as well as rewards to distributors. As far as the distributors are concerned, these include of course web aggregators like Policy Bazaar, individual agents, banks as well as brokers. What we've been given to understand is that this cut of 18% in commission and rewards would apply to all products, that is term life insurance policies, ULIPs, savings policies as well as annuities, and it would apply on both sides of premium, that is the first year premium, which is the new policies, as well as renewal premium. As far as effectiveness of this 18% cut in commission to distributors is concerned, that would be October 1st, and as I said, it would include all kinds of distributors and it's uniform, which means 18% cut in commissions and rewards for every distributor with no changes between two distributors. As far as the impact itself is concerned, when the GST changes were announced, analysts were anticipating, and the companies also had come out and explain the kind of negative impact that they would see on their EV. These are life insurance companies. But now, with the pass-through of this additional cost, analysts suggest that entire negative impact would move out and it would be a neutral event for life insurance companies, which means there wouldn't be any negative impact on their books. But at the same time, there would be a large impact that could come on distributors. One company listed here is PB Fintech, and we've been able to speak to a few analysts to understand the impact. 15 to 18% negative impact as far as revenue for PB Fintech is concerned, 25 to 30% impact on the EBITDA, and 30 to 35% impact on the EPS of PB Fintech. This is what analysts are expecting. So a large negative impact as far as financials for PB Fintech because of these changes are concerned.
Okay, all right. That explains the financial impact on every name. Thank you so much, Yash, for bringing us all those details, the impact on the back of commission cuts. By the way, the Midcap index has seen some recovery. It is up around 0.4%. We do have a lot of stocks which are buzzing in trade on the upside. JK Paper, for instance, is up around 10%. But there are some losers as well. So the likes of JK Synthetics, there's Ola Electric, which is down 2%. We have stocks like Vinati Organics, which is lower. Vinati Organics is down 3%. Kaplan Point is down around 3%. Soba is also seeing cuts of around 2.5%. But we do have the likes of Praj Industries, which are doing well, 7% higher on that one. Borosil Renewables is the other one, 6% higher. Prince Pipes, Nalco, Tanla Platforms, all these stocks are higher in trade. So the advance decline ratio, that for now is in favor of the advances. The ratio being 1.6:1 on the NSE and 1.4:1 on the BSE as we speak.
Well, that's right. Well, a few stocks on our radar as well. Have a look at names like Chennai Petro as well as MRPL. A few of these stocks are near the day's highest point. Some traction seen even in names like Oil India. From the banking pack, have a look at Bandhan Bank. That particular stock in the last half hour has surged to the day's highest point. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Hello, good afternoon, and welcome to this edition of Your Stocks on CNBC-TV18, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, a muted day is what we're seeing coming in for the markets today, right? It's continuing, flip-flopping between the red and the green, but not much of a move from the 24,800 level. Around that mark is what it's continuing to trade. But what's doing well today is look at the broader end of the market. You can see that's managing to hold on to good gains as well. So broader end of the market is doing a better job today in terms of moving the markets upward versus the benchmark indices. The broader end of the market, 0.4% of the gain that we're seeing coming in for the Nifty Midcap, Nifty Small Cap. That's also managing to hold on to gains of almost 0.2%. Nifty Bank, let's pull that up as well, because Nifty Bank is holding on to gains of almost 2/10 to 3/10%. Now, when you look at it in terms of a sector that's doing well today, that's metals. Metals is the one that's not losing its sheen today, up more than 1.9%. Around that mark is what metals, Nifty Metal is what I'm talking about. That's managing to hold on to very strong gains. On the flip side, real estate, media, not managing to hold on to gains. So keep an eye out on that as well. But that's what the market roundup is looking like. We have a lot of individual moves that are coming in the market as well, either on the back of Q2 updates or some news flow coming in around that. But on that, overall benchmark indices very flat in trade. But let's bring on board Vaishali Parekh also, who's joining in with us right now, who's a Vice President Technical Research at Prabhudas Leeladhar. Vaishali, afternoon. Before we get started with those queries, what's your thoughts in terms of the markets and how important now is 24,800? We did see a bit of a green coming in the last trading session, but again, we're back, very muted day today. What should we keep an eye out on now?
Hi, very good afternoon, Vinny. So yes, market, at least what we saw from Wednesday itself, there was a slight better move coming in, and today it's quite a sideways move. But on a broad base, we would say that 24,700 acts as a good support now, and market Nifty needs to cross 25,100 levels to see a clarity for further uptrend. Till then, we would really maintain a sideways move. But now also what we are seeing that Bank Nifty is picking up much better as compared to Nifty. So that's also in the green. And I think the way Bank Nifty is moving on, I think we are ready for a target of 56,000 to 56,100. And 55,200 would act as a near-term support. So furthermore, and as you rightly said, of course, metal index has been doing very well. So it would be more of a stock-specific movement that we would look at.
Okay, stock-specific movement that you would look at. Let's get started with those stock-related queries. We have Gaurang, who's joining in with us now as well to help answer all those queries as well. He's a Senior Vice President at Geojit Financial Services. Gaurang, thanks so much, as always, for joining us as well. Let's get started with the queries. Vaishali and Gaurang, this is a company that's just recently listed. I know not everyone is covering it. Vaishali, but any thoughts that you have on Urban Company? We have Samik, who's writing to us from Mumbai, because he's holding 4,000 shares of Urban Company, 193 rupees per share. Short to medium term view. I know very recent listing, Vaishali, no much detail in terms of charts, but your thoughts?
So, well, of course, I have very limited data for the technical perspective, but I think the way it is moving and the way we are seeing the business coming along, I think they should do well in times to come. So I would say 160 is a good support, and it's hovering around at these levels. So in times to come, very likely this stock can cross 200. So in my opinion, this is a buy with a support of 200 level. Support of 160.
Okay, support of 160 is what we could watch out for. Gaurang, any thoughts on these new age companies that are coming in? Any view there that you have?
Thank you, Vinny, for having me on the show. Good afternoon to you, to Vaishali, and to all the viewers of CNBC-TV18. Before I give the outlook, a small disclosure that all recommendations that I'm going to share this afternoon on this show are a part of our research team recommendations. Our company, Geojit, or we don't have any personal investment, no financial interest, no conflict of interest either. But we give recommendations to our clients on similar lines. They might have their investment interest. Now, on Urban Company, look, while the IPO came and the commentary that was given and the verbatim that was shared by the management in terms of the growth, it looks to be positive. But again, no specific coverage. But my understanding is, while the quick commerce sector looks quite promising, we are positive on it. We have positive coverage on likes of Paytm, Policy Bazaar, and Eternal, that is Zomato. But for Urban Company, my understanding is that there's going to be a lot of competition from the unorganized sector, which is going to pose a challenge. So, if the viewer is open to making a switch, NBFC sector, Vinny, looks quite promising, especially after the announcement made by the Honorable RBI Governor on the credit policy day. So we can possibly look at something like L&T Finance from a long-term point of view. On urban company, we don't have a specific coverage.
Okay. Thanks so much for that, Gaurang. Obviously, it merits that given the field that urban company is in, it does have a lot of unorganized players. So, yeah, that's something that everyone has to watch out for as well. But let's move on to the next query. We have Vivek Mehta, who's writing to us from Mumbai. He's holding 200 shares of Raymond. This is at a price of 1,258 rupees per share. And he's holding 100 shares of Trent. This is at a price of 6,830 rupees per share. Wants to know the future prospects of his investment. Gaurang, your view on both these stocks, Raymond as well as Trent?
So while the GST has done what it has to do in terms of the affordable range, Vinny, but purely on the fundamental, our research team remains positive on both Trent as well as Raymond's. Trent, as we all know, was one of the outperformers in terms of the kind of returns that it generated for the last maybe about 1.5, 2 year kind of time frame. And for Raymond also, I think the kind of linen offerings that they have has actually caught the eyes of the customers from a long-term point of view. We believe that earnings should look good. And if you're a long-term investor, I'll give a hold stroke buy for Raymond as well as Trent.
Okay, Raymond as well as Trent. That's the view coming in there from Gaurang. Vaishali, your view, Raymond and Trent on the charts.
Okay, so Raymond first. Looking at the longer term time period, I think Raymond is quite strong. And for a short-term basis, when I'm looking at the daily chart, it's currently at a make or break level. So for now, 560 acts as a very good support. So to those who want to enter fresh, it makes a very favorable risk-reward ratio, because once the trend sets in, it's very likely this can go towards 650 and perhaps higher. So I think it's at a support level. So it's a hold and buy at these levels. And the other stock that you mentioned is, sorry, Vinny?
Other one is Trent.
Yes, so Trent is definitely in a downward trend, but I would say it's pretty much close to its support level. So 4,500 is a very good support level, and I think that should be a good buying strategy at these levels. So either you accumulate from here on or wait for a little bit of a dip to go strong on a buy.
Okay. That's the word coming in there on Raymond and Trent on the technical front as well. Next query for today is coming from Jay Rathod, who's writing to us from Indore. He's holding 100 shares of IEX. This is at an average price of 226 rupees per share. How should he be looking at IEX now? Gaurang, your view?
The problem with IEX is that policy and regulation changes when he actually plays a lot of spoil sport for this particular company. And we know the history from what levels it was at and what levels it is trading right now. Though we don't have any specific coverage on IEX, my understanding is shifting on to maybe a Indian capital market related sector and stocks would definitely augur well. If I have to name one stock from the Indian capital market sector on which our research team is positive, that is Computer Age Management Services, CAMS. This looks very promising.
Okay, and your view on IEX, Vaishali, yes, like Gaurang rightly pointed, there are so many changes that come in terms of policies and regulations. Suddenly you see those moves coming in, either it's running away or then either it's falling in trade. What should you watch out for on the technical front then?
I totally agree. Actually, technically, it looks very attractive, but I would really not recommend this because it has not really performed even in the past, and it's only broken, the strategies. So if you were to compare, then I think MCX is a better pick. MCX is in a very strong uptrend. Right now, it's at a good support level also. So I would suggest a switch from IEX to MCX.
Okay, suggest a switch from IEX to MCX. Okay, on that note, we're going to actually slip into a very short break. Gaurang, Vaishali, do stay on with us. And viewers also do stay on with us because we're going to come back and solve all those other stock-related queries that you all have stated. Welcome back to your stocks on CNBC-TV18. We still have with us Gaurang Shah of GHG Financial Services as well as Vaishali Parekh of Prabhudas Leeladhar to answer all the stock-related queries. Let's move on to the next query for today. We have Padma, who's writing to us from Andhra Pradesh. She's holding 55 shares of Go-Digit General Insurance. This is at a price of 272 rupees per share. Wants to know whether what is the outlook for Go-Digit and what should they be watching out for now. Gaurang?
So, Vinny, as a disclosure, when the IPO was there, we had come out with the subscriber recommendations to Go-Digit IPO from a long-term point of view. And if she is a long-term investor, if I have to keep that IPO note as a base of my recommendation, continue to hold on. There are short to medium-term challenges for insurance-related plays, but I think long-term, there is a lot of growth opportunity. So if you're a long-term investor, based on the IPO note, continue to hold it.
Okay, continue to hold. That's the word coming in there on the fundamentals. Technicals, Go-Digit. Vaishali, what's your view?
Well, so it has got an established trend, and I think right now it's just in a minor consolidation phase. So as long as 320 levels are held on, I think the view stays positive. And I would say for a trading target, positional trade, I think this stock can go towards 400 plus. So 320 to 400 would be the range that I would look at. So it's a positive view for now.
Okay, it's a positive view for now. That's the word coming in there. Let's move on to the next query. We have Arunachalam, who's Balaji, who's writing to us from Tamil Nadu. He's holding 12,000 shares of Indian Overseas Bank. This is at a price of 40 rupees per share. He wants to know the expected target for the next 6 months. Gaurang, before we get the target from Vaishali, your thoughts on the fundamentals for IOB. Would you look at IOB or do you prefer any other banks here?
Honestly, Vinny, I think there are better public sector banks if you really want to get invested from a long-term point of view. Now, I don't know with what approach this gentleman has got invested to the extent of 12,000 shares. I hope it is from a long-term point of view. If not, I think Vaishali would be an appropriate person to answer the query. But we remain positive on the entire BSFI segment, Vinny, especially over the last month or so. If you actually go to see the performance of public sector bank and public sector bank index, that's been one of the top performer. Our understanding is that not only for the second quarter, which the earnings are likely to be a curtain raiser next week, but even for coming quarters, public sector banks are going to report good set of numbers. In that perspective, we remain, of course, on Indian Overseas Bank, we don't have any specific coverage, but we would prefer stocks like SBI, Indian Bank, or maybe a Bank of Baroda. And in fact, SBI and Indian Bank have made their lifetime high, if I'm not mistaken, in the recent time.
Okay, that's a view coming in there on IOB, but other PSU banks as well that Gaurang has highlighted. Vaishali, levels, what should they keep an eye out on? Because they want to hold only seems like for the next 6 months, they're asking for a target price. So IOB, what should they do? They bought at 40 rupees.
If I would say keep a stop loss of 37, that's the strong support band because stock is showing a rise, higher bottom formation. And if 6 months is the horizon, then wait for 42 to be crossed. This stock really needs to sustain above 42 levels to look for the next target of around 48 to 50. That is how I would look at this stock for now. So keeping 6 months in horizon, I think 50, 52 to the as a range for profit booking. But if it sustains above that, then perhaps even 58, 60. So gradually you can have a relook once the levels are met with.
Okay. Can relook once the levels are met with. Keep an eye out on that stop loss also that Vaishali has mentioned. Next query for today is coming from Ramakrishnan, who's writing to us from Bangalore. He's holding 800 shares of Himadri Specialty Chemicals, bought at 656, making a loss on this one, a considerable loss. Now he's asking whether to book the loss or stay invested. Gaurang, I know you do not cover this stock, but overall for the sector, what's your view? Are there any better bets that they maybe can look at?
There are lots, Vidhi, actually, if you go to see. And I think there was a lot of overcrowding as far as Himadri Chemicals is concerned. A lot of retail investors got, whether from a trading perspective or an investment perspective, and the underperformance from the stock. So on the sector, our research team remains extremely positive, and our understanding is that the specialty stroke agrochemical sector should look much more positive, not only from the domestic point of view, but also from the export market point of view. So if I have to name one particular stock on which we are positive, then that's United Phosphorus Limited, which is now known as UPL.
Okay. UPL is what you're positive on, and you've given the view coming in on the sector as well. Thanks so much for that, Gaurang. But Vaishali, coming to you, what should the viewer do making such a significant loss, right? Any hopes of Himadri Speciality actually coming back up to the level that they bought it? How long would they need to hold, or should they just book out the losses and maybe look at some other names? Gaurang has also suggested few in the sector as well.
Right. So actually, there's really nothing happening in this stock. But if he has already held this for so long, you may as well hold. Why book a loss? Keep a stop loss of 430 if we are very close to the support levels. Because if this stock shows some revival, signs of revival, then maybe 500 can be retested and perhaps higher. So 520, 540 would be a level to watch to exit the stock and get into better stocks. In fact, in the category, I think there are so many other stocks. As Gaurang mentioned, UPL. There is another one, Anupam Rasayan. I think that's also a chemical stock. These are all looking good as compared to this stock. So I think it should be a shift at higher levels.
Shift at a bit of a higher levels. That's a word coming in from Vaishali as well. But next query for today then, we have Saindranath, I beg your pardon, sorry, who's writing to us from Hyderabad. He's holding 60 shares of CAMS. This is at a price of 3,987 rupees, and this is for a medium term. He wants to know whether to sell at current levels or he can also look to buy maybe Leela Hotels for the long term. What's your view on this one, Gaurang?
Vinny is holding 60 shares, and I don't think you need to have any kind of, disappointment in terms of long-term investment. So, like I mentioned, in earlier query that we are positive on Indian capital markets, and if you are of a view that Indian capital markets are going to do well over the next 3 years, 5 years, or maybe more, then I think all relevant, strong, fundamental companies are also going to deliver quite well. We are positive on CAMS from a long-term point of view. Since he's holding 60 shares, I think at current level, he can, if he's got investable amount, my advice would be to add to it, bring down your cost of acquisition, and switch your 6 months time horizon to maybe, a longer term time horizon, like I mentioned, and hold on to it.
And can they look to buy Leela Hotels? That's also a query that they have.
Well, if you want to make a fresh investment on CAMS at current levels, I would definitely recommend that.
Okay. And Vaishali, your view for CAMS and Leela, is it a good entry point?
Technically for CAMS, definitely it's at a very good level. I mean, we've seen a cluster of support coming at 3,600. Current market price is around 3,800. So do go for this stock, and right through gradually you will get very good returns. And as far as Leela Hotel is concerned, I think there are many other options. I would also look at ITC. That's also very fairly placed. So I would go for that.
Okay, that's a view coming in there for CAMS and Leela. Gaurang as well as Vaishali, thank you so much for joining us and helping our viewers solve all their stock-related queries. And hope you all have a great weekend. Viewers, thank you so much for tuning in as well. Have a great weekend as well. But last hour of trade is still left, so don't go anywhere because you're closing well. Up next.
beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng, though, is a marginal underperformer.
Nifty, from where we left off on Friday, faces immediate resistance at this 50 and 61.8% retracement of the previous falls.
In terms of their September sales, it was largely in line with what the street was working with.
I hope to be able to build a very, very credible liability franchise.
24,820 is where the Nifty is at.
I think probably in the near term, positivity can continue.
I think there is a very, very positive sentiment out there.
The business now is in a place where the business is generating healthy operating cash flow.
We are building close to about 425 to 450 crores of corpus. That will go straight as working capital requirements.
40 points lower on the Nifty. Of course, it has come up from the highs as well.
This cut in commission, which is off about 18%, has come both on first-year premium as well as renewal of policies.
We understand that PepsiCo as well as UPL are in talks.
Next week, we will have 3 IPOs worth 30,000 crores.
Flat Nifty, but above the 24,800 mark.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema, with me are Surbhi and Mangalam. Hi guys, so far a bit of a mixed day. The Nifty, after opening below 24,800, has managed to climb above it and hover around those levels, but mid-cap, small caps showing some more resilience.
Yep, it's actually been a good day irrespective of, what the frontline index would have you believe. And the reason for that is, one, we came back after a holiday and we're going into a holiday once again. So to that extent, not much was expected. But if you look at the broader markets, and what led the markets higher on Wednesday was the Nifty Bank, which continues to do well in today's session as well, holding above that 55,500 mark, virtually at the higher end of trade for the mid-cap end of things as well. We have nearly 80% more stocks in the green than the number of stocks which are in the red. So 1,800 stocks in the green, about 1,000 stocks in the red. The only stocks which are not doing too well, we have the IT pack. That obviously will be in focus next week when the results come by. Reema will tell us a little more about that. But some of these consumption names, they're doing extremely well. So pull up something like an urban company that spiked a recent listing. We've seen some traction come by on a lot of these two-wheeler sales numbers that have happened. So, Hero MotoCorp has actually surged higher. And we are also seeing traction in names like United Spirits, Page Industries, and a lot of these PVR Inoxes kind of the world as well, because it's that time of the year, second half, where nearly 60-65% of the consumption of the year happens. And the street's feeling good about that pocket at least.
Yeah, so this week was important because on Wednesday, we snapped that long stretch of a losing streak, 8 days. And today, we've managed to hold on to levels and build when it comes to the mid and the small caps. And plus, we got the RBI, the policy tailwind midweek. But next week, there are 2 big triggers. One is going to be the earnings season. It starts with TCS on Thursday, that's 9th of October. And secondly, the 3 big IPOs, 2 of them actually. You've got a Tata Cap, which is looking to raise about 15,000 crore rupees. LG, that's about 11 to 12,000 crore rupees. And then you've got WeWork, smaller, and offer for sale of 3,000. But on the whole, 30,000 crore is going to be the IPO pipeline for just next week. So it's going to test the market's appetite and its liquidity. So these will be the 2 important cues for next week. But let's talk about Friday, 1 hour to go to wrap up the day and the week. And Surbhi's also here with us. Hi, Surbhi.
Yeah, absolutely. And, it's all about individual stocks, right? I think that the market's kind of made its peace with the fact that stop looking at the index. Let's look at individual stocks and see where money can be made. And today, so many examples. There's some defense names that are flying around. And then these are smaller defense names like an Astra Micro. There's Data Patterns up 7-8% as well. So many examples coming out there. MRPL, for instance, on my screen is suddenly surging 6-7% higher. So I think for the time being, traders have moved on trying to wait for the giants to move. It's about individual stocks where you can get a good trade, make some money, and that's what's happening. But I think we can get to Mitesh now.
Okay, before that, let's quickly get to what we have for you on our show today. So we'll get with the markets first. So Mitesh will join us in just a bit.
But on the show today, it's been a choppy trade, though the Nifty has persistently stayed above the 24,800 mark. The broader market is the outlier. Metals, PSU banks clocking in gains. Autos, though, are on the back foot. We've got a couple of counters in focus today. So V-Mart has skyrocketed following a robust second quarter update. Similar story for the likes of V2 Retail, Sai Silk. A detailed fine print on the numbers coming up. Defense stocks continue to fire away, and Goldman Sachs turns bullish on India's aero and defense sector. What's the rationale? And we'll also understand from sources the life insurers are all set to cut commissions on the first premiums and renewals. Not just that, commissions to distributors may also be cut by 18%. And that is a big CNBC TV18 exclusive.
Okay, now let's get to the technical trading ideas. And we have Nagraj Shetty with us this Friday afternoon with some thoughts and ideas. Nagraj, hi. Good to have you in. So the index is not doing anything. It's all about stocks. But anyway, even on the Nifty and the Bank Nifty, give us your advice. The Bank Nifty was showing such promise on Wednesday. Today, once again, looking a little lackluster.
Hi, good afternoon, Surbhi. Yes, market rightly said showed some strength at the lower levels. I think after eight sessions of decline at 24,600 level, market seems to have formed a short-term bottom reversal. Currently holding around somewhere around 24,850, 860 levels. I'm not expecting a bigger worry to that around that levels, and we could see some upside breakouts from here onwards. I think 25,200 is going to be the next target for the Nifty, at least in the next by next week probably. And the Bank Nifty as well. Bank Nifty was underperforming previously, and recently showed some promising up moves from the lower levels, showing higher tops and bottoms, looking positive. I think currently trading around 555, 520. I think 56,500, 56, 57,000 is going to be the next target for the banking sector in the next at least 1 week.
Got that. In fact, the PSU banks in particular are doing exceedingly well. For the day, up 0.8%, and for the week, it's a gain of 4.1%. Nagraj, what about stocks? What do you have?
I have two stocks from alongside. First one is Nalco. Chartically, Nalco has been in a consolidation phase, larger consolidation phase, recently attempting to move above the 200 EMA hurdle, currently placed at the higher levels, now trading around 905 levels. One can look to buy at this point of time. 950 is going to be the immediate target. One can place a stop loss of 870. Second one is MMTC from a metal front. MMTC, after a decline, has bounced back sharply in today's session, looking positive on the charts, currently trading around 69.55. The upside target would be around 75 and can place a stop loss at 66 at least for 1 to 2 weeks.
Thank you very much for that. Let's get to the... let's sort of begin the earnings season then, right, with the retail stocks. And we've got a few quarterly updates. How did they look?
Yeah, I often say that before the results season, it's the quarterly update season, and that's exactly what is currently underway. We have numbers coming in from V-Mart Retail, V2 Retail, as well as Sai Silk. And the beauty about India, Rima, is that, you know, all these companies report their numbers on a calendar quarter basis. And all the festivals that are there, they are obviously on the religious calendars that each of the festivals follow. So as a result of which, there is a lot of shift that takes place. The first quarter for all these retail companies was weak because Eid last year was in the first quarter and Eid this year was in the fourth quarter. Whereas now what has happened is Puja last year was in the third quarter, Puja this year was in the second quarter. So all of these companies are benefiting from that. So look at V-Mart Retail, good second quarter update coming in, 22% sales growth at 807 crores, same-store sales growth at 11% as well. So that's a positive. Remember, when typically same-store sales grows in double digits, that's a big positive, largely because that implies operating leverage and margin expansion as well. And this compares with the 1% number that they had reported in the first quarter. They've opened 25 new stores, total stores this year so far at almost 40. The management has said that this festive season they would see 20% plus growth, and we've seen signs of that in the second quarter itself. V2 Retail too, 86% revenue growth. Remember, a large part of their revenue actually does come from the eastern part of the country, which does celebrate Puja a lot more with with a lot more fervor. So they see a bigger gain out here. And their same-store sales growth is up 20.3%, 23.4% rather. If you normalize it, adjusted for Durga Puja, it's still 10%, so not particularly bad. In fact, they had joined us just last week. They said that they're targeting 50% revenue growth this year with 8 to 10% SSSG. And finally, we have Sai Silk. That's growing well as well, 28% revenue growth. They opened about 5 stores this quarter. H1 itself has seen a good performance, 34% revenue growth coming in for them. And they too are planning to expand their store presence with 10 new openings in FY26. So Second quarter, positively impacted by Durga Puja shifting, as the first quarter was negatively impacted by Eid shifting. Now, the question is, how do they grow in the second half of this year with Diwali and Dussehra, both of them being in the same month? And add to add to all of this, they have the benefit of a lower GST rate as well. So the street is fairly bullish on that. So these three are the companies which have only reported their quarterly updates. Look at something like a CRM Silk Mills. That stock is up 6% as well. And we are seeing some traction in a lot of these consumption names just as we move towards the festive season. So these are the stocks which have reported their numbers. Look at CRM Silk. That is up around 6.5% as well.
The Sai Silk, I was just checking, there's a marked improvement in the growth rates in H1.
Yeah.
Q2, 28%. Q1, you said, was over 40%. Q4, that's last year, 10.9%. The quarter before, 17%. The quarter prior, 6%. Before that, Q1 of last year was minus 12%. Before that, 11%. So, I mean, just still H1, it looked like the growth was fairly muted and tepid. And now there's been a material improvement.
Absolutely. It's also the move from unorganized to organized happening. And they recently did an IPO, if I remember correctly, about 2 years, 2.5 years ago. So these funds and all of that really bolsters the growth in all of these companies. So this stock is well up and above in today's trading session as well. In fact, what we'll do is we'll pose this question to Dharmesh Kant, who's the head of research at Chola Securities, joining in. Dharmesh, it's that time of the year when talk moves away from capex, which we speak about usually during the budget, to consumption as we move towards Diwali and Christmas and all the festivities and towards the end of the year as well. Do you think portfolios shift like that as well?
Yeah, good afternoon. See, I don't think you should be running too much into this kind of numbers, because end of the day, it's 15 to 20 or 22% kind of growth numbers with, single teens or near teens kind of a margin update. So my sense is, and look at the valuation multiples where they are trading at. V-Mart retail is more than 130, 129 on a trailing basis. P multiple it is trading. So, as long as the going is good, price hikes, the stock price is rising, it looks good. But end of the day, the reality, draws down, and then you have a valuation setting, the resetting taking place. And the case in example, classic case is DMart. In 2021, it's down around 20% from there, and still the company is growing, and the trend for that matter. It has not been able to pick up. Nothing wrong with the company. They are still growing. They are still clocking 10-15% kind of a growth, but valuation is catching up. Sooner or later, it will happen with V2 Retail, V-Mart, and all the likes for that matter. So, the advice is not to, get into a fresh buy. You still play with the normal, thematic play of infrastructure, defense, railway infra, and banks, now a new one in the basket. And these are the sectors which can give you a consistent compounder with valuation comfort. Unlike others where the earnings may still grow at 10-15%, but valuation comfort may not be there.
Okay, all right, Dharmesh, wanted your view on metals, but by the way, first we need to take stock of the markets. Just take a look at the Nifty. What a massive recovery we have seen from the day's low. Super move is what we're seeing. And, there's a bit of a spike in the last few minutes because you have the Nifty Bank. That's, again moved to the high point of the day. So good up move is what we're seeing on that one. Power Grid is one stock that actually spiked to the high point of the day. Bajaj Auto as well. Mr. Sharma earlier today said that the sales are rocking, in his words. And they are rocking even more than the remainder of the industry. So that one as well has moved up. And Titan, another stock that's moved up. So good to see. Markets at the day's high. The party was on Wednesday. There's a bit of an after party that's playing out in today's trading session. But let's talk about the sector that's twinkling away. That's the metal index. It's buzzing around in trade, and let's highlight a few factors. Well, there are elevated rate cut hopes coming in from the Fed. There's a bit of a shutdown that's playing out in the US economy. That could bode well for in terms of the probability for going ahead and seeing another rate cut. Next up, the dollar index. If there's going to be a rate cut, the dollar index as it is soft and will continue to remain subdued. A weaker dollar index is good for base metal prices. Point number 3, coming hope then. The RBI, their stance is pro-growth. So that's why, in fact, things are looking up, and obviously you'll see high beta doing better. And as we alerted you just, I think, a week or so ago, that there is optimism that there is good reason that we could see a decent steel price increase because, imports that are coming in either from China or even from the FTA countries like Japan as well as South Korea Well, the domestic prices are at a sharp discount. Remember, we have got protection that's out here as well in terms of a safeguard duty of around 12%. And we're coming out of the monsoon season. So put everything together, we should be bracing for a steel price increase going by the fundamentals. That explains why the metal index is doing well today. And it's been doing well over the last few trading sessions as well. And just a word on aluminium, I was just checking to see whether or not there's a big move in terms of aluminium prices. Not really. So it appears that positive global sentiment actually is playing out on the metal stocks. Dharmesh Kant is still with us. Dharmesh, what is your view? What's the commodity, the metal that you like the most, the metal stock?
Yeah, good afternoon, Nigel. I mean, if you look at commodity prices, particularly the metals for the international market, they have done nothing year till date. Most of them are down, be it, aluminum is 2-3% up year till date. Steel prices are down year till date. Only copper has done good. It's around 16-17% up. But as far as the Indian prices are concerned, as the points you have highlighted, that has helped the Indian steel prices being stable, and safeguard duties have prevented the aggressive dumping into India, and that is helping the cause. Most of the metal companies are already at all-time highs, be it Tata Steel or JSW Steel, Hindalco. They are trading at near highs, all-time highs. So, but still, I think there is a scope for them to do much better from here. And as far as valuation comfort is concerned, I think Hindalco looks pretty good because it is a sizable share of copper mining and copper smelting taking place. At the same time, Hindustan Zinc looks particularly, high. I mean, very cheaply valued to me at 20 times PE multiple with 60-70 kind of an ROE, 6% of dividend yield. And it has a lion's share of lead and silver production into India. Silver prices are going up, and it's likely to do well because 50% of its commercial use internationally or nationally is gaining traction because of all this EV vehicles, solar, wind energy and everything, the batteries, the battery storage system, data centers, every equipments consume silver in a sizable quantity. So this traction is likely to continue. So our top pick in the entire metal space is Hindustan Zinc, Hindalco, and Hind Copper. To an extent, you can continue that. Those who are holding steel companies, the ferrous space, continue to hold them. Tata Steel and JSW looks far better, though now I think the valuation is getting stretched for them.
Okay, so yeah, valuations may be a bit of a challenge, but ferrous still something that Dharmesh is looking at. Dharmesh, stay on. We want to discuss some of these defense names with you, which are fairly active in today's trading action. Before that, let's actually bring in Ria. Goldman Sachs today came out with a note on defense and aerospace companies. Let's see what Goldman's thesis is and the specific names that they like. Quite a few of the mid-caps doing quite well in this space. Ria, tell us more.
Well, yes, Surbhi, Goldman Sachs came out with a note today. They've initiated coverage on 8 stocks and they've identified 3 key themes. The first one is the increase in domestic defense TAM by more than 6-fold versus FY25 to over 10 lakh crores over the next 20 years. The second one is the scope for indigenization at the bottom of the tech pyramid. Now, this includes components and process materials where local players have been underrepresented up until now. And the third theme is higher defense exports going ahead. The government has targeted around 50,000 crores in exports by FY29 versus around 23,600 crores that we saw in FY25. Now, apart from this, they've also highlighted 3 key trends which make them relatively more positive on private defense players versus PSUs where the concentration has been up until now. The first one is the shifting spending landscape. Now, looking at the recently released TPCR as well as the focus on new technologies such as AI-enabled systems, electronic warfare as well as UAVs, they believe that private defense players will benefit more from these as they are better exposed. The second trend is superior EPS growth over the next 3 financial years. Private sector players are expected to show around a 32% CAGR here versus around 13% for PSUs. And the third thing they've highlighted is that private defense players will benefit greatly from the rise in global defense spending when compared to PSUs. Now, in terms of the stock picks, they have a buy call on solar industries as well as PTC industries with the highest upside of around 36% and 58% respectively for each of these. They also have a buy call on Astra Micro, Data Patterns, Azad Engineering as well as Bharat Electronics. On the flip side, they have a sell call on Bharat Dynamics on the back of contracting margins and unattractive valuations. And on HAL, they have a neutral call. In terms of the stock moves today, most of these stocks are performing quite well. The biggest gainers earlier in the session were PTC and solar industries, which have cooled off a bit now, but right now also they're still holding on to strong gains. The biggest gainers right now are Astra Micro, Data Patterns as well as Azad Engineering, up at anywhere between 8 to 12%, and the index is also up around 2%.
Right, Riya. Thanks a lot for that. So those are a bunch of these stocks which are doing extremely well. The defense pack. Meanwhile, we also have the first jewelry sector update coming in for the second quarter, where Dussehra and Navratri have done extremely well for PN Gadgil. Their Navratri contribution has been over 400 crores, and year to year, basically festive season to festive season, the growth has been in upwards of 80%. I'm sure a large part of that, in fact, most of it would be on account of the higher gold prices. So to that extent, volume growth would be extremely crucial to track as well. But be that as it may, either volume brings in or, value brings in, there is revenue growth. For a lot of these second-tier jewelry companies as well, what's important is that a large part of their gold, which was, as compared to, say, Titan or the others, they have some of it exposed, which is unhedged as well. So every time there is a gold price increase, they stand to benefit from that in terms of inventory gains too. But because by and large, because of the gold price rise, we've seen a big surge in sales value for these companies. We've seen traction for names like Titan and Kalyan Jewelers as well, both of them higher, and that is reflecting in the market. The market is now closer to 24,900 on the Nifty, and the last leg of up move has come in largely on account of these consumer names. So HUL, for instance, is recovered, and it's come to the high point of today's trading session. Asian Paints, we're losing sight of the fact that, crude is still at a 4-month low. This is festive season for all these paint companies as well. So any sort of margin improvement, you have Asian Paints and Berger, all of them spiking. So markets rocking right now.
So I just wanted to add that in the morning we had numbers from PC Jeweler.
Yep.
Same story, around 65% of a revenue increase, for the quarter. And I guess for them also, it's gold price appreciation that would have played a big part. And PC is up about 6% as we speak. So lots of sparkle there on jewelry stocks. Dharmesh, let's get your quick views on both before we let you go. These smaller jewelers, the likes of PN Gadgil and PC, whether you think they're worth a look, worth a buy, and the smaller private sector defense stocks as well that Riya was just talking about, because they're the ones that are really reacting. And Goldman's thesis is that they'll be bigger beneficiaries. While we always talk about HAL and the BELs of the world, they're looking at names like Data Patterns and Astra. So your thoughts on the small jewelers and the small defense players?
Yeah, so first of the small jewelers, I think the numbers have been excellent. And Mangalam, rightly pointed out, most of it has to do with the inventory gains and the sequential rise in gold prices. So that again plays out, they are buying at a lower cost, and eventually when they are selling the made jewelry, it's getting at a higher cost. At the same time, there has been, the carat which is being used now is a lower carat because the value remains the same from the buyer's perspective. And they are making charges differential, the arbitrage is there, and I think the operating margins when they report would be equally healthy. So the numbers will be good this time around, and I think this ride can continue till Diwali, so no point exiting or selling it. And we are liking PL Gadgil from the smaller jeweler space, so we have been liking that company, and that remains a buy and hold kind of a candidate. As far as small defense companies are concerned, I mean, look, there's a structural decadal kind of a story unfolding in the entire defense space. But all the smaller defense companies, the majority of them does not even report 1,000 crore kind of a revenue on the top line. It's still been driven by 23,000 crores by BEL and 30,000 crores by HAL, and to an extent 3,000-4,000 crores from BDL. So sensing the kind of order inflows which are coming in, 64% Make in India kind of a new deal wins which these defense companies are doing, the government of India is imposing that. I still think it's better to be with large caps like HN and BL, and small caps anyways the valuations are rocket high. So even if they double their revenue and double their profitability, still the valuation justification will be a challenge for them. So our house view is we are sticking with HAL and BLs of the world in the defense space.
We should pull up some of the other jewelry companies to see if there is a rub-off impact. So Kalyan, let's get that up for you on your screen. I think that's also up 4-5%. Senco Gold, a Titan should come up. And generally, there is a lot of excitement seen in these hotel-related stocks. You've got a Lemon Tree, which is up and about. You've got EIH with a 10% kind of an up move too. Dharmesh, a quick word on True Alt, the new listing of the day. It's a very strong subscription, 72 times. It's an ethanol manufacturer. Their market share is about 3.5-4%, and they use biofuels. Have you studied the company?
Jarima, we are not, bullish on the ethanol manufacturers. So this was a story which played out 3 years back. And now I think, they are on the other side of the curve. So we have not covered this company in the IPO note as well. And as a house view, we are, staying away from all ethanol manufacturing kind of our companies.
All right, we take that point. Thanks a lot for joining in, Dharmesh. With that, we'll take a short break. On the other side, we have Jitendra Sriram from Baroda BNP Paribas Mutual Fund on the other side to discuss markets, his views and the sectors and categories he likes. Welcome back. We were speaking about how the IT stocks were weak earlier. Now they've started to pick up as well ahead of earnings next week. So Infosys is at the high point of trade. We're seeing some traction build on a couple of these other names as well. HCL Tech, for instance, has recovered from the low. So the IT index is now back into the green, and given its weight on the index, second only to the banking pack, it's only understandable that its contribution has reflected on the Nifty as well, which is sitting now with a gain of 50 points as against flat when we had started the show. But top movers in the market. Hormaz joins in to tell us a lot more. Hormaz, yes, the Nifty did move 50 points, but beneath the surface, a bunch of stocks which are moving and shaking around.
Oh, moving and shaking, and how, and on very, very strong volumes as well. You know, start off with some of these smaller defense names on which Goldman Sachs came out with a note earlier in the day. Astra Micro, Data Patterns, Azad Engineering, all part of their coverage. And take a look at the volumes here. 22 lakh for Astra Micro, 14 lakhs each for Data Patterns and Azad Engineering, and the 20-day average almost 4 to 5x higher than their 20-day average, being today's volumes. The other one on the list today has been Avantel, and today's gain is the biggest since February of last year. The stock has cooled off from the highs of the day, but was among the top gainers today. Volumes are the highest since June. We have had close to 2.5 crore shares that have changed hands today in comparison to a 20-day average of just 50 lakh shares. And the stock has done well so far, 41% in 2025, and positive returns every year since 2018. A couple of big movers on the business updates that were reported earlier, and Sai Silks Kalamandir, the biggest single day gain since listing. The volumes are the highest since listing as well. 3.5 crore shares have traded today. The 20-day average is less than 5 lakh. And V-Mart Retail as well. The double-digit advance here, close to 90 lakh shares have traded, and the 20-day average has barely managed to cross 1 lakh. And Sai Silks, though, still 16% higher, but below its IPO price. And lastly, Sandur Manganese is the biggest single-day gain for the stock since February. Today's volumes are the highest on record for the stock. More than 3 crore shares have traded today. The 20-day average close to around 9.5 lakh shares. The stock has now begun trading adjusted for its bonus issue, and now is up 43% so far in 2025. Was a bit of an underperformer last year, but has done very well so far in this year.
Okay, all right, got that. Hormaz, thanks very much. Always plenty of movers on your list. Well, with that, let's welcome in our next guest on the show. Jitendra Sriram, Senior Fund Manager at Baroda BNP Paribas Mutual Fund, is with us. Jitendra, thanks very much for joining in. Season's greetings to you. Hope you had a great Navratri and a good Dasera break as well. Now, the market itself has been on a break, and that's continued for a while, right? First things first, I want to talk earnings and whether you are in the camp that believes that there is going to be a meaningful pickup in the second half of the year. So are you expecting, therefore, the market to break out of its, comatose, logjam state, at least at the index level?
Yeah, season's greetings to you and your viewers as well. Firstly, I would say what we are sensing right now is that we are seeing earnings in more a stabilization phase, because if I look at the last 3 months data for Nifty, the NSE 200, for example, what I can sense is that earnings is now plateauing. Now you're not seeing any more cuts. So probably it's a little too early to say that in 2Q itself, you might see the perk up starting to come through. You might more see a stabilization of the earnings. But yes, these GST catalysts and monetary policy catalysts which have been unleashed into the economy, hopefully with the third quarter and fourth quarter, you should start seeing some perk up in earnings there.
All right. Let's see whether, that reflects on all parts of the market right now or not. L&T, for instance, that's the stock which has moved higher. It's at the high point of trade. This morning, the company did tell the exchanges that they've won, major orders for both their buildings and factories business, which include construction for some 6 towers and a lot of civic work for a lot of these, other companies as well that they've got. Between 5,000 to 10,000 crore is how they classify major orders as. So that's doing well for them. A lot on the street were hoping for the consumption, capex to consumption shift happen. But do you think there is still some funk left in a lot of these old age capex stocks as well?
Yes, I mean, there are certain pockets which are actually getting a lot of traction from markets in the Middle East. So one could be, it may not be an India-specific sense, and you could see, Middle East, the MENA markets actually account for something like 15-20% of sales. Coming to India also, there are certain pockets which continue to be exceedingly strong. Like you look at the backlogs of some of the defense names, or you look at the backlogs of some of the power equipment guys. I think those names are running into multi-year backlogs. So to that extent, I don't think, there is any kind of worry that even if there is a small shift from capex to consumption and so on, you will see a meaningful alteration in the growth trajectory of these companies. I think the problems are more internal in some of these, that they need to just execute full hog.
Okay. Jitendra, we were just, looking at some of the updates that have been coming in on the consumer space as well. The jewelers, for instance, I mean, some of the preliminary numbers are looking very good. But you had Lever, which was far more cautious in its outlook for the second quarter. So now, when we talk about the benefits of the GST cuts, which part of consumer are you looking to play it through?
Oh, well, to be fair, I mean, I would say that it's not that staples really sees a meaningful perk up because there is some taxation. It's not that I'll start consuming biscuits more or something else more. Obviously, there is a small element of volume tick up because there is a grammage issue. For example, a 10 rupee price point, if I was getting, say, 6 biscuits and today I get 8 biscuits, once I open the packet, I'm going to consume it all. So to that extent, that is something which will play out on the volumes. But it is not that, demand fundamentally shifts there. Whereas I think where it could really play out quite meaningfully is the consumer discretionary space, the areas where you actually have big ticket items like, white goods, you have consumer durables, and then the vehicles, automotive sector. These are the areas which will actually see a meaningful, and also you have to put it in the context that RBI doing what it is doing in terms of paving the path for a softer monetary trajectory. I think the combination will play out very well in these two areas, consumer durables and the white goods segment.
Right, Jitendra, so many, primary market options as well. So many IPOs that happened last week and last week, along with a lot of listings that took place as well. Is there anything that caught your fancy among the ones that are, say, maybe due to open next week and the ones that have opened this week, along with the ones that have recently listed? Is there anything particular that you like?
We have participated in some of the financial segment papers that have come in of late because there is obviously certain growth trajectory that we are seeing there, which would be fairly okay. I think the white goods space is also something that is fairly interesting because it's a segment that is growing quite briskly. So that should do well over a period of time. So long as that tipping point of valuations and growth makes sense, we would be happy to look at those areas.
So when you said white good, you mean LG Electronics that opens next week?
Yes, that is also definitely is a high growth name to that extent.
What about Urban Company? Amongst all the IPOs which recently listed, many have been subdued, but this one stands tall.
Sorry, which one was it?
Urban Company.
Urban Company. Sorry, we haven't really looked at that so much, so that's I don't have any opinion on it.
What about IT? The Nifty IT index is down 20% year to date, while the Nifty, the broader index, is up 5%. Going into the earnings season, what is the view now? What will be the investor reaction? What if we get inline numbers? Is it a reason to sell, or take us through the narrative and the view on the index?
Well, see, the news flow has been a little bit damp in that segment, especially post the H-1B visa. But see, these are not things that will impact instantly. And one other area I would say that one needs to look at is also the Accenture commentary that came out a week or 10 days back. And that did not highlight too much of a risk. So earnings-wise, I don't see that you will see an immediate hiccup in terms of any of these names. I think markets' expectations are also quite low. In a sense, most people are expecting that -1% to +2% kind of sequential growth. And I think these companies should be able to deliver on those. Also, do remember that the way the rupee has behaved in the last month and a half, you should see some tailwind of margin expansion coming from there as well. So I don't think it's an earnings related issue, but what you would need to look at from a slightly longer term perspective, see, Visa will come back to hurt at some point of time because these will take 2-3 years to lapse, get renewed, additional fees get kick in then. Also, then you have the issue that at some point of time, the customer will also start evaluating whether it's cheaper to set up a GCC in India or to look at having H-1B folks out there and all that. So there could be a little bit of a shift in terms of how the business is managed. So we'll need to go through that. But I don't think you will see too much of an immediate earnings problem. What might more matter is the kind of traction on orders and the visibility and the commentary that these companies give out now. And at least going by what Accenture gave out, it doesn't seem to be that there is too much of a headwind at this point of time, that at least looking at a small perk up as such.
Take that point. Thank you so much, Jitendra, for joining in and giving us your views on a whole host of stocks, sectors, and some of the ones that may hit the streets soon as well when it comes to primary markets. But the secondary markets, nothing really to worry about. In fact, at the high point of trade, 24,900 has been conquered on the Nifty. So good time to get in the FNO perspective. Nigel, 24,900 is conquered. Are the shorts looking like they're jittery?
Well, the shorts will be very, very nervous, Mangalam. Talk about the FIs having 93-94% of their positioning on the short side. You know, I'll tell you what, and they didn't cover in Wednesday's trading session. By the end of today, you'll have to keep a close eye on that mark. Have the shorts got squeezed out on the wrong side? Because just take a look at the intraday recovery. The Nifty, good recovery now, all eyes on the 20-day MA. That's around 50-60 points from current levels. So you'll want the Nifty to get closer to that mark on a closing basis. The Nifty Bank, very, very close to the 100-day MA. You'll want that one as well, to drive home the advantage. And that's really been the leader in the last couple of trading sessions. Options data is extremely exciting. You know, the 24,800 put, the premium has come down drastically out there, telling you there is aggressive writing at those levels. The bulls will want to protect this 24,700 odd mark. That's the first line that you're looking at in terms of a support. But just take a look at it. The Nifty is higher, and I didn't see the premium on the 24,900 call move up too much. So the writers are still hanging in there. They are hopeful that the 20 DMA can get held out, because you've got the direction correct, but the premium hasn't spiked up too much. It's more or less flattish as we speak. Telling you, writers are still holding. They're hoping the 25,000 mark can get protected. The bears will be trying to protect the 25,000 mark. The bulls will be hoping that the 24,700 mark does get protected on the downside. Stocks that we're looking at, I'll tell you what, it's very, very interesting. A lot of stocks can potentially go into the FNO band. One that's looking like a reasonably strong probability is HFCL, because the open interest as a percentage of MWPL, that was more than 105%. So that should be moving in. The other ones, it's touch and go. Vodafone Idea, Bandhan Bank, as well as SAIL, all of them as we speak, the open interest as a percentage of market-wide position limit is more than 95%. So they could potentially be making it into the FNO band. I'll keep an eye out on these stocks when we get the file later today. Back to you guys.
Take that point entirely, Nigel. You know, the day 2 of October series, we already have 2 stocks in FNO ban. Possible that day 3 you have as much as 6 stocks in FNO ban as well. So that'll be very interesting. We'll take a short break. On the other side, we'll get you buy today, sell tomorrow calls from our technical experts.
Welcome back. So let's go back to Nagaraj for some final advice and calls. Markets actually perked up, getting into weekend mood perhaps. 53 points higher, so not bad. Almost at 24,900 now, Nagaraj. Final levels to watch on the indices and any final stocks?
Yes. So we right. Nifty is in a strong momentum. It looks like the 850, 900 is going to be broken out sharply on the higher side. I'm expecting Nifty to move towards 50 or 25, 200 levels, which is going to be the initial target for the Nifty. And I'm sticking with the same stocks. Buying for the buying one is the Nalco. It is currently around same price around what we have discussed, 905, 906 levels, and upside target would be 950 and 870 is going to be the initial support. And second one is MMTC, currently trading around 69.70, little bit higher than we discussed, and upside target would be around 75, and 66 is going to be the stop loss.
Are you looking at Kalyan Jewellers right now? Because when we started the show, it was about 3.5% higher. Now it's extended its gain. It is about 6% higher. Do you believe that there is a trade here for a reverse trade on Monday?
You're talking to me?
Kalyan Jewellers. Yes, Nagaraj.
Yeah, Kalyan is looking positive. I think one can look to continue the trades because after the sharp decline, we have seen some good amount of bounce back, and I'm expecting more bounce back to come in the next, at least for the session. 520, 525 is going to be the next hurdle to be watched in the near term.
All right.
Thank you. Thank you very much for joining in. Let's get to a CNBC TV18 exclusive now, where sources tell us that life insurance companies have cut commission on first premium and renewals. Yash joins in with the details.
Well, just a couple of days ago, we had reported how the general and health insurance companies had decided to cut the commissions which they pay to distributors on sale of insurance policies. This is, of course, to pass on the entire cost which the insurance companies were taking because of the GST changes. Now, what we've been given to understand now is that the life insurance companies have also decided to do the same thing. The quantum is as big as what the general and the health insurance companies decided to cut as far as commissions are concerned. That is, life insurance companies will be cutting commissions to distributors by 18%. This is both on renewal policy premium as well as the first year premium, which is the new policies, and across product lines, term policies, ULIP policies, savings policies, as well as, the annuities. Now, as far as this particular change in terms of cut in commission to distributors is concerned, that will become effective October 1st. Now, which are these distributors? Of course, all of them. Starting with web aggregators, the one listed here is PB Fintech or Policy Bazaar. Then, of course, individual agents, banks, as well as brokers. We've also spoken to a few analysts in terms of what could be the impact of this, cut in commissions of 18% on life insurance companies as well as distributors. For life insurance companies, if you remember, as soon as the GST changes were announced, the companies had intimated that they will have to take extra cost burden, and the impact could be on their EV, of course, in different proportions, VNB as well as margins. Now, with the passing on of this entire cost onto distributors, analysts suggest that the entire negative impact in terms of VNB margin as well as EV would go out. There won't be any impact, and the impact would get neutralized. But on the other hand, for distributors, it could mean a very large impact. We've spoken to analysts in terms of what could be the impact on the listed distributor, that is PB Fintech, and the suggestion is as follows. There could be a negative impact of 15 to 18% on the revenue for PB Fintech, 25 to 30% on the EBITDA, and 30 to 35% on the EPS as far as PB Fintech is concerned. So large impact in terms of the numbers and the impact that this could come through for a company like Policy Bazaar or PB Fintech.
Okay, thank you very much for that. And the other story that we'd like to highlight is that sources suggest that one of India's largest agrochemical companies may be in talks with global beverage and snack major for a long-term supply tie-up. To get to more details about this, Vivek joins in.
Well, that's right. So Indian agrochem major UPL, we understand, is in talks with beverage as well as snack maker global, remember it's PepsiCo, and this is for a long-term supply agreement. We understand that PepsiCo is in talks to go ahead and mandate use of UPL's agrochem solutions for global contract farming operations. Along with that, we understand that the deal may extend to use of companies' gel-based technologies for the water technology that the company actually provides. Along with that, we understand that this particular deal that may be announced will be a multi-year contract in favor of UPL. And we understand that one of the key aspects of this particular deal would be the fact that the deal likely to be announced within UPL's chemistry subsidiary, which is called as Superform. We understand that UPL may also be mandated to go ahead and provide a key intermediate as far as Pepsi's largest stimulant is concerned. We reached out to both UPL as well as PepsiCo. We're yet to hear back from them. But it's an important development, and UPL will remain in focus on the back of this particular likely deal.
Thank you very much for that. By the way, lots of stocks are moving around. Pull up a Poonawalla, FinCorp, that's up 5%. Netwear, we've been discussing it. The stock is now up 6.5%. It's spiking up. Kalyan Jewellers, just about half an hour back, was up 4%, now up nearly 5.5%. IFCI, Anant Raj. Oil and gas stocks have been doing very well. We spoke about MRPL at 230. Now look at an HPCL. That surge nearly about 3%. But the other big stock on our radar since morning, actually last couple of days, has been Sammaan Capital. And now the news is official. Abu Dhabi-based international holding company IHC is set to acquire a controlling stake of 41.2% stake in the company via a deal valued at 8,850 crore rupees. This triggers an open offer as well. We had a chat with Gagan Banga, MD and CEO of Sammaan Capital, about this acquisition. Listen in to what he had to say as we get into this break.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points. We've given a very clear guidance in terms of how much the collections work out. For this year, we are looking at 10,000 crores of cash collections. I see no reason why in this financial year we should not do at least that much. With such strong parentage, the message which goes out to borrowers also is that these are not guys who are now going to be pushed into a corner.
Welcome back. Some of the stocks that have been moving around for the last few minutes. Let's pull up SML Isuzu. That stock's rallied about 9% from the lows, currently sitting with a gain of almost 5.5%. The other one is Hindware Homes. That's also seen a big surge from the lows. In fact, with volumes picking up as well. Hindware Homes is almost as much volumes as we see over the last few trading sessions, which has been higher than what we've seen over the last month or so. And Senco Gold, we've seen all the jewelry companies see a spike ever since we got those results coming in from P&G in terms of the quarterly business update, and from then itself Senco Gold too has rallied about 2%, but not all is gaining. We have on the lower end Tata Investment Corp as well. After seeing a rally of almost 15-16% this week, it's come in for some profit booking at the low point of trade. Remember, in the last month or so, the stocks rallied almost 50%. And the other one is Bazaar Style Retail. At a time when we've seen a big surge in a lot of these retail companies on account of their second quarter update, Bazaar Style Retail as well reported a 70% growth, but that stock is coming for profit booking, down about 5.5%. And the third one is Sun TV, down about 4%. Had seen a rally on Wednesday ahead of reports that maybe Diageo may go ahead and sell Royal Challengers Bengaluru, and that may cause a reset in the IPL ecosystem. So look at the sum of the parts valuation. Sun TV looks attractive, but maybe the streets decided to take some profit after a big 16-17% up move over the last two trading sessions on that counter as well. Good time to get in Amrish Baliga. Amrish, so many stocks moving around. Is there anything particular that you like?
In fact, my pick is Tata Rail Systems, which is a market leader with a capacity of about 12,000 wagons, 300 passenger coaches per annum. In passenger coaches, they have EMUs as well as metro coaches, and they command a 25% market share in wagon manufacturing. They have four manufacturing facilities and a very strong order book position, about 13,000 crores, which includes 11,000 wagons, 441 metro coaches for Pune, Mumbai, Bangalore, Ahmedabad, and Surat metros. The company also has two JVs, and there also they have about a 13,000 crore market orders pending, which is BHEL Titagarh Consortium, which has about 80 Vande Bharat sleeper trains order worth about 6,000 crores. RK Forge and Titagarh JV has wheel set orders worth about 7,000 crores. So the expected revenue CAGR over the next 3 years is about 23%. The EPS which I'm expecting for FY27 is about 32. And with this, my target price is about 11.20.
All right, 11.20 on Tata Rail Systems. Is there anything else that you like in particular? I'm looking at Urban Company. You know, the street, if you value it on a PE basis, it may look extremely expensive. But if you look at it from a TAM basis, a total addressable market, not very different from what we'd have in, say, something like a Zomato or Swiggy. But the market cap difference as compared to Urban Company and these others would be a lot more. So would you bet on something like an Urban Company?
Yeah, surely, because you really can't see it from a PE perspective, because Zomato, which is eternal now, I mean, if you had valued it from a PE perspective about 2 years back, you would have never bought it. And then you would have missed out on this sort of a rally, which we have seen. So Urban Company also I see, a further move from here. May not be immediately, because we have already seen a very decent sort of a listing gain. But then, I'll not be surprised over the next 6 to 8 months if we see levels of closer to about 230 to 250 for this.
All right, take that point. Thank you so much for joining in, as always, giving us quick fire updates on ideas that you like and perhaps the questions that we had with regard to Urban Company as well. Not wise to look at it from a PE basis, but the total addressable market. With that, we'll start to wind down the day and, in fact, wind down the week as well. It's been a good week if you're a bull, and most on the latter half of this week itself. The Nifty goes home with a gain of almost 1% for the week, 50 points higher for today's trading session. A large part of the gains on account of what the metals pack has been doing and what the Nifty Bank has been doing as well. The Nifty Bank obviously up 2.5% this week, a supportive RBI policy. In fact, barring the rate cut that wasn't expected, some of the commentary has been fairly positive in terms of growth prospects for all the banks. That's causing the reason why the Nifty Bank is closer to that 55,600 mark. A big move is what we saw on Wednesday, and that continued into Friday's trading session as well. The broader markets, that's where the action was. We saw a big gain on the Midcap index on Friday. In fact, through the week itself, the Midcap index is higher by almost 2%, which is twice as much as what we've seen for the Nifty. And we're ending the day with nearly 2,000 stocks advancing, for about 900 stocks which are declining. The stars of today on the way up have to be the jewelry names. So we have Kalyan Jewelers, which was higher. We did see some traction in, PC Jewelers and the others as well. On the way down, though, we did see some profit booking on Samman Capital after a big move and a big deal that was announced over the weekend. By and large, a decent week for the bulls. What we will be tracking now as we move along would be the second quarter updates from a lot of these companies over the weekend, and at the same time look at the IT results, the season of which starts next week. With that, we wrap up on this edition of Closing Bell. Stay tuned to CNBC TV18, however, Editors Roundtable up next.
The last trade ends higher in the first week of October. The Nifty and the Sensex gained nearly 1%. The broader markets outperform and sectoral indices clock gains, particularly the banking stocks. Well, over the next 30 minutes, we'll decode the week's market action. We'll put the spotlight on the RBI's growth supportive measures, and we'll tell you what to expect from the IT companies as they get set to report numbers from next week. Hello and welcome to Editors Roundtable. I am Rima, with me are Prashant and Nigel, and joining us here in the studio is Anish Tavakle, Co-CIO Equity at ICICI Prudential AMC. Hi, guys.
Hi. I mean, a better end to the week, right? Rather than how we started off the week. So, two apiece for the Bulls as well as the Bears. And I tell you what, the Bulls getting into this weekend will be feeling a lot better.
Last 2 days, basically, is
last
what matters,
2 days
right?
At least, yeah.
But then those last 2 days broke that very long stretch of a losing streak, right? 8 continuous days of selling.
And what did it was perhaps maybe, I mean, we can give credit. I think the RBI. I mean, no rate cut, although many said it was a close call. It looked like a close call. But many things, and we'll talk about that as we go on, which kind of, the stance actually is what is very, very clear, that they are very focused on trying to revive growth one way or the other. And Anish, welcome to the program. You're coming on after a while. Yeah. What did you make of it? I mean, we'll go into individual steps, but what did you make of it?
See, I think you should have to look at the RBI's actions over a 3 to 4 month period. What have they done over this period, right? And so even in the previous meeting, they had acted quite boldly and given a 50 basis points rate cut, which is actually a lot, right? And it takes time to work through. So they've made it clear that they do want to revive the economy. They do want to revive demand. This time's move, while they haven't cut further, which is, I think, the right thing, they have made clear that they stand ready to do more if the economy does require it. The steps they've taken actually frees up the banking sector to do more. It is supportive of growth, but it also helps banks relative to NBFCs, right? So in terms of the competitive position of banks versus NBFCs, it improves the competitive position of banks.
On this rate cut, we had a chat with Tata Cap, right, when the IPO, on the IPO press conference day, and I asked him about transmission. So at least at the NBFC level, I said 100 basis points of rate cut by the RBI so far, and I said, how much have you passed on? And he said, I think about 25, 30 basis points. So, I mean, there is some transmission left to be done of the rate cuts which have already been announced so far.
Well, that's right. On this Tata Cap, normally when you have a big IPO like this, it gives some of the competition as well some kind of legs. Case in point being in AB Capital, Aditya Birla Capital. Today, in fact, the stock hit a fresh 52-week high, because there's suddenly that argument about valuations and ratios being, more or less at par. So let's see how that goes. But before we move on, let's just, do a quick recap of what we saw in this week itself. The Nifty, the fear was that we won't be able to defend that 24,500 odd mark. We went ahead and we defended that mark. We broke that losing streak. We had 8 straight sessions on the trot when the Nifty ended lower. That broke, and actually October has started off on a positive note. And if you look at historical data, the last, out of the last 10 Octobers, 70% of that we've seen positive returns. So you want to clutch onto straws, right? When you're seeing the markets see 8 straight sessions down. The other important factor is the FIs. They've not just been selling in the cash market. In the F&O market as well, on index futures, 94% of the positions on the short side. Highest we've ever seen. So you need some kind of glimmer of good news, some kind of hope. And then, in fact, they'll be forced to cover out. So sometimes they being at extreme ends hasn't been such a bad thing. And the RBI bonanza that came in, right? I mean, out of nowhere, the governor, pro-growth, everyone is wondering about the Fed pivoting. Well, the RBI governor's, taken a trajectory of his own. Every time he's spoken, it's always pro-growth, pro-growth, pro-growth. And hopefully that holds us in good stead because we have the festive season that's coming up. You have earnings that hopefully will pick up in the second half of the year. And added to that, the US shutdown, out there, that could have increased the probability of getting some Fed rate cuts as well. So all in all, it was a decent end to a week that started off actually with the bulls being totally on the back foot. Anish, how do you play this? We have seen this GST 2.0, the various measures that have been announced as well. You have the auto stocks that have done well. What's your view on that? On the consumption theme, how do you play it?
See, the way I see it, the only issue with the economy is weak demand, right? All the structural things are fine. Balance sheets, bank balance sheets are fine, corporate balance sheets are fine, supply side, there's no issue. And when you have only demand as the weakness, it's a relatively easy problem to solve. Right? You've had monetary policy support and more could come. So I do expect the economy should regain momentum. It might take a quarter, it might take 2 quarters, but the economy should regain momentum. And in an environment where you expect the economy to regain momentum, I would position myself towards cyclical sectors, right, which recover, which see the greatest impact when the economic rebound happens. So those would be industrial and capital goods, banks, it would be auto companies, cement. Now, of those, cement and auto have already had some bit of the run.
Yeah.
So from here, I mean, I would be most positive on the industrial and capital goods sector and banks.
You're right. But some, you know, some just to, since you talk about industrials and capital goods, just to come in, some were pivoting a little bit away from that, because they said that the last few years the government has been pro-capex, you know, pro capital expenditure, and suddenly both in the budget as well as GST 2.0, it seems like the focus is only on consumption. But would you still believe, because some of these stocks have corrected a good deal, and actually in the last few trading sessions, they've been finding their feet. And I was looking at a couple of smaller companies as well from the broader markets. Some of those promoters went ahead and they bought a few thousand, a few lakh shares as well. Yeah, you're making that point.
So, you know, I think it's a bit of a misinterpretation to say the budget is pro-consumption. Actually, the budget is pro-spending.
Okay.
Right? Spending could be investment spending from households or consumption spending. Investment spending is like if you've got more money in your pocket because you're paying less in taxes, you could bring forward your purchase of a house. Right? You could buy a larger house because now you have a larger budget. So I think it's a misunderstanding to say that more money in the hands of households necessarily leads to more consumption spending.
It could be, yeah.
It could be investment spending.
Indeed.
And then once consumption starts, obviously you need the capacity to service that consumption. So investment always picks up. So in fact, I've always been saying that, look, there's no point pushing for investment stimulus if there is already spare capacity in the economy, right? So first you need the spare capacity to get exhausted. Once demand picks up, then investment will also pick up. It's not going to be one or the other. I mean, ultimately, if consumption picks up, you need the capacities to service that.
Right. Okay.
You know, you said balance sheets are in good form, but corporate balance sheets are in good form, government balance sheet in good form. What about personal balance sheets?
So yes, there is some over-leveraging in the households, particularly in the unsecured space. And we are seeing that stress, right? We have seen MFIs have the issues. I do think that people are a bit over-optimistic on how quickly unsecured consumer stress will resolve. But it's not at a level to hold back the overall economy, right? It is an issue, but it's not at the level where I would say that it will hold back overall economy.
That mass segment, mass consumption, that still remains subdued? Or you think all these measures can turn that around?
I wouldn't expect that to be a big driver of growth, right? I think it'll hold relatively steady.
So at similar kind of levels?
Yeah. See, the problem actually, you know, it's very difficult to gauge what's happening in mass consumption. A lot of the commentary is based around FMCG. Right? People say, look, FMCG demand is weak. But the companies that we are looking at in FMCG are, I think, suffering from a competitive issue problem, right? Their margins are too high, they're over-earning, and therefore they are losing share to less visible players, right? To local players, to regional players. And I wouldn't interpret that necessarily to say there is a weakness in consumption.
But the big highlight, the big bazooka came in from the RBI.
Yeah, and it was not rate cuts, right? It was those some 22 measures apparently. I'm not going to go into 22, but let me just highlight 10, which I think are important. And we'll sort of put some of these questions and ask Anish to put on his financials analyst hat and tell us which of these measures gives the maximum bang for the buck, right? So shift to EC, expected credit loss provisioning. There's a 4-year glide path to this now to smoothen the one-time impact of additional provisioning. Remember, basically they're moving away from incurred loss model to a projected or expected credit loss model. But you know, the news is the 4-year glide path to do this. Removal of proposed restriction on overlapping businesses. Basically, banks doing what they could not do on the bank side, you know, in subsidiaries, NBFCs, etc. There was always this overhang that because the rules don't allow for it, they'll have to do, I mean, you know, some of these companies will have to sell these subsidiaries. But so that overhang kind of goes away. Introduction of risk-based premium for deposit insurance. It's basically, what, 12 paisa per 100 rupees. Now it is, it's a flat rate, but now it's moving away from flat rate. So it doesn't look like much, but it is expected to give a bump to, you know, underlying profitability for banks. Banks can finance M&A. I mean, you know, so far, banks could essentially fund acquisition of underlying assets, but not equity shares. Now they're allowed to do it. So we'll see how much of this, I mean, does the capability exist for banks internally in terms of people and systems, etc., to be able to price some of this? And will we see a big wave of M&A because of this? We'll see. But in any case, I mean, it's good because companies were going for private credit, dollar-denominated debt, higher cost. So all of that is easier now. NBFC risk weights lowered for infrastructure, so PFC, REC. So basically for operational projects, lower risk weights. Withdrawal of the 2016 large borrower guidelines. So basically there was a 2016 circular which discouraged lending to borrower entities having aggregate sanction limit of over 10,000 crores. This basically has been repealed. There is also loan against shares, which has been for banks, which has been enhanced to 1 crore. So it's a 5x jump. For NBFCs, it is still larger. This is for banks. Now, easing restrictions on transaction accounts, so current account, OD, etc. So this again is important because most of the current account is with banks like HDFC Bank and private players who are good in transaction banking. And the rule said that if you have less than 10%, to be able to have the current account with you, you've got to have more than 10% exposure to a given entity, borrower entity. So this was creating some amount of anxiety that's been now eased. Discussion paper for granting new urban cooperative bank licenses. And of course, just simplification, 250 master directions to replace lots of scattered circulars. So it was a monetary policy, but not very much in terms of monetary policy itself. A lot of easing essentially aimed at unshackling banks, if I can put it that way. Which of these measures? You think that M&A bit or what struck you, Anish?
So look, overall, if you take them in aggregate, right, they do free up the banks to undertake more activities. Yeah. And those activities were otherwise being undertaken exclusively by NBFCs or by less regulated entities. So in that sense, it kind of reduces or it expands the boundary in which banks can operate, right? So it's good for banks relative to NBFCs. Now, so the way I see it, right, the banks have the advantage that they can raise deposits. NBFCs don't. And where the NBFCs traditionally had the advantage was that they were exempt from some of the statutory burdens, like their CRR, SLR, and priority sector is lower, right? So the NBFCs had the advantage that they don't have these statutory costs. Now, if a bank can also open an NBFC, so they will, to the extent that they can raise deposits, they will do the activities within the bank. Once you exhaust your deposit raising capacity, you can, through an NBFC, operate and compete with other NBFCs. So it does place NBFCs at an advantage relative to the banks. Banks at an advantage to them.
The private credit market was, you think all that gets squeezed now? I mean, why do you...
I mean, it doesn't happen immediately, but yes, banks will obviously develop the capabilities and then also step into some of those segments.
Because there was,
those were restricted, yeah.
Those were restricted, right?
Yeah.
But that space was booming, so maybe...
so the banks will obviously venture into that space because it is a profitable space.
One of the big calls for you, Anish, has been that housing is central, right, to your entire thesis. That
yes.
That is essentially what needs to do well for the economy to do well.
Yeah.
Are we, what's happening there overall? I mean, it's a very sort of city-specific, state-specific subject. It's not, it's not the same all over. But is the music slowing? Is it still high tempo?
So it has slowed, right? And in fact, so I've always said that I can't imagine the economy not doing well if housing sector is doing well. And similarly, I can't imagine the other way around also. Right? So housing is fundamental to economic growth. And you can see that, right, after 2020, once stamp duties were cut, the revival came when economic activity. And in the last 6 months or so, what we have seen is that the pace of growth has slowed, certainly. And there is, in fact, new housing sales might have dipped a little bit. Now, hopefully, what should happen is that developers should realize that, look, you're not being able to sell at these prices, so you give some incentives, etc., and that should lead to the momentum coming back. And that, frankly, if we are sitting here 18 months later or 12 months later, and if we say, hey, the economy hasn't done as well as we thought it would, the most likely reason would be that housing didn't pick up. So I do think, yes, there has been some slowdown, but I'm not, I would be optimistic that
It
we
picks
should
up.
see it picks up again.
And any Bombay, NCR, I mean, these are two big value-wise big markets, right?
But actually, from an economic activity perspective, it's the square footage that matters, not the value, right? Because you need economic activity is driven by, how much cement do you consume, how much steel do you consume, how many workers are employed in building that house, right? It's not.
Any thoughts specifically on this market and NCR? Or
no, look, across. I mean, there is the pace of increase has definitely slowed, right? Now we need to see how the developers respond and
in terms of incentives,
incentives and pricing and all of that to see that revive.
Anish, just stay on. We need to slip into a very short break, but we'll come back and talk about the IT sector. TCS reports numbers next week on 9th of October. Stay tuned. Welcome back. You're watching Editors Roundtable. This week, we saw the Nifty gain about 1%. The Midcap index gained close to about 2%. Banks, metals did exceedingly well. But looking ahead to next week, well, there are two big cues. One is the IPO market is red hot. Nearly 30,000 crore worth of paper is hitting the markets next week. Tata Cap will be the big one, 15,000 crore. LG Electronics, about 12,000. And then the WeWork offer for sale of about 3,000 crore. So we'll test the market's appetite for liquidity and interest. But secondly, even the earnings season kicks off, and it starts as always with TCS on 9th. But the following week is when we're going to get bulk of the big earnings. So whether it's Infosys, Wipro, HCL Tech, all of them will fall in the 13th to 18th week. So what do you expect now? For starters, Q2 is likely to be a fairly stable quarter. There is no improvement in demand, but there hasn't been a deterioration in demand. In terms of revenue growth, Infi is likely to lead 1.8%. You've got about a 1.5% revenue growth expected from HCL Tech, Tech Mahindra. TCS could be a bit tepid, just about 0.3%. The rupee depreciation of nearly 2.5% has turned out to be a tailwind for margins, and that could absorb some of the AI-led deflation, any pricing pressure. So margins, at least, cursory, there should be some expansion in margins when we looked at Infi and TCS in Q2. Infi by about 50 basis points, TCS by about 20 basis points sequentially. And also wage hikes have been largely on hold so far at least. So what will you watch? In terms of guidance, for Infosys, only if the upper end is changed will it be material. Now, when Infi came out with their guidance, they were very conservative at 1 to 3%. Actual estimates were always between 2, 2.5, going up to 3%. Now they've also done one acquisition which is not priced in, but the street is saying that maybe they'll tighten. They'll bring the lower end of the guidance up, but only if the upper end, that's 3%, is tweaked and raised, will it be material? But that's not expected. HCL Tech is likely to keep the margin revenue guidance unchanged at 3 to 5%. What will you watch? Again, AI-related deflation, because the Cognizant, management, when one of the analysts met them in a non-deal roadshow, they indicated that the AI-led deflation in renewals is actually quite high. So any sort of pricing pressure, the H1B, there is going to be an impact on the cost of on-site. That's going to be tracked very closely. But broadly, the Nifty IT has been such an underperformer, 25% underperformance year to date, with the Nifty IT index down 21%. Anish, is tech a part of your portfolio or not at all?
So in the portfolio that we take sector calls, which is our business cycle fund, if you see, we've been, and this is the published portfolio, we've been zero tech for a while.
Zero tech.
And my logic was that there was a lot of optimism built around demand recovering in the US. And when I look at the US economy, it's actually doing very well. So I could not buy why the Fed should do aggressive rate cuts because the economy is already in good shape. And frankly, I think the economy is more likely to weaken than strengthen from here. Right? So I think the sector will continue to face headwinds for growth. Also, I think, when we talk about the Indian IT sector, we must remember that it's not just the Indian listed IT companies. GCCs are also part of the Indian IT sector. And it's the GCC sector that's been gaining at the expense of the Indian IT vendors. So the sector overall is not doing that badly, actually. Yeah. It's the shift from Indian vendors to GCC.
We picked this interesting data point from the Naukri JobSpeak Index. We spoke with the person, Pavan, leading it, and he said the hiring for GCCs in this September quarter was only 4%. The prior quarter was also 4%. And even the Jan-Feb-March quarter was only 2%. So it's not that the GCC hiring, although it's doing very well, so maybe AI,
No, the reason I think, this is number of people, right?
The number of people, like the JobSpeak Index, what they track is
so basically in
2 to 4%
GCCs, the larger guys are all already here.
Yeah.
Now, there are 2 opening every week, right? But the guys who are coming, they are smaller. The size is much smaller. The Deloittes of the world, JP Morgan of the world, they're all here.
They're not hiring anymore now. So he said at least the existing big guys are not.
So in terms of the number of seats, if you look at, those are now smaller, specialized, high value. But in terms of numbers, actual specific numbers, another thing, Rima, we speak about this. By the way, that they talk about IT, right? Infi, yesterday, OpenAI finally concluded that secondary share sale, valuing the company at $500 billion. Did Infi, we talk about that investment that Infi, did it actually happen or they thought about it?
They thought about it. I think Sika went with a board approval as, sort of like a...
I remember the figure quoted at that point was $1 billion. That's what articles, etc. say.
But I don't think it went through. But I think he went with a proposal is what, reports. But, Anish, in your blue chip fund, 75,000 crore, you're sitting on 8% cash. You're fairly optimistic about the economy recovering. So when will you deploy this 8% cash? In what? So tell us a little bit about that.
So, see, the way I see it, right, if I'm measured relative to a benchmark. So if I feel, look, there are parts of the market that are overvalued and I'm better off relative to that part of the market holding cash, I'm always willing to hold cash. So I don't see cash as that much of a burden. But yes, if valuations correct more, I will.
But do you think in cement and autos, where you are bullish, valuations are okay? Because we were chatting with the Goldman Cement analyst. He has only one buy call. He said cement will do well, etc. Pricing has been resilient, blah, blah, blah. But he said valuations are expensive and therefore he has only one buy call in the sector.
Yeah, so look, across the board, valuations are not cheap anywhere, right? The question is where can you get the greatest earnings inflection to support those valuations? So I would still say cement, you could
So you will buy now at this juncture?
Oh, I can't tell you what I will do at this juncture. That wouldn't be fair. But my published portfolio is still...
What about the view on metals?
Metals, I'm light, right? And the real reason is, if you look at most metals, demand is declining because China is 50% of demand, right? Ferrous metal demand in China is declining. And if you have Chinese demand declining, no matter whatever gymnastics you do on the rest of the demand, you still get...
But anti-involution, that's not good enough.
See, when an industry has excess capacity and taking out capacity doesn't improve the economics beyond a point, right? It allows the industry to survive. It doesn't improve the economics beyond a point. So actually the bigger argument is, yes, Chinese government will take out capacity and then the Indian government will give bigger safeguard duties. Frankly, how optimistic should one be on an industry where if you need 2 governments to support your buy case, right? So I'm kind of light on
the sidelines.
I have to congratulate you and Naren. I think, the duo were the first to really start talking about this 2.5 years ago, thumping the table on multi-asset funds, if you remember, right? And it's worked out beautifully.
Yeah, partly...
It's played out wide. They proved the reason for existence of those funds. Huh?
No, we've always been big on asset allocation products, on hybrid products. And I do think it works for the investor because the thing is those funds deploy in assets that are out of favor. Right? And it's generally works in the investor's favor.
You think that still is the way to go, broadly?
Oh, I mean, multi-asset funds and asset allocation products would be evergreen products. I don't think there's ever a time where you say, look, you shouldn't do multi-asset funds or asset allocation.
Okay, great chatting with you, Anish. Thank you very much for coming to our studio. Enjoy your weekend. Well, that brings us to a close in this edition of Editors Roundtable. Goodbye, and we'll be back Monday morning. Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. A positive close of Friday takes Sensex and Nifty higher by 1% this week. All sectoral indices gained this week. Midcap index and Nifty bank outperforms with 2% gains. Rupee remains on a tight leash but closer to the 89 mark against dollar. Gold prices continue to hover around record highs. Yellow metal has gained nearly 50% so far in 2025. Crude oil prices eased to a 4-month low. India's rise as a global force is neither accidental nor transient, says Finance Minister Nirmala Sitharaman. Also adds, the absolute dominance once enjoyed by a hegemon is now contested. India will not allow humiliation, says Russian President Vladimir Putin. Tariffs, 50% tariffs imposed by the US over India's oil trade with Russia warns global oil prices could move higher and India would suffer losses of up to $10 billion if it stops buying Russian oil. After 5 years, India and China will resume direct flights by the end of this month. Indigo announces the first flight from Kolkata on the 26th of October as relations between both nations thaw. At least 8 children died due to suspected cough syrup poisoning in Madhya Pradesh and Rajasthan. Authorities in both states and Tamil Nadu collect samples for testing. Kesan Pharma and Srishan Pharma are the two companies under the lens. Abu Dhabi's international holding company set to acquire 41% stake in India's Samman Capital for $1 billion. Also plans an open offer for an additional 26% stake in a milestone transaction for the home finance company. The WeWork India IPO sees a tepid response on the first day. The co-working space provider also faces a legal hurdle. Two investors move Bombay High Court alleging inadequate disclosures. Indian Air Force Chief says 4 to 5 Pakistani aircraft, most likely F-16s, were destroyed during Operation Sindoor. Air Chief Marshal AP Singh says the jets were on the ground at the time of the strikes in what is his first detailed account of what happened early in the month of May. ChatGPT maker OpenAI is now the most valuable private company in the world. Employees sell shares worth over $6 billion at a valuation of $500 billion. Elon Musk, SpaceX and China's ByteDance are valued around $400 billion. All right, let's start with the day's market action. A positive close on Friday helped Sensex and Nifty post decent gains this week. Sensex gained over 200 points and the Nifty gained over 50 points to end at the high point of the day. Midcaps outperformed the blue chips with gains of nearly 1% for the week. Sensex and Nifty gained 1%. Midcaps and Bank Nifty fared better than the blue chips for the week as well, gaining nearly 2%. Crude oil prices surged after 4 consecutive days of decline. This after a fire broke out at one of the largest refineries on the US West Coast. Oil prices are on track for their steepest fall since late June. Meanwhile, gold prices held steady and are on track for the 7th consecutive weekly gain. The yellow metal has been rallying on the back of expectations of further US Fed rate cuts and concerns over the impact of the US government shutdown. Right, gold prices have rallied nearly 50% so far in 2025. Compare this to the Nifty, which is posting negative returns of over 3% in the same period. Will the gold rally continue? Nigel D'Souza is here with the analysis.
Well, ever felt like you missed the gold rally, even though you were watching it closely? Well, let's focus on gold ETFs and the correlation with gold prices. Now, since the first gold ETF was launched in 2004, ETF gold tonnage and gold prices, they moved in sync. It's almost like dance partners. And that correlation stayed from around 2004 till around 2021. But around 2022, the music changed. Gold ETF tonnage dipped while gold prices spike up. That's when many investors have felt left out. The tonnage in the last few months, well, it's tried to bounce back. But that gap still remains. And here's the kicker. Gold prices are up 80% since 2022. Jumping from around $2,000 to around $3,800 an ounce. Yet, the ETF holding today is around 3,800 tons, which is short of that 4,000 ton mark that we saw in 2021-2022. The next point is, equity markets have lagged, but Indians are feeling rich. Why is that? The Nifty is down by close to around 3 to around 4%. However, gold prices are up by close to around 50%. Keep in mind, India imports anything between 600 to around 700 tons of gold annually. But Indian households, well, they are estimated to be holding more than 25,000 tons of gold, which means at today's prices, the holding that Indian households have is close to around 290 lakh crore. That compares with around 190 lakh crore just a year or so ago. That's an astonishing 100 lakh crore of wealth creation in just a year for Indians. That feel-good factor is definitely playing out. And the final point I want to make is silver the new gold? Well, remember, we look at a couple of ratios. The gold-silver ratio, earlier this year, it was close to around 95 to around 100. Now, the gold-silver ratio has come down to around 80. Silver, well, it's a quasi-precious metal. Part investment asset, part industrial workhouse as well. It's used in solar panels, EVs, 5G, and keep in mind, supply is tight. Now, the reason I'm asking whether or not silver is going to be breaking out, because in 1980, there was the Hunt brothers that went ahead and they collected or they tried to corner silver. And at that point of time, silver went to around $50 an ounce. Gold in 1980 was around close to around, $800. Then in 2011, we saw silver again visited, that $50 an ounce, while gold moved to around $1,800 an ounce. Post the speculative action, we did see that silver prices corrected both in 1980 and even in 2011. However, this time around, silver again is at around $50 an ounce mark, while gold has moved to around $3,800 an ounce. So has silver's time come? Is it that batsman that's hit that 50 runs and it's on its way to a century? It needs to break out past that $50 an ounce mark. Keep an eye out on silver. It's got fundamental backing and it's got a lot of interest as well. But can it break out? That's the big question.
Right. Thank you, Nigel, for that. RBI Governor Sanjay Malhotra has said that gold prices are now showing the kind of momentum once seen in oil. Speaking at the Kautilya Economic conclave, the governor added that the precious metal could serve as a barometer of global uncertainty.
Despite geopolitical tensions that would have sent oil prices soaring in an earlier decade, they have been very range-bound. This could be due to a decline in oil intensity of GDP, not just in India, but across the world. Perhaps gold prices now are showing the kind of movement that oil used to, that is acting as a barometer of global uncertainty.
Finance Minister Nirmala Sitharaman says India's rise as a global force is neither accidental nor transient. Speaking at the same event as the RBI governor, FM Sitharaman said the absolute dominance once enjoyed by a hegemon is now contested.
For decades, many Asian nations absorbed the material gains of globalization without adopting the same political values that represented or underpinned the Western society. Today, they assert alternative models of growth and governance, drawing on their civilizational continuities. Their emergence questions the assumption of the Western liberal values are the only path to economic success. These nations have become central pillars of the global order in economic, political, and technological terms. The absolute dominance once enjoyed by a hegemon is now contested.
Russian President Vladimir Putin has hit out at the United States over its tariffs on India for purchasing Russian crude oil. Speaking at a panel, Putin said that New Delhi would never let itself be humiliated. He also warned that global oil prices could move higher and India would suffer losses of up to $10 billion if it stops buying Russian oil. The Russian leader also said that Moscow could consider purchasing more agricultural products from India. Parikshit Luthra has more on this. Parikshit. All right, we'll try and establish that link with Parikshit again. But moving on for now, after a 5-year hiatus, India and China will resume direct flights by the end of this month. The External Affairs Ministry has said that the move will further facilitate people-to-people contact between India and China and contribute to the normalization of bilateral ties. Following the announcement, Indigo said it will resume flights from Delhi and Kolkata to Guangzhou from October 26th. The Trump administration has reportedly delayed its plans to impose 100% tariffs on patented and branded drugs not manufactured in the U.S. Reports suggest that the White House is attempting to negotiate drug pricing agreements with pharma companies to make them immune to the levies. This comes after Pfizer sealed a deal with President Trump to voluntarily cut prices of some drugs by up to 85% in the U.S. Eli Lilly is also in talks for a similar deal. Earlier this week, Commerce Secretary Howard Lutnick said he will let companies finish their negotiations with the administration before setting pharmaceutical-specific levies. The U.S. government shutdown has entered its third day after Republicans and Democrats failed to reach a funding agreement. The first shutdown in 7 years has put thousands of federal workers on furlough. In an interview, President Donald Trump warned that there could be firings and more project cuts if the shutdown persists. He also said that Republicans must use this as an opportunity to clear out dead wood. WeWork India's IPO has hit a legal roadblock on its first day. Investors Hemant Kulsheshra and Vinay Bansal have moved the Bombay High Court against SEBI and the company, alleging inadequate disclosure of civil and criminal cases against promoter Karan Virwani and his family. The petition also warns that the loss-making firm's offer for sale exposes retail investors to unnecessary risk. Meanwhile, the 3,000 crore rupee IPO itself has had a slow start. As of 4 p.m. on day one, the total subscription stood at a mere 3%. The retail portion has been subscribed by 13%, while now institutional buyers seem to be exercising caution. Shares of Sammaan Capital decline in today's trade. This after the lender said Abu Dhabi's international holding company will pick up a controlling stake in Sammaan Capital by investing nearly $1 billion or 8,850 crore rupees. Sammaan Capital's board has approved a preferential allotment of 330 million shares and over 300 million convertible warrants. The deal will also trigger an open offer as per regulations. It marks IHC's foray into the financial services sector in India.
We were already very well capitalized at a capital adequacy of close to 30%. So this was not a capital requirement. This was a partnership requirement. This was a reinvention requirement. And to be able to build that 4 pieces of debt on this 1 piece of equity, that 4 piece of debt in our current structure would have costed us 150, 170 basis points more than what it will prospectively cost. My estimation is that 12 months from now, or 18 months from now, 6 months after the approval, we should be 170 basis points.
Right, on to a CNBC-TV18 exclusive. Shares of UPL surged on possible talks with PepsiCo for a multi-year supply agreement. Sources tell us that PepsiCo may mandate use of UPL agrochemicals for global contract farming operations and also its gel-based technology for water conservation. Both UPL and PepsiCo have yet to respond to CNBC-TV18's queries. Now, 6 children have died in Madhya Pradesh in just 2 weeks after cough syrup that is suspected to be toxic. After consuming that cough syrup, which is suspected to be toxic. Now, 2 children in Rajasthan also died after taking government-supplied syrup. The cause is suspected to be the presence of toxic chemical diethylene glycol in these syrups. There have been past instances of this chemical being present in Indian cough syrups, and we've seen this in Jammu and exports to Gambia as well. Timsy Jaipuria has more. Timsy.
Well, in a detailed analysis post the suspected deaths of children at Madhya Pradesh and Rajasthan over alleged consumption of contaminated cough syrup, sources have told CNBC-TV18 that the teams of National Centre for Disease Control and state drug controllers of Tamil Nadu, Madhya Pradesh and Rajasthan are currently probing the matter. Sources shared that the NCDC teams have collected cough syrup samples for testing, and the 2 companies under the government lens for manufacturing the alleged contaminated cough syrups are Kasan Pharma of Rajasthan and Srisan Pharma of Tamil Nadu. Given the deaths, the state regulatory authorities at Madhya Pradesh, Tamil Nadu and Rajasthan have imposed an interim ban on the distribution of the suspected contaminated cough syrup. The drug samples are being tested by state drug authorities at all the 3 states and by NCDC are currently underway. The reports are currently awaited. NCDC has sent the samples to NIV Pune, and it is understood that these reports are expected shortly. Meanwhile, the initial assessment is that the authorities, they are expecting that these alleged deaths happened due to the toxic chemical diethylene glycol, DEG, which could be of the industrial grade, which was used in these generic cough syrup, that is Coldriff, that may have caused these deaths of children. At the state level, the health departments of Rajasthan, MP and Tamil Nadu have issued advisories to parents, doctors and pharmacies over the suspected contamination of Coldriff, and they have been issued an immediate recall of Coldriff stocks. Also, existing stocks have been frozen for any further sales. Just to give a sense of the tragedy so far, 6 children reportedly died in MP's Chhindwara due to kidney failure, and these deaths are linked to the suspected contamination of the cough syrup, which was consumed, and they were reported on 4th of September. Similarly, recently 2 children reportedly died in Rajasthan's Sikar and Bharatpur, again post-suspected consumption of Coldriff as the cause of the deaths. In the past, some cough syrup tragedies which took place included the one in 2020 in Jammu and the other where these cough syrups were exported in 2022 at Gambia, where it was seen that they were also due to DEG-related tragedies. Meanwhile, Union Health Ministry is also assessing the matter with utmost importance and is likely to come up with a detailed report. We'll keep you posted on it.
All right, thank you, Timsy, for that update. On that note, it's time for a short break. Coming up next, ChatGPT maker OpenAI is now the most valuable private company in the world. Employees sell shares worth over $6 billion at a valuation of $500 billion. More details when we return. Right, welcome back. The government has unveiled the draft rules to regulate the online gaming and e-sector. Now, as per the framework, online gaming companies will have to register with a new central authority headed by an additional secretary in the Ministry of Electronics and Information Technology. This body will determine if an online game qualifies as a money game. It will maintain a central registry, investigate complaints and impose penalties such as suspension or cancellation of licenses. The Online Gaming Authority will also include 3 members who are joint secretaries in the central government. For the first time, esports will receive formal recognition and promotion through the Ministry of Youth Affairs and Sports. The draft rules are open for public comment till October 31st. Indian Air Force Chief Air Marshal A.P. Singh has said that 4 to 5 Pakistani aircraft, most likely F-16s, were destroyed during Operation Sindoor. The Air Marshal said the jets were on the ground at the time of these strikes in what is his first detailed account of what happened early in the month of May. He also added that India needs to add nearly 40 aircraft per year to its Air Force to be in a comfortable space.
We have signs of one C-130 class of aircraft, one AEWC class of aircraft, and at least 4 to 5 fighter aircraft, most likely F-16, because that base happened to be F-16, which would have been under maintenance that time. Along with that, one SAM system, which has been destroyed. And so these are the strikes that, the destruction that has taken place on ground by our strikes. अगर वो सोचते उन्होंने मेरे 15 जेट गिराए हैं, उनको सोचने दो. I hope they are convinced about it, and they will cater for 15 less aircraft in my inventory when they come to fight again.
At least 57 Palestinians have been killed in Israeli strikes and gunfire in Gaza. Israel's army has used remote-controlled vehicles packed with explosives to demolish entire neighborhood in this besieged city. This, as Hamas has said, it's considering US President Trump's peace proposal, which would require the return of all Israeli hostages. Russian President Vladimir Putin has warned of a whole new level of escalation in Ukraine if the US were to supply Tomahawk missiles to Kiev. Responding to questions at a forum, he said the supply of such missiles could change relations between Moscow and Washington. He added that the Russian army is making slow but steady advances. OpenAI's value soared to $500 billion after a major secondary share sale in which current and former employees sold stock worth $6.6 billion. The jump pushes the ChatGPT maker ahead of SpaceX and ByteDance in terms of private market valuation. Rachna Dhanrajani is here with more. Rachna, please tell us about OpenAI's journey to this milestone.
That's right. OpenAI's valuation has surged to $500 billion, making it the most valuable private tech company in the world, ahead of SpaceX, which is at about $400 billion, and ByteDance, that's estimated to be roughly between $300 and $400 billion. Now, the growth has been staggering. In October 2024, OpenAI was valued at $157 billion. By March this year, it hit the 300 mark, and now, just 7 months later, the 500 billion mark has been achieved. This wasn't achieved through a fundraising round. OpenAI did not issue new stock. Instead, employees and former staff sold $6.6 billion worth of shares in secondary sale. And the buyers are heavyweights like Thrive Capital, SoftBank, Dragoneer, Abu Dhabi's MGX and T. Rowe Price. SoftBank had already led a record $40 billion round primary, which was a primary round in March this year. Then there was Nvidia that has pledged up to $100 billion through 2030 to secure AI infrastructure with OpenAI. Behind the valuation is strong business numbers. OpenAI generated $4.3 billion in revenue just in the first half of 2025, already exceeding the entire revenue they did for 2024. And the supply deals going from here on are also massive. There's a $300 billion partnership with Oracle, which is over 5 years starting in 2027, which is to expand supercomputing capacity. Plus, deepen ties with Nvidia, like I spoke about before. This will be a procurement agreement for advanced GPUs and systems. These are the backbone of OpenAI's scale. Then there's Project Stargate, a planned $500 billion supercomputing hub over 4 years. And if completed, it could be one of the largest technology infrastructure projects ever in the world. And the politics are also unmistakable. In September, CEO Sam Altman met with Donald Trump, underlining how AI is now tied directly to national strategy and global power. So what we're seeing is not just investor enthusiasm or employee cashing in, it is OpenAI going big, all in, but all of it is happening off the public markets.
All right, thank you, Rachna, for that update. With that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18. Thank you for watching.
Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. Well, the festive season is here, and let me start by wishing all of our viewers a very prosperous and happy season filled with celebration, laughter, and good wishes and good vibes. So here's a big shout out going from the entire team that puts this show together to all of our viewers. Now, this is that time of the year when we really feel like rewarding ourselves and our families. And why not? We've all worked hard through the course of the year. But the tricky part is, how do we do this without breaking the bank or without breaking our PF plan and entirely tearing it apart? When helping us perform this very tough and delicate balancing act this season is Harshvardhan Rungta, who's of course a certified financial planner himself. Harsh, thank you so much for joining in. Looking great. Greetings of the festive season to you as well.
Thank you so much, Surbhi, and greetings to you and all our viewers for that.
Thank you so much. So the season has only begun with the whole Navratra and Dussehra excitement, and it's all the way up to Diwali, right? And let's face it, when we all want to, this is what we try and save up for or reward ourselves for. And this year you have the GST cuts, etc. So generally there's a feel-good factor in the air.
Absolutely. And in fact, the primary purpose of earning is to support your family, to spoil them, to spoil yourself. So if it's well within reasonable range, I mean, why should you not spoil yourself and spend for yourself? I mean, what else are you earning for otherwise?
This is where it's tricky. When you talk to planners, they say, of course you should go and spend. Of course you should enjoy yourself. But within the rules and within the reasonable limits. So okay, let's start with this. What are these reasonable rules of spending that you adhere to?
So see, very simply, Surbhi, I mean, there has to be, when you're planning, okay, when you're creating your financial plan for that matter, you keep some spoil me fund, okay?
A spoil me fund.
Yeah, of course. I mean, why not? I mean, every individual has aspirations to own something that they like. It could be watches, it could be shoes, it could be pens, it could be cars, bikes, it could be anything for that matter, right? And if you're going to, put in so much of effort to earn, there are a lot of sacrifices that an individual makes, right? Now, if you're not going to be able to do, or rather spoil yourself during your earning years, then it doesn't make sense, right? The level of dissatisfaction is going to always be there. Now, the trick is what? You should also know one fact for sure. There are some things that you can do when you're in 20s. There's something you can do in 30s. If you postpone that for 60s, it's not going to help you. Right.
So, you're sounding very encouraging. I like this idea that, spend, you should spoil yourself to an extent. But what is the spoil me fund? I mean, you have an emergency fund, you have the investment corpus, and you have the retirement fund. Now, where is the money then? What to put in the spoil me fund?
Exactly. Now, this is where early planning comes into play. So take an individual. Okay, so we're talking about people who are just getting into workforce, for example. So they are like, say, 20s, they're in the mid-20s. And at that point in time, if you instill a good discipline, which to say that whatever you get in your hand is net of TDS, like tax is already deducted and you get in your hand. You deduct another 20% out of it to say that this money is not coming into my hands.
Okay.
And that 20% is essentially for all your plans. So it could be short-term emergency, it could be your short-term goals, long-term, spoil me fund, holiday fund. It could be anything.
Okay.
Now, if you started early and you started in the right manner, then you will be able to achieve all of this all throughout your life.
So 20% of your take-home salary needs to be completely set aside for a proper PF plan.
Yes.
Which will include a lot of these factors: retirement, short-term goals, spoil me fund, if I got you right.
Absolutely. So, in fact, that's the whole idea, because if you cannot save 20% of what you're earning today, imagine a time when you have no income. Then how are you going to fund yourself? So if you can't even set aside 20% today, it's going to be a big disaster going further when you have no income coming your way.
It's a very reasonable ask. I must say that compared to, and we have so many experts and planners coming on the show, some really scare us. But I think saving 20% from your income every month and then investing it right, saving it right, putting it in an emergency corpus, etc. I think that's a very reasonable ask. So it's a good place to
Just
start.
One correction here. 20% is for those who are in the 20 to 30 years bracket.
Oops. Okay.
So
there's the catch.
So if you miss that bus, or rather if you've already missed that bus and you're in your 30s, then the percentage saving has to go up.
Okay.
Because you missed that 10 years of the golden period of compounding as well. If you get into your 40s and 50s, then the percentage saving has to go up. So that's the price you pay for delay, is what we will talk about.
For those who lived a good life throughout their 20s, didn't adhere to your 20% savings rule, in the 30s, how much do they have to set aside?
Probably 30 to 40%. But that's the price you pay for not starting early, right?
For not starting early. Fair enough. So start early, start saving, start investing. And then You are allowed to spoil yourself, says our expert. So we have something very interesting that we're going to do on the show today. They say that, charity begins at home. For us here at CNBC TV18 on Let's Talk Money, financial planning also begins at home. So what we've done is that we usually take a lot of questions from our viewers, but for the purpose of this show and this season, we had a fair amount of in-house queries coming in, Harshvardhan, on how do I decide whether I can afford this festive season. So we have a couple of my colleagues, and they were kind enough to, actually let it out.
Oh, great.
But I really want to get to the questions. With your permission, should we start?
Yes, of course.
Okay.
I'd love to hear what they want to do because I've been meeting them off the camera.
Absolutely,
and
yeah.
this time, yeah.
Then you can grill them more. So, okay, let's kick it off. Parag, who's the force behind our ticker team, he's joining in as he's planning his festive shopping and his festive splurging spree. Parag, what do you have in mind?
Hi, Surbhi. Just the festive season is coming, so I'm looking to buy some jewelry, platinum jewelry in specific. It will cost me around 80,000 bucks. So
wow, lucky, the lucky lady in the life. I don't know, the special someone.
Currently,
whoever.
it's just my sister, Surbhi, but soon I can give you another good news soon.
Oh, wonderful, wonderful.
Yeah.
So platinum jewelry worth 80,000. But I'm very sure Harshvardhan will want more details. Some idea of your annual income. It could be, salary, interest, whatever, all your income sources put together. And some idea of your expenses and current investments or savings as well.
Certainly, I'll give you a little bit of an idea. So my annual income is around 16 lakhs. Monthly expenses comes around 10,000 bucks. And other than that, I have at least 6-month coverage in case something awry happens. So these are my specifics, if you have any suggestions regarding that.
What a good boy, Parag, huh? Managing to limit your monthly expenses to 10,000.
Yeah,
I want to run away. I want to hide under this table right now. But Harsh, you heard him. He's looking for, spending 80,000 rupees on jewelry this year.
So, well, Parag, congratulations to you. I mean, I'm surprised myself that you can sustain with a monthly expenditure of 10,000 rupees.
I try my best.
I think Parag should take a session on how to live
within your means, how to live frugal,
So there are two elements to this. One, of course, it's a gift that he wants to give to his sister. So I think that's a good emotion. That's a good gesture for that matter. Considering looking at platinum, I think he's smart again. Because had it been
he's not chasing gold.
He's not chasing gold. Because gold has, I think, just gone through the roof and through affordability quotient of many people. So I think platinum is a good idea. And if you look at the numbers, okay, so earning an X amount, spending Y, that he's already mentioned, I think there's enough room for him to at least take this plunge for something like this. Platinum again. Okay, let's put it into two different categories again. You would have some purchases that would be depreciating assets.
Yeah.
Okay, some would be appreciating in that context. So platinum also falls in that category where over a period of time you're expected to have an appreciation in the value as well.
But this is not an investment, right? We need to make that distinction that since this is a gift and that to jewelry, it is not looking at precious metals like platinum from an investment angle.
No, so we're talking about the sensibility that goes behind buying something. So if you're buying into, say, platinum jewelry, for example. So one, of course, it serves that emotional quotient that we're talking about. I mean, it's a gift to sister, of course. I mean, great thing to do. The other is it's also not a highly depreciating asset. So in case tomorrow, in future, for that matter, if his sister wants to liquidate, there is free liquidity to that extent. So I think, given the income expenditure, given what he's buying, the quantum, the size of the purchase, which is 80,000 rupees, Parag, please go ahead. I mean, you've all the liberty to go ahead and spoil yourself and your sister for that matter.
Wow, well done, Parag. You're getting a full thumbs up, and our planning expert is telling you, giving you the green flag. Go ahead and enjoy the festive season. Thank you so much for joining in. I'll let you get back to work. Okay, I think we've got Ishita joining in as well. Okay, Ishita will join us in just a bit. She's got some ideas. Now, I just want to ask you here that appreciating assets are very few. I mean, you'll come down to gold, silver, maybe someone wants to book a house, fine. But largely, otherwise, festive spends are all depreciating in nature. Whether it's a car, whether it is a pair of new shoes, whether it's, a fancy new 60-inch TV. So then how do you, look at the expense versus the return?
So, Surbhi, there is a cost-benefit analysis. The value is, if you're spending something, what is the value that you're getting?
Yeah.
Okay, so if you're buying into a very large television set, as you mentioned, why are you buying that large television set? Okay, and if you're buying it for say some sound quality, or you're looking at some the quality of the picture, etc., then you might want to go in for a branded, a high value item for that matter. I'm not taking names of the brands because we don't want to get into that zone.
Yeah.
But if you're looking for a large TV which does not have a top end feature kind of a thing, then you may possibly look at something which is reasonably available at a lower price with the same size. If you're a gaming enthusiast, then you might want something else in that television. So I think most of the buyers miss that point as to what are you paying for and what are you getting.
Ask for the specifics. Why do you really want it?
So
and whether it's worth the price.
There's something called features, benefits, and advantages. So every feature will have certain benefits, but do those benefits really are advantages to me?
Now, I think our next participant will really want to talk to you about this. I have an inkling that she's looking at a phone, but let's find out more. Ishita, who's such a vibrant member of our production team, our desk, which puts all the amazing market content for you together through the course of the day. Ishita, go on. Welcome to Let's Talk Money. Great to have you as a participant. What do you want to buy this season?
Well, thank you so much for having me, Surbhi. I am actually, as you mentioned, looking to buy a phone, specifically an iPhone. I'm planning to upgrade my phone to the new iPhone 17 Pro Max. My salary is in the range of 12 to 15 lakhs, and my monthly expenses come up to 40 to 50,000 with the rent and all the other expenses. I do have some SIPs and a few savings, and I don't have any EMIs, but given how expensive the iPhone is, I was wondering how I can go about it.
Yeah, good point. Ishita, just wondering, your SIPs and whatever you manage to put in as monthly investments, roughly what would that amount be? 5,000, 10,000? How much are you able to invest every month?
I think between 5 to 10,000, that's a good range.
That's what you do every month. Okay, all right. Thanks. Let me ask Harshvardhan what the right approach is. Now, what we were just discussing, Harsh, the cost-benefit analysis. For someone my age, I mean, I'm still on an Android, and you can convince me saying you really need it, and it's okay, phone to phone hai. I mean, how much do you need? But Ishita is from a very different generation, right? So iPhone 17 Pro Max.
So, well, I'm on Android myself, and
we're outdated.
We're outdated, I guess. And see, again, with Ishita's specific case, I mean, understand a few things. The income is, between 12 to 15 lakhs.
Yeah.
The phone that we're talking about is the top-end model of the new launch. Okay, so that's about 1.5 to 2 lakh rupees.
Yeah.
Now, if you compare it from the expenses that she incurs every month, it's almost 5 months' expense. If you're going to buy this phone, it's equivalent to 5 months of your monthly expenditure.
Yeah.
And she says she wants to upgrade. So the real questions to ask would be, why do you want to upgrade? Is your existing phone not serving the purpose? Is it that you like the new design, color, or you just want a latest phone in your hand?
Yeah.
Well, all in all, I would want to disappoint her a little bit to say that doesn't sound like a very fine advice. I mean, decision to make. I mean, she should avoid this kind of a purchase at this stage, because if you also notice, we discussed the quantum of SIP, which is 5 to 10,000 rupees.
Yeah.
Well, there is really a lot of scope to increase that. If we talked about 20% of the income take home should be investments. Now, if she's taking home, say, about 1 lakh a month, the investments are only to the extent of 5 to 10,000 rupees. Now, that has to go up to 25,000 rupees at least. So if you spend this kind of money on a phone, then you're squeezing yourself and depriving your own self of future needs that you may have.
Here, just a quick follow-up question, because I'm very sure Ishita has already done the search, but a lot of these, high-ticket electronic items are available on financing as well. And financing offers tend to be very lucrative right now, zero-cost EMI or, bare minimum, take the phone for 2,000 rupees a month and things like that. Could that be a way of not disappointing yourself and somehow managing that EMI along with your SIP?
Not really, because, I'll tell you this, the loop of EMIs and buying high-ticket items on loan and equating your purchasing ability with EMI capabilities. I think that's the wrong thing to do. So we usually see people doing this for even cars. They'll go in for a mid-sized car and then, say it's a 3-year loan and your EMI is 50,000, for example. Now, the salesman has understood that you can pay 50,000 a month. So he said, why don't you take a 7-year loan with 50,000 rupees, but upgrade your car?
Yeah.
So the buyer is always thinking that, okay, I have to pay 50,000, which I can afford.
Yeah.
But in the bargain, you're extending your loan tenure from 3 years to say possibly 7 years.
Yeah.
So eventually over 7 years, you're going to pay more.
Yeah.
So I think, you should respect your money very well. Very seriously, you should take what you earn because you spend a lot of your effort behind that.
Let me ask Ishita if she's convinced. Ishita, sorry, but the advice from the expert here is that maybe not right now. What do you say? Are you convinced?
It's a very sound advice, and I'd love to even take in their words into consideration. So definitely I'll take their advice into consideration.
Okay, so more on the SIP, less on the iPhones, the other eye. More on the investments. All right, thank you so much, Ishita, for taking out the time for us. We'll take a very quick break. One more colleague joining up on the other side with another interesting purchase idea. We're doing in-house planning 101, and these are all lessons for all our viewers out there. These are internal case studies, but they apply to each and every one of us so we can make smarter budgeting and spending decisions this festive season. Back after the break.
Let's talk money.
Welcome back. You are with the festive special edition of Let's Talk Money. And this week, we are gearing up all our viewers to make smarter spending decisions this festive season as we get set for Diwali. So the next 20 days promise to be really, really exciting. You've been hearing from a couple of our colleagues. And now it's Gaurav's turn. Gaurav, of course, is no stranger to financing or financial institutions. He's part of our research team and he tracks that sector so closely. But Gaurav, I completely hear you, because when it comes to our own money, our investment and spending decisions, then we can do with some guidance, right? Myself included. So you tell us, what's on your mind? What are you buying this Diwali?
Well, Surbi, yes, I always had an aspiration to buy a 650cc sports bike, and it is going to be a bit heavy on my pocket because it's cost around 7 to 8 lakhs. So definitely, I need some kind of advice how to go about it, because it's going to be a bit heavy on my pocket, to be honest.
Yeah, absolutely. So you already know what's happening with interest rates, Gaurav. I don't need to tell you that. Hopefully, they're all going lower. But yeah, just help our expert out. Harshvardhan is here in the studio. Just help him out with your current expenses, overall, income, lifestyle, and some idea about your current safety corpus or your current investments as well, so he can do the plan.
So currently, when we look at my total income, it is somewhere between 15 to 20 lakhs, and the total expenses, when we go about it, it is somewhere around 60 to 80,000, because it also includes my rent and other expenses. I have an EMI, which is a small portion of it, which is around 20 to 25,000. And apart from that, I need a safety margin of around 6 months of my income, which is around 3 to 4 lakhs is what I'm aspiring to keep. And when we look at the investments, I do my SIP somewhere in the range of 3 to 4 lakhs per annum. So definitely, that is all what I'm doing right now with my finances.
Okay, so hang on. So assuming that the annual income is, let's say, 20 lakhs, you are now looking to create that safety corpus, right? That, worth 6 months' salary. You're looking to build that. In addition, you have an existing EMI also running.
Right.
So total monthly expense is how much?
Monthly expense
all of
goes
this put
somewhere in the
together?
range of 60 to 80,000.
Including your SIP?
Yeah.
Okay, all right. Harsh, now help him out. Big, fancy bike.
Yeah,
7 lakhs, 8 lakhs.
Yeah, so, if you look at the numbers, I mean, given the annual income, given the expenditure, including EMIs and your savings, I think it's a healthy savings rate that he enjoys today. There's only one area that needs some bit of attention, is that he wants to create the emergency corpus.
Yeah.
So, and he's conscious about it, and I'm hoping that he would work very actively towards it. Now, given these parameters, I mean, and also, the aspiration to own a luxury bike, also, okay, there's another rule that we try and follow when it comes to buying vehicles, okay? So cars, particularly, if you are somebody who holds your cars and keeps it for up to 10 years, then you can consider buying something worth equivalent to 1 year's income. 1 year's annual income.
Annually. So the car you want to buy is not necessarily the one that James Bond was driving, but affordability is one year's annual income.
Yeah, so in this case, if Gaurav was buying a car, for example, he could go up to, and if he's intending to keep the car for 10 years, then he could buy something in the range of 18 to 20 lakhs.
Okay.
Now, if you're somebody who keeps a car only for 5 years and then you keep switching, then you should target to buy a car equivalent to 50% of your annual income. So in this case, it would be 10 lakhs.
10 lakhs.
I'll tell you
and
why.
what are bikes? And does the same rule apply to bikes?
So bikes, usually come, don't really cost 7 to 8 lakhs, right? So
in his case?
In his case, it is because, it's like an aspirational luxury purchase kind of a thing. Now, keeping everything else in mind, I mean, I think he can go ahead with the purchase if he wishes to. Just one condition, and it's a luxury bike. So I don't think he's going to flip it over in 5 years. So he's going to keep it for longer, I believe.
Let's ask him, Gaurav, are you going to keep it at least for 5? I wonder, where will you ride it? On Mumbai city roads.
You're absolutely right, but this is just an aspiration, and being a man-child myself, I think it is going to be something that I'll keep forever.
Oh, lovely.
So, so in vehicle purchase, there is something called a total cost of ownership concept.
Yeah.
So what you buy is not your total cost. I mean, it's going to be what you're going to spend over a period of time.
Absolutely.
And so I think given all circumstances, I think, Gaurav, you can most certainly go ahead with this purchase. Just ensure it's a double seat at least. I mean, you
we want to ride as well. We're coming. You want to see which one it is.
Definitely, I'll make sure of that.
Good luck with those plans, Gaurav, and treat. Make sure the day the bike is booked, we need party in the office. So
Sure, I'll do it. Yeah.
Absolutely. Thank you so much for joining us.
Surbi, you plugged yourself into the double seat. It was probably somebody else that he had in mind.
It's okay. We also need one ride, na? Some fancy set of wheels that he's going to get. But coming down to final thoughts, So, you mentioned this rule of 2 in the break, Harsh. It helps us decide whether we can afford something or not. Just explain, what is this rule of 2?
So, Surbhi, whenever you're looking to buy something which is in the luxury segment, it is in the aspirational purchase segment, you should always apply the rule of 2. Now, what is that? So, suppose you, like, for example, if, Ishita is planning to buy an iPhone, the question she should ask herself, can I afford 2 iPhones right now?
How you're struggling to figure out financing for one?
Exactly. So, if you cannot afford 2 at one time, then you can't even buy one.
Oh.
So, like, for example, if you're buying a luxury car, so we had somebody come up to us and say that, look, I want to buy a top-end BMW. So I said, can you buy 2 of it right now? So he said, no. I said, luxury items, if you cannot buy 2 at one time, then you should not even buy 1.
Oh.
I'm not saying if you can afford 2, which means you go and buy 2. How do you equate yourself? How do you ask yourself that kind of question, that is it a right purchase, whether I can afford it or not? So the rule of 2.
Okay.
So if you're aspiring to buy a large television for that matter, it's not for only just viewing news channels, it's more for having fun. You ask, can I buy 2 of it right now? If you can, then go ahead. If you can't, then please don't go ahead. So that's the rule of 2, just trying to give you some sense whether you can afford that luxury that you're looking at or not.
I need to go back and recheck my entire math for my festive spending now with this whole new rule of 2 that you've brought in. But a great session. Harshvardhan, thank you so much for joining in. This was fun, but it was also very informative. It helps us think right when it comes to our indulgences, our shopping spree this season. So thank you very much for joining in.
My pleasure. Thank you.
Well, viewers, hope this has been helpful. Hopefully it gives you some sort of a thought framework when you look at how to spend your money, hard-earned money, wisely, and have lots of fun this season. Once again, wish you season's greetings, and we'll be back with more on Let's Talk Money next week.
Let's talk money.
Hello and welcome to Global Eye. I'm Parikshit Luthra. US President Donald Trump's tariff onslaught and the raging wars in the Middle East and Europe have cast a significant shadow on economic growth across the globe. In India, equity markets are moving sideways, with safe haven assets like gold rallying nearly 50%. What's making the markets nervous in India is the 50% punitive tariffs imposed by the US, partly for oil trade with Russia. How should India deal with US and how should India's central bank navigate these choppy waters? Joining me now is a very special guest, Jean-Claude Trichet, who was the head of the European Central Bank from 2004 to 2011. Before that, he was the governor of the French Central Bank for more than a decade and is a globally renowned economist. Mr. Trichet, thank you very much for joining us on the program. Let me begin by asking you your view on India, especially after hearing the RBI governor, also the finance minister in India. How do you see India at a time of global volatility and instability?
First of all, I am very happy to be interviewed by you personally. I would say that all what I hear here is from the governor of the central bank and from the minister of finance is reassuring, if I may, in the present dramatic circumstances, which are the rule for all presently, with the geopolitical tensions everywhere, with all the difficulty associated with the tariffs and the change of attitude of the US executive branch. It seems to me that the solidity of India is very much confirmed by all the figures we have and by even the revision up of some of the figures, including growth recently. So I remain quite confident in the capacity of India to surmount those major difficulties, including, of course, the complex relationship with the United States of America. So I would say a lot of challenges, a lot of difficult, I would say, episodes to cope with, but resilience and solidity of the society and of the economy.
Right. I would also like to ask you about the kind of impact the US tariffs are having on global growth. Your outlook for the European economy, and how do you think this uncertainty around tariffs is impacting the growth of the European Union?
First of all, I would confirm that this dramatic change in the overall attitude of one very important country, obviously, in comparison with the previous rule-based approach that was the consensus, has been the consensus for a very long period of time. Of course, this has an impact on growth, which is negative. Negative in the US, by the way, and negative for all partners of the global economy. It's clear that, particularly in the US, of course, these tariffs have a negative impact on growth and also an impact on inflation. So it's difficult to measure that very completely and comprehensively right now, but the consensus of economists is very clear on that. You know, it's not good for the US economy, to the extent that the US economy has itself an influence, a big influence on the rest of the world. It's not good for the global growth. And when you look at the various previous, I would say, projections, you see that they incorporated this element. I was very struck myself to see that when the international financial institutions reviewed their projection, the revision down of the global economy and of many economies in the world was absolutely clear after it was clear that the US was embarking, US executive branch was embarking on this kind of liberation. By the way, as you remember, it was so dramatically negative that then we had the pause. But all this together is, again, in my opinion, negative. And we will see exactly what are the new projections, because as you know, we are a few half days before the IMF in particular will display its new projections. So again, we will see. I don't want to be too definitive. We are waiting for these projections, but all taken into account, it's not good. And that is my summing up of the situation.
Right. Could you give us a sense of some of the challenges that you foresee for economies like India? You painted a bright picture for the Indian economy, saying that India is solid and with resilience it will be able to surmount the challenges. But some of the key headwinds you expect for the Indian economy in the months to come?
Well, first of all, of course, India plays now a very important role in the global economy. I'm struck when I look at all the projections that it becomes the big economy that is growing very rapidly in comparison with all other. That's new. I mean, we have known a period where India was less bright as regards I would say, growth projections. So that being said, of course, India has a lot of challenges, enormous challenges, which were underlined by the governor of the central bank and by the minister. They are very confident, as I said, and it seems to me that figures are proving that they can be confident. But again, they have a lot of I would say, standard of living to increase. They have a lot of education to continue to operate. They have a lot of jobs to create, and the challenges of India are really gigantic. That being said, when you are in a country which was supposed to grow at 6.5%, but after reviewing the situation, they say, but finally for 25-26, it would be 6.8%, despite the environment, which is not positive, as we already said. This means something. And I'm particularly impressed by the fact that the quality of human resource in India is remarkable. The engineers are remarkable. There is a very solid tradition, I would say a secular tradition of math, and it, of course, is extraordinarily effective in terms of high quality services. I know that a lot of European firms are very happy with the brains that are member of that firm, global firm, and are located in India because they have, again, the quality of the human resource and very good education in the domain of science and technology.
Right. I would also like to ask you about the challenges and some of the points that central banks around the world will have to consider. Even if we arrive at certain trade deals with the United States, which brings some amount of stability and certainty, what are some of the challenges that will confront central banks, including the Indian Central Bank, in the months and the next few years of the Trump administration?
Well, first of all, to the extent that part of the US administration is inflation creating, because, as I said, of the tariff themselves, because of other measures that are taken in the United States of America and will probably continue to augment the threat of inflation in America. As you know, there is still inflation, despite all the good measures, in my opinion, that were taken by the Federal Reserve. We still have a level of inflation which is around 1% higher in the US in comparison with Europe, when the two central banks were in parallel doing, in my opinion, what was necessary. So again, back to India, global inflation might be more demanding, which is, of course, challenging for the central bank. The central bank did very well, in my opinion, in running its inflation targeting, flexible inflation targeting. It was, really a success. If my memory is exact, it was introduced, clarified, and crystallized in the 2016, and we are living now with this, rule, which seems to me to work very well. But again, the challenges are considerable, And of course, everything depends very much for, I would say, all of us, of the fact or not that the Central Bank of the US, the Federal Reserve, remains independent. There is a will of President Trump, of course, to diminish the level of independence or even eliminate independence and put other people in the Open Market Committee to do whatever he wants. That would be totally catastrophic. But the market will not trust that then you can count on a solid anchoring of expectations. And in my opinion, solid anchoring expectations is a necessary condition for being in the best of the world possible.
Mr. Trichet, when it comes to moving away from this tariff situation, we've seen an impact of these tariffs on the US labor market. At what point do you think Donald Trump may start easing up some of these tariff policies?
My sentiment is that we have to observe what he did in the past. You might remember that only 7 days after the famous Liberation Day, where he was pre-announcing enormous augmentation of tariffs, he changed his position only 7 days after, and he said, no, now it's the pause, which is extremely rare. When you have a head of state, the chief of a very, very important government, engaging in a certain direction, he does not change only 7 days afterwards. Why did he change? He changed because he observed first that what he had said had a very negative impact on the stocks and shares in the US, had a negative impact, incredibly high negative impact on the interest rates on the treasuries, and to the extent that there was also a call by some of his advisors to diminish the value of the dollar, there was also a problem with the dollar. And altogether, it was the foreigners that were withdrawing from the US. And that was a real catastrophe, particularly as regards the market interest rates, because of the treasuries that were sold by the foreigners. So he decided, he was correctly advised, in my opinion, and he decided immediately to say, no, we stop, it's the pause. So if the market here, in my opinion, he might change his opinion. He depends very much on the market from that standpoint.
Right. So at the end of the day, we'll have to see how the stock markets perform. I would also like to ask you about how central banks should treat cryptocurrencies going forward, and what do you really make of central banks launching digital currencies themselves?
First of all, I think that technology is technology. I already mentioned the very high quality of technology in India. We have to take advantage of the progress that we are making in this domain, first. Second, we have to be very careful, because at the very beginning, we were not making the difference between a so-called cryptocurrency and a so-called crypto speculative asset. And personally, I would have preferred that the difference would be made much more clearly. You have crypto active that are speculative, and that's not good in general, in my opinion. We don't need a new casino table around the vast, I would say, financial market constellation of various tables. So that seems to me bad. Now, of course, you have the stable coins that are pushed by the US administration and are, of course, very, very important in the eyes of the private sector and in the eyes of those who are promoting that. And again, the executive branch in the US looks like being promoting these stable coins. So to the extent that it would be a loss for the central banks, because the central banks at the present moment are the central bank, the institution that are issuing I would say, currency that are real currency defended by the central bank and stable by definition because they are in the hands of the central bank. So I can understand that a lot of central banks envisage to issue themselves not only their traditional currency, say the notes to oversimplify, but also crypto notes, if I may, which would be the equivalent notes. So we will see what happens and who wins, if I may, in this battle.
All right. Mr. Trichet, I would also like to ask you about the gold prices, the gains we've seen globally. What do you think is fueling these gains and what would be your outlook on gold prices going forward?
In my opinion, it's the illustration of the fact that in the present world, in the present, I would say, global economic situation, uncertainty is of the essence. And when uncertainty is of the essence, then a lot of investors and savers have the tendency to give a privilege to gold. Historically, gold was, of course, from that standpoint, an investment which is itself, by the way, a speculative investment, but which proved it was very effective.
Just to come back to the issue of India once again. Now, India is aiming to become a developed nation by 2047. We're looking at 8% growth annually on a sustained basis. What more do you think India needs to do to achieve that goal, that sustained growth of 8%?
Hello?
Yeah, Mr. Trichet, can you hear me?
Yes, I can hear you, but I'm sorry, I don't know what happens. We were cut off.
All right. So, sir, I'm trying to ask you about what India needs to do to achieve an 8% annual growth rate on a sustained basis, because that would be important for India to become a developed nation by 2047.
Well, again, India is extremely ambitious, and the past is very impressive, by the way. As I said, when you are at the level of 6.8%, namely quasi 7% of growth, you are not that far from 8%. We will see. I think it's good that a country like India puts itself in the situation of being extremely ambitious and extremely bold. And after all, other countries, not necessarily far away from India in the past, have had also episodes of very rapid growth. But of course, it does not suffice to say, I want to do that. You have also to take all the appropriate decisions to reach that goal. And amongst these appropriate decisions, of course, you certainly have pursuing structural reforms to facilitate as much as possible a satisfactory growth, a growth that would be exactly in line with this ambition. I tend to be confident personally because all what I see in India seems to reinforce the sentiment that it is a real goal. And after all, the standard of living of the citizens of India are also calling for relatively rapid growth in the years to come to catch up with taking into account, as I said, the quality of the human resource in India. So I am reasonably confident, but India should not be complacent. It's a very ambitious goal, and it calls for very ambitious reform.
Right. So very important structural reforms, no place for complacency, work towards your ambitions. Thank you very much, Jean-Claude Trichet, for joining us here on the program, giving us your view on how you see India right now and what impact the US tariffs will have on the global economy and at what point you think Donald Trump will pull back. We're taking a short break here on Global Eye, but don't go anywhere. We speak to Euro-intelligence Director Wolfgang Monchau when we return. Welcome back. Finance Minister Nirmala Sitharaman says India's rise as a global force is neither accidental nor transient. Speaking at the Kautilya Economic Conclave, Finance Minister Sitharaman said the absolute dominance once enjoyed by a hegemon is now contested.
For decades, many Asian nations absorbed the material gains of globalization without adopting the same political values that represented or underpinned the Western society. Today, they assert alternative models of growth and governance, drawing on their civilizational continuities. Their emergence questions the assumption of the Western liberal values are the only path to economic success. These nations have become central pillars of the global order in economic, political, and technological terms. The absolute dominance once enjoyed by a hegemon is now contested.
All right, joining us right now to discuss the global trade wars, their impact, and the India economy is Wolfgang Munchau, Director at Euro Intelligence. Wolfgang, thank you very much for joining us on the program. At a time of global uncertainty, how do you see India compared to other emerging markets? And how do European businesses, according to you, view India at a time when India and European Union are negotiating a trade deal as well?
Yeah, well, thank you for having me. India is going to play an increasingly important role for Europe. First of all, India is one of the few countries in the world that still imports European products. If you look at Germany, Europe's largest exporter, they had massive trade surplus with the United Kingdom, but then came Brexit and then supply chains changed. Then came the pandemic and many supply chains were affected. Then came the Russia war and Russia was cut off. Then came Donald Trump's tariff and trade with the United States is going to become more difficult. China has become more competitive. So India is sort of the one sort of uncontested trading partner. And there's a lot of hope, certainly in Germany, but in the rest of the EU as well, on a free trading relationship with India. So India is seen in Europe and elsewhere as well as the as one of the potential growth engines, and your 8% goal is very much what other people, certainly Europeans, take very seriously as a prospect to come.
I would also like to ask you, what do you think the European Union would be wanting from this trade deal with India right now? If this has to be a win-win for both sides, how and what would be the contours of a deal that European Union would be looking at?
Yeah, I think this is the question. And I think you'll find one of the problems the EU or India will have with the EU. The EU is in favor of free trade with everybody, but it has come under a lot of constraints since it essentially folded in the trade negotiations with the Trump administration. This was you could say a humiliating defeat, but it was in a position where it didn't have a choice because America provides Europe security. So Trump got everything he wanted, the EU got nothing what it wanted. And we're already seeing this with China, is that Europe is doing to China what America did to us. And the openness and the willingness of Europe to sustain large trade deficits vis-a-vis China is probably limited. So I'm in a sense skeptical that there could be difficulties on the way as the EU is trying to seize India as a market for its exports, and certainly machinery exports, plant exports. So Europe wants to participate in Italy and India's economic boom in the next 20 years until India reaches its economic goal of becoming an advanced economy. But what happened with China, that happened with China 20 years ago, where the EU and Germany in particular were running surpluses against China. But then they noted that China turned the situation around. And I would think that this time the EU would be less tolerant of this. And I think this is something that India has to sort of bear in mind in those trade negotiations, that this is not turning into a one-sided relationship.
Right. My final question to you would be, you've got Donald Trump, who's pressurizing European Union to also cut energy ties with Russia. He has already imposed 100% tariffs on India, trying to corner India in order to put pressure on Russia. Do you see the European countries significantly reducing their energy partnership with Russia?
But they have done so to a large extent. You know, the gas pipelines are no longer operational. The oil exports are down, but there are parts of the EU that are still heavily dependent on Russian gas and oil. The EU promised to bring this date forward, which is going to be very difficult. I see what Trump does in a very different way. Trump is trying to put pressure on Russia because he needs to be seen to do something. He's come under criticism to be siding with Putin. So he's putting the pressure onto Europe. He's also said recently that Ukraine is doing better in the war, that Ukraine could win the war. There's no evidence for this. If we look at the situation on the ground, it's as dire today as it was like a month ago or 2 months ago. So what I think is happening is Trump is setting us up for, he wants to blame others for if this war in Ukraine turns out negative for Ukraine and negative for Europe. He wants to be in a position where he can deflect the blame away from himself to the Europeans. So I think this is a blame-shifting game rather than a serious effort. And I think Europeans should be careful about this. And India is obviously caught in the middle. It's part of this sort of grand posturing by Trump. But it's not. It doesn't replace a strategy. The fact is that he's kind of withdrawn financial aid from Ukraine. The US was the biggest supporter of Ukraine. Okay. So far, it's spent over 100 billion on Ukraine. It's out there. They still share intelligence. It's not like the US is completely gone, but the situation of Ukraine is pretty dire. So the question is really, can they sustain another year, another 2 years of war without active American support? This is very doubtful.
All right. Thank you so much, Wolfgang Manchau, for joining us on the program on Global Lens, giving us your view on Europe-India ties amidst global volatility. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Goodbye.
There is simply no stopping the gold price rally, with equity markets largely moving sideways in India. The yellow metal is soaring high. International gold prices are also headed for the best annual return in nearly 4 decades. And it's not just gold. Prices of all precious metals are rallying this year. There are several reasons why. Investors are betting on safe haven assets because geopolitical risks to the raging wars in Middle East and Europe, and of course President Trump's constant tariff onslaught, attacks on the Fed, they've all increased the allure for precious metals. Will this rally continue or will we taper off from here is the big question, because we've had a couple of years of fantastic move, especially in the price of gold. This is the editor's playbook. I am Prashant Nair, and joining me today are the editors Manisha Gupta, making a debut on this set here. Sriram Iyer is with us, Surbhi is with us, Nigel is with us as well. Guys, hi. Great to have all of you here on another edition of the playbook. Manisha?
Yes.
It's your game
Welcome
today.
to the show.
Precious metals,
This is
gold, commodities.
Welcome to
It's
the
been
couch.
not a day. It's a week. It's a month. It's been a year.
Water and everything, and yes, and beyond. Well, if you look at the last couple of years, absolutely, it has been all about gold. It's almost doubled in this time. And as Prashant said, this is the best yearly return that we are seeing since 1979 for gold and for platinum. For silver, clearly, it's the best yearly gain in the last 10 years as well. And such huge buying. Prashant, you mentioned a lot of points there, but let me add that de-dollarization to it and the way the central banks have been buying. The ETFs latched on much later, and this is basically ETF buying that we are seeing right now. So every dip is getting bought into. There was a time, a couple of months ago when we did not see any sellers at all. $10 of a decline and you had more buyers grouping in. So that's the kind of scenario that we have seen for many of these metals there. Interestingly, let me tell you one more thing here. If you look at post-COVID, there was no demand for crude. But come 2020 and 21, you saw the crude prices coming back from that brink of collapse to $113 a barrel there. So 2020 and 21 belong to crude. Then 2022 to 25 has belonged to precious metals. Gold, silver, platinum, palladium, we've seen all of these precious metals kind of double. Now, 2025 to 26, 27, the belief is that you could be looking at base metals gaining. Copper is already started in that note, and the next perhaps rally could really belong to base metals in that sense. So let me tell you, it has been commodities all the way.
So gold is precious. I mean, the consensus you're picking up is precious metals maybe best.
It's not done, but after you've done 50 to 60% of gains, that is not what you're going to be seeing every year. This year is done with that. You could be looking at 15, 20% of gains continuing for many of these precious metals, but that huge bull run will now come for base metals.
It's interesting.
Manisha
Manisha
says
all
that
depends on Trump also.
Everything depends on him.
As Manisha said, 2020, 21 belonged to oil.
Yes.
But there were in 22, there was a start of that now 3-year-old war, Russia-Ukraine.
Yes.
Right? And I think that really, right, and that seizure of Russia's gold by and reserves by Russia, the US, I think that really shook people up.
It started it, yes, it did.
That perhaps was the kind of a trigger which really has not stopped till now.
Not at all. You know, another thing that I have to tell you, Prashant, is that during COVID, many people thought that food is going to be the next thing to watch out for. But as we came out of COVID, what sold the most? Gold, jewelry and diamonds. Yeah.
And Indians own a lot.
How
do
we explain that?
What's the?
I'll come to this.
Because you couldn't go around. There was no travel. So that vengeance buying, if you had to give something to somebody, you weren't going to travel and buy cars because that wasn't happening. So I think what was getting bought was real estate. People were buying those houses, and then people were buying diamonds and jewelry.
I didn't buy any of that. But central banks have been buying a lot of it, Surbhi, right?
Oh, yes. So I looked at the World Gold Council's latest survey, and they do one every year. They've been doing it for 8 years. Their 2025 study is really interesting. They surveyed 73 central banks. And guess what they're saying? 95% of those central banks expect the buying to continue in the coming year as well. This is despite record purchases in the last 3 years. So central banks at an average, have been buying 1,000 tons every year for the past 3 years. Versus, and Manisha would have the numbers, absolutely spot on. But I think average buying would be around 500 tons. Last 3 years, they've bought 1,000 tons. That just explains where this massive, humongous trigger came in. And then the funds and the speculators and then retail investors, everybody kind of latched on. The other interesting piece that I just wanted to throw out there when we're talking about, let's look at historically what has happened. When is the last time we've had such a massive move? I looked at data which goes back about 2 decades, and actually 50% at least I didn't find in this particular study. But if you look at, so what do we know? We know that gold and US interest rates, technically, academically are supposed to be inversely correlated. But does that correlation always play out? Actually, no. The gold market is absolutely crazy. It's a market of its own. Let's actually get that table if we can to just get a sense of if there's any pattern to this. Now, let's talk about the Russia-Ukraine war. Prashant, you brought that up, right? During that year, 2022, the Fed hiked interest rates to the extent of 425 basis points. Since there was such a massive hike in interest rates, gold prices should have crashed. Did they? No. Gold was very flat. Why? Because there's this element of risk. There was also a risk-off environment. You know, asset classes were going haywire, so people were not looking to sell gold. Now let's go back and, look at the 9/11 terror attacks time, 2001. At that time, because there was such disarray everywhere, the US central bank cut interest rates in 1 year, in 12 months, cut interest rates by almost 475 basis points. Gold prices should have absolutely shot up, gone through the roof because interest rates are falling. But again, it doesn't work. It's not a one-to-one correlation. Gold prices were hardly changed, 1%. COVID is the other interesting example. In 2020, general risk-off. And gold prices were up 25%, and 24 as well because of geopolitical tensions, West Asia, Israel, Gaza, so much going on. There was a 27% up move, and on top of 2024, 27%, 50% in 2025. I'm breathless. I'm pausing here.
Basically, if the world is going down, then what will you do with the gold?
My point is, I mean, I don't know how to. If anyone can predict this, I think Manisha is the only person who can predict where gold is going.
Another correlation to look at. I thought maybe we should. After tremendous periods of gold price move, so if gold is the ultimate safety asset, right? Safe asset. I mean, does it tell us a big rally in gold? Does it tell us something about what, say, risk assets like equities do? I mean, going back 25, 30 years, I remember looking at this data, and the data is stark. I don't have it right now, but the other point about central banks, Surabhi, last week.
Let's stay with that thought for a bit. So, does this rally in gold tell us that we are doomed?
No, it doesn't.
Look at equities. No, it does not. No, look at equities. Look at the S&P 500.
I know the answer is no, but I would like you to articulate why we aren't. Is there a US recession coming?
Before we started recording this, we started talking, you said there's a 30% recession chance in US. So that is something that the markets are not talking about so much right now. Labor concern, yes. Recession concern, no. And is the reason we're looking at gold steadying where it is. I still want to get back to that same point, telling you that everybody wants to buy gold right now. Central banks is one, but retail, ETFs. So when I talk about the Indian markets as well, when we are the biggest consumers here, if you talk about today, and I was talking about this festival season as well, traders, bullion dealers, wholesalers tell me that bullion is at a record demand right now. So people are not buying so much jewelry, but they are buying bars and coins. And physical market in India right now is trading at a premium.
Okay.
So everybody seems to be latching to this.
I think the corollary to that is essentially the gold price rally this time is not a reflection of a doomed world, because the rest of the metals are also rallying.
But I think I'll leave that thought for everybody. Prashant and Nigel, I think maybe you want to weigh in as well. Is the gold market sensing something that the equity market cannot even fathom at this point? Who knows? Who's to say? We'll only know in hindsight.
I'll just make one point. The Morgan Stanley CIO had put out this note, and I think close to around 2 weeks or so ago. And normally an ideal portfolio is 60% in high quality equity and 40% in high quality bonds. What he's calling for is not the 60-40 now. He's talking for the 60-20-20. That is a proportion of that high quality bonds moving into gold. Okay. So it's instead of being at 60-40, now he's talking about 60-20-20. And also, another note came in from Goldman Sachs. They said, if just 1% of US households' bond holdings move into gold prices could move to around $5,000 from this $3,800. So, basically it may not be equity versus debt. It could be a proportion of the debt or of that safe portfolio that starts finding a higher allocation in gold.
Absolutely.
So, the bit of a drift out there.
Very, very interesting.
And that would happen only if you lose trust in the US Treasury.
So,
not necessarily.
I'll go back to the...
There is a fundamental concept, right? Gains beget gains.
Yeah.
If you think something is going up, more people share. By the way, there is now evidence to show that when you talk about, as Nigel said, commodity AUM is this much. There are commodity investors. There are equity investors. But what has happened now in the last 2-3 years is a lot of non-traditional commodity AUM. When I say AUM, I mean money which typically goes into commodity, goes into other stuff, is coming into commodities, into precious metals, etc. And that is just a function of something goes up a lot, you want to be a part of it. There is a fair bit of FOMO, etc. Even in India, Surabhi, last week we did rupee. The proportion, India's, in terms of our reserves, the proportion of gold has gone up
Yeah.
but that is again
significantly-
a lack of trust in
No, so I'm going back to the.
It's a function of the price gain because what we get is the value, dollar value.
Yeah.
So as price goes up, the value of your existing
holding
cost,
also.
but also the stock of gold that we have. I think it's both.
Yeah.
It's gone up here quite substantially.
Yeah.
So we want,
I'm going back to the World Gold Council survey. One of the other questions they asked these 73 central banks is that will your holding of dollars reduce in the next year? A large proportion of them said yes.
Yes.
Okay.
So they are diversifying, and gold is definitely an asset that they have diversified into for the last 3 years. Now, at an individual level, they were asked that, individually at your bank level, will you still buy more gold next year despite the price, right? 43% have said, yes, we will keep
I
adding
would
to our
want to
holdings.
add to that.
Yeah.
This is a year when you have seen, on an average, 80 tons of buying from central banks every month. This has never, ever happened. There have been months where there has been a pause. There have been years where there's been a selling as well. But this is a very different criteria we're looking
Which
at.
is what I'm saying. Are they, and I'm not saying central bankers are smarter than equity bulls, but I think it's a great debate. We'll have some answers, whether they're
They are
sensing
privy to
something
information.
on either US treasuries or the US dollar. There is a need
it's
to
not about
diversify
smarter,
to
Surabhi.
this.
It's not about smarter. They are privy to information that
Obviously they
equity
are.
investors
They know
don't.
everything. They run the system.
Correct.
The kind
They are
of
the
monies
system.
you can't even...
So let me bring a different angle now into it. Since we already spoke about the central bank buying that's pushed up gold prices, let's talk about the gold ETFs and the correlation with gold prices. I think the first gold ETF was launched in 2004. So if you just plot a chart between 2004 and 2021, there's a definite correlation. As gold prices move up, the gold ETF in tonnage as well moves up. Now from 2021, that correlation got broken. What happened? Gold was roughly around $2,000, $2,100 per ounce, while the total gold ETF holding, at that point of time had hit close to around 4,000 tons. Now what happened? Then we saw some kind of downtick in terms of tonnage, but gold prices continued to move up. So gold prices effectively, from the time that correlation broke, gold prices are up close to around 80%, and the tonnage that was 4,000 tons, it came down drastically, and the last few months it's being steadily moving up. But still, it's at roughly around 3,800 tons. So we're still not at that 4,000 tons odd. So you talk about a left out feeling, the gold ETF, that in fact is yet to hit those in tonnage terms. What we saw close to around
this is
4
gold
years.
prices and
gold prices and
tonnage
gold ETF,
held by
gold ETF. Gold ETF tonnage,
ETFs
which is
hold less gold now, but at a higher price.
yes, the price has moved up. So that correlation, the chart is telling you the picture. That correlation got broken. Normally, you see both of them move in sync. From 2021, it got broken, and in the last few months, you have seen that the gold ETF tonnage again has started moving up. But even after this up move, it's still at 3,800 tons. That compares with 4,000 tons earlier. So left out feeling. Gold ETFs, they will be feeling that left out feeling because the central banks have been the one that have actually led the way.
So for those of us, like for the middle class audience who think they've missed out on the rally, even the big money people are feeling FOMO, so you're not alone.
Also, the
so
last
you're okay.
one to start coming into this rally.
Here, I was looking for the stat, I found it. I'm going to quote it because it really caught my attention. 73% of global central banks, and this is a survey of 73 central banks, including the biggest of them all, see moderate or significantly lower US dollar holdings within their reserves over the next 5 years. Where is the dollar going? If you go by this survey,
So I can tell you, I can add on to this one, a lot of people that we speak to internationally, whether it's about Bank of America or Goldman Sachs or Citi for that matter, believe that US dollar is still overvalued anywhere between 10 to 15%. So if that is what we're looking at, I mean, it's an easy calculation then.
It's priced in dollars, right? I mean, so
That's
as dollar goes down,
right? Like
Straight
the
gold.
dollar, right? Exactly. Yeah. Great minds think alike. We're on the same point, right? If Trump wants dollar to be weaker, it's going to gold is going to cost more, and he's likely to push it down further. And there are these conspiracy theories. I mean, they are theories. I don't know if it's a conspiracy that he wants to sort of go towards crypto, and the signs are that he is. And it's not just other central banks. Maybe the Fed will also have fewer treasuries, fewer dollars, and more Bitcoin.
I think Manisha mentioned the what has happened this year, and that maybe that table will come up. It's a table that I go back and look at, which is nothing. $1,000 in 2008, price of gold. $2,000, 12 years it took for gold to reach $2,000. And from 2,000 to almost $4,000, it's taken basically not even 5 years, right? So that's the table. And I think, Nigel, that is the reason. It's this sharp appreciation. We talk about this wealth effect. Feeling rich, right? being rich and feeling rich is different.
Correct.
Right? But feeling, you know, price is going up.
Because I've got that feeling.
You know, and I'll tell you, like most of these planners, because, you know, I look at personal finance as well, and for years you have planners coming on and saying that, look, it's a physical asset and how much of gold, and as Indians, we're anyway overexposed.
Doesn't give you dividend, doesn't give you premium.
Be in, you know, equities, long-term wealth creation. So people are feeling quite miserable this Diwali, exactly because of
But I'll tell you, wait.
Because not too many would have had a 15-20% exposure in their overall portfolio to gold. And look what's happened.
But I'll tell you what should be. We spoke about central banks, right, with regard to buying gold. We spoke about gold ETFs as well. But Indians are feeling rich. And you'll say
the ladies.
The Nifty is down close to 3.5 to 4% in the last 1 year. How can Indians feel rich? Because gold prices, as you all have been talking about, 45 to 50% higher, right?
Ladies
and why,
always know best.
Why? Because Indian households, you know, on the whole, what, 25,000 tons?
More than that.
Conservatively. I mean, because I'm just going by, you know, importing roughly around 500 to around 700 tons per year. So in the last few years, only it's 18,000 tons. And prior to that as well, there would be so many tons of gold. So you just take a number of 25,000 tons conservatively. You multiply it by the current price of gold.
Oh,
what do you get? 290 lakh crore.
A massive number.
Last year, what was it?
more than our GDP.
190 lakh crore. No, it's almost there. So last year it was 190 lakh crore, this 25,000 tons. This year it's 290 lakh crore. That means 100 lakh crore of feel-good effect.
On a lighter note, I think the government of India would be thanking its stars that it stopped the sovereign gold bond scheme.
Oh, no, that's entirely different.
Wait, imagine a 50% appreciation.
But just let me add to that. And as he mentioned, we import nearly 500 to 800 tons. It's more between 600 to 800 tons of gold every year. But when you look at silver, we do 5,000 to 6,000 tons of silver every year. So that's a different market altogether. And
silver is I mean, we have to go deeper. On the gold returns part, if you had bought in 2008 when Prashant mentioned, the CAGR on gold is about 8.5%. You add a 4% annual depreciation in the dollar, you get more than what mutual funds promise you when selling you that, right? Just by sitting there and you have the gold. But of course,
you should sit closer to where Manisha ma'am sits in the office.
Exactly.
Every Diwali she's told me for the last 10 years, the Nigel, thoda lena, thoda bahut kam liya hai.
You're looking at Bitcoin.
Anything.
Abhika, is Bitcoin the new gold?
My role is to give something different.
So what does the data say for Bitcoin?
So Bitcoin was supposed to be the new gold at the start of this year. So far, it has slightly disappointed. It hasn't. Gold has run away because of central bank buying. But I think something else might be coming because the December quarter, if you look at the last 5 years, has been the best quarter, except in 1 year where there was some profit booking, I think. Otherwise, every year, October, November, the OND quarter is the best for Bitcoin. So you never know, by the end of this year, it might catch up. And Bitcoin itself has a, I have some data.
Data shows it's done very well. It's far.
It's not as, see, typically Bitcoin gold have done, similar, I mean.
Are there CAGR since 2017?
Yeah, exactly. So the 51% gain since 2017, 15 for gold.
Is massively
it is.
Correct. But in this year, at the start of this year, when Trump took over and people thought the move to crypto and Bitcoin will surge, it hasn't, the gold has surged faster.
Those expectations, it hasn't.
Correct. But then the next 3 months will be crucial because the winter, the Bitcoin gets the hottest when the temperature is the coldest. So I think that's an interesting bit to watch out for. And in terms of how many gold ounces, this is an interesting data I pulled out. How many ounces of gold do you need to buy Bitcoin? Even after the gold run up, in 2017 it was 3 ounces. Today it's 30 ounces. You need 30 ounces.
Bitcoin is hugely outperformed.
Exactly. Even when gold is at a record high, you need 10 times more gold to buy 1 Bitcoin.
How many Bitcoins do you have?
Oh, me? As much as RBI would allow me to.
But I just want to add into what he said. If you look at the last quarter of 2023 and 24, Bitcoin has given you anywhere between 38 to 45% of returns in that one quarter. And 2025, with the kind of gain that we've seen in September, this perhaps could come true again.
In a way, it's a new world, right? We're talking about, there's all kinds of stuff happening. And this effort to mainstream Bitcoin, crypto, whatever you say. I mean, there are large global banks who've got desks, shops set up now, trying to do all of that. And I think Manisha covers it quite extensively. But I think Bitcoin, new gold, but I think silver, Nigel, that's the other one.
Silver is at a very, very crucial point. First, let's tell everyone what we already know, right? If you look at the gold to silver ratio, it had gone to around 95 to 100. Now, that's cooled off to around 80 because now silver has played catch up.
That is gold divided by silver.
Yes, gold divided by silver. It's currently at around 80. Some argue 60 to 70 is normal. Some argue 50. Now, it depends on what you think about it. But anyway, from 100x, it's come down to around 80x. And we know silver is that, industrial commodity as well as it's a precious metal. And as, we have been talking about, it's used in 5G, in EV, in solar cells as well. That's what we know. But this is the interesting aspect. When I was born, they said that, a few years before that, silver was at around $50. That's many years before I was born, 1980. many years before that. Okay, now check it out. Okay, so in 1980, the Hunt brothers, I think if I remember the names correctly,
Hunt brothers, yes.
William as well as Nelson, they tried to corner silver, and then you had that big spike up. But what happened? Once that fizzled out, we had a sharp decline in silver prices. Then came 2011. When again you had a lot of speculative action, people said now, half century, it's in fine form. It's going for the 100. Again, that rally fizzled away. And now come 2025, silver's at that crucial juncture. They're at around $50. So, in that context, silver's at a make or break mark. You see in cricketing parlance that the batsman's in good form, has made a half century, time to build on to that. Can it move towards a century? And this is the third time that it's moving towards that $50, per ounce. So, and in the same duration, just take a look at what gold has done. In 1980, gold was what? Approximately $800, right? In 2011, when silver hit $50, you had gold that danced away to around $1,800. And now gold is at $3,800, but silver, 50, 50, 50. Can it go ahead and build a big one out here? So that's why I'm saying that $50 mark is very, very important.
I have to tell Nigel this.
Nigel is speaking like Manjrekar here because I don't know if he's a silver bull or not. He said everything.
He's saying silver has gotten run out. Every time
last word to you.
So now silver ka kya?
I'll tell you, when we hit $50 an ounce in both those scenarios in 2008 and in 2011, silver corrected very, very sharply. We went into teens after that.
Was that?
Because both the instances when silver ran up like that, the fundamentals were not so supportive. It was a move market. But this time around, 5 years of deficit, strong industrial demand, diversification, and central banks should be, by the way, are not just buying gold, they're buying silver as well now. So this time around, we'll do $50 an ounce, but we won't go back to teens or 20s, but we can go back to 30s perhaps, and that would be the time to absolutely fill in silver.
Data centers also need silver.
No, sorry, you're saying silver heads down to
It would. It always has. Because
But it won't see that kind of correction that it saw in the past.
It will not see teens and 20s. It's matured now.
So as an equity parlance, we say buy the dip.
Buy the dip, basically. And the next 2 years, perhaps, you will be much beyond 50, yes.
So no advice here, but you're saying, for those who are watching, right, I mean...
just going by the data is there, it will see a correction again, but not to those kind of levels.
Those of you who are CNBC-TV18 subscribers, if you were a subscriber a few months ago, you would have caught at least half the rally.
Right.
Out of the silver prices have gone up 30% and more. Since the time we highlighted a bunch of opinions on this and we showed that silver will go up and we called it just the beginning of the rally, and since then it is up 35%. If you haven't subscribed to Access, now is the time.
Well,
absolutely. Make sure you do that.
That's a perfect note to end the conversation as well. Sriram, Manisha, Surabhi, Nigel, thanks very much, all of you, for sitting down here. We will track the price of precious commodities, precious metals. You heard lots of opinion, lots of varied opinion here. I hope that was useful, insightful. It was enjoyable for us. Thanks very much for staying with us.
The Lal trade ends higher in the first week of October. The Nifty and the Sensex gained nearly 1%. The broader markets outperform and sectoral indices clock gains, particularly the banking stocks. Well, over the next 30 minutes, we'll decode the week's market action. We'll put the spotlight on the RBI's growth supportive measures, and we'll tell you what to expect from the IT companies as they get set to report numbers from next week. Hello and welcome to Editors Roundtable. I am Rima, with me are Prashant and Nigel, and joining us here in the studio is Anish Tavakle, Co-CIO Equity at ICICI Prudential AMC. Hi, guys.
Hi. I mean, a better end to the week, right? Rather than how we started off the week. So, two apiece for the Bulls as well as the Bears. And I tell you what, the Bulls getting into this weekend will be feeling a lot better.
Last 2 days, basically, is
last
what matters,
2 days,
right?
At least, yeah.
But then those last 2 days broke that very long stretch of a losing streak, right? 8 continuous days of selling.
And what did it was perhaps maybe, I mean, we can give credit. I think the RBI. I mean, it is no rate cut. Although many said it was a close call, it looked like a close call. But many things, and we'll talk about that as we go on, which kind of, the stance actually is what is very, very clear, that they are very focused on trying to revive growth one way or the other. And Manish, welcome to the program. You're coming on after a while. What did you make of it? I mean, we'll go into individual steps, but what did you make of it?
See, I think you should have to look at the RBI's actions over a 3 to 4 month period. What have they done over this period, right? And so even in the previous meeting, they had acted quite boldly and given a 50 basis points rate cut, which is actually a lot, right? And it takes time to work through. So they've made it clear that they do want to revive the economy. They do want to revive demand. This time's move, while they haven't cut further, which is, I think, the right thing, they have made clear that they stand ready to do more if the economy does require it. The steps they've taken actually frees up the banking sector to do more. It is supportive of growth, but it also helps banks relative to NBFCs, right? So in terms of the competitive position of banks versus NBFCs, it improves the competitive position of banks.
You know, on this rate cut, we had a chat with Tata Cap, right, when the IPO, on the IPO press conference day, and I asked him about transmission. So at least at the NBFC level, I said 100 basis points of rate cut by the RBI so far, and I said, how much have you passed on? And he said, I think about 25, 30 basis points. So, I mean, there is some transmission left to be done of the rate cuts which have already been announced so far.
Well, that's right. You know, on the starter cap, normally when you have a big IPO like this, it gives some of the competition as well some kind of legs. Case in point being in AB Capital, Aditya Birla Capital. Today, in fact, the stock hit a fresh 52-week high, you know, because there's suddenly that argument about valuations and ratios being more or less at par. So let's see how that goes. But before we move on, let's just, do a quick recap of what we saw in this week itself. The Nifty, the fear was that we won't be able to defend that 24,500 odd mark. We went ahead and we defended that mark. We broke that losing streak. We had 8 straight sessions on the trot when the Nifty ended lower. That broke, and actually October has started off on a positive note. And if you look at historical data, the last, out of the last 10 Octobers, 70% of that we've seen positive returns. So you want to clutch onto straws, right? When you're seeing the markets see 8 straight sessions down. The other important factor is the FIs. They've not just been selling in the cash market. In the F&O market as well, on index futures, 94% of the positions on the short side. Highest we've ever seen. So you need some kind of glimmer of good news, some kind of hope. And then, in fact, they'll be forced to cover out. So sometimes they being at extreme ends hasn't been such a bad thing. And the RBI bonanza that came in, right? I mean, out of nowhere, the governor, pro-growth, everyone is wondering about the Fed pivoting. Well, the RBI governor has, taken a trajectory of his own. Every time he's spoken, it's always pro-growth, pro-growth, pro-growth. And hopefully that holds us in good stead because we have the festive season that's coming up. You have earnings that hopefully will pick up in the second half of the year. And added to that, the US shutdown, out there, that could have increased the probability of getting some Fed rate cuts as well. So all in all, it was a decent end to a week that started off actually with the bulls being totally on the back foot. Anish, how do you play this? We have seen the GST 2.0, the various measures that have been announced as well. You have the auto stocks that have done well. What's your view on that? On the consumption theme, how do you play it?
See, the way I see it, the only issue with the economy is weak demand, right? All the structural things are fine. Balance sheets, bank balance sheets are fine, corporate balance sheets are fine, supply side, there's no issue. And when you have only demand as the weakness, it's a relatively easy problem to solve. Right? You've had monetary policy support, and more could come. So I do expect the economy should regain momentum. It might take a quarter, it might take 2 quarters, but the economy should regain momentum. And in an environment where you expect the economy to regain momentum, I would position myself towards cyclical sectors, right, which recover, which see the greatest impact when the economic rebound happens. So those would be industrial and capital goods, banks, it would be auto companies, cement. Now, of those, cement and auto have already had some bit of the run.
Yeah.
So from here, I would be most positive on the industrial and capital goods sector and banks.
You're right. But some just to, since you talk about industrials and capital goods, just to come in, some were pivoting a little bit away from that because they said that the last few years the government has been pro-capex, pro-capital expenditure, and suddenly both in the budget as well as GST 2.0, it seems like the focus is only on consumption. But would you still believe? Because some of these stocks have corrected a good deal. And actually in the last few trading sessions, they've been finding their feet. And I was looking at a couple of smaller companies as well from the broader markets. Some of those promoters went ahead and they bought a few thousand, a few lakh shares as well. Yeah, you're making that point.
So, I think it's a bit of a misinterpretation to say the budget is pro-consumption. Actually, the budget is pro-spending.
Okay.
Right? Spending could be investment spending from households or consumption spending. Investment spending is like if you've got more money in your pocket because you're paying less in taxes, you could bring forward your purchase of a house. Right? You could buy a larger house because now you have a larger budget. So I think it's a misunderstanding to say that more money in the hands of households necessarily leads to more consumption spending.
It could be, yeah.
It could be investment spending.
Indeed.
And then once consumption starts, obviously you need the capacity to service that consumption. So investment always picks up. So in fact, I've always been saying that, look, there's no point pushing for investment stimulus if there is already spare capacity in the economy. right? So first you need the spare capacity to get exhausted. Once demand picks up, then investment will also pick up. It's not going to be one or the other. I mean, ultimately, if consumption picks up, you need the capacities to service that.
Right. Okay.
You said balance sheets are in good form, but corporate balance sheets are good form, government balance sheet is good form. What about personal balance sheets?
So yes, there is some over-leveraging in the households, particularly in the unsecured space. And we are seeing that stress, right? We have seen MFIs have the issues. I do think that people are a bit over-optimistic on how quickly unsecured consumer stress will resolve. But it's not at a level to hold back the overall economy, right? It is an issue, but it's not at the level where I would say that it will hold back overall economy.
That mass segment, mass consumption, that still remains subdued? Or you think all these measures can turn that around?
I wouldn't expect that to be a big driver of growth, right? I think it'll hold relatively steady.
So at similar kind of levels?
Yeah. See, the problem actually, it's very difficult to gauge what's happening in mass consumption. A lot of the commentary is based around FMCG, right? People say, look, FMCG demand is weak. But the companies that we are looking at in FMCG are, I think, suffering from a competitive issue problem, right? Their margins are too high, they're over-earning, and therefore they are losing share to less visible players, right? To local players, to regional players. And I wouldn't interpret that necessarily to say there is a weakness in consumption.
But the big highlight, the big bazooka came in from the RBI.
Yeah, and it was not rate cuts, right? It was those some 22 measures apparently. I'm not going to go into 22, but let me just highlight 10, which I think are important. And we'll sort of put some of these questions and ask Anish to put on his financials analyst hat and tell us which of these measures gives the maximum bang for the buck, right? So shift to EC, expected credit loss provisioning. There's a 4-year glide path to this now to smoothen the one-time impact of additional provisioning. Remember, basically they're moving away from incurred loss model to a projected or expected credit loss model. But the news is the 4-year glide path to do this. Removal of proposed restriction on overlapping businesses. Basically, banks doing what they could not do on the bank side, in subsidiaries, NBFCs, etc. There was always this overhang that because the rules don't allow for it, they'll have to do, some of these companies will have to sell these subsidiaries. But so that overhang kind of goes away. Introduction of risk-based premium for deposit insurance. It's basically 12 paisa per 100 rupees. Now it is, it's a flat rate, but now it's moving away from flat rate. So it doesn't look like much, but it is expected to give a bump to, underlying profitability for banks. Banks can finance M&A. So far, banks could essentially fund acquisition of underlying assets, but not equity shares. Now they're allowed to do it. So we'll see how much of this, does the capability exist for banks internally in terms of people and systems, etc., to be able to price some of this? And will we see a big wave of M&A because of this? We'll see. But in any case, it's good because companies were going for private credit, dollar-denominated debt, higher cost. So all of that is easier now. NBFC risk weights lowered for infrastructure, so PFC, REC. So basically for operational projects, lower risk weights. Withdrawal of the 2016 large borrower guideline. So basically there was a 2016 circular which discouraged lending to borrower entities having aggregate sanction limit of over 10,000 crores. This basically has been repealed. There is also loan against shares, which has been for banks, which has been enhanced to 1 crore. So it's a 5x jump. For NBFCs, it is still larger. This is for banks. Now, easing restrictions on transaction accounts, so current account, OD, etc. So this again is important because most of the current account is with banks like HDFC Bank and private players who are good in transaction banking. And the rules said that if you have less than 10%, to be able to have the current account with you, you've got to have more than 10% exposure to a given entity, borrower entity. So this was creating some amount of anxiety that's been now eased. Discussion paper for granting new urban cooperative bank licenses. And of course, just simplification, 250 master directions to replace lots of scattered circulars. So it was a monetary policy, but not very much in terms of monetary policy itself. A lot of easing essentially aimed at unshackling banks, if I can put it that way. Which of these measures? You think that M&A bit or what struck you? Anish?
So look, overall, if you take them in aggregate, right, they do free up the banks to undertake more activities. And those activities were otherwise being undertaken exclusively by NBFCs or by less regulated entities. So in that sense, it kind of reduces or it expands the boundary in which banks can operate, right? So it's good for banks relative to NBFCs. Now, so the way I see it, right, the banks have the advantage that they can raise deposits. NBFCs don't. And where the NBFCs traditionally had the advantage was that they were exempt from some of the statutory burdens, like their CRR, SLR, and priority sector is lower. Right? So the NBFCs had the advantage that they don't have these statutory costs. Now, if a bank can also open an NBFC, so they will, to the extent that they can raise deposits, they will do the activities within the bank. Once you exhaust your deposit raising capacity, you can, through an NBFC, operate and compete with other NBFCs. So it does place NBFCs at an advantage relative to the banks. Banks at an advantage.
The private credit market was, you think all that gets squeezed now? I mean, why do you...
I mean, it doesn't happen immediately, but yes, banks will obviously develop the capabilities and then also step into some of those segments.
Because there was,
those were restricted, yeah.
Those were restricted, right?
Yeah.
But that space was booming, so maybe...
so the banks will obviously venture into that space because it is a profitable space.
You know, one of the big calls for you, Anish, has been that housing is central, right, to your entire thesis. That
yes.
That is essentially what needs to do well for the economy to do well.
Yeah.
Are we, what's happening there overall? I mean, it's a very sort of city-specific, state-specific subject. It's not, all over, it's not the same all over. But is the music slowing? Is it still high tempo?
So it has slowed, right? And in fact, so I've always said that I can't imagine the economy not doing well if housing sector is doing well. And similarly, I can't imagine the other way around also. Right? So housing is fundamental to economic growth. And you can see that, right, after 2020, once stamp duties were cut, the revival came when economic activity. And in the last 6 months or so, what we have seen is that the pace of growth has slowed, certainly. And there is, in fact, new housing sales might have dipped a little bit. Now, hopefully, what should happen is that developers should realize that, look, you're not being able to sell at these prices, so you give some incentives, etc., and that should lead to the momentum coming back. And that, frankly, if we are sitting here 18 months later or 12 months later, and if we say, hey, the economy hasn't done as well as we thought it would, the most likely reason would be that housing didn't pick up. So I do think, yes, there has been some slowdown, but I'm not, I would be optimistic that we should see it picks up again.
And any Bombay, NCR, I mean, these are two big value-wise big markets, right?
But actually, from an economic activity perspective, it's the square footage that matters, not the value, right? Because you need, economic activity is driven by, how much cement do you consume, how much steel do you consume, how many workers are employed in building that house, right? It's not...
Any thoughts specifically on this market and NCR? Or...
No, look, across, I mean, there is, the pace of increase has definitely slowed, right? Now we need to see how the developers respond and...
in terms of incentives
incentives and pricing and all of that to see that revive.
Anish, just stay on. We need to slip into a very short break, but we'll come back and talk about the IT sector. TCS reports numbers next week on 9th of October. Stay tuned. Welcome back. You're watching Editors Roundtable. This week, we saw the Nifty gain about 1%. The Midcap index gained close to about 2%. Banks, metals did exceedingly well. But looking ahead to next week, well, there are two big cues. One is the IPO market is red hot. Nearly 30,000 crore worth of paper is hitting the markets next week. Tata Cap will be the big one, 15,000 crore. LG Electronics, about 12,000. And then their WeWork offer for sale of about 3,000 crore. So we'll test the market's appetite for liquidity and interest. But secondly, even the earnings season kicks off, and it starts as always with TCS on 9th. But the following week is when we're going to get bulk of the big earnings. So whether it's Infosys, Wipro, HCL Tech, all of them will fall in the 13th to 18th week. So what do you expect now? For starters, Q2 is likely to be a fairly stable quarter. There is no improvement in demand, but there hasn't been a deterioration in demand. In terms of revenue growth, Infi is likely to lead 1.8%. You've got about a 1.5% revenue growth expected from HCL Tech, Tech Mahindra. TCS could be a bit tepid, just about 0.3%. The rupee depreciation of nearly 2.5% has turned out to be a tailwind for margins, and that could absorb some of the AI-led deflation, any pricing pressure. So margins, at least, cursory, there should be some expansion in margins when we looked at Infi and TCS in Q2. Infi by about 50 basis points, TCS by about 20 basis points sequentially. And also wage hikes have been largely on hold so far at least. So what will you watch? In terms of guidance, for Infosys, only if the upper end is changed will it be material. Now, when Infi came out with their guidance, they were very conservative at 1 to 3%. Actual estimates were always between 2, 2.5, going up to 3%. Now they've also done one acquisition which is not priced in, but the street is saying that maybe they'll tighten, they'll bring the lower end of the guidance up, but only if the upper end, that's 3%, is tweaked and raised, will it be material, but that's not expected. HCL Tech is likely to keep the margin revenue guidance unchanged at 3 to 5%. What will you watch? Again, AI-related deflation, because the Cognizant, management, when one of the analysts met them in a non-deal roadshow, they indicated that the AI-led deflation in renewals is actually quite high. So any sort of pricing pressure, the H1B, there is going to be an impact on the cost of on-site. That's going to be tracked very closely. But broadly, the Nifty IT has been such an underperformer, 25% underperformance year to date, with the Nifty IT index down 21%. Anish, is tech a part of your portfolio or not at all?
So in the portfolio that we take sector calls, which is our business cycle fund, if you see, we've been, and this is the published portfolio, we've been zero tech for a while.
Zero tech.
And my logic was that there was a lot of optimism built around demand recovering in the US. And when I look at the US economy, it's actually doing very well. So I could not buy why the Fed should do aggressive rate cuts, because the economy is already in good shape. And frankly, I think the economy is more likely to weaken than strengthen from here. Right? So I think the sector will continue to face headwinds for growth. Also, I think, when we talk about the Indian IT sector, we must remember that it's not just the Indian listed IT companies. GCCs are also part of the Indian IT sector. And it's the GCC sector that's been gaining at the expense of the Indian IT vendors. So the sector overall is not doing that badly, actually. Yeah. It's the shift from Indian vendors to GCC.
We picked this interesting data point from the Naukri Job Speak Index. We spoke with the person, Pavan, leading it, and he said the hiring for GCCs in this September quarter was only 4%. The prior quarter was also 4%. And even the Jan-Feb-March quarter was only 2%. So it's not that the GCC hiring, although it's doing very well, so maybe AI,
No, the reason I think, this is number of people, right?
The number of people, like the Job Speak Index, what they track is
so basically
2
in
to 4%
GCCs, the larger guys are all already here.
Yeah.
Now, there are 2 opening every week, right? But the guys who are coming, they are smaller. The size is much smaller. The Deloittes of the world, JP Morgan of the world, they're all here. They're
not hiring anymore now. So he said at least the existing big guys are not.
So in terms of the number of seats, if you look at, those are now smaller, specialized, high value. But in terms of numbers, actual specific numbers, another thing, Rima, we speak about this. By the way, that they talk about IT, right? Infi, yesterday, OpenAI finally concluded that secondary share sale, valuing the company at $500 billion. Did Infi, we talk about that investment that Infi, did it actually happen, or they thought about it and
not? They thought about it. I think Sika went with a board approval as, sort of like a...
I remember the figure quoted at that point was $1 billion. That's what articles, etc. say.
But I don't think it went through. But I think he went with the proposal is what, reports. But, Anish, in your blue chip fund, 75,000 crore, you're sitting on 8% cash. you're fairly optimistic about the economy recovering. So when will you deploy this 8% cash? In what? So tell us a little bit about that.
So see, the way I see it, right? If I'm measured relative to a benchmark. So if I feel, look, there are parts of the market that are overvalued and I'm better off relative to that part of the market holding cash, I'm always willing to hold cash. So I don't see cash as that much of a burden. But yes, I mean, if valuations correct more, I will.
But do you think in cement and autos, where you are bullish, valuations are okay? Because we were chatting with the Goldman cement analyst. He has only one buy call. He said cement will do well, etc. You know, pricing has been resilient, blah, blah, blah. But he said valuations are expensive and therefore he has only one buy call in the sector.
Yeah, so look, across the board, valuations are not cheap anywhere, right? The question is, where can you get the greatest earnings inflection to support those valuations? So I would still say cement, you could
So you will buy now at this juncture?
Oh, I can't tell you what I will do at this juncture. That wouldn't be fair. But my published portfolio is still.
What about the view on metals?
Metals, I'm light, right? And the real reason is, if you look at most metals, demand is declining because China is 50% of demand, right? Ferrous metal demand in China is declining, and if you have Chinese demand declining, no matter whatever gymnastics you do on the rest of the demand, you still get.
But anti-involution, that's not good enough.
See, when an industry has excess capacity, and taking out capacity doesn't improve the economics beyond a point, right? It allows the industry to survive. It doesn't improve the economics beyond a point. So actually the bigger argument is, yes, Chinese government will take out capacity, and then the Indian government will give bigger safeguard duties. Frankly, how optimistic should one be on an industry where if you need two governments to support your buy case, right? So I'm kind of light on
the sidelines.
You know, I have to congratulate you and Naren. I think you know, the duo were the first to really start talking about this 2.5 years ago, thumping the table on multi-asset funds, if you remember, right? And it's worked out beautifully.
Yeah, I mean, partly
it's played out wide. I mean, they proved the reason for existence of those funds. Huh?
No, we've always been big on asset allocation products, on hybrid products, and I do think it works for the investor because the thing is, those funds deploy in assets that are out of favor, right? And it's generally works in the investor's favor.
You think that still is the way to go, broadly?
Oh, I mean, multi-asset funds and asset allocation products would be evergreen products. I don't think there's ever a time where you say, look, you shouldn't do multi-asset funds or asset allocation.
Okay, great chatting with you, Anish. Thank you very much for coming to our studio. Enjoy your weekend. Well, that brings us to a close in this edition of Editor's Roundtable. Goodbye, and we'll be back Monday morning.
Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me as always is Shruti Mishra. These are the top headlines from the startup world. The WeWork India IPO sees a tepid response on the first day. The co-working space provider also faces a legal hurdle. Two investors moved Bombay High Court alleging inadequate disclosures.
Together Fund has launched Swarm Space, a new platform aimed at supporting early-stage AI startups with founders connected to India. Select startups will get access to funding of up to $1 million, technical mentorship and resources to help them build and scale their products in India and international markets.
Quick commerce unicorn Zepto is gearing up to raise $450 million in fresh funding round, led by U.S. pension fund CalPERS at a valuation of $7 billion. According to a report by Money Control, the fundraise will also see participation from existing investors, including Lightspeed, Nexus Venture Partners, General Catalyst, Avra, and Stepstone.
ChatGPT maker OpenAI is now the most valuable private company in the world. Employees sell shares worth over $6 billion at a valuation of $500 billion. Elon Musk, SpaceX, and China's ByteDance are valued around $400 billion.
DoorDash has finalized its acquisition of the UK food delivery company Deliveroo. The boards of both companies approved a nearly $4 billion deal. The buyout will help DoorDash to expand its business in Europe, Asia, and the Middle East.
Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. Ahmedabad-based Ignosis, a financial data intelligence platform, has raised $4 million in a pre-Series A round led by Peak 15 Surge, with backing from Razorpay Ventures, Force Ventures, and Kunal Shawkred, among other existing investors. Founded in 2022, Ignosis has already partnered with over 125 financial institutions working to bridge the gap for millions of underserved Indians and MSMEs who struggle to access credit, insurance, and wealth services. To understand how Ignosis is transforming financial data into actionable intelligence, I'm now joined by its co-founder and CEO, Nirav Prajapati. Nirav, welcome to Startup Street. India has seen rapid digitization, yet 160 million Indians remain credit underserved, and 80% of MSMEs still struggle to access formal credit. Nirav, tell us, how is Ignosis bridging this gap where traditional banking has struggled?
Thanks, Shruti, for having me on the show. Ignosis is a 3.5-year-old company based out of Ahmedabad, building for BFSI and building and solving for 300 million underserved Indians for access to credit, investment, and insurance. We operate in a financial data intelligence space, and we are building on top of DPI, the latest DPI called Account Aggregator. Account Aggregator is an RBI-backed ecosystem that enables seamless, secure, consented data sharing, and that basically enables lenders, wealth managers to get the real-time information of the customer, like the financial data profile of the customer. And through Ignosis AI-driven intelligence, we basically enrich the information with cash flow related data, obligation data, fraud, risk signals.
Okay.
That's really driving the overall penetration of AI and the intelligence, enabling different use cases for BFSI.
Okay. Nirav, picking up from what you just said, Account Aggregator is at the heart of your proposition. You've said Account Aggregator can become as fundamental to financial data as UPI is to payments. So tell us, what does that future look like, and how is Ignosis accelerating it?
Future is extremely bright. Just to give you more context, there are over 2.2 billion accounts that are available on AI ecosystem that can be linked, and the data can be shared in near real time. So far, over 250 million consents have been fulfilled through Account Aggregator. This year alone, almost 1.6 lakh crore loans have been dispersed through Account Aggregator. So the AI ecosystem is expanding, and we are at the forefront of that expansion, enabling BFSI with the pipes that requires a secure, consented data sharing and the intelligence that helps take the decision for the customers.
Sure. And, beyond Account Aggregator rails, AI-driven analytics is another core pillar for you. Tell us, how are you helping BFSI players move beyond legacy bank statement analysis into this new era of financial data intelligence?
Sure. So there are two areas of focus here. Traditionally, the data was shared through PDF files and a lot of alternate ways of sharing, which was like fraud prone. A lot of document fudging was happening. User would have to share a username, password for that net banking, and the data would be scraped and then underwritten further. So through account aggregator, we are eliminating most of these processes and making it extremely secured and consent-driven data sharing. And part of that, the additional intelligence is on top is identifying accurate income for self-employed, their business income, their business expenses, enabling gig workers because their cash flow patterns are very unpredictable. So identifying accurate income and obligations for gig workers, and that is really driving the financial inclusion with various type of financial products.
Sure. Again, Nirav, hyper-personalization seems to be a big theme for Ignosis, whether it's nudges, fraud detection, or income verification. Could you share how this translates into a better experience for the end customer?
Sure. So I'll give you a couple of examples. Imagine you have a rent payment coming up, but you're short on your in your bank account. You're short on the cash, right? Like, so a nudge can go out probably a couple of days before, reminding you of top of the account before a rent payment hits, or a bank can offer you a pre-approved loan to cover that upcoming rent expense. So that's one example. The other example could be you're spending on medical bills, hospital bills, but you don't have you don't have an health insurance, right? So a bank can avail you a health insurance catered to your own need. So there are a lot of such examples where a very personalized, hyper-personalized, real-time, contextual nudges can be given to you, which will help eventually improve your financial health.
All right. Nirav, let's get to the fundraise. With this fresh capital, what are your immediate priorities? Where will we see Ignosis double down in the next 12 to 18 months?
Sure. So definitely a lot more focused on our AI product roadmap and hiring for product and engineering roles, expansion of our enterprise sales and customer success team, and also double down on our governance, compliance, and InfoSec processes.
All right, regulatory alignment is critical in financial services, Nirav. You're building on RBI's account aggregator framework and the DPDP Act, like you mentioned earlier. How challenging has it been to balance innovation with compliance?
Look, RBI and the regulators of India has been extremely progressive, and that has really helped us, solve identity through other payments via UPI. And I think with account aggregator and, combination of Ignosis AI-driven intelligence, we are very bullish on solving for 300 million underserved Indians with access to credit, investment, and insurance.
All right. On that note, Nirav, I'll have to wrap up our conversation. But many thanks for joining us on Startup Street today, and wish you the very best with all your growth plans.
Thanks a lot, Shruti. Thanks for having me.
Moving on, Ember, which claims to be India's first 100% non-toxic, non-stick cookware brand, has raised $3.2 million in seed funding. The round, backed by HNIs, family offices and marquee investors, will help Ember scale R&D, deepen manufacturing and build India's first innovation lab. Adding more star power, chef and entrepreneur Saranj Goyla joins as investor and partner, bringing his culinary expertise to shape product design and consumer education. Joining me now to discuss this further is Himanshi Tandon, the co-founder and CMO of Ember Cookware. Himanshi, thank you so much for taking time out and being here with us on Startup Street. You are a cookware brand. If you could sort of talk to us about what made you start, this journey, what was the gap that you were trying to address in this market, especially since cookware has, traditionally been a low innovation category in India, right? So what makes you confident Ember can lead and even redefine it in a sense?
Firstly, thank you for having me here. I think for us, with my own personal health journey, where I was making all the healthier choices, whether it was the cold pressed oils or the organic masalas and veggies and everything else, given my own allergies, I think what I realized was that a lot of toxins enter our bodies through the cookware, the products in the kitchens, the microplastics, etc., etc. And I think that is where we realized that there is a need for 100% non-toxic products for the kitchen, but they also need to be easier to use. They also need to be accessible. And overall, when you want to drive a movement, it also means that you need to make the products more desirable. It needs to fit into your lifestyle. So we always say, at Ember, that we work hard so that the products and the consumer doesn't have to. So our products need to work much harder. And I think when we went to consumers and we talked to them, the ones who were aware of the problem also, they were not able to make the shift. Because when you gravitate towards products like stainless steel, cast iron, and others, while they are great and non-toxic, not everybody is able to use them. And that's why you tend to go back to your, Teflon coated non-stick product.
Right.
That's where this gap of how do you bring non-toxic together with non-stick, and that's where the idea of Ember came up.
Oh, absolutely. And, you've raised this $3.2 million in seed funding. What will sort of, be your top 3 priorities for deploying this capital? Can you take us through what the fund allocation plan is?
Yeah. So firstly, I think doubling down on what Ember's core is, and our DNA is in R&D. And I think the first and foremost, especially with Saransh also coming on board, and Ember's DNA being in driving innovation that solves for real consumer problems, I think that's the first part of it. So there we plan to use Saransh's expertise in understanding various problems in Indian kitchens, his understanding of Indian cooking styles, and marrying that with our access to global technology, global supply chains, etc., and finding out better, newer products. The second is to drive growth. I think there's been immense love and traction for the brand, but that also means that it's our responsibility to be present closer to the consumer. And that is where expansion in terms of both channels and regions is something that we are undertaking right now. I think the third large part of our investment is going to go into education and really helping consumers deal better with these new material innovations. In India, a lot of traditional cookware, there's a lot of deep understanding, but nobody understands how to use these new material innovations really well. So I think that's, again, a third area of focus. And that is why the Innovation Lab, so that we can test and develop concepts that can go into Indian kitchens.
All right. So a large portion of this going into the Innovation Lab. You are on track to hit a 30 crore rupee ARR within just 12 months of your launch, right? So what's essentially driving this growth, and how sustainable is it as you scale?
Great question. So I think firstly, there was a pent-up demand in the market. So I think a large part of our growth is fueled by the fact that people were waiting for this product. They had tried multiple different options. They had burnt their fingers with products that seemed like they were non-toxic, but they were just fake, advertising or just wrong labeling. And that's why they were waiting for a product like that. And I think just the product itself, plus a lot of organic traction that has come from, chefs, celebrities who have been using the product. I think that's gotten the traction. Thirdly, because I think the product looks beautiful. We, again, apart from all the investment that we made into our Ursula coating technology and the thermoclad technology, we also wanted to make sure that while you buy a pretty cookware, it also looks pretty for a really long period of time. And the person on the outside enables that. So as people are spending more and more monies in building their kitchens, they also want the prettier stuff over there. To maintain that momentum, I think what we needed to do was to be closer to the consumer. For example, during the wedding and the gifting season, there was a very strong need from consumers that, we want you to deliver faster to us. That is why we made the switch to quick commerce. And now Ember is present in, Instamart, as well as through a couple of specialty retail like Food Square in Bombay.
Sure.
Yeah, sorry.
Yeah. Also, we're running out of time. So if you could quickly sort of tell us, your products are designed in California, manufactured in Italy, but built for India. So what challenges have you faced in adapting, global design standards to the realities of Indian kitchens? And are there any plans to sort of bring this manufacturing back into India to make for India in India?
Yes. So firstly, to address your first question, the first biggest challenge for us was that Indian cooking is done in a different way, and it is diverse. Every few kilometers, you will have a different way of cooking, and even two people cook very differently, right? So understanding of all of those styles and trying to figure out the way we dry roast our masalas or the kind of oils or paste that we use, how do we incorporate for that? The second was price points. great quality ceramic comes at insane price points globally, and the biggest challenge for us was that how do we bring that in Indian households reach. The third was the weight of the cookware. A lot of people in India are not, like especially the women, are not very acceptable to using very heavy cookware. And the fourth was maids. The biggest question that we hear from people is that, can I give this product to my maid because she is cooking or she is cleaning? So I think building for all of those things and those unique things, like for example, ceramics globally were made for induction cooking, but we had to adapt that to stove cooking as well. So a lot of those elements had to go in to make it right for India, especially on the price point. So to answer your second question, yes, I think manufacturing is something that we are very deeply looking at, especially since getting it from Italy, of course, increases the cost for us dramatically, although we've tried not to pass on those costs to consumers and absorb.
You're still looking at how you can change the manufacturing model at this point in time. All right, Himanshi, we're completely out of time, but thank you so much for joining us here on Startup Street.
For having me. Bye-bye.
Well, moving on. It's Friday and it's time to take stock of all the big deals from the startup world. According to Venture Intelligence, this week saw a total of 11 deals worth $126 million. Some of the big ticket deals include Ayurvedic healthcare brand Kapeva, which attracted $60 million from 361, Vertex and 314 Capital. Meanwhile, luxury watch retailer Art of Time bagged $19.7 million from Plutus Wealth Management and others.
That's not all. This week saw ice cream brand Hoco bag $13 million from Sauce VC, while B2B debt marketplace Wrecker Club bagged $8 million from the likes of Finvolve, InfoEdge, LC Nuva, Physis Capital and String Ventures. AI startup Assessly got $5 million from Foxhawk Ventures. According to Venture Intelligence, this year has seen a total of 696 deals worth $6.5 billion.
Well, with that, it's a wrap from Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side.
The story of energy today is no longer just supply and demand. It's about imagination. It's about how technology, partnerships and bold ideas can create a future where growth goes hand in hand. That vision came alive in Bengaluru at Shell Presents Changemakers of Tomorrow 2025, a platform that brings together innovators, policymakers, academia, entrepreneurs and partners shaping the future of energy. The event was inaugurated by Nivruti Rai, MD and CEO, Invest India, Mansi Madan Tripathi, Chairperson, Shell Group of Companies and SVP, Shell Lubricants APAC, Robert Van Rutten, EVP and CIO, Shell, Selda Gunsel, EVP Technology, Shell, Pratibha Priyadarshini, VP HR, Shell India, Mark Van Leefland, VP IDT Delivery and Engineering, Shell, and Ajay Mehta, VP Research and Innovation, Shell. Mansi Madan Tripathi, Chairperson, Shell Group of Companies and SVP, Shell Lubricants APAC, emphasized bold ideas and collective action. Nivruti Rai, MD and CEO of Invest India, spoke about building tomorrow's infrastructure today, and Gunjan Krishna, Commissioner for Industrial Development, Government of Karnataka, reminded us that inclusive growth begins with empowering MSMEs. Together, their words set the tone for the change makers of tomorrow.
the global context, with everything which is going on, the tariffs, the wars, the energy prices, the ups and downs, focusing a little bit closer to home in India, we have a very interesting situation as we talk right now. Because on one hand, the trajectory of our growth is inevitable. Yeah. Last quarter, as you know, we recorded 7.8% from our GDP, which is much higher than what was ever predicted. And we are slated to be one of the highest growing global economies, right, at 6.5, 6.9%, which we all feel very proud about. But with that, obviously, it comes with a huge need for energy and energy growth. We handle most of the financial operations for a variety of our businesses coming from our country. The technical assets, 36 global assets are handled from the country. So as long we keep thinking of ourselves as solitary drops, that, what can we do individually to solve this big problem, we'll not go anywhere. But if we think that each of us has the power of the ocean in us, and together we can create the tide to solve for this big mammoth challenge in front of us, I am very hopeful, confident, as well as absolutely sure that together we'll be able to solve for this and take the energy transition head on, and shall be at the forefront for solving for it. Changemakers is not just an event for us. It is a momentum which we have been carrying out, and this is our third edition. We have been having that movement from the physical, digital combination to saying how do we increase the rate of innovation. And now in this one, as we always talk about the Trinity in India, which is about, the various forces or the heart, mind, and soul, in this Changemakers, I particularly feel that you will experience not just the hardware, the software, but how do we get the soul behind it so that we can keep moving.
With the world that all of us are living in, intelligence is in your hand. Access to information is in your hand. We have a level playing field across many countries, geographies, because information is not just for privileged few. So what do? What we do is leverage the growth driver as human and AI symbiosis. The growth will happen not because you have information, but because of creativity, connectivity, and action. Finding the right startup, finding the right company is like going and fishing for the pearl. And I know you guys are doing a great job at it, but we as Invest India are doing this. And our goal is not just to bring the investor into India, but working with the investor till they get return of investment. Thank you very much. I'm looking.
Welcome back. You're still with us on Startup Street. Let's go across to my colleague Ashmit Kumar, who has the Métis secretary with him to talk about the latest draft online gaming rules and more.
Right, Arundhati, thanks a lot for that. Joining me now is with us Mr. S. Krishnan, Secretary of Ministry of Electronics and IT. Mr. Krishnan, thank you so much for joining us, being a part of this conversation. You've given us two big headlines in the scope of just 24 hours. First, we had the ECMS, a stellar response to that. Investment proposals worth 1.15 lakh crore rupees. Then later, last evening, we also had the draft rules coming out for online gaming. A lot of questions that need answering. I'll come to you first on the issue of online gaming. I just want to get a sense. We saw a rapid pace with which it went through the parliament, and since then, at least from what the language of the draft rule is, that it is yet to be notified, the government is consulting all the stakeholders, there seems to be an intent towards staggered implementation. Can you help us understand that?
No, I don't think it's right to say that there should be staggered implementation. I think the intent of the government is very clear, and that has been expressed in the form of the legislation that got passed. Now, legislation goes through Parliament at a rapid pace, and that depends on the parliamentary schedule and so on. And we've brought out the rules also in fairly quick time. And based on the industry requests and demands, because we have been meeting industry post the legislation being passed and looking to see what their concerns are. Most of them, I think practically the entire industry has accepted the spirit of the legislation and stopped offering many of the online money games as defined in the Act. Now, the question is, in the rules, we have certain processes which have been prescribed and procedures which have been prescribed. So we want to give industry enough time to respond to what has been said there. And the rules themselves are not very complicated, fairly straightforward. I think one aspect which I'd like to highlight is that the registration of an online social game is voluntary. It is not obligatory for somebody who's offering an online social game to register that particular game. What this implies is that any small game which somebody is innovating, putting together, offering, or something which is purely educational, none of those which clearly fit the definition of the online social game as per the Act has to be registered. They can choose not to register it. They're confident that they are not going to be called into question and they can defend their position that they are a legitimate game. They don't have to offer themselves for registration. This is, in my view, a major ease of doing business measure and should really enthuse innovators and startups. I think that is an important point that I would like to make. The second point is that there is a prescribed process by which the online money games, there's a determination of what is an online money game or a social game or an e-sport. There's a process which has been prescribed. We want to get the entire process started quickly. So rather than trying to set up an entire new board and the usual teething troubles and the usual starting trouble that we have with a new organization being established, to avoid a lot of that, the organization has been kept lean. It has been kept something which can be up and running from day one, and that is how it has been structured.
And it's digital from what the language of
the entire thing is digital. And for that also we are ready, and we can sort of launch it at the earliest.
So that's a very important clarification that you helped us with, that in terms of registration, esports is mandatory, social gaming is not. Social gaming, say for instance, a startup is providing a game of say Sudoku online, that is not required to be registered under the draft rules that have been provided.
As long as they fulfill the definition of a social game under the Act, and they are confident that they do not constitute either an online money game or an e-sport, they're good to go.
Just diving into the specifics, Rule 24 was an interesting addition. There were some concerns that the industry had raised in terms of repatriating the money back to the users.
That's right.
Was there a need felt? Did you get the feedback from the industry, from banks, that perhaps this clarification in law is required to help facilitate funds?
You see, I think it goes back to the philosophy of the Act itself. The Act does not intend to penalize players of online games or online money games also, for that matter. The intent is not to penalize them, and the intent is to treat them more as victims of a particular particular offense. And therefore, the intent thereafter is to make sure that they get back what they have put down. So that is the angle from which that provision has been made. So right from the beginning, the idea is that they should not be penalized. There was a concern that returning the money which has been collected as a deposit or in some other form may be difficult. And clarity needs to be provided to banks and other financial institutions that they can continue to return the money and they would not be falling foul of the provisions of the Act. So that is the clarity we have provided.
Rule 13, I think, will invite a lot of questions and answers, and I think that's where I think a lot of industry personnel will be looking at in terms of what exactly qualifies as online money gaming. I just want to understand, I just want to dive into some of the specifics. Rule 13 B and C, which broadly say that if a consideration is being paid by the user for joining or for playing the game, that is something that will qualify as money gaming. Does that bring it to scope maybe subscription fee?
No, I think that's not the correct way to interpret this. I think the correct way to interpret is that there is a very clear definition of what is a money game in the Act.
Okay.
The rules, and particularly Rule 13, is only intended to further define the scope of what the authority will attempt to go into in order to determine whether it is a money game or a social game or an e-sport. So those are all the various elements that they need to go into.
Sure.
It does not necessarily say that if this is fulfilled, then you're a money game. No, I don't think you should look at the rule that way. You should look at the rule with reference to the definition of an online money game, which is contained in the Act.
Okay.
So these are all various subparts of that, and all of those requirements will need to be sort of fulfilled in order for something to fulfill the definition of an online money game.
But in spirit of reading it with the law, with the parent act, as well as the rules, do we have clarity now? Does the industry have clarity now in terms of maybe a reward system that is being offered or a subscription model that's being offered? Is that covered under the language of the
I think the
rules?
subscription system is something which is clearly covered in the language of the Act. Now, the reward system is something we'll have to look at. I mean, what is it that they want to offer as a reward system, and what is the nature of the reward system? So that is something which will have to be looked at on a case-by-case basis. That is for the authority to look at.
You make a reference to the authority. You talked about how you want the authority to hit the ground running. The rules are very detailed in terms of prescribing the powers, the responsibilities that the authority enjoys. Just want to get a sense in terms of the implementation of this. How soon after the notification of the rules will we be expecting?
We can
to
be
see?
ready the next day.
Okay.
Because all the officials are in place.
Correct.
It's basically officials. We have to get ready a digital system. We are working on it, and that should also be ready. So from the moment that we notify the implementation of the Act, we can be ready.
Was there perhaps a need felt that for also addressing the issue of offline overseas platforms which are providing these betting services, maybe giving more teeth to the platform, to the authority to target such instruments, such platforms that are operating here?
See, I mean, I think the authority is not necessarily the agency which will target that. You see, the authority is there to make a determination on whether something amounts to an online money game or not, whether something amounts to an online social game or not. The actual prosecution and the actual blocking and things is provided for in the Act itself, in which we can act on.
Just shifting focus now to the ECMS, there was a big, second big news that you'd given us, a stellar response. Before we dive into the specifics, given the overwhelming response that the industry has shown, which is 2x that of what you had initially intended, has the industry maybe successfully made a case for wanting to expand the scope even further as we go down the road?
We will see. I think as of now, we will have to sort of make sure that what has been promised gets implemented. So I think the scheme had a particular size, and the scheme, all of that was also something which was decided after we heard from industry fairly extensively. It is, I would think that it's early days. It's too early, too premature to consider that.
You're in the process of vetting some of these proposals and applications that have come. The minister, as well as you, said that you'll be working at express pace. What is the timeline that we're looking at in terms of seeing the final approved
Let us
benefits?
see. I mean, again, like the minister said yesterday, there is a technical team which looks at all this. So beyond the point, we should not put too much pressure on them to say that, I want it by so-and-so day. But I think everyone is in a rush. Industry also wants to get started quickly. The government, of course, wants it to move very fast. And the technical team is in place, and they're working on it. So,
in the spirit of wanting to expand the ecosystem here in the country, how important will it be in cases where there are foreign companies also participating to have an element of transfer of technology to Indian partners so that we begin to design and develop here the local ecosystem?
That is, I think, embedded in the spirit of the scheme. And the scheme is basically intended, it is a step-by-step process. We start with assembly under the PLI schemes, and then build scale there, and then move to the next stage where we try to bring them into the process of manufacturing components, and especially the components which matter. So all of that, so it goes step by step, and design is again an important area, key area. And many of them, actually, I think even without incentives, without direct incentives on design, are coming into the country simply because India is one of the best countries in the world to design in, because there is enough STEM human resources available which can enable the design. That is one part of it. The other part of it is that in addition to the STEM human resources, we are building capacities to do this across the country. So I would think that it will naturally follow.
You've given us two big headlines. I keep repeating myself, only because we're eager to watch out for some of the other big news to come out of Ministry of Electronics and IT. DPDP rules, I think that is something that the industry, us journalists, we're all geared towards it. When can we expect it? You had indicated that perhaps last week of September is when we can expect it. When can do we see it over the weekend? Maybe next week is something that we need to plan for?
You see, I mean, to be very honest, I think what the minister said is, when will the ministry be done? And he set us a deadline saying you should get it out from the ministry by 28th of September. And we met that deadline. Now, it's gone for legal vetting and so on. So there's a process. Now, there again, I mean, these are things which the concerned ministry takes their time, and it wouldn't be very fair to hustle them and get them out. So I'm just hoping it will come out as quickly as possible. If it comes out on the weekend, we'll put it out.
We wish you the very best, Mr. Krishnan. Thank you so much for joining us, being a part of this conversation. We hope to connect again once the DPDP rules are out. Thank you so much.
Thank you so much. Thank you.
The story of energy today is no longer just supply and demand. It's about imagination. It's about how technology, partnerships and bold ideas can create a future where growth goes hand in hand. That vision came alive in Bengaluru at Shell Presents Changemakers of Tomorrow 2025, a platform that brings together innovators, policymakers, academia, entrepreneurs and partners shaping the future of energy. The event was inaugurated by Nivruti Rai, MD and CEO, Invest India, Mansi Madan Tripathi, Chairperson, Shell Group of Companies and SVP Shell Lubricants APAC, Robert Van Bruggen, EVP and CIO Shell, Selda Gunsel, EVP Technology Shell, Pratibha Priyadarshini, VP HR Shell India, Mark Van Leefland, VP IDT Delivery and Engineering Shell, and Ajay Mehta, VP Research and Innovation Shell. Mansi Madan Tripathi, Chairperson Shell Group of Companies and SVP Shell Lubricants APAC, emphasized bold ideas and collective action. Nivruti Rai, MD and CEO of Invest India, spoke about building tomorrow's infrastructure today, and Gunjan Krishna, Commissioner for Industrial Development, Government of Karnataka, reminded us that inclusive growth begins with empowering MSMEs. Together, their words set the tone for the change makers of tomorrow.
You know, the global context, with everything which is going on, the tariffs, the wars, the energy prices, the ups and downs, focusing a little bit closer to home in India, we have a very interesting situation as we talk right now. Because on one hand, the trajectory of our growth is inevitable. Yeah. Last quarter, as you know, we recorded 7.8% from our GDP, which is much higher than what was ever predicted. And we are slated to be one of the highest growing global economies, right, at 6.5, 6.9%, which we all feel very proud about. But with that, obviously, it comes with a huge need for energy and energy growth. We handle most of the financial operations for a variety of our businesses coming from our country. The technical assets, 36 global assets, are handled from the country. So as long we keep thinking of ourselves as solitary drops, that, what can we do individually to solve this big problem, we'll not go anywhere. But if we think that each of us has the power of the ocean in us, and together we can create the tide to solve for this big mammoth challenge in front of us, I am very hopeful, confident, as well as absolutely sure that together we'll be able to solve for this and take the energy transition head on, and shall be at the forefront for solving for it. Changemakers is not just an event for us. It is a momentum which we have been carrying out, and this is our 3rd edition. We have been having that movement from the physical, digital combination to saying how do we increase the rate of innovation. And now in this one, as we always talk about the Trinity in India, which is about, the various forces, or the heart, mind, and soul, in this Changemakers, I particularly feel that you will experience not just the hardware, the software, but how do we get the soul behind it so that we can keep moving.
With the world that all of us are living in, intelligence is in your hand. Access to information is in your hand. We have a level playing field across many countries, geographies, because information is not just for privileged few. So what do we do? What we do is leverage the growth driver as human and AI symbiosis. The growth will happen not because you have information, but because of creativity, connectivity, and action. Finding the right startup, finding the right company is like going and fishing for the pearl. And I know you guys are doing a great job at it, but we as Invest India are doing this. And our goal is not just to bring the investor into India, but working with the investor till they get return of investment. Thank you very much. I'm looking forward to working with all of you and driving the growth of India and growth of India, powering the growth of the world. Thank you.
I would like to congratulate Shell for the change makers of tomorrow. In fact, if you look at the innovation, we are in the land of innovation. Karnataka is a pioneer when it comes to the innovation culture. We are #1 when it comes to the R&D that happens in the country. 40%, in fact, of the R&D of the country happens here. And if you're looking at Global Capability Center, and I have had the opportunity of visiting the Shell's GCC and the R&D center at Devanhalli, and I was quite amazed with the kind of work that they are doing. So congratulations to you. We really require innovative ideas to come in the energy so that not only are we self-sufficient, at the same time, it does not in any ways cause any problems in our growth stories. And our mantra in Karnataka is innovation now will ensure growth forever. Thank you.
A fireside chat between Nandan Nilekani, co-founder and chairman of Infosys, Robert Van Rotten, EVP and CIO of Shell, explored how digital innovation is already reshaping India's energy landscape.
In preparation of our sort of little fireside chat, I've been watching a few clips of you on the internet, which are inspiring, thought-provoking. And in many of these interviews, you talk about pretty much wearing two hats. So sitting on that crossroad between private and public, what's your observation around where the impact's going to be the biggest? What do you see?
When I work on public sector infrastructure, it's truly at population scale. How do you get 1 billion people into anything? And those learnings are invaluable. And then when I work in the private sector, which has a different way of working, it's about applying that to business and market problems. So I think I'm actually very bullish on the potential for technology for transformation, be it for businesses like Shell, be it for societies. But it's important to do it in a way that it is good for people, that it's inclusive. But now I personally feel that with scalable AI, with the energy transition, Shell is a leader in that. I think there are many, many opportunities for technology. And the way I look at this is, I look for unlocks. Is there some unlock which opens up the whole thing? And all the work I've done has been to finally hone in on something which, if I turn the key, it just explodes. So we have to think about the same in your business.
What will be your one call to action for people to walk away with today in a world where we probably are looking at a new inflection point in terms of what the technology is? What's your one call to action?
Well, I think, first of all, it's great to be working in Shell. I think it's a great company, a legendary global company, and as I said, a leader. And everybody here is playing a very critical role in that journey. And I think more and more of the strategic and important things in Shell's transformation will happen here. So I think everybody has a role to play. And I think if the next 5-10 years, if you can successfully manage the whole energy transition, achieve your goals, not just the business goals, but getting towards net zero, building all the newer energy capabilities, building the global retail network, globalization of, I think this, and applying, of course, AI to all, I think it's an unbelievable opportunity. So here it is, one of the world's greatest companies doing its most important work and in the most transformative decade of its future.
One of the standout sessions, Tech-Driven Energy, how technology is powering the transition to a secure and lower carbon future. Brought together Mansi Madan Tripathi, chairperson of Shell Companies in India, Arundhati Bhattacharya, chairperson and CEO of Salesforce South Asia, N. Venu, MD and CEO of Hitachi Energy India and South Asia, and Satyakam Arya, Managing Director and CEO of Daimler India Commercial Vehicles. Moderated by CNBC-TV18's Shruti Mishra, the discussion highlighted how digital technologies, progressive policies and cross-sector partnerships can accelerate the energy transition.
Let me start with a broad question that is for all of you. Technology, as we all know, is no longer just an enabler. It is the accelerator, from digital tools to AI to predictive analytics to cloud. The big question, however, is how far, how fast, and how equitable can we go? Can technology make us go faster and more fairly towards a low-carbon future? Satyakam, can we start with you?
I think there could be 3 different positions on that. An optimist would say, let's go all out.
Yes.
Right? And I'm sure there are a lot of optimists in the room. There may be also pragmatics who may say, let's go step by step. Let's learn on the way and then make it very, very sustainable in terms of adoption, right? And the third could be skeptics, right? They could say, let's figure it out before we jump into it. I'm more of the optimistic kind. I believe technology is offering a huge convergence of possibilities.
So, Mr. Venu, your thoughts?
If you take a 2021 data, India has used 450 units of electricity for every $1,000 of its GDP. Versus Germany, you take 120 units. If you take the industrial output, if we compare the 5 largest economies, and we are the 4th largest economy, and we are using 700 units of electricity for every $1,000 of GDP, and China is less than 600. Rest of the 3 economies are less than 150 units. There's a huge scope, and it's not, we need to leapfrog on the technology to use this, I don't use the inefficiencies, to bring the more efficiencies across all the sectors. Thank you.
Sure. Arundhati Bhattacharya, how can technology make us move faster and fairly towards a low carbon future?
Yeah. So first of all, let's understand one thing, that, there have been a lot of changes, especially in the area of technology. And in many of those cases, people have wondered whether this is something that is really going to make a change. One thing I think everybody is now more or less convinced about is that this is a technology, the AI piece, the generative piece that has happened, that's really going to make a very material change in the way we perceive our future. It's not only the future of work, but the future of the world itself. Also regarding a carbon neutral future, this is the only way we can make it happen, because it can give us the amount of data that will ensure that wastage in every supply chain goes down.
Once you agree with what Arundhati Bhattacharya just said, this is the only way it has to happen.
Just a few weeks back, we were trying to see for my business lubricants, what are the things which we can now do to take it to the next level in terms of using the AI technology and what needs to be done. And the moment you start painting that picture, you realize that it's an ocean, right? You have to do so many things to get right. So after 3 days of workshop, our conclusion was that, we can't do everything, so we have to pick up 3 processes first, which we are going to pick it, right? And then for those processes, we have to ensure that our data is absolutely perfect, clean, because, while we may talk that we need to reach here, the reality is that some of our interconnectivities are patchy, our data is not that strong. So I think then the data gets very important, technology to enable it, and then people behind it, right? So I think all 4 needs to go together, process, data, technology, and people, to then tie this all together so that we can make progress.
Picking up from what you just said, and if you could further elaborate on how Shell is leveraging its digital and engineering hubs in India to sort of drive innovation and accelerate the energy transition.
The most important part is the technology and the work which is coming out is definitely something which is not only to be used in India, but for the globe, right? I think that's how the mindset is in terms of working. So if I think from a pure R&D perspective, we have this project going on, solid oxide electrolyzer, where we are trying to see how the hydrogen molecule can be 20 to 30% more efficient than what it is in the peers. And we're working with Ceres-Power on that one as a partner, right? Likewise, from the TAS organization, which is our asset monitoring organization, which actually monitors close to 35 assets globally. So these assets are in Gulf of America, Canada, Africa, Australia, you name it. But I think it is now based on the robotics, which is there, the Internet of Things, what do you call it, as the Internet Eye, which is observing it. People sitting in India can, they have like millions of data feeds which are coming in, and we are able to predict if there is an unsafe incident about to happen. We are able to predict if a machine has a corrosion level which is going to go higher. We are able to predict that, a particular the external environment is not conducive to do certain activities, which in turn, people sitting in India can switch on, switch off things in those remote locations to be doing this work, which is something completely, and the more you think about it, you can see now how that database can help us to do so much more now than, both from a people, but more importantly for safety, for efficiency, and so on and so forth.
Sure. How do digital twins deliver cost savings and, improve planning accuracy? If you can give us an example, perhaps.
Absolutely. Just to build on what Manasi talked about it, it's a predictive, understanding the predictive maintenance, right? Whether the failure happen or not. One failure in the energy